Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Are we talking about superpowers, Clash of the Titans sort of stuff? It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy. We're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose choke.
हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। निफ्टी एक्सपायरी है, देखते हैं। बाकी अभी 12:30 लंदन सेशन ओपन होगा, वॉल्यूम एक्सपेक्ट करेंगे। देन इवनिंग 5:30 न्यूयॉर्क सेशन ओपनिंग। एंड आज काफ़ी इंपॉर्टेंट डेटा है। कल इंडिया का सीपीआई का डेटा आया था, आज यूएस का सीपीआई का डेटा है, इन्फ्लेशन का डेटा जिसे हम कहते हैं। एक्सपेक्टेड है थोड़ा कम रहेगा मंथ ऑन मंथ बेसिस पे लास्ट टाइम के कंपैरिजन में, और ईयर ऑन ईयर बेसिस पे थोड़ा सा बढ़ सकता है यूएस में इन्फ्लेशन। तो देखना पड़ेगा डेटा कैसा आता है, बहुत इंपॉर्टेंट डेटा रहेगा इवनिंग पे। बाकी फेड चेयरमैन वॉर्स का नॉमिनेशन के लिए आज वोट रहेगा यूएस सेनेट में, देखना पड़ेगा कितने बजे होता है अभी ये। तो मेनली हमारे पास ये सीपीआई का डेटा और फेड चेयरमैन की नॉमिनेशन की डेट है। फिलहाल अभी देखोगे क्रूड ऑयल गैप अप हुआ था, सेल ऑफ आया, फिर रिकवर किया, फ्लैट ओपन हुआ है थोड़ा सा ही। नेचुरल गैस कल गैप अप ओपन हुआ था, काफ़ी देर साइडवेज रहा, देन एक रैली दिखाई थी क्लोजिंग होते होते। एक रिस्की ट्रेड था, उसका रिजल्ट निकाल दिया था, देन मूव अप साइड। नाउ लेट्स सी क्या आज भी कंटिन्यूएशन में रहता है अपसाइड बुलिस या फिर क्या करता है। ठीक है, बाकी निफ्टी को देखें। फिलहाल कल क्लोजिंग होते होते सेलिंग में चला गया था मार्केट, सेंसेक्स विथ निफ्टी बैंक निफ्टी सभी। अभी फिलहाल के लिए देखोगे तो अप्रॉक्सीमेटली ऐसा लग रहा है 100 पॉइंट का एक छोटा सा गैप डाउन हमें देखने के लिए मिल सकता है मोस्ट प्रोबेबली। स्पॉट में 23,820 पे क्लोज हुआ था, 720 के आसपास कहीं ओपन होता हुआ दिख रहा है। यप, लगभग 93 पॉइंट का गैप डाउन है। कल याद होगा आप लोगों को, कल आपका गैप डाउन हुआ था आईवी लगभग 20 to 24 के आसपास चल रहे थे एट दी मनी में। पूरा दिन साइडवेज रहा, लास्ट में थोड़ी बहुत सेलिंग आई। आईवी फिर भी थोड़ा बहुत उतना नीचे नहीं आया, नॉर्मली जो निफ्टी का आईवी रहता है दैट इज अप्रॉक्सीमेटली 12 to 14 के बीच में रहता है। अभी भी कल जो क्लोजिंग आई है उस समय जो निफ्टी का आईवी, निफ्टी के एचडीएम की जो ऑप्शन है चाहे कॉल साइड या पुट साइड, उनके आईवी अप्रॉक्सीमेटली 18-19 के आसपास क्लोज हुए हैं। तो पॉसिबिलिटी तीन सिनेरियो की हो सकती है, मार्केट हो सकता है कंटिन्यूएशन डाउन साइड जाता रहे, हो सकता है अपसाइड आए या फिर साइडवेज हो। ठीक है, तो मोस्ट प्रोबेबली चांसेस हैं कि मार्केट गैप डाउन के बाद एक रेंज में रह सकता है, वॉलेटिलिटी टू साइडवेज रहने के ज़्यादा चांसेस हैं। क्योंकि अगर निफ्टी आज एक्सपायरी है और एक्सपायरी से पहले नॉर्मली आईवी को अगर सेटल होना है देन नीड टू बी अराउंड 12 to 13। सो उसके लिए प्राइस को गिरना चाहिए। अभी भी देखोगे आईवी अभी ओपनिंग होने वाली है, ओपनिंग में भी आईवी देखोगे तो एट दी मनी की जितनी भी कॉल और पुट है उनके आईवी 40 के आसपास चल रहे हैं। एंड अभी इंडिया विक्स भी अगर मैं चेकआउट करूं तो लगभग 18 के आसपास ओपन हो रहा है, तो काफ़ी हाई आईवी बने हुए हैं। ठीक है, तो ऑप्शन सेलर के लिए काफ़ी अच्छा दिन हो सकता है। ठीक है, दोनों साइड पे फ्री का मनी आप कह सकते हो अप्रॉक्सीमेटली, क्योंकि मार्केट कहीं भी जाए आईवी को क्रस करने के लिए, चाहे डाउन जाए अपसाइड जाए, थीटा के साथ साथ आईवी डाउन जाएगा ही जाएगा, तो हमें एक आईवी डाउन होने का बेनिफिट मिल सकता है। तो आईवी इज़ वेरी हाई, अप्रॉक्सीमेटली 40 के आसपास पहुंच गए हैं एट दी मनी में गैप डाउन में। टू मच नर्वसनेस राइट नाउ। गैप डाउन हो रहा है, देखना पड़ेगा सेलर कंटिन्यू करते हैं नहीं करते हैं। बट जहाँ तक मुझे लग रहा है शायद कॉल और पुट दोनों साइड के प्रीमियम सडनली मूव करेंगे। प्राइस भी देखोगे, अभी गैप डाउन ओपन हो रहा है, कॉल साइड का प्राइस एग्जांपल के लिए बता रहा हूँ 23,700 एट दी मनी है करेंटली। कॉल साइड का प्राइस 199 है, पुट साइज का प्राइस 40 चल रहा है, तो ऑलमोस्ट 5 टाइम्स ज़्यादा है कॉल साइड के प्रीमियम। काफ़ी हाई पहुंच चुके हैं कॉल साइड के प्रीमियम, तो पुट साइड के प्रीमियम ऑलरेडी काफ़ी क्रश कर दिए इन लोगों ने। कॉल साइड के प्रीमियम काफ़ी हाई है, तो देयर इज अ चांसेस कि पुल बैक आ सकता है गैप डाउन के बाद। ठीक है, और अगर डाउन भी गया तब भी हो सकता है कॉल साइड के प्राइस उतने ना बढ़े, क्योंकि बैलेंस तो करना ही पड़ेगा। 40 आईवी बहुत ज़्यादा हाई है, कुछ ज़्यादा ही हाई है। इसको 12-13 तक पहुंचना है, तो मतलब आप मान के चलो 24-25 पॉइंट का तो आईवी क्रस ही मिल जाएगा, अगर आप मार्केट थोड़ा सा भी साइडवेज गया अगले मार्केट ओपनिंग से 1 घंटे के अंदर। लेट्स सी ओपनिंग पे देखते हैं क्या होता है। ठीक है, अभी ओपनिंग होगी, देखते हैं ओपनिंग पे प्राइस क्या आता है और आईवी कहाँ पर रहता है अपना। 2 मिनट और। फर्स्ट कैंडल ऑलमोस्ट क्लोज होने वाली है, 5 मिनट रह गए. नो डायरेक्शन क्लियर एज एक्सपेक्टेड. ओके ठीक है, कंटिन्यूएशन ही लग रहा है थोड़ा बहुत. फर्स्ट कैंडल ऐसा लग रहा था डोजी बनेगी, बट लुक्स लाइक कंटिन्यूएशन. देखते हैं क्लोज होती है एक बार पहली कैंडल कहाँ, विल डिसाइड. ठीक है, बाकी देखते हैं क्रूड ऑयल और नेचुरल गैस में कोई लेवल बनते हैं तो.
But it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. President Trump cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, saying the truce is on life support. It's prolonging the closure of the Hormuz, which the Aramco CEO says is costing global markets 100 million barrels every week it's closed. Oil is climbing on the deadlock, which is keeping bonds under pressure with global yields rising. Meanwhile, Asian stocks whipsawing after calls for a potential AI dividend in South Korea. Plus, we speak to the CFO of ADNOC Gas, Peter Van Driel, later this hour on earnings following the attacks by Iran. Don't miss that interview at 8:40 a.m. Dubai time. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The latest being Trump's description of the ceasefire as being, quote, on life support. Remember, it was this time yesterday he put up the True Social post suggesting that Iran's proposal was, quote, totally unacceptable. He then later yesterday evening said that the ceasefire itself was hanging on by a thread. He called it on life support. So once again, casting some doubt as to where we go from here and really raising the temperature for escalations in the region as we think about that upcoming Trump-Xi summit. Will they do anything before, during? Probably unlikely, but still, it really casts doubt on the state of that ceasefire right now. So the handover this morning from Asia Pacific, pretty negative, down 0.3%. But I wouldn't just say it's on back of the geopolitics. We had some really sharp moves in the Kospi. Ava will walk us through it in a second. But just to let you know, and I thought this stat was very interesting coming from our MLive team. The Kospi saw $300 billion vanish in 97 minutes this morning. It declined as much as 5% this after an AI dividend proposal. So massive losses in the Kospi. We'll talk about that later. S&P futures leaning towards negative, down about 0.1%, but another positive session for Wall Street yesterday. So again, shrugging off the news coming out of the region. Brent not shrugging off the news from the region. We are up 0.9%, just shy of, well, just above $105. And then later on the show, we will be speaking to ADNOC Gas CFO. So stay tuned for that discussion around how energy markets are sort of redeploying given the closure of the Strait of Hormuz. And then 10-year yields back up again at 4.42. We moved a lot higher yesterday with that move in the price of oil, about 4 or 5 basis points higher. And then switching over, our terminal charts of the day. And this is just a look ahead. We have U.S. CPI data coming up. Obviously, a key focus for policymakers, for the Fed. And here, just to flag that there's been a bit of a gap between the shooting up in the prices of diesel, which are key components when you think about transportation and travel. Logistics, but it has marginally fed into these CPI figures. So let's just see whether it shows up in today's data. Clearly going to be closely watched by some of those FOMC policymakers whose rhetoric has turned a little bit more hawkish as of late. Okay, let us now pick up the conversation about how markets in Asia are faring. Avril Hong is in our Singapore studio. And Avril, I perhaps gave a little bit of color around what's been happening in the Kospi today. Tell us more.
Yeah, a bit of a teaser there. Certainly, this is a market that has been front and center amid the AI rally, and it had quite a roller coaster ride today. At one point, as you say, losing $300 billion in market cap. And the trigger, the catalyst, was a Facebook post from a top Korean policymaker, suggestions of a citizen dividend for AI tax, which was later clarified to not be a windfall tax, but the damage was done. We saw the SK Hynix, the Samsung electronic stocks. These were stocks that were at records just a day ago, dip into negative, losing their most since early April. You're seeing SK Hynix now a bit in the green, but I think this whole episode has underscored a couple of things, including how crazy this rally in South Korea has been and the retail participation in this market. Of course, we also saw a bit of contagion in the Nikkei, declining into the red at one point. Again, that has recouped. We're watching dollar yen as well with Besson in the region. We didn't get clear signals of coordinated FX intervention to come. So we're seeing dollar yen moving even further away from the 155 handle. Jumana?
Avril, thank you so much. Avril Hong in Singapore. Now, oil is trading higher as U.S. President Trump cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer and prolonging the effective closure of the vital Strait of Hormuz.
Right now, it's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, "Sir, your loved one has approximately a 1% chance of living."
Aramco CEO Amin Nasser says global oil markets are losing 100 million barrels every week that the Strait of Hormuz is shut. Meanwhile, as supply shortages bite, the U.S. Strategic Petroleum Reserve is providing just over 53 million barrels to energy companies to tame prices. For more, we are joined by Abir Abu Amar, our Deputy UAE Bureau Chief, and Stephen Sichinski, who leads our energy coverage in Asia. Abir, I'm going to start with you. With the latest geopolitical news and the fact that President Trump is now casting doubt on this ceasefire, describing it as being on life support. How should we read these comments?
Yeah, good morning, Jumana. I mean, you just heard the president. He said the ceasefire that was reached on April 8th is on massive life support. He also said that, quote, that the response that he got from Iran was garbage and that he did not even finish reading through it. So it's a particularly precarious moment for where things are in the Middle East. Now, President Trump did tell Fox News yesterday that a deal is still possible, that reaching a solution is still possible. He did say that, he did not give an indication that we could see a return to a military intervention. Something that is quite important to keep in mind here is that there are two things facing President Trump. First is the pressure that he's facing domestically when it comes to gasoline prices. You just mentioned that. But also he's set to meet Chinese President Xi Jinping later this week. And the relationship here between the U.S. and China is a little bit in tatters because of the economic damage that this war and the closure of the Strait of Hormuz has left on China. So the question here really is, is President Trump going to do anything in those few days leading up to his meeting with his Chinese counterpart? We're yet to see any signs of that. He did suggest also to Fox News that he could revive a plan to escort ships through the Strait of Hormuz. If you remember, that's
Project Freedom.
Project Freedom announced on Monday and paused shortly afterwards. So we're waiting and seeing mode yet again.
Yet again, wait and see mode, Abir. Thank you. Stephen, let's come out to you. And obviously, you know, the effective closure of the strait is something that we've been talking about almost for 3 months now. It's pretty remarkable that it's been going on for that long. Some notable commentary coming through from the Aramco CEO yesterday. What did he have to say?
I mean, he said, as you mentioned, it's 100 million barrels of oil is lost every week. If you add up since the war began, that's about 1 billion barrels of oil. And it, you know, we were going into a year where the oil market was supposed to be in a surplus, in a glut. You know, we had some great reporting on that at the end of last year about how we were going to see prices really continue to fall and how this is going to hurt major oil producers. Now it's the opposite. He signaled that it will take potentially until 2027 for the market to get back to where it was, to get back into balance. We're essentially seeing a year that could be quite a harsh deficit depending on how long this continues. And you know, as we see, it depends also how quickly production can be increased from some of the world's biggest producers in the Middle East. He did signal that if the situation were to improve, they could bring back their output, pre-war output, in about 3 weeks, which I think did surprise some people in the market. I think some analysts thought it would take a little bit longer. To put that into context, Saudi Arabia is producing exporting about 7.4 million barrels a day. Before the war, they were doing about 10. Their total capacity could reach 12. But they don't hit that because of the OPEC agreements on how much they produce in export. So I think that will be closely monitored, especially as these peace talks, if they actually do proceed.
Yeah. Okay. Abir Abu Hamad, our Deputy UAE Bureau Chief, and Stephen Tszynski, who leads our energy coverage in Asia. Thank you so much. Well, speaking of, higher oil prices are keeping bonds under pressure, while Iran risks are set to challenge the rally in global equities. Joining us now is Martin Henneke, Head of Asia and Middle East Investment Advisory at St. James's Place. Good to have you with us. I just wonder whether, again, you know, skepticism around the state of the ceasefire is actually going to have a notable global market impact, because what we saw was that April was a very strong month for global equities, particularly for Wall Street. And I wonder whether we've reached a point now where, you know, what is happening in the region doesn't necessarily affect sentiment in other markets.
Yeah, that's a really great observation. You know, you would have thought that perhaps yesterday's news and those very strong statements from Donald Trump might have led to a correction, a sell-off in markets, but it didn't happen at all. And, you know, there's two things that come to my mind when I look at this. The first thing is that one has to question if some investors might be a little bit too complacent here, especially those that might be speculating for the short term, or that invest with leverage or other forms of debt on the sideline. So I would just say, firstly, a word of caution. We would definitely recommend, to try to avoid any form of leverage, and making sure that you have the ammunition and the staying power to hold positions for the longer, medium to longer term, and don't rely on having those monies or needing those monies in the shorter term, because corrections could come. Not only does the Iran crisis not look too great, but the US as well. On the other hand, though, for anyone staying fully in cash, there is definitely this inflation risk coming through, which is a risk to cash.
Let me ask you what you think the best way to hedge is, though, because let's say you were one of the people that bought, you know, upside protection on oil at 150, you'd be out of the money now. Similar if you had bought S&P puts.
Okay, look, when you look at protection, there's a lot of fancy tools in the market out there. In the long run, even when you look at downside protection and equity portfolios, buying options, etc., or structure products. In the long run, it's seldom that they work in investors' best interest. One of the most simple ways of hedging is actually repaying your mortgage, for example. If you have one, a lot of financial institutions may not really advise that, though, because there's money on the loan to be made, there's money on other investments to be made. So just tidying things up might be a good idea. But I do want to say that ultimately, what we are seeing most recently, the energy prices are feeding through into purchasing producer prices everywhere around the world. We have seen in China yesterday 2.8% producer prices, which was a real shocker. China has been in deflation for around 5 years, and that has helped keep global prices down. This may be ending, and this coupled with the very high debt loads in a lot of countries in the West. The US has so high debt load, they're struggling already with the debt servicing costs now. They're stuck a little bit. Even if inflation comes up, they may not be able to raise interest rates significantly. Again, for savers, that could mean we are faced with rising negative real interest rates. Inflation might come up, but central banks no longer, unlike last time around when you saw this hike, no longer are able to stop it as easily by hiking rates. So on the one hand, as I say, be debt-free. On the other hand, be mindful of not being overexposed to inflation risk as well. Have a significant portion of your assets in things that can protect from inflation. It could be property, equities, or other assets.
Really interesting point there regarding debt, which is, I believe, an echo of former U.S. Treasury Janet Yellen's comments regarding fiscal dominance. Let me ask you about how you think EM assets can perform in this environment. I mean, just taking a look at MSCI Emerging Market Index, it's been vertical the last couple of weeks, but that's, I guess, mainly to do with the semiconductor trade as opposed to, other EM developments.
Yeah, that's a great question. I mean, to be fair, I'd say when you look back at 2025, a lot of EM markets were very undervalued, including Korea was very undervalued, and a lot of companies that have been doing really great. So I wouldn't say it's all a bubble, but early on the program, you were talking about how a lot of retail investors have been getting in. Of course, valuations have been rising, and also there's definitely starting to be some exuberance there. Now, what we would suggest is investors, not only in the US, but now also in emerging markets, need to be very, very careful about not being overexposed in sector terms to AI and tech, and look for value. Value stocks still trade at very, very low prices. They have missed a lot of the rally. Depending on which measure you look at, 50 to 75% relative discount to the broad indices. And they could also be more crisis resilient once fear might come in again if wars should be heating up another time.
Martin, thank you so much for your time. Martin Henneke, Head of Asia and Middle East Investment Advisory at St. James's Place. Now, coming up, the White House has confirmed U.S. President Donald Trump will meet Chinese President Xi Jinping in Beijing later this week. Tech, trade, and Taiwan, the three T's, are all set to be center focus. We bring you a preview of what to expect next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The White House has confirmed that U.S. President Trump will meet with Chinese President Xi Jinping this Thursday in Beijing. Trump says he will discuss U.S. arms sales to Taiwan with Xi, a move that could ruffle some feathers in Washington. For more, Bloomberg's Jenny Marsh joins us from Hong Kong. Jenny, so Taiwan, obviously a very thorny topic, but are we expecting some form of a breakthrough between the two leaders this week?
No, I don't think we're expecting any breakthrough on Taiwan, but we will be watching whatever it is Trump and Xi say about that topic very closely. The wording on this matters and really comes down to sort of the most sort of subtle of nuances. Trump did say on Monday that he's going to be talking about arms sales with Xi, which was surprising because, the U.S. is not meant to sort of negotiate on its arms sales to Taiwan with the Chinese. But in reality, this is sort of a big sort of tension. When they last spoke by telephone in February, Xi told Trump to take the utmost care on arms sales after the U.S. announced this record $11 billion package for Taiwan. But Trump was sort of striking a defiant tone. So we don't expect to see any kind of reversal of policy there. But I'm sure officials in Taiwan will be watching very closely.
And who do we know is actually coming to the summit beyond, obviously, the two presidents themselves?
Yes, the guest list has sort of been a guessing game, but now we have a good idea of it. Elon Musk will be on the plane with Trump, so it's suggesting that sort of relationship is back on between the billionaire and the president. Then some usual faces, Apple's Tim Cook, who is a long sort of friend of China, is also traveling with him. You have the Boeing representative, which makes a lot of sense because Boeing is expected to close this record deal, one of its largest sales in history, while in China. And then there are some more interesting names. So Meta Platforms, Dina Powell McCormick will also be flying. That's interesting given the fact that China recently urged the unwinding of Meta's deal with Manus. So that could be something which comes up in these talks during Trump's visit.
Bloomberg's Jenny Marsh, thank you so much for the reporting on what is going to be a highly anticipated summit later this week. All right, coming up, African Rainbow Minerals Chairman Patrice Motsepe praises public-private partnerships for keeping South Africa's mining sector competitive. Our interview is next. This is Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The chairman of African Rainbow Minerals has credited public-private partnerships for helping develop South Africa's globally competitive mining sector. Patrice Motsepe spoke to Bloomberg's Jennifer Zabazaja at the Africa Forward Summit in Nairobi.
South Africa has got a proud mining history. All the countries in the world, whether it's Canada, whether it's Australia, whether it's South Africa, whether it's Brazil, we have to compete. And investments goes to those countries where there are world-class ore bodies, but also where the laws, the financial, monetary, tax dispensation is competitive. So South Africa has to continue, and I think they've done very well over the last few years in ensuring that it remains a globally competitive destination for investment in the mining industry, because the people who decide ultimately are the companies and the CEOs that invest. And there were times when, 10, 15 years ago, when there were issues in relation to our global competitiveness, but I'm very proud of what has been achieved, and what I like even more is just the commitment and the partnerships between the private sector and the government, because you need those partnerships. And part of what should take place in those partnerships is for the CEOs of the mining industry to keep telling the South African government what are the changes, the improvements, and the areas that will ensure that South Africa is a globally competitive destination for investments. Well, for us in the mining industry, the first thing you do is to look where the best ore bodies are in the world. Highest grade, lowest cost, but you also look at the risk environment of those countries. What are the laws? Do they give confidence in terms of your long-term security of tenure, your ability to repatriate your profits? South Africa has learned over the last 30, 40, 50 years to ensure that it, bottom line, and succeeds in convincing the investors that they should open their next mine in South Africa rather than Australia or Canada or any other countries.
That was African Rainbow Minerals Chairman Patrice Motsepe. Now, UK Prime Minister Keir Starmer is under renewed pressure after several lawmakers called for his resignation after his appeal for more time fell short. He has pledged to prove critics wrong and resist any move to replace him, saying he has a credible plan to rebuild voter support. Poly market traders now bet he will be forced out by year-end, with rising odds he is replaced by his key rival, Greater Manchester Mayor Andy Burnham. South African President Cyril Ramaphosa said he would contest a report that criticized his handling of a robbery at his farm in 2020. That's after the Constitutional Court ruled that lawmakers had made an error 4 years ago when they failed to establish an impeachment committee to look into how Ramaphosa dealt with the theft of money hidden in his sofa on his game farm. Meanwhile, the president has rejected calls to stand down. And a look at equity futures as we head into the session. We are moderately lower. S&P futures down about 15 basis points. NASDAQ more so down 0.3. European markets leaning towards negative as well, down 0.6%. Now, coming up, We're going to take a deeper look at how the Iran war and the Strait of Hormuz disruption are reshaping Gulf economies with Ali Bayad from Jefferies International. That is coming up next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. President Trump cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, saying the truce is on life support. It is prolonging the closure of the Strait of Hormuz, which the Aramco CEO says is costing global markets 100 million barrels of oil every week. Oil is climbing on the deadlock, which is keeping bonds under pressure, with global yields rising. Meanwhile, Asian stocks whipsawing after calls for potential AI dividends in South Korea. Plus, we speak to the CFO of ADNOC Gas, Peter Van Driel, later this hour on earnings following the attacks by Iran. Don't miss that interview in about 10 minutes' time. Well, it's just gone around 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Let's get a check-in on how markets are faring. Abir Abu Hamad is in the studio with us to give us the check. Abir.
Good morning, Jumana. Well, look, it's a subdued session when it comes to the U.S. futures image, down 0.2% this morning. Not a lot of reaction from the escalations that we're seeing coming out of the Middle East. A return to fundamentals, a return to the AI trade is still very much visible when it comes to the U.S. Now, we saw 2 days of rallies in the S&P 500. Picture is not great this morning. Now, the interesting story this morning when it comes to equities is in Asia. The MSCI Asia Pacific declining 0.3% this morning, weighed down by the Kospi in South Korea. And this is an interesting story this morning. A top official in South Korea came out and said that perhaps South Korea should consider an AI dividend to citizens. That led to the Kospi falling, dropping 300 billion in its value in 97 minutes. That's an estimate that was put through by our MLive team. So that's weighing on the overall index in Asia. And then when we look at Brent, it is the same story in the Middle East, but leading to an upside, gaining about 0.7% this morning, $105 a barrel, as the Strait of Hormuz remains closed, and those escalations both by the Iranian side and the American side continue. The yield on the 10-year Treasury notes not doing much today. It climbed 6 basis points yesterday, currently standing at 4.4%, Jumana, again, as those escalations in the Middle East continue.
Abir, great stuff. Thank you so much. Bloomberg's Abir Abu Amar. Let's continue the conversation. The impact of the Iran war is starting to emerge across the Gulf, raising uncertainty for growth and trade in the region. With doubts growing over the ceasefire and the effective closure of the strait dragging on, pressure is building on energy exports, supply chains, and regional trade flows. Joining us now is Alia Bayad, Managing Director for EMEA Economics and Strategy at Jefferies International. Alia, really good to have you with us on the show.
Good morning.
I mean, obviously, the war is going to constitute a negative shock to the region. That's you know, we take that for granted. It's a given. But oil prices are significantly higher. So has that cushioned the impact somewhat economically?
Yeah, certainly it does. Obviously, the growth shock is important, particularly for those who don't have export facility like Qatar, access to export market like Qatar, Kuwait, and Bahrain. Yeah. And therefore, these countries cannot actually benefit from the dividend of higher oil prices, whereas Saudi Arabia, partially UAE, and of course Oman are being able to benefit from this hedge, the fiscal hedge that the higher oil prices provide. And so in a way, I think the markets, how they are looking at the GCC credits is a little bit from this angle of differentiation among GCC countries in terms of the impact, but although the market is not pricing it as much. Totally.
Can I ask you specifically about the Kingdom of Saudi Arabia? Habir and I were having a discussion, I think it was last week, about the deficit numbers that Saudi produced for the first 3 months of the year. Very wide budget deficit still, and also because spending, there have been massive spending overlays. At what point is that going to have to be tightened in?
No, absolutely. I mean, the widening of the deficit came much higher than expectations. Yeah. But I think it's very important to see that the issue is not on the revenue side, which has stood relatively well, but it's actually the composition of spending that is interesting. It's mainly a lot of capex, $4 billion increase, a lot of subsidies, probably to cushion the inflationary and the social impact of the March crisis, and also to ensure that the fallout on non-oil growth at a time where oil growth has been badly hit by the decline in production and export is actually balanced. And I think depending, of course, when is the Hormuz closure and the ability to even maximize, as we heard from the Saudi Aramco chief, that they are working to maximize the Yanbu port exports. And presuming there will be adjustment to these exceptional expenditures that we saw in Q1, I still think that they can get to at $90 a barrel, Saudi should be able to get 4 to 5% of deficit compared to a 3.7 target, I think, in 2026. However, if we see escalation again, then that path can be definitely jeopardized.
Yeah, it is interesting there that the deficit was more of a spending story than a revenue story.
Absolutely.
So when you look at the other countries in the region that have got hit the most, Qatar obviously stands out, Kuwait, Iraq, but I want to ask you about the trajectory when we come back. Is it going to be a V-shaped recovery or a U-shaped recovery?
Yeah. I think certainly it's probably going to be a U-shaped recovery, assuming that Hormuz opens in the next few weeks.
Big assumption.
Yes, an assumption. Mainly because of what we are hearing, that basically in Kuwait it will take some time, few months for the oil wells to resume operations normally, but also in Qatar to repair the damage. I think the fact that most of these countries have actually reacted, I mean, the policy response in all the countries to cushion the impact on non-oil growth has been important. That will help the U-shaped, basically probably be a small U with a more accelerated upward trajectory. So the policy response, I think, is as important as the fiscal buffers that these countries like Qatar and Kuwait have in terms of pushing the recovery ahead.
For as long as I've been in the region, and for long as I guess you've been tracking the economies of the region, the story has been about diversification and the visions, the national visions that these respective Gulf countries have in place. And I just wonder how the war might change that from a structural perspective, because there has been a lot of emphasis on energy. And is this going to derail some of those efforts to move into non-oil sectors, given still a good chunk of the economy is very dependent on where oil prices are and the ability to get energy out of the region?
No, absolutely. I think paradoxically, the diversification pattern or path that GC countries have embraced have, in a way, also exposed them to the vulnerabilities of the sectors that they chose to diversify into, mainly the connectivity, the financial trade, and tourism, the volatility of capital flows. So this model is, I don't think it's written off, as some people are saying, but it's certainly a call for action and for adjustment. Mainly on how do these countries are going to render connectivity more resilient by diversifying trade routes maybe in the future, etc. There will certainly be some impact on capital flows, mainly on the repricing of the risk that in the future should the Iranian regime remain in place, for example, or should we continue to be in an ebb and flow situation? And of course, I think the sectors, the diversification of the sector, how do we shift from an externally led growth model to a more demand-driven growth model is something that could help in the future to, in terms of policy adjustments.
Yeah. Halia, always good to have you on. Thank you so much. Halia Mbayad, the EMEA Economics and Strategy Managing Director at Jefferies International. Now for a look at some of the other stories you're following. Saudi Arabia's oil exports to China are set to drop sharply in June. According to traders, shipments are expected to fall to around 13 to 14 million barrels, down from about 20 million barrels in March and far below pre-war levels. The U.S. has imposed new sanctions on a dozen entities and individuals over the sale of Iranian oil to China. The Treasury says those targeted help facilitate shipments linked to Iran's Revolutionary Guard. Officials warn further action could follow against companies involved in what Washington calls illicit Iranian commerce. Israel's parliament has approved a special military tribunal to prosecute hundreds of Palestinians accused of taking part in the October 7, 2023 attacks. The military court will handle hundreds of cases, with some defendants potentially facing the death penalty. Officials say the move is aimed at delivering justice and documenting the events, though the plan is likely to face international scrutiny over its use of capital punishment. Coming up, we'll break down ADNOC Gas's latest quarterly earnings and what the Strait of Hormuz disruption means for their business. Our interview with Peter Vendriel, the CFO of ADNOC Gas, is coming up next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. ADNOC Gas has reported resilient first quarter earnings, with net income beating analyst estimates despite disruption to exports through the Strait of Hormuz. The company is also managing the impact of recent incidents at its Habshan facility, with plans to reach 80% capacity by the end of 2026. Joining us now is Peter Van Driel, CFO of ADNOC Gas. Peter, thank you so much for joining the show, and what I can only imagine has been a very challenging period, a very challenging set of circumstances. How would you describe the performance of ADNOC Gas in the face of these challenges?
Absolutely right, Jumana. These have been challenging times. At the same time, we have seen how resilient the company is. We, of course, have faced the disruptions in the Strait of Hormuz, but at the same time, we are still, as a company, able to work diligently to meeting our objectives. And we look at a short-term disruption, especially Strait of Hormuz, which impacts our exports. But the long-term fundamentals are still in place. The company is on track to deliver the EBITDA growth of more than 40% by the year 2029. And let's not forget, we benefit from an extremely strong financial framework with a balance sheet that is not used. And that enables us to invest through the cycle and deal with challenging environments such as closure Strait of Hormuz. But at the same time, it does not impact our long-term growth objectives, as well as our ability to reward our investors. We will pay our dividend of $942 million in June, and we continue to grow that dividend by 5% every year. So the fundamentals are intact despite a challenging environment.
Peter, you've given a lot of guidance today about the Habshan plant capacity. You said that you plan to restore full capacity at the Habshan site in 2027. I also want to ask you about Das Island. How have operations there been impacted?
Right. So our LNG is produced offshore. We have seen an incident at one of our processing plants onshore. Now, when you produce LNG or LPG, you need to bring that to your customers. And as everybody knows, that is not easy with the Strait of Hormuz being closed. So some of the cargoes that have not been delivered are either in storage on a ship or underground or in tanks. And that means that at a moment in time when we are able to deliver the cargo to our customers, we will benefit from this high pricing environment. The pricing environment, of course, is extremely favorable, but it does not show yet in your bottom line until you've realized your sale.
How long will it take for flows to return back to normal, assuming there is a reopening of the strait?
Once the strait is open, we will resume our operations, and I mean then the delivery of our exports products within a reasonable time frame. Do not ask me whether that's 2 weeks or 3 weeks. We simply don't know. But we're ready with our ships. We have, of course, sister company we work with, the providers with the charters, and we're in a really good position to export these cargoes, and we're completely ready. It will take time, obviously, But if the strait opens, we will monetize our cargoes that are currently loaded from those islands with LNG or LPG.
Okay, so no visibility really on how quickly it's going to take. Multiple times over the past year, I've asked you about your Ruwais LNG facility, and I just wonder whether the situation, the effective closure of the straits has delayed or pushed back the timeline for when you think that's going to be operational.
What we have seen is that we are investing for the future. As I said before, we are spending about $20 billion of committed capex, and that money is there to facilitate the growth of ADNOC Gas. It is either ensuring that we have the capacity to deal with higher volumes coming from ADNOC, and don't forget, now that there is an OPEC exit, we will benefit as a company from more volumes, and the quality of the gas is such that it gives us more opportunity to export those products. And we're ready for the increase in volume and quality of the gas that comes to us. So we debottleneck or we build new infrastructure. As you said, Jemana, we also have a project called Ruwais LNG under construction that will be adding 10 MTPA to our existing 6 MTPA of LNG production capacity. Those projects so far are on schedule. Do I not foresee any delays? No, there might be a risk that when the supply chain is distorted, your projects could be impacted. At the same time, we also have plenty of opportunity to put in mitigating actions to ensure timely completion of those projects.
Okay, so baseline scenario still around 2028 to start exporting via Ruwais?
That's the current expectation, yes.
Okay. Talk to us about, some of the long-term contracts that ADNOC has with its customers, and what are the conversations been like there? And also, which customers particularly have been affected by these outages?
So ADNOC Gas buys raw gas under a 25-year supply arrangement. It's a long-term purchase agreement. Equally, our sales contracts are all of a long-term nature as well. If you look at the domestic market, the growth in sales under these long-term contracts is very much driven by the GDP growth of the UAE. In country, we depend on the growth of GDP, but also population growth. And what you see is that currently there are a number of initiatives, such as Make It in the Emirates, where there will be $55 billion invested in infrastructure in country, right? That all helps with the GDP growth, and therefore the company will be able to benefit as the provider of energy in the UAE. And we're the only ones who provide to the power sector, to the industries in country. So we're extremely central to the entire ecosystem in the country. The growth, as I said before, will benefit our shareholders. EBITDA will go up by more than 40% in the time frame up to 29. Then the export market. If you look at what is your proxy for your sales, in particular for LNG, and we invest in LNG, it is the demand in particular in Asia, where you see use of gas as one of the preferred fuels in those countries. So that, I think, is what is fundamental for a company like ADNOC Gas. We benefit from GDP growth, either in country, underpinned by a lot of investments in the country itself, such as Make It in the Emirates, and that is basically what drives our growth.
Peter, thank you so much for joining us today. Peter van Driel, ADNOC Gas CFO. Well, coming up, UK Prime Minister Keir Starmer is under renewed pressure after several lawmakers call for his resignation. That's next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
UK Prime Minister Keir Starmer is under renewed pressure after several lawmakers called for his resignation after his appeal for more time fell short. He has pledged to prove critics wrong and resist any move to replace him, saying he has a credible plan to rebuild voter support. Polymarket traders now bet he will be forced out by year-end. With rising odds, he is replaced by key rival Greater Manchester Mayor Andy Burnham. Joining me now is Bloomberg MLive strategist Van Ram. Van, so Starmer seems to be in a pretty delicate situation. There's quite literally a clock ticking. What has the market reaction been?
Well, the market reaction was kind of complacent until yesterday morning, until before his speech.
Yeah.
And they were assigning 33% chance of him going by June. Now they're thinking there's a 2/3 chance that he will go by the end of next month. So it's a pretty grim prognosis from the way it looks from the markets. But the markets would be keen to know if he's going to step down, obviously, then who's going to be the Chancellor and what that means for the UK's fiscal austerity.
Yeah, well, I guess a couple of the names that are being put forward is Andy Burnham. He has some hurdles to get through because he's not an elected MP. And then you also have Wes Streeting. So how would the market react to either one of those as potential successors?
Well, it would come down to who the Chancellor is. So far, Rachel Reeves has shown that she's going to adhere to fiscal discipline. Even with her approach to fiscal discipline, rigorous approach, what has happened is the 30-year yield has surged 100 basis points since the time she took office. That is twice as much as treasuries have risen. So it all comes down to what measures of fiscal discipline the new Chancellor will undertake. But of course, we don't know whether we are going to get a new Chancellor. So this is all a bit up in speculation, which is why the gilts market reaction so far has been contained.
Yeah. Less so of a pound trade, though. And is that because mostly, pounds, you're looking at the dollar side of the story?
Yeah, I think it's the dollar side of the story, and I think that the dollar is on the back foot, and there is no hedging interest. Interesting that there is no hedging interest in the dollar. Of the first phase after the war, we saw hedging interest, but after that, people seem to have moved on. So that is telling on the dollar, and the pound has been a beneficiary of those capital flows. So it's been sitting pretty so far.
Probably a function of people's expectations regarding the Bank of England as well, to do with the relative hiking profile of the bank versus the Fed.
That is a minor part, I would think, because, the Bank of England, even if you look at Megan Green, one of the more hawkish elements on the policy committee, she's thinking that 410 is about the rate the Bank of England rate should be at, because she's blessed that rate previously. So 410 is not anywhere near what the markets are expecting. So I think there's going to be disappointment on the rates front. The Bank of England is not going to be raising rates nearly as much as the markets think. In fact, if you look at the Taylor rule sits smack at 410, which is what Megan Green also said. So I don't think that the markets are looking at the, I think they are barking up the wrong tree here.
Okay, interesting, Ven. Always good to get your perspectives. Let's see what happens today. Ven Ram, Bloomberg M-Life strategist. All right, a look at other equity markets as we head into the European Open. Everything is red now. S&P futures down 0.2. European markets down 0.7%. Also keeping an eye out on the geopolitical situation over here. That was it for our show, though. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil and Treasury yields rise after President Trump says the ceasefire with Iran is on, quote, massive life support. A roller coaster ride, meanwhile, for the Kospi. Stocks in South Korea erased $300 billion in less than 100 minutes after a policymaker floated a citizen dividend using taxes on AI profits. Plus, the rebellion spreads. More than 70 MPs, reportedly including cabinet allies, are said to have joined calls for Keir Starmer to resign as UK Prime Minister. We'll bring you the latest from Westminster. Well, a very good morning. Here is the picture in markets as they stand this Tuesday morning. They were already weakened by President Trump casting doubt over peace in the Middle East. Then came those comments on a potential AI dividend in South Korea, throwing a major spanner in the works for the Kospi. And that has created a dramatic reversal, not just for the Korean stock index, but contagion spreading across Asia. As you can see on the left side of this board, the MSCI Asia Pacific Index down 0.5%. Now, we've got futures pointing lower on both sides of the Atlantic as well. Will we see spillover in the tech space? Factor in the the Iran situation and the tail risk of negativity in the Trump-Xi talks as well. So a red picture across the futures and equities picture at the moment. Now let's flip over to cross-asset space, and you can see oil is higher on the latest in the geopolitics. Brent now trading at $104 a barrel. That keeping Treasury yields under pressure as well. 442 is where we trade on the US 10-year yield, and the dollar strengthening as a haven as we look ahead to US CPI, up 0.2% on the Bloomberg Dollar Spot Index. Now let's take a look at the risk events on the docket for today. At 9 a.m. London time, we get the German ZEW sentiment survey, the first indication really of business sentiment in May. Then at 1:30 p.m. we get US CPI data, the expectation being that it'll moderate from March's pace on a monthly basis, but staying hot as you would expect given the war in Iran. And then today later on we'll be hearing a bit of Fed speak from John Williams and Austin Goolsbee. So plenty to bring you. Let's set you up for the day ahead. We begin with earnings breaking out of Germany. They are from the renewable energy company Siemens Energy, and the notable line is that they have accelerated the share buyback this fiscal year. They have done this given the surge in data centre construction that boosted orders last quarter, and so it's being accelerated by an additional up to €1 billion. Now, they're going to raise the purchasing target for the period by 50%, but of course the backdrop is this power-hungry data centre build-out, that benefiting the company. So net income soaring 67% in the fiscal second quarter, orders jumping to a record on this data centre boom. I'll be speaking to the CFO of the company, Maria Ferraro. That conversation coming up in just a few minutes, so don't go anywhere. But let's turn back to these broader markets now and the really shocking moves that we've been seeing on the Kospi, reeling really after $300 billion in value vanished in just 97 minutes. Let's get more on that flash sell-off with Avril Hong in the region for us. Avril, what are you seeing?
Well, it's that focus on the South Korean markets. As you say, this has been the market that's front and center amid the AI rally, and today it had quite the roller coaster ride. I like the way our MLive colleagues put it. In the time it takes to watch a football or soccer match, about 97 minutes, $300 billion worth of market cap was wiped out. Now flip the board. Let's talk through the culprits. We had the Kospi at one point losing 5%, as did the chip giants that have been leading the way higher amid this rally. They also declined by the steepest since early April, and this was no thanks to a Facebook post from a top Korean policy maker suggesting a citizen dividend from AI tax, which was later clarified to not be a windfall tax, but the damage was done. And I think today's episode really highlights a couple of things. How policymakers of economies that have been benefiting from the AI boom are under a lot of pressure to redistribute these gains, but also specifically for South Korean markets, the concentration risk, how crazy this rally has been, and how retail-driven it is. Of course, we did see a bit of that contagion, as you alluded to a short while ago, on the Japanese benchmark, which flipped to negative at one point, flipped the board. Let's take a look as well at what else we're watching out of Japan, because Besson, of course, is making his way through the region. He met with the finance chief earlier today. He's set to meet the Prime Minister later. So far, nothing in the way of clear signals of direct coordinated FX intervention, so maybe disappointing some that had been expecting some of those signals. We're continuing to see dollar-yen moving even further away from the 155 handle, and of course this follows on from the suspected bouts of intervention last week. Lizzie?
OK, well, we'll be diving into all that speculation around yen intervention later on in the programme. But for now, Avril Hong in Singapore, thank you very much. Well, we have seen oil prices rising, meanwhile, as President Trump cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, prolonging the effective closure of the vital Strait of Hormuz.
Right now, it's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
Let's go to the region now. We can speak to our Bloomberg Horizons Middle East and Africa anchor, Germana Basechi. Morning, Germana. Just talk us through what's looking more likely from here. Is it more military action or a diplomatic solution?
Well, you heard some of the perhaps hyperbolic language coming through from President Trump yesterday, describing the ceasefire as being, as quotes, on life support. He also characterized Iran's counter-proposal as being also, quote, piece of garbage. I will just tell everybody that the ceasefire is technically still holding up. And yes, it is fragile, but technically we still are in a state of ceasefire. But the question, as you say, is where we go from here and whether there still is hope for a diplomatic breakthrough. President Trump also indicating that Iran had signaled their intention to hand over what he describes as the nuclear dust. We have had no formal confirmation from Iran that that is indeed the case. But we are gearing up for a key week. We have that very high-level summit taking place between President Xi and President Trump in China. China, of course, have been playing an active participation role in terms of backdoor diplomacy. The Chinese foreign affairs minister met with the Iranian foreign minister last week. And of course, China economically are one of the key countries that have been impacted by the effective closure of the Strait of Hormuz. So we'll see whether out of that meeting, and we know that Iran is going to be discussed, whether there can be another big push on the diplomatic front. At the same time, when you talk about the potential resumption of hostilities, it seems very unlikely that the U.S. would go down that route even before the summit or around the time of the summit. We know that President Trump has once again been briefed by his senior military officials about potential options should they want to go down that route. But for the time being, I think it's fair to say that we are once again in wait-and-see mode. Both sides are positing that their stances are non-negotiable, but ultimately any negotiation, as anyone in diplomacy will tell you, will entail give and take and a little bit of compromise. And the question is how much pressure is going to be applied on both sides in order to get to that breakthrough or indeed resort back to hostilities. So we will see over the coming days.
Germana, thank you. And later in the programme, we'll also dive into what else is on the agenda for that Trump-Xi meeting. But for now, Germana Basechi, appreciate the update. Well, the mounting pressure on Keir Starmer, the UK Prime Minister, is set to be in focus for bond traders when gilts begin trading this morning. Yields moving higher in yesterday's session, tracking all of the uncertainty around the PM's future. Let's bring in Ven Ram now, Bloomberg MLive strategist, who is watching these gilt moves tick by tick. Then we saw gilts rising yesterday, gilts dropping, yields rising yesterday despite Starmer's speech. Really a plea to get more time from his MPs. Schroeder's actually saying steer clear of UK bonds for months. Do you have any hope that yields will come back down? Do you see any path towards that?
Not in the near future, I'm afraid, Lizzie, unless we get a new chancellor. Of course, this is all speculative, Reem. We don't know whether Starmer is even going to step down. But assuming he does step down, and if we get a new chancellor who is even more fiscally minded than Chancellor Rachel Reeves has been, then yes, yields will come down. But short of that, I think that the path of least resistance is for yields to climb higher from here. Already about 1 in 10 pounds that Britain spends, it goes to debt servicing. And if those costs, if there are suggestions that that interest payment cost is going to mount even higher from here, I think there is no way that gilts won't sell off. And for the moment, if the market reaction has been contained, it's because the markets don't yet know how this is going to play out, whether we will get a new chancellor. We don't know any of those details, which is why the markets have been holding back and which is why the pound has been resilient to a degree. Now, what is interesting, Lizzie, is that since the time that Rachel Reeves took office in 2024, the 30-year gilt yield has surged 100 basis points. That is twice as much as the increase we have seen in treasuries, comparable treasuries. So the markets are already, the yield on 30-year gilts is already the highest since Tony Blair, the Labour Prime Minister, was in power. So I think that the cabinet shouldn't want to incline towards a new dispensation. That means even more fiscal austerity is sacrificed.
But of course, as we can see on the screen, the Polymarket odds show that Andy Burnham, the Greater Manchester Mayor, is leading the betting odds to replace Keir Starmer. And this is the man who once said that we shouldn't be in hock to this bond market. So let's see how much the rest of the Labour Party cares about what the bond market thinks, Ben. I also just want to get your view on the US, because we've got CPI data coming at 1:30 p.m. London time. At what point do you see higher oil prices derailing the stock rally?
Well, I will come back to you on that one, but I wanted to say, as far as the hawk in the bond market is concerned, I think that, you know, when the bond market sneeze, everyone has to pay heed, and that includes everyone in Downing Street, whether or not they like it. As far as this oil prices and stock rally, we are supposed to get a CPI reading that is supposed to be ticking higher today. And I think that if that happens, the markets will start to question, look, is the Fed going to be able to raise rates? And given all the oil price rally, I think that, you know, the equities are going to be actually okay for now, because you've got this big AI boom. Earnings revisions have been huge, positive earnings revisions. So I think that the fair value of NASDAQ, as we have discussed before, Lizzie, is 30,000. And I think that NASDAQ will find that one or the other way to get to that level in a few months, I'm convinced. But I think that, you know, it's more the question for the bond markets here. What is going to happen? Is the Fed going to be able to cut rates as Trump wants them to cut rates? I don't think the answer is yes, and we'll find out in good time what happens.
Ben, thank you very much. We'll look forward to that data. That's Ben Ram, Bloomberg MLive strategist, standing up for the bond market this morning. Well, still ahead today, we'll be live from JP Morgan's annual Global Markets Conference in Paris, where CEO Jamie Dimon will be speaking to our very own Francine Lacroix. Stay with us for that interview at 2:45 p.m. London time. But up next, right here on Daybreak Europe, we'll be speaking to the Siemens Energy CFO, Maria Ferraro, off the back of their results as the German company accelerates its share buyback. We'll get more on that next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Well, Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, Siemens Energy is executing its planned share buyback faster after a surge in data centre construction boosted its orders last quarter. It told investors this morning that it's raising its buyback target for the period by 50%. Maria Ferrero, Siemens Energy CFO, I'm pleased to say, joins us now. Good morning, Maria. Welcome back to Daybreak Europe. So my understanding is you're accelerating the buyback. Do you also plan to expand it further in volume?
Well, first of all, I would like to say, of course, that acceleration of our buyback is on the back of a very strong Q2 and half year for us. We're very pleased with how the year has gone, whether it's our orders, which are up 30%, our profit is over 11%, and of course, as you mentioned, our very strong cash generation, which for the quarter stood at $2 billion, but for the full half year was at $5 billion. So on the back of that, Lizzie, you're absolutely right. We have indicated that we will continue to repurchase shares on the back of our share buyback program, so accelerating that by $1 billion for this fiscal year.
So the AI hype really is fueling this data centre build-out. That's benefiting you because it boosts demand for your gas turbines and grid equipment. I wonder how many of your gas turbine orders are now coming from data centre orders?
Well, and this is what we've indicated quarter over quarter, that of course the demand is very strong regarding AI and data center build out, and that's really structural in nature. Like we said, it's not a cycle per se, but really structural, and it goes broader and deeper. And that's why we upgraded our guidance this year, because both not only on gas, but also on our grid technologies business, we're seeing that really positive market momentum. And it's really because of increase in electrification, whether it's grid stabilization, grid expansion, also looking at that base power. Here we're seeing tremendous market demand, and hence why we've upgraded our guidance on all major KPIs, from revenue to profit to cash.
But I wonder how sustainable that build-out really is. Are you not concerned that if the AI bubble were to burst, let's say, then data centre growth could collapse and you would see cancellation for your gas turbine orders?
Yeah, no, Lizzie, this is something, of course, we're watching, but we haven't seen that. And when it comes to demand, like I said, it's more structural in nature. It's really about how do we look at these digitalization booms and electricity needs that are required as a result of that. And what we see here at Siemens Energy is really clearly demand going well into the end of the decade and into the next decade. So therefore, it's really now about conversion because the demand is there. We're sold out in major parts of our business until 2030 and beyond. And now it's about converting those orders into revenue, revenue into margin, and margin into cash. And hence why we upgraded our guidance this year. So really, it's much more broader and structural in nature.
So on the flip side, do you have any concerns about execution risks, given just how high demand is for your orders?
Yeah, it's a great point. And of course, with such demand, of course, we talk a lot about selectivity and ensuring that we're able to execute on those orders. One of the things that we've done is we've announced our expansion in light of that, really to ensure that that backlog can be converted and executed. And those plans are going well as planned. And of course, we look at supply chains very closely and ensuring that that's secured for our backlog. And this is something that we do on a continual basis. So, of course, it's something we watch very clearly and closely, but it's something that we've secured for our backlog that we have today.
Yeah, I think you've said you're spending 2.5 billion euros in capital expenditures this fiscal year. Where regionally are you spending that money, and what are you prioritising when it comes to spending it?
Well, we're prioritizing our expansion across gas and grid, but predominantly in grid. And one of the key areas we announced over $1 billion in CapEx spend and investment in the U.S. And we've also announced 2 additional facilities there for our grid business in Charlotte and also in Mississippi, in Jackson, Mississippi. And this is really looking at how do we ensure that we're able to meet the local demand there for large power transformers and switchgear. So again, we're very excited about that market, and we see that those moves are necessary to really ensure our local footprint.
Maria, just finally, your transformation of industry division reported fewer orders than in the second quarter last year, I think. Which segment within the division saw the sharpest decline? Can you tell us why that was happening?
Yeah, I mean, Lizzie, that's really on the back of some of the, let's say, Middle East conflict, some of the turbulence there that we're seeing. But I want to be very clear. It's more timing and shifts of orders versus real, let's say, losses per se. So we see some shifting into next year. And last year for Transformation of Industries, they had a very strong quarter. So it's also a comparability issue. But what remains clear on Transformation of Industry is that they continue to deliver quarter over quarter with 12% profit this quarter. And that's what we see of all of our businesses, really stringent, laser-focused execution. And hence, again, that's what we see in Transformation of Industries, and we're quite pleased.
Maria, really great to get the detail behind the numbers from you this morning. Thank you so much for making time for us. That's Maria Ferrero, Siemens Energy CFO. Thank you very much. Well, coming up on the programme, Cyril Ramaphosa rejects calls to stand down over a robbery at the South African president's farm in 2020. We'll dive into the details next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This week, leaders from the world's two largest economies will come together in Beijing. With geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
I think the overall understanding is that, Putin is in a weaker position than he has ever been before. We see they are losing on the battlefield a lot of lives. There is growing discontent in the Russian society.
EU Foreign Policy Chief Kaja Kallas on the Russian invasion of Ukraine there. Well, now to some other top geopolitical stories we're following for you this morning. Ukrainian anti-corruption authorities have accused President Zelensky's former top aide of money laundering. The agencies say they uncovered an effort to launder $10.5 million through a real estate project near Kyiv. The investigation is part of a broader embezzlement scandal involving the energy sector that led to Andriy Yermak's resignation back in November. Elsewhere, the US Navy says it will buy at least 15 Trump-class battleships over the next 30 years, expected to cost at least $14.5 billion apiece. It marks a deeper commitment to the vessels than previously revealed, with the Navy previously saying that it would buy 3, with the first arriving in 2036. And South African President Cyril Ramaphosa said that he would contest a report that criticised his handling of a robbery at his farm in 2020. That's after the Constitutional Court ruled that lawmakers had made an error 4 years ago when they failed to establish an impeachment committee to look into how Ramaphosa dealt with the theft of money hidden in a sofa on his game farm. Meanwhile, the president has rejected calls to stand down.
My fellow South Africans, while there have been calls in some circles that I should resign, nothing in the Constitutional Court judgment compels me to resign my office. I therefore respectfully want to make it clear that I will not resign.
And Kevin Warsh's nomination to the Fed has cleared its first Senate hurdle. Senators voting 49-44 on Monday evening to advance Warsh through a procedural obstacle with a confirmation vote set for today. A final vote to confirm Warsh as chair is expected later on this week. Well, those are some of our top geopolitical stories from around the world this morning. Let's take a look at the markets as they stand. As you can see, it's red across the screen for equities and futures this morning. We're already seeing the MSCI Pacific Index weighed down 0.5%. Most of the losses coming from Korea. The Kospi down 2.8%. This is on comments of a potential AI dividend in South Korea. So that potentially going to infect Europe and the US. Futures lower on both sides of the Atlantic. But coming up on the programme, US Treasury Secretary Scott Bessent in Japan to discuss currency policy. We'll get your latest on those talks next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil and Treasury yields rise after President Trump says the ceasefire with Iran is on, quote, massive life support. Meanwhile, a roller coaster ride for the Kospi. Stocks in South Korea are raising $300 billion in less than 100 minutes after a policymaker floated a citizen dividend using taxes on AI profits. Plus, the rebellion spreads. More than 70 MPs, including cabinet allies, are said to have joined calls for Keir Starmer to resign as UK Prime Minister. We'll bring you the latest from Westminster. Well, a very good morning. If you're just joining us, it's 6:30 a.m. here in London, and the markets look like this. Red across the screen. They were already weakened by President Trump casting doubts over peace in the Middle East. Then we had these comments on a potential AI dividend in South Korea, that throwing a major spanner in the works for the Kospi. A really dramatic reversal for this stock market. So we're down 2.6% as things stand, pairing some of the earlier losses. But as I say, $300 billion wiped out in under 100 minutes. And that contagion spreading across Asia more broadly. Will we see a spillover into the European session? We've got Euro Stoxx 50 futures down 0.7%, US futures down 0.2%, but we've got to factor in the Iran situation and the tail risk of negativity if the Trump-Xi talks disappoint as well. But flip over to the cross-asset picture, would you? We've got oil higher on the latest in geopolitics. Brent up 0.6% at 104.80 the barrel. That feeding into inflation concerns again. So Treasury yields still under pressure. We're at 4.42 on the 10-year. And the dollar strengthening as a haven once again, up 0.2% on the Bloomberg Dollar Spot Index. Right, let's turn to some breaking in earnings now. Out of Germany, this is the pharma giant Bayer, the redhead crossing the terminal, that adjusted first quarter EBITDA coming in at 4.45 billion euros. So a big beat on the estimate of 3.94 billion euros. Momentum for its key medicines really in focus here. Will we get some more detail on that? They are confirming the group outlook. They say that sales in the first quarter actually ever so slightly missed estimates, 13.41 billion euros. The estimate was for 13.49 billion euros. The first quarter adjusted EBITDA margin was 33.2%, actually beating the estimate of 28.9%. So shares barely budging year to date for this stock. Let's see if they react to these earnings. Now, turning to the front pages this morning, what do we have? The Wall Street Journal, first of all, leading on the US and Iran locking in a stalemate that's neither peace nor war. The paper saying that the two sides are far apart from a deal, but also don't want to resume fighting. Now, meanwhile, Les Echos out of France leading on the Middle East conflict as well, saying that US President Donald Trump wants to suspend fuel tariffs amid soaring pump prices. So, of course, one eye on the midterms later on this year. And finally, the FT splashing on UK Prime Minister Keir Starmer's future and whether his premiership can be saved ahead of a crucial cabinet meeting later today. Some awkward conversations likely to be happening around the table in Downing Street this morning. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which Terma subscribers can find by going to DAYB Go. Well, staying with the UK, the atmosphere around Prime Minister Keir Starmer's cabinet meeting this morning likely, as I say, to be tense after mounting calls for him to resign. More than 70 members of Parliament are said to have joined calls for him to set out a timetable for his departure following last week's local election losses. And for more, I'm joined by our Bloomberg opinion columnist, Rosa Prince. So, Rosa, need you to get your crystal ball out for us now. We've had 70 out of 403 Labour MPs calling on the PM to go. Why did Starmer's speech fail to reassure them? And really, where is the pressure coming from?
I think the problem for him with his big speech yesterday, that he had set it up as something of a make or break. And if you do that, then you really have to deliver. And Keir Starmer isn't the best speaker. He hasn't got that soaring rhetoric that might change people's minds. And he also didn't have much in the way of policy to really divert his own MPs and say that things were going to be different. The elections last week were so bad, and he didn't give them anything really to hang on to make them think, well, if we stick with you, then next time there are elections, which will be the general election in 3 years' time, we can go on and win. So I think he really lost the confidence of a lot of his party. And throwing forward, it does seem to me that we are now in the end game stage. It's bad enough to lose MPs, but he began last night to lose some junior ministers and even perhaps the cabinet. So yes, It's the regular cabinet meeting. It's not a special one, but it will be a special one because I think they will be discussing those final stages of how the premiership ends.
So how fast is this going to happen, Rosa? We've had talk of an orderly transition by September to Greater Manchester Mayor Andy Burnham. Do you think that the likes of Angela Rayner and Wes Streeting will wait that long?
That's the big question. So a lot of that is in Keir Starmer's own hands. He could do something. We've seen premiers do this before. We saw it with Tony Blair. We saw it with Theresa May, where he could say, look, I won't fight the next general election. Well, that doesn't have to be for 3 years. So the question then would be, would his MPs, would those potential contenders, you named a couple there, would they be patient enough to actually let him stay in office for that long, for a year or two? Or he could say, I'm going to be gone by the time of the Labour Party conference, which takes place in the fall. I think that's the kind of discussions that they will be having today. Now, even if the idea is to kind of leave some space and time for Andy Burnham, the Manchester Mayor, to return to Parliament, because remember, he can't run for the top job unless he's an MP, it's not at all clear that that path is smooth. Reform did so well last week in those elections. Is there anywhere in the country where Andy Burnham could stand and absolutely be confident that he would win? And I think there really would be chaos if the Labour Party make that kind of plan and then it doesn't come off.
Rosa, great to get your take this morning. Opinion columnist Rosa Prince, thank you very much. Well, turning to broader geopolitics now. Japanese Finance Minister Satsuki Katayama says that her team is working closely with US Treasury Secretary Scott Bessent on currency policy. The move signals a tacit US approval of Japan's recent suspected market intervention. We can get more detail now with Bloomberg senior editor Brian Fowler in Tokyo. Morning, Brian. So what can we take away from Katayama's latest remarks? Is it a confirmation of yen intervention?
Good morning. So first of all, let me just say that we know at Bloomberg that the MOF intervened in the markets because we looked at BOJ current account data a couple of days after the action, and we could see it. More than $30 billion spent buying the yen. Having said that, so far, MOF has not explicitly confirmed that they were in the market. And so looking at today's comments, I think it's clear that I think they did discuss the action. And I think what we can say is that they're emphasizing how closely they're communicating and how closely they're coordinating and how well that process is going. It means that in the talks, Bessent gave a nod of approval to the actions by MOF and supported it. And just remember, of course, Bessent in January took the unusual step of giving a nod to the New York Federal Reserve to conduct rate checks at trading desks, which is as close to intervention as you can get without spending money. So it's not a surprise, but yes, I think the two are on the same page, although no, they haven't quite confirmed it openly.
And what else is on the agenda? Was the BOJ something that came up? Of course, we know that Bessent's en route to China as well. Is that something they discussed?
Yeah, so a couple of things. So BOJ is, of course, very important. I think if you ask Scott Bessent, he would say that intervention alone is not effective in reversing currencies over the long term. And he would say it has to be combined with monetary policy changes. And he has said in the past that the Bank of Japan needs to have the room it needs in order to raise rates to fight inflation. It doesn't want to fall behind the curve, he said. So I think that came up as well. Katayama, when she came out of the meeting, didn't say so directly, but she did say the tools of monetary policy, the particulars, should be left to the Bank of Japan. So I think it came up. I think he made that point, and she reiterated to the market that that's where her stance is on that.
And of course, we know that Bessent spent a lot of his hedge fund career looking at Japanese bets, so this is familiar territory for him. Brian, thank you very much for the update. That's our senior editor, Brian Fowler. Well, meanwhile, the White House has confirmed that President Trump and his Chinese counterpart Xi Jinping will be meeting on Thursday morning in Beijing. Trump says that he'll raise arms sales by the US to Taiwan at those talks.
Do you think we should still be selling them weapons? The United States
well, I'm going to have that discussion with President Xi. President Xi would like us not to, and I'll have that discussion.
Let's get more now with Bloomberg North Asia economy and government editor Jenny Marsh. Jenny, what's the mood heading into this summit, especially given the setbacks that we've been seeing when it comes to the US-Iran talks?
I think there's lots of anticipation and then also modest expectations. This is a long sort of delayed summit. We've been waiting for this now since April. So it's very important for Xi and Trump to get together and to talk and to keep things very stable. But at the same time, so much has changed since they last met last year in South Korea. The war in Iran is casting a long shadow over these talks. You have Trump today talking about how the ceasefire with Iran now is on sort of massive life support. So any sort of big flare-up in sort of hostilities there would really be unfavorable to the Chinese. They want to be able to control this, to stage manage this visit by Trump, so that they're not going to want to see the Middle East kind of really sort of situation that's changing during Trump's visit. But I think overall, things are on track now, and people are just looking sort of towards the concrete and the deliverables of what actually the two sides can get done during this 36-hour visit Trump is making to China.
And Jenny, I mentioned that Trump says he'll raise arms sales to Taiwan in their conversation. How do you expect Xi to handle that?
Chinese leaders always bring up Taiwan when they meet with the US. It's their most top issue. It's the most sensitive issue. And Xi himself told Trump that he had to take the utmost care in arms sales to Taiwan when they spoke back in February. That was after the Trump administration had announced an $11 billion arms package to Taiwan, which was the biggest ever on record. So it's unusual for Trump to say that he's going to speak about this with the Chinese, because historically they've had this agreement with Taiwan. They will not discuss weapon sales, which they're legally obliged to provide Taiwan with China. But in reality, it is something that the Chinese want to talk about. It doesn't mean that Trump's going to budge on this. I think weapon sales are good for the US from Trump's point of view because he wants to sell more things. He's been encouraging Taiwan to pay more for its own defense, and selling them the weapons to do that sort of benefits both sides. It helps Taiwan protect itself, and it's good business for America.
Well, speaking of business, lots of CEOs will be flanking the president on this trip. The likes of Elon Musk of Tesla, of course, and Tim Cook of Apple, but notably not NVIDIA's Jensen Huang. Jenny, thank you very much for the preview. That's Bloomberg's Jenny Marsh. We're coming up right here on Daybreak Europe. Boeing CEO prepares for a crucial trip to China as the plane maker looks to land its turnaround plan. We'll get you the details next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:45 a.m. here in London. It's already been a rollercoaster session for South Korea's Kospi. Tech stocks dragging the index more than 5% lower at one point this morning after the country's presidential policy chief called for a dividend for citizens using taxes on AI profits. But we've seen those losses pare back somewhat after the policymaker said that he was not proposing a new windfall tax. Let's get more now with Bloomberg's senior strategist Neil Campling. Neil, I am scratching my head here. What is the difference between a windfall tax and a tax on AI profits?
It's a windfall tax without calling it a windfall tax, I think, Lizzie. Basically a way of making supernormal profits, as they will probably call it, as a way of creating a tax around this particular cycle. It's a strange idea in all senses, because these companies like Hynix and Samsung are investing themselves billions of dollars and in creating investing in the capex to create the chips that are powering the AI infrastructure. So the actual memory market in which they partake is very cyclical in nature. So whilst they're reaping huge rewards at the moment and enormous profits, that over the last 20, 30 years has not been sustainable through cycles. It is cyclical. There are times where their margins can be extremely high, 60, 70%, and they can also go down to the teens when things are tougher. So it is supernormal. It's not normal times at the moment in AI, but it also doesn't mean that they are going to be benefiting with billions of dollars of profit forever. In that sense.
OK, so as I say, we've seen the losses paring somewhat on the Kospi. Meanwhile, if we turn over to the Nasdaq, futures down 0.5% this morning. A different market, but we've had some really interesting comments. A bearish warning from Michael Burry of Big Short fame, I might add, predicting a dramatic reversal for the Nasdaq. Should investors be worried about the big run-up in tech valuations when we're hearing this from Burry himself?
Yeah, I mean, I think what we've seen so far this year is the narrative changed significantly. There were concerns early this year in the capex spend being unsustainable, the returns on investment in terms of this capex being questioned as to when companies would see those returns. And then it flipped literally on a dime to everyone being super excited about the potential for AI and that down the road profits will be made. Now, Burry is making the point that the Nasdaq is expensive because he thinks that we are over egging, if you like, the earnings capability of these companies. So if we look at the Nasdaq 100 as an example, it trades on about 24 times price earnings. He thinks it's trading on more like 40 times because we're overinflating. So we'll have to wait and see what pans out. What we do know is that at the moment, the earnings growth of the Nasdaq 100 is about 30 to 35% over the next 12 months. So much higher than the actual earnings multiple. So for the time being, definitely the earnings supports the Nasdaq valuation. But we'll see how that plays out over, well, NVIDIA numbers next week will be a key test to investor sentiment, that's for sure.
OK, Neil, thank you for that. That's Bloomberg senior strategist Neil Campling. Now, just breaking across the terminal, we have earnings from Monte Paschi out of Italy. The bank reporting net income for the first quarter that beat the average analyst estimate. We, of course, have seen lots of drama around the CEO, Luigi Lovaglio, ousted by the board after he refused to step down, then brought back, but the fallout continuing after his reinstatement. Just diving into these numbers, net interest income in the first quarter coming in at €1.04 billion, a beat, ever so slight beat on the estimate. First quarter revenue €1.96 billion, again an ever so slight beat, and net income €520.8 million, which is a chunkier beat, the estimate of €507.4 million. Now, staying with corporate news, Boeing CEO Kelly Ortberg is expected to join the US delegation to China ahead of Thursday's closely watched summit between Presidents Trump and Xi. Today's Big Take dives into the plane maker's strategy as it lays out the groundwork for a successor to its 737 jet. We can get more from Bloomberg's Danny Lee on this now. Morning, Danny. So what's Boeing looking to get out of this trip to China?
Lizzie, good morning. So when you have the US and China disagreeing geopolitically and economically, it's Boeing, the US plane maker, where they do have common ground. And with President Trump's trip to China happening this week, the fact that CEO Kelly Ortberg, Boeing CEO Kelly Ortberg, had been given a coveted invite to this China trip, he is expected to help preside over a significant order, a historic order of around 600 aircraft that China may well sign up for. And it's not just the numbers involved, the 600 aircraft that China could buy, but also just the size of this deal, its magnitude, to help really lift this presidential trip and the kind of trade numbers involved. But we are expecting around 500 737 MAX aircraft to be bought and 100 wide bodies as well. But this really would be significant because Boeing hasn't won an order from China since 2017, so it will help shore up this drought it has seen on its order books and help really nail that turnaround story that Boeing has been seeking for the last several years, and particularly under new management with the likes of Kelly Ortberg coming in. So it is very significant, and with the help of President Trump doing all of this plane diplomacy, and with these kind of expensive planes that are being sold, it does shore up on the trade deficits that the US has been really rallying about overall. So yeah, this could be very significant in helping that corporate turnaround.
And how's Boeing faring in its battle with Airbus, its big rival?
Well, since Boeing suffered the twin crashes with the 737 MAX jet, it has ceded so much ground to Airbus in terms of production output and sales. And so for the last several years, Airbus has had the lead, and particularly in markets like China. And so even though this number is significant, the fact that Airbus has sold roughly 400 aircraft to China this year and several hundred more in previous years, this just helps Boeing catch up in a very critical market, the world's second biggest aviation market. And so this does help overall. And since Boeing did outsell and outproduce Airbus last year, this really does help nail its turnaround overall.
Bloomberg's Danny Lee, thank you very much for bringing that to us. And you can read that big take for yourself on the terminal and online at Bloomberg.com. Plenty more coming up. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
I know that people are frustrated by the state of Britain, frustrated by politics, and some people frustrated with me. I know I have my doubters, and I know I need to prove them wrong, and I will.
UK Prime Minister Keir Starmer's plea for more time in yesterday's Policy Light speech, but calls are mounting for him to go. 70 out of 403 Labour MPs now calling on the Prime Minister to leave number 10. These are the betting odds from Polymarket at the moment, and as you can see, the Prime Minister is in the red. The idea that he's not out by the end of the year, now at 17, just under 17% here. The man who's the most popular to be the next Prime Minister, at least according to the betting odds, Andy Burnham, Mayor of Greater Manchester, but of course he doesn't have a seat in Parliament yet, so that can't happen immediately. But flip the board over, we can see what happened in the gilt market after Keir Starmer's speech. Yields rising on the 30-year despite his plea. Now, of course, we turn over to US CPI data. That is coming out later on today. The attention on that for markets this afternoon. A still hot print expected. And coming up today, an interview with the CEO of JP Morgan, Jamie Dimon, coming up later. The opening trade coming up next. Stay with us. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. It is Tuesday, May the 12th. Here's what's on the agenda. Starmer on the ropes as rebellion spreads. Trump says his Iran ceasefire is on life support. And talk of an AI citizens dividend roils the markets in Korea.
And let's start just there then, Tom. This is the Kospi, much talked about because of the strength of its performance so far this year. Not so strong today, and in fact it was down by more than 5% earlier on in the session, paring those losses back to 2.4% on that talk of an AI citizens dividend. We'll get into that later. The Iran conversation, the fact we have no resolution, we have no peace deal between the United States and Iran, all of that elongating perhaps our expectations of disruption. Euro Stoxx 50 futures down 0.7%. The pound against the euro not really moving much at all, but I didn't want to put in the pound against the dollar because obviously that's often a dollar story, but we'll watch this as the day goes on. We'll certainly watch gilts in around an hour's time on everything to do with UK politics. The countdown to the opening trade starts right now.
Tuesday morning, good morning. It's 7 o'clock now. The gilt market opens in an hour. We think there's a cabinet meeting. The British press is reporting there is a cabinet meeting here in the UK at 9:30, though I have heard it could be as early as 9. British politics febrile at the moment. What happens with Keir Starmer? The reset speech yesterday, that failed. Obviously, we didn't get a big reset, and now we've got talk overnight of cabinet meetings, cabinet ministers going in and telling him he's done, it is time to move on, and we've got junior ministers resigning, and we've got a lot of chaos. How do you react if you're the gilt market this morning, I guess, is the key question.
Political uncertainty is becoming more of a feature than a bug for UK politics and for the UK market. So a couple of things that we're watching. Yep. You're going to probably say that that's been a feature. For,
well, no, I think it's a bug, not a feature.
Sorry, bug, not a feature.
It's not a good thing, not a bad thing.
A couple of metrics that maybe the markets might be watching. If we get into the granularity of what's happening politically, so we're watching the numbers that could tip that 80-plus number of MPs, of Labour MPs, that could trigger then that a formal contest for the seat of Prime Minister. We're currently at around 70 or 71, according to the count. And then, to your point around cabinet ministers, we know there's been pressure from at least a couple for some kind of time frame for Prime Minister Keir Starmer to step down. How, if any, resign? Clearly, that would be a moment as well in terms of how this steps up a gear. So we're watching those numbers, 70, 71 versus the 80 that are needed, and then potentially cabinet ministers, if they were to resign, that cabinet minister meeting happening, to your point, Guy, later today. So those are a couple of things that markets may be focusing on. And, of course, yields were up, 9, 10 basis points on the 10-year yesterday? Yeah, absolutely. It does seem as if we have a bit of a split in the cabinet. There are some who are urging him to reconsider and to think about the timetable. So the reporting around Shabana Mahmood suggests that maybe she is in that camp. There are others who are maybe more supportive, and some who are said to be, according to our reporting, more neutral on the subject, or not really urging him in either direction. But if you're not taking a stand here, or if you're backing the Prime Minister, it's not necessarily because you want him to stay. Maybe if you want Andy Burnham and you don't want a contest right now, you take that kind of stance. So there's all kinds of dynamics happening here. We'll certainly be watching Wes Streeting, as he's the Health Secretary, and he's somebody who's been preparing for months for this kind of contest. So we'll watch how that develops. And Andy Burnham cancelled a speech yesterday, so there is some expectation that he is working on something. Will he find himself a seat that becomes suddenly vacant that is solid enough for him to stand in to try and get him into Parliament?
Who beats Farage? I asked the question. Who out of these candidates can beat Farage? Or is that just simply too far away?
is that the question that the Labour Party will ask themselves or should ask themselves? And that might not be the same question. Should we talk about something else that is certainly on the market's mind this morning, with oil prices once again at $105 a barrel, up by 1%? We've had not very positive language coming from President Trump on the prospects for a peace deal. He says it's still possible, but the ceasefire, he says, is on life support. So we saw stocks drop a bit on this in the session yesterday, but then they sort of wavered around after that. Oil prices have risen on the back of this. He said he didn't even finish reading the Iranian response. So little regard did he have for it. So now we move on to what's next, and there's talk that perhaps there could be a resumption of Project Freedom. They tried that. That was the kind of escorting of ships out. Axios is talking about whether there's consideration, or saying that there is consideration at the top table about military action. Bloomberg Economics suggesting we're going into some kind of new normal, where we see these temporary flare-ups on a more protracted basis as this just drifts on into 2026.
The prospect of large-scale military strikes on Iran by the US during a meeting between President Trump and President Xi seems unlikely. The optics would not be optimal. So do markets at least assume that's not going to happen, at least in the next few days? As Moody's puts out a note this morning saying our base case now is a long, drawn-out closure for the Straits of Hormuz.
I think you're absolutely right. I think there's no chance whatsoever that they would conduct kinetic action while Trump is in China. That feels like a very long shot. So you can park this to the end of the week, presumably. But next weekend looks like it could be much more exciting once again. But so what do you do with that? Do you park it again and focus on AI? Is that how you position around all of this?
Well, AI is suddenly looking a little volatile as well. That have obviously been the momentum and the gravity, the pull of gravity, and where investors have been leaning. And we've seen that over days and weeks. But the story out of Korea, really fascinating. The Kospi as king, but question marks from a key advisor to the president in South Korea, suggesting and touting, at least putting out there, the idea of potentially a dividend on taxes from AI. Now, he came out and clarified he's not necessarily looking at an additional tax on some of these big AI names, SK Hynix and Samsung front and centre, of course, but distributing the tax that is collected and the revenues are collected for some kind of dividend for citizens. The point is, this is likely to be a conversation not just had in the halls of power in Seoul, but elsewhere.
Yeah, absolutely. Lots of big questions about where the benefits accrue of this kind of technology. Does the market understand exactly where they will accrue and where they will be left to accrue? And also, for fiscal authorities globally, if this is going to have a big impact on your tax base, are you going to look to other places to try and find new tax levers? Is that what we're looking at here?
Windfall taxes are not uncommon.
No.
They happen all the time.
That's what was interesting here, is because this was not a new tax. It was just, windfall profits. What a nice thought.
But balloons are being floated.
Yes.
So ideas are being thrown around. Oh, yeah, no, we're not talking about that. But we've put it out there.
Yeah.
So the idea is now out there. And once it's out there, this government, other governments will undoubtedly continue to look at it quite carefully.
$300 billion wiped off at one point in 97 minutes with a superlative around the Kospi this morning.
It's getting very narrow. And I think that's the other story as well, is how specific do you need to be, particularly as the point of contact with AI seems to change. Picks and shovels, which companies are you talking about? How does it work?
Just because you mentioned the timing and the market thinking about the timing of the China visit and how material that might be to what goes on in Iran, I think it's interesting to think about the timing, back to where we started this conversation, the timing of the King's speech. If it doesn't look good for violence to resume in the Middle East when the President Trump is in China, maybe it doesn't look good for infighting within the Labour Party to continue when the King is in Parliament delivering his government's messaging. So I wonder if that also alters the timing and our thinking about how quickly things unravel around Keir Starmer.
It kind of feels like it's whether or not Andy Burnham's in the House or not that may ultimately determine the timing on this. Andy Birchman is the Munich Re CFO. He's going to be joining us very shortly. Lots to talk about there. Sarah Malik, Nuveen's CIO, is on this side of the Atlantic and will be sitting down with us, I think, at around 8 o'clock London time. Mathieu Wiltz, JP Morgan EMEA co-CEO, is going to be joining Francine. Looking forward to that conversation. And Lasse Christoffersen, Valenus Wilhelmsen, CEO, is going to be joining us. We're going to talk shipping in that conversation.
Here's what else we are watching throughout the day then. At 8:15 p.m. a.m. UK time, the New York Fed President, John Williams, will be speaking at the S&P IMF conference in Zurich. The JP Morgan Capital Markets Conference is getting underway in Paris. We have some great guests, of course, from that event. 9 a.m. UK time, Italy's industrial production. 10 a.m. UK time, we get Germany's ZDW survey. And at 1:30 p.m. UK time, it's the big one, really, on the data front, on the macro front. It's US inflation data, CPI, crossing at 1:30 p.m. UK time. We'll be marking that for you.
What else do you need to know this Tuesday morning? SoftBank founder Masayoshi Son is said to have held the talks about unveiling a French AI data center project with the French President Emmanuel Macron. Bloomberg understands Macron proposed the idea during a recent visit to Tokyo, and the unveiling could come as soon as this month. Sources say Son is considering a multi-billion-dollar investment in France as part of SoftBank's global build-out of AI infrastructure. Japan's finance minister has confirmed that her team is coordinating closely with the US Treasury Secretary Scott Bessent on currency policy, signalling tacit approval of Japan's recent and suspected market intervention. Keep an eye on the charts this morning on that front, by the way. Bessent has held talks with Satsuki Katayama in Japan less than 2 weeks after multiple days of suspected large-scale yen intervention by Tokyo to prop up the currency. Again, I point you to your Bloomberg terminal dollar-yen, maybe a session chart worth watching. President Trump is set to meet with China's Xi Jinping Thursday morning in Beijing. According to a White House schedule, the two leaders will hold an early bilateral meeting before a state banquet, which will take place in the evening. Trump will be accompanied by more than a dozen U.S. business leaders. However, NVIDIA's Jensen Huang is one notable absent, though he has done a lot of miles recently.
The lobbying front from NVIDIA and Jensen Huang has been intense. They managed to get the H200 chip has been signed off, but it doesn't seem that there have been many shipments into the Chinese market because they're still waiting for approval from China for their own tech companies. But it is quite a signal, isn't it, that Jensen Huang is not necessarily or is not going to be on the plane with the likes of Elon Musk.
Does he feel he doesn't need to be
of Apple,
or it's just I've been there so many times recently that actually I'm not going to achieve much more than I haven't already have achieved. I just think it's interesting.
As recently as last week, I think it was last week, Jensen Huang was saying that he would happily take the invite to be on that plane, to go and be part of that visit. This is such an important driver of revenue for NVIDIA. It's not an insignificant number. They had that success on the lobbying front in terms of the bill that was being pushed through, and then the H200. But maybe that level of success has come to an end. Maybe he's run as far as he can on that road, at least for now.
Interesting. We've also had some commentary from the Trump administration, from President Trump himself, about what he wants to talk to Xi about. And he's talked about pushing them on Iran. He's talked about Taiwan being on the agenda. He says that the Chinese will want to talk about that, and he wants to talk about that with them. He'll also be talking. Well, there'll be plenty of time for talks and banquets and tea, apparently. So that all lies later on this week. Coming up on the programme, we'll take a look at the stocks to watch at the open, including Siemens Energy, the German manufacturer accelerating a share buyback after a surge in data centre demand. Plus, we'll be speaking to the head of shipping company Wallenius Wilhelmsen as the Strait of Hormuz remains effectively shut to vessels. They have one shut behind these blockades. We'll get an update. Up next, we will go live to Paris, where JP Morgan is holding its Global Markets Conference. We'll be hearing from Mira Chandon, who's the lender's co-head of Global FX Strategy, Francine Lacroix on the ground to talk about all the global themes from that conference. If you have any questions for our guests, then please do get in touch. IB plus BBTV Go is the function to use. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Right now, it's on life support. They understand these are all medical people. Dr. Oz, life support is not a good thing. Do you agree?
Bad prognostic.
I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
President Trump speaking to reporters in the Oval Office yesterday. Let's think about where we are in the Iran story. Oil prices climbing as President Trump continues to cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, prolonging the effective closure of the vital Strait of Hormuz for, well, let's see how long. Let's bring in Bloomberg's Jumana Basechi, who's in Dubai. What's looking likely from here then, Jumana? I mean, everybody wondering whether we just stay in this sort of paralyzed state for some time or whether military action is inevitable. What are you hearing being discussed?
Yeah, and we heard from President Trump there, perhaps taking a little too lightly what is quite a grave situation, but describing the ceasefire as being on life support. He also went on to describe the Iranian counterproposal as a, quote, piece of garbage. Probably, you know, a bit of an exaggeration there, but at the same time, he also seemed to insinuate that the Iranians are planning on handing over the nuclear dust. That is, of course, we've not heard any indication from the Iranian side that that is the case. But then he went on to say that a diplomatic solution is still in sight. So multiple different narratives coming out from President Trump during the course of that press conference yesterday. It is noteworthy, though, that this Trump-Xi summit is happening the next couple of days. Iran is going to be one of the topics on the agenda. We know that that's the case. And the Iranian foreign minister was actually in Beijing last week, meeting with the Iranian foreign minister, with the Chinese foreign minister, I should say. China has been reiterating its calls for de-escalation and for a full reopening of the strait. So we'll see whether any diplomatic breakthrough can be achieved on back of the Trump-Xi summit. That's an angle to watch. But when it comes to the possibility of military escalation, Trump once again was briefed by his national security advisors on multiple military options, conducting these surgical strikes, key targeted raids. One of them would be to extract those the highly enriched nuclear material. But he also posited the prospect of restarting that Project Freedom. Remember, that was the plan that the U.S. put in place to help guide vessels through the Strait of Hormuz. It was aborted a couple of days later because it was seen to be too provocative at the request of Pakistan and Saudi Arabia. President Trump once again suggesting in an interview with Fox that they may look to restart it again. So clearly the pressure is on the president to find a solution to the strait and then, of course, address the longer-term issues of nuclear. But let's see whether diplomacy can be given a chance throughout the course of this China-U.S. summit later this week.
Jumana, we'll watch that carefully. Thank you very much indeed for the update. Jumana Basechi joining us out of Dubai. Now, amidst all this geopolitical uncertainty, JP Morgan executives are gathering this week with hundreds of clients for the firm's annual Global Markets Conference. Bloomberg's Francine Lacroix is there in Paris and joins us now. Fran.
Thank
Thank you so much, Guy. I'm delighted to speak to Mira Chandan, co-head of Global FX Strategy at JP Morgan, because you know what? It's always a good idea to talk FX on the back of all the geopolitical uncertainty. Mira, thank you so much for joining us. And we're just having a fantastic recap on the fact that actually we don't really know what happens in the Middle East. Geopolitics is still upended. There's a bit of volatility expected, some kind of diplomatic solution, and then 2 hours later, not really. What does that mean for dollar?
Look, I think the fortunes for the dollar have turned around pretty sharply in the last couple of months, ever since the conflict started. I mean, the number one thing is that higher energy prices is good for the dollar. Before this, we were pretty bearish on the dollar. If all of a sudden you have higher energy prices, well, the U.S. is a net exporter of energy. Asia and Europe are importers. So that obviously puts the dollar at the forefront. And then on top of that, what you're seeing is U.S. equity markets are doing better again. U.S. data is more resilient. So that trifecta is really putting things in a much better position for the dollar. So we're not bearish the dollar anymore. I think we have to wait and see how the conflict resolves. Until it resolves, the dollar is going to remain pretty strong.
I mean, a lot is probably riding on the CPI print from the U.S. What are you expecting in terms of inflation?
Look, inflation is firming everywhere. And, the CPI prints today should confirm that for the U.S., but we've already seen that in the rest of the world as well. And I think one lasting impact of the Iran conflict is actually that inflation is going to stay persistently higher, meaning central banks are going to be quite constrained in how much easing they can deliver, including the Fed. Now, the Fed has repriced already quite a bit, so, we don't have any cards priced in at this point. So even if you get a firm inflation print, I think the market might want to try to price in a Fed hike, but that's going to be hard before Chair Warsh comes on. So I think they're in a bit of a limbo on the Fed pricing, but my big focus for the dollar is that the market can start to price in hikes at some point, and that's really what we'd be vigilant for.
Amira, if you look at the Fed Chair Warsh, does he actually really change the dynamics? I don't know if there's a bias because he talked about a cut that he's less likely to hike at least.
Yeah, it's going to be hard because he's one vote, and as we've seen from the last FOMC meeting, they've already it's a fairly divided committee already. We've had three people actually dissent against the easing language. So I think the hawkish sentiment is taking hold. And, for one vote to change that is going to be quite an uphill task, especially if the inflation data is firm today and growth continues to be strong.
One of the most exciting currencies has definitely been yen. So we also saw the Treasury Secretary over in Japan speaking to the Finance Minister. Are Japanese authorities going to continue intervening?
They don't want a weak yen, but they don't want a strong yen. So I think they've clearly set themselves up for 160 being a line in the sand for dollar yen. And they've intervened quite decisively. Now, we're totaling up to around 9 trillion of intervention, 9 trillion yen. If you look in prior episodes, the latest episode was like 15 trillion. So there's certainly more firepower where that came from. And I think in a way, well, obviously, we know that the administration, or at least we can infer from what the U.S. administration is telling us, is they want a weaker dollar. So they're not going to push back against more interventions, I don't think.
Yeah, which is why, reading between the lines, the Treasury Secretary actually, he didn't bless intervention, certainly he didn't outcry against it.
Yeah, and, not outcrying it is almost, from my interpretation, is you blessed it. But it's interesting things happen when a Treasury Secretary Besant goes to Asia. I mean, obviously, we were talking about the Mar-a-Lago Accord, not too long ago. We never really hear anything specific about that. But then what we see is that Asian currencies do tend to strengthen in these periods. And the interesting thing is China also is strengthening the yuan, which is actually a pretty big sea change compared to last year.
I mean, this is really the story of the week, is this President Xi, President Trump meeting. What are you expecting from it?
Look, we're focusing on the usual things. It's going to be about the Iran conflict. Obviously, China is a big energy importer. They've got massive stockpiles, so it's not a sense of urgency. But obviously, everybody wants to see that result, so we'll be looking to see what's happening with that. It's going to be about trade, which includes semiconductors and things like rare earths. Obviously, that negotiation. Will we hear everything? On all topics? Probably not. But I think, for me personally, what they say about the Iran conflict is going to be quite meaningful there.
I mean, what happens to renminbi right now? I know that we're also hearing about swap lines. You know, they seem to be pivotal, actually, to what happens to the Middle East, but also the price of oil.
Yeah, look, they've been. I think if you look at what China's doing with the yuan, they've been strengthening the currency, but they're gradually strengthening it. So. Essentially just offsetting the carry. And I think that's the part that we see. Dollar CNY probably goes down to 670, if not slightly lower, but it's going to be a steady drift. I think it's going to be great for the currencies in Asia, you know, from a performance perspective, because you have a pretty high sensitivity to China. So I think they're guiding the currency stronger, but it's not going to be a massive amount of currency strength.
Yeah, sterling. So you have a prime minister that's kind of clinging on. I mean, it looks very difficult. I don't know how you see the path forward politically for him. And so that has, you know, puts many questions on the table about fiscal, about what happens to whoever replaces him. And then you have the energy complex, which makes the BOE job very difficult.
Yeah, look, sterling, you know, if you look at the data that we've been getting out of the UK, it's actually been pretty strong. And it is a high yielder within the DM context, so you tend to think, okay, it can actually do well. But I think the political issues are obviously going to be front and center in the next couple of weeks. It's looking like that, you know, even overnight since Starmer's speech yesterday, you've seen the dissents have actually, and the noise has grown louder. So, and the odds, as we've been seeing, have gone up that he's going to go. I think, you know, that can present a short-term volatility episode in sterling. You know, at the end of the day, if there are increased concerns on the fiscal side, at least the yield curve steepening, and that tends to transmit over into sterling. So if your sterling is 86.50, you know, we think that in an adverse scenario, we could get it 89 or something like that. So 2 to 3% of weakness in knee-jerk, and then we'll see where we end up. But, you know, markets usually are pretty good. Bond markets are pretty good in curtailing any kind of fiscal ambitions. We've seen that time and again. So that's my expectation here. But it's too soon to really fade it yet. Yeah.
Meera, as always, thanks so much for joining us. Meera Chandan, there, the co-head of Global FX Strategy at JP Morgan. With that, I'm going to send it back to you in London. Of course, we'll have plenty more throughout the day here in Paris.
Fran, great stuff. Thank you very much indeed. And JP Morgan's Chase CEO Jamie Dimon will be speaking with Francine at the bank's conference later. So stay with Bloomberg for that conversation, 2:45 p.m. London time. Coming up, we are going to be speaking to Munich Re after first quarter profit jumped 57% on lower claims from natural disasters. Our exclusive conversation with the CFO, Andrew Buchanan. That is next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Tuesday morning, good morning. Half past the hour. Futures at this point fairly negative in Europe, to be honest. You're looking at down 6, 7, 8 tenths of 1% pretty much across the board. Over in the United States, the picture looks a little bit more benign. You've got the S&P down by 3 tenths of 1%, but the Nasdaq's actually down by half of 1% in terms of current positioning.
Yes, so that's the stock picture, expecting some fairly dramatic moves perhaps at the start of trade. Also expecting dramatic moves at the start of the gilt market trade. And here's part of the reason. This is the European bond market story so far. So we have the rest of Europe opening up and actually opening down and yields going higher. We could see through the Asia session that the market was nervous about inflation broadly. That seemed to be part of why we were seeing Treasury yields going a little higher. But certainly over in Japan, we've seen some yields going higher, perhaps for similar reasons, perhaps for very different reasons. But we're up by 7 basis points at the long end over in Japan. So that sets the stage for yields to go higher here in Europe, even before you start layering on the complexity around UK politics. So we were up by 8 basis points on gilts yesterday. Today, we start the European session with Italian BTPs up by 7 basis points. On top of that, what will gilts do in 29 minutes' time?
Yes, the setup looks potentially challenged, doesn't it, for gilts and potentially higher yields once again. Let's get back to the earnings story right now, though, before, of course, we get to the UK story later in the hour. Munich Re has this morning reported first quarter profit up 57% on lower claims from natural disasters. Net income of just over 1.7 billion euros was essentially in line with estimates. Joining us is Munich Re's CFO, Andrew Buchanan. Andrew, thank you for your time. You've also confirmed net profit targets. You've confirmed that target, 6.3 billion euros this year. What is your level of confidence in that target, given the earnings story that's come through, and particularly in light of a potential downturn in the US dollar? If we get further dollar weakness, is that target challenged? What is your level of confidence in that target right now?
Good morning, Tom from Munich. Thanks a lot for having me on. As you say, a really strong start to the year, 1.7 billion euros. If you naively multiply that by 4, you do get to significantly above where we want to be by the end of the year. To answer your question, I think the 6.3% is looking pretty safe, pretty solid at this stage. We're in the reinsurance and the insurance business, so we know that anything can happen. We still have the hurricane season ahead of us. We always throw in that caveat. And so the numbers can fluctuate, but I would say at the moment, if you look at the underlying earning power that we have in the business, if you look at the strength of our reserves, and also if you look at the fact that on the investment side, our reinvestment yield popped up quite nicely in Q1, I think the outlook for the rest of the year is pretty solid. Your question about the US dollar is justified because, of course, the weakening of the US dollar that happened through the course of last year did hurt us because a lot of our top line is derived in US dollars. What I would say to you there is our business model is increasingly diversified. And I would say in particular, the less dollar exposed parts of our group are growing nicely. I would also say in terms of pure currency exposure in our P&L, we've actually reduced our exposure, in particular to the US dollar, over the last year.
Okay, that's interesting on the FX effects. What do you, in terms of volumes of written business, that drop, those volumes dropped a little over 18% in the April period. Does that trend continue, do you think?
I don't expect it to continue at that level, to be honest. The number you just referred to, just so that your viewers understand what that means, is specifically in our P&C reinsurance segment, and it relates only to the book of business that we renewed on the 1st of April, which is a relatively small part of our overall portfolio. It's about 11%. And so when you're dealing with a book of business there that isn't particularly large, 3 or 4 contracts can really swing the outcome either way. And we did indeed give up some proportional business, for example, in Europe and in India, which tends to come with high top-line volumes. And so when we reduce our shares on those, or where we even walk away from business because it doesn't meet our profitability requirements, that tends to have a disproportionate impact on the top line. So that minus 18% number that you just mentioned, I think will probably get some attention from our analysts today on earnings day, and we'll be talking to them in an hour or two. But I think it's important to keep that in perspective. And I would suggest that the next big renewal date, which is July, the 1st of July, I would expect the underlying market dynamics to be similar, but there's no particular reason to expect the minus 18 number to happen again.
Andrew, good morning. It's Guy. Interest rates feel like they're going to be going higher. What do you anticipate you are going to do as a result in the investment portfolio?
Good morning, Guy. So actually, this is not all bad for us. You know, we do have to turn our portfolio over. It's certainly more than 10%, maybe less than 20% each year that needs to be reinvested. And the good thing for us is that our reinvestment yield in Q1 really popped up to 4.2%, which certainly helps us because it means that we can rotate our portfolio into a higher running yield. And I would say the running yield, which we showed in Q1, the 3.5%, is a solid start to the year, but I think we'd all like to see that creep higher a bit, and I think we have the ability to bring it higher. So I would say, all else being equal, you know, the attractiveness for us of fixed income, if anything, probably increases a bit. It suggests we can harvest a good running yield while investing in relatively safe assets that match our liabilities. The other good thing being an insurance business is that our newly incurred claims get booked on a present value basis, on a discounted basis.
Yeah.
So a slight increase in the yield curve actually helps our combined ratio.
What is your view on private assets right now? Are you slowing down in terms of your investments into the private asset space, direct lending, what's happening there, particularly to mid-market businesses? Where do you see us in the economic cycle again? Are you kind of rethinking, changing your thinking regarding some of the strategies you've employed there?
So for us, we don't consider that there's any need to do a significant rethink at this point, but that's because the class of assets that you're talking about are a really modest part of our overall portfolio, and we're investing at really the higher quality, excuse me, sorry about that, at the higher quality end of the spectrum anyway. So if you break down our portfolio and you look into the alternatives, and then within that you look into illiquid debt, and then within that you look at private credit, which is the part that most people are focusing on at the moment, it's about 1% of the asset portfolio of our entire group. So it's between about 2 billion euros and 2.5 billion euros, which for us is an incredibly digestible amount, I would say. And then within that, we are really investing in the senior secured end of the spectrum. So, you know, more than 90% of what we buy would be senior secured. More than 90% of what we invest in would be paying cash coupons. And it's through very carefully selected funds who also have strong workout capabilities should default rates start to tick up, which we're not particularly seeing in these sort of higher quality tranches that we're currently invested in. So we proceed with all due caution. We're aware of what's happening out there in the world. But as I say, in terms of absolute exposure, it's very digestible, and we are going for the quality assets.
Okay. Okay, so that's the context around private credit. Can I ask you a big picture question about the role of AI within the insurance sector? I was recently reading some reporting around another insurance, a smaller insurance business, where the CEO was talking about a world with reduced uncertainty as a result of AI, and saying you could see a way that actually reduces cover, that certain people get excluded from cover as a result of reduced uncertainty. I wonder how you think AI plays into an industry that typically is all about pooling risk.
Absolutely. I think that's an interesting argument, and there may well be some truth in that. I think if you look at the staggering amounts of uninsured risk out there across probably all classes, but including things like cyber risk, for example, I would say that there's plenty of runway for the insurance and reinsurance industries to continue to grow in the coming years and even decades. And there's an incredibly powerful social and economic role that insurance and reinsurance need to play. I think the other way of looking at the question is to say, how does this change the way insurers and reinsurers do their business? And on the primary insurance side, it's very powerful. And I think any primary insurer that isn't looking into applying AI is in danger of being left behind. Certainly, we have in our Ergo subsidiary things that you would expect, like speeding up administration and processing of accounts. We have a master chatbot for phone call centers that helps to triage phone calls to the right place. All of these kinds of things, which probably you would hear from other organizations as well, I think are absolutely what we need to be doing. And on the reinsurance side, which tends to be much more bespoke, much more customized, you know, one of our proprietary assets is our incredible store of data. And because we have had an AI development program for 5 years or more, we're in the position to be able to train in-house AI models using our proprietary data without exposing them to the outside world and essentially giving up this competitive asset that we have.
Andrew, great to catch up. Really appreciate the time this morning and the update. Thank you very much indeed. Andrew Buchanan, Munich Re CFO, joining us appropriately from Munich. Let's turn our attention to what is happening in London. Keir Starmer striking a defiant tone yesterday, but the knives are now well and truly out.
It's about taking responsibility to explain how, as a political and electoral force, we will be better and do better in the months and years ahead.
Darren Jones, key ally to Starmer, key advisor to Starmer, saying within the last few minutes on radio that he is going to make a decision on his future. You are looking at a live shot of the door at 10 Downing Street. We will come back to this story shortly. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. We're a little over 15 minutes from the opening trade this Tuesday. Checking your futures for you. European futures pointing lower by 0.9%. US futures also lower, and the S&P E-minis by 0.3 after another record high yesterday for US stocks. But again, today, the mood has turned certainly more negative across European equities.
Let's have a look at the pound, because this is an area of focus for us this morning. The pound against the US dollar now down by 0.4%. It's been moved around by other global themes because the dollar has been strengthening. The yen has been really volatile today. But that aside, we are actually seeing a little bit more movement in the pound against the euro as well. So that suggests that there's something more domestic at play here, and certainly there is. The UK Prime Minister Keir Starmer is under renewed pressure after several lawmakers called for his resignation after his appeal for more time fell short. He has pledged to prove critics wrong and resist any move to replace him, saying he has a credible plan to rebuild voter support.
I know that people are frustrated by the state of Britain, frustrated by politics, and some people frustrated with me. I know I have my doubters, and I know I need to prove them wrong, and I will.
Well, that was yesterday. Now, polymarket traders are betting that Prime Minister Starmer will be forced out by year-end. With rising odds, he is replaced by key rival Greater Manchester Mayor Andy Burnham. That's complicated, though. Let's bring in Bloomberg's Lizzie Burden, who can take us through some of the things at play here. I mean, we're thinking this morning about how soon might it happen that Prime Minister Starmer is ousted. We've heard from Darren Jones, the Chief Secretary to the Prime Minister. He's been talking to Times Radio, saying the Prime Minister's listening to colleagues, he's talking to colleagues. I can't say what decision he may or may not take. I'm not going to get ahead of the Prime Minister's decision, which sort of has the language has some imminence to it, doesn't it?
And it opens the door to a decision that Starmer actually goes. When you heard that defiance from the Prime Minister yesterday that he's staying, interviews over the weekend saying he's going to be here for the next 10 years, but of course that ringing hollow after the local election results. Look, by our last count, you had 70 out of 403 Labour MPs now calling for Starmer to go. But what's even more worrying for him is that it even seems to be members of his cabinet calling for him to go, at least privately. Reports that the Home Secretary Shabana Mahmood has done that and asked him to set out a timeline to go. And I think, apart from the fact that that sets up a dramatic, awkward cabinet meeting today that Starmer will be chairing, what is interesting here is that you've got this divide within the Labour Party emerging. So polymarket odds talk about a year timeline, but within that year, of course, given that Andy Burnham, the Mayor of Greater Manchester, who's got the highest odds of being the next PM, hasn't got a seat in Parliament yet, you have this split between those calling for an orderly transition and a swift transition. Swift, code Wes Streeting, the Health Secretary. Orderly, code Burnham. And that's where Labour's splitting.
So Streeting is disorderly. Where does that leave us if we end up with a disorderly transition in terms of how the party then coalesces around the new leader and how sustainable that situation is?
Well, I think if you're a Labour MP, what you want to know is that your leader can beat Nigel Farage at the next election, given just how well Reform did. Well, it suggests, the polling at the moment, that Burnham would be the best bet to go for it, but because Burnham's timeline holds him back, you have Streeting and Rayner, it seems, behind the scenes, trying to get out in front here. Well, it doesn't really matter if you're in the bond market.
Yeah.
Anyone who would be less fiscally prudent than Keir Starmer and Rachel Reeves is not favourable to the bond market. Hence, you've seen 30-year gilt yields going up since that speech, and we're going to hear from the Chancellor herself this morning. Let's see what she has to say.
Yes. Lots to watch out for. Busy morning here in the UK. Lizzie Burton, thank you very much indeed. Let's turn to the markets now and try to figure out exactly what is happening. Markets Live Executive Editor Mark Cudmore joining us now. Mark, there's lots to talk about this morning. We can come to the UK. Let's park the UK for the moment. What did you make of what happened in Korea overnight?
It was certainly dramatic. I think it shows a couple of things. I think one is it shows just how vulnerable this market is in terms of herding and volatility. We saw 7.2% move in 97 minutes in the Kospi. That's $300 billion worth on essentially a misunderstood kind of statement. It was the idea they were going to tax excess profits. What the minister actually meant was that the extra tax revenues they're already making from AI should maybe be redistributed. So it was not about any tax on AI. But you suddenly saw $300 billion wiped out just from the Kospi. And of course, the Kosdaq fell as well. Other markets started falling. So you saw hundreds of billions of paper wealth just kind of disappear, vanish quite quickly on a slight misunderstanding. So that shows the kind of market we're in. But it's really, really important to emphasize we're about to go into a load of risk events, and I think short term there's going to be more volatility, more damage, but all these dips will be bought and we will see much higher levels until there's genuinely an AI negative catalyst. And I just don't see that on the horizon. So I think in the short term, it reflects, hey, get prepared for even more volatility. Kospi could drop 20% from this morning's high and still be higher than any level seen in history up until 3 weeks ago. So that's pretty scary. That shows the pace of these moves. So expect even more volatility, expect even more big swings, but it's not the end of the market. It's not the end of this incredible bubblish bull market that's going to go absolutely crazy before it ends in tears.
OK, the dips will be bought. Mark, as you cast your eye across to Japan then, from South Korea, Scott Bessent coordinating more closely, it seems, with the Japanese. Maybe he's pushing for the BOJ to do more. Maybe he's pushing for the government to give the BOJ space to do that. What is your take of what is happening in terms of relationship between Scott Bessent and his Japanese counterparts and what that means for the Japanese yen that's been choppy in the session?
Yeah, I think there's probably two takeaways. One is we seem to have survived the visit. I'm not sure whether we're still going to get more headlines or takeaways, but I think there hasn't been too much dramatic apart from that close coordination. But yet we saw the dollar yen really move quite dramatically, which shows how jittery traders were about that meeting. So I actually think that's one of the risk events that seems to be out of the way as we move on to the China events next.
OK, and before that, the Gilts Open, Mark. I know you're geographically a long way away from this, but this volatility in UK politics falls into a market where yields are already on the rise, which perhaps something we need to keep in mind.
Yeah, I actually think this could become globally relevant because, we have a lot of concern globally about long end yields. And that's a long-term story. It's not a short-term story, but gilts might suddenly make it a short-term story. So it might make it another risk event in the short term. I think there will be contagion if gilts really kind of sell off again. What is interesting probably on that story is gilts have seen quite a large reaction so far. Sterling is only just starting to get in the move. So if this gets worse, you'd expect that sterling is where there's probably more catch-up to be done and then spill over into the rates markets. I don't think gilts itself is where the risk-reward is.
Bloomberg Markets Live, Executive Editor Mark Cudmore. Mark, thank you. Let's get your stocks to watch this Tuesday and bring in Chloe. Chloe Melly, what are you looking at?
Good morning, Tom. Siemens Energy is going to be in focus this morning after it said that it will be accelerating its buyback this year after very strong orders from data center customers. So the company had actually already raised its outlook just a few weeks back because it is benefiting from this growing demand for energy infrastructure as billions and billions are being poured into AI and into electrification as well, part of that kind of growing cohort of companies companies like ABB, like Schneider Electric, benefiting from this AI-driven demand. And if we look here at this one-year share price chart, we can see Siemens Energy has had a very steady upward trajectory, but there might be even further to go this morning on the back of that update. Moving on to another German company that could be moving higher today, and that is Bayer, that has reported better than expected profit, thanks in part to a really strong performance in its crop science unit. This comes at a very critical time for that company, given that it is still dealing with this litigation problem around its Roundup weed killer. So we'll see how the market reacts this morning to those really strong earnings, even though we still have this legal overhang. And finally, we also have a note here on LVMH from Barclays, with the analyst saying that the luxury sector and the slowdown there underscores a shift in consumer behavior and calls for a strategic rethink. But LVMH was actually upgraded to an overweight rating because the weakness actually creates a buying opportunity for that stock, according to the analysts. We have seen LVMH underperform for quite a while now, so we'll see if it gets that much needed boost.
OK, Chloe, thank you very much. Back to the UK narrative. We're watching the pound track a little bit lower once again this morning, watching for yields to open in around 6 minutes' time, and we'll be watching the arrivals at number 10 Downing Street. Will they be going in through the front door, the cabinet? We'll watch for Wes Streeting, the health secretary. What plans does he have to occupy this residence in central London? Shabana Mahmood also in focus, the home secretary here in the UK.
Yes. Is today the day? Does it get delayed? What happens next? What's the bond market going to do?
Do we assume the Chancellor goes if the Prime Minister goes?
That'll be the next question, won't it?
Yes, or if he survives, does he replace her? Yeah. Is the other question. But as we heard earlier, we're going to hear from her too today. The numbers don't speak very positively this morning, as you can see. As Anna says, the pound is under pressure. The gilt market's about to open. Equity markets are about to open. Futures are negative. More to follow. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Tuesday morning, good morning. Monday didn't deliver a great deal on either side of the Atlantic when it came to equities, at least the mainline indexes that we watch so carefully. Stock 600 kind of drifted sideways. Similar story for the S&P, to be brutally honest. This is the session you saw. Remember, Friday we gapped higher and then kind of went sideways. Yesterday we just went sideways. So there's a lot of things to watch out for this week. It's a huge risk event week. And in many ways, that maybe explains why you're seeing this slightly narrower range that equities are now occupying, Tom.
Yeah, futures pointing to more risk aversion. To your point, across the European space yesterday, with the gainers came basic resources and energy. On the downside, you had the luxury stocks. We'll see how that dynamic shifts today. Basic resources under a bit of pressure. Energy is going to be strong, potentially on the back of high oil prices once again. European futures, though, pointing low by more than 1%. FTSE 100 futures looking to drop 92 points. Political risk as well in focus, but more of an impact on gilts, of course. DAX futures pointing to losses of potentially 287 points. That is the setup, according to these futures. What are you looking at, Anna?
Yeah, so a negative picture for European stocks then lies ahead, Tom. Let's have a look at some of the individual names and, indeed, broader market themes. So UK stocks, as you say, Tom, certainly will be in focus. Yesterday, we saw a bit of weakness in real estate stocks as a result of higher yields. We're certainly watching the gilt markets, and anything that might move around on those gilt yields will be in focus for us this morning. Siemens Energy, a really interesting story. If you need a reminder of why the AI theme has got everybody so excited, Siemens Energy saying they expect the AI boom to bolster their sales for years to come. The company is sold out in major parts of its business until 2030, so that's a kind of positive news line this morning. Bayer posted better than expected profits in its first quarter. Robust performance in its crop science unit seems to be one of the themes there. Guy.
OK, here we go. Let's take a look at the session that we are about to get. Remember, the pound is down, so mechanically that does help out the FTSE 100. Let's see exactly how it trades first thing this morning as we watch carefully what happens across Europe. We are expecting that negative performance kind of pretty much across the board. The FTSE may get away with it a little bit, but not by much. So it's already softening up a little bit. I expect that number to get worse over the next kind of minute or so. In terms of other markets around Europe, 7, 8, 9 tenths of 1%, maybe even 1% down in some of these markets, I suspect, this morning. Stock 600 is down by 6 tenths of 1%. FTSE 100 is weakening. It'll be interesting to see the division this morning between kind of domestic stocks and more internationally focused stocks and how they perform. The CAC is down by 1%. The IBEX is down by 1.2%. So certainly seeing some significant weakness there. There's some interesting stocks actually out of the German market this morning. Anna was raising Siemens Energy this morning. We'll see how it trades this morning. The AI story is still there and ever present when it comes to even Europe, and we'll see how that trades once we get the DAX open. But the FTSE is now pretty much in line with everything else, down by circa 1%, slightly worse maybe than what futures were pointing us to a little earlier on, Tom.
Across the sectors, you're currently seeing the biggest losses coming through for basic resources. You've seen softness in the silver price and in copper. And you're seeing losses in that sector, 1.8%. So the biggest losses coming through right now, at least, for the basic resources space. The banks as well under pressure, and that's reflected in the FTSE 100 as well, with the likes of Barclays down around 3%. So banks currently down 1.9%. Every single sector in negative territory right now. Chemicals is showing the most resilience, but even that is down 0.3%. Also energy as well, despite higher oil prices. Energy is currently down 0.3% as a sector, even as you see Brent around 105 right now.
Yes, absolutely. So that's the picture on stocks. Tom, let's dive into the gilt market story then. We have a bit of a slump in gilts underway, as we could anticipate earlier on this morning from some of the news lines around the fate of the UK Prime Minister. So we've seen selling of gilts, and across the curve, we're now up by another 7 basis points. And, of course, you pile this on top of the 9 basis points higher that we were almost across the curve yesterday. There's a lot of flashing lights on this gilt screen this morning, a lot of volatility, perhaps a lot of people rethinking how much attention they pay to the UK political story. Let's get a perspective from outside the UK, which I think for global markets is important. Bloomberg cross-asset strategist Ven Ram joins us with thoughts on where the gilt trade goes from here. Ven, we're up in terms of yield by 7-8 basis points across the curve. I suppose, what are the things you're looking for from the UK narrative this morning? How are you expecting things to develop?
Morning, Anna. I think that, the most crucial thing from the bond market perspective is going to be whether Starmer goes, and if he goes, what happens to the Chancellor's position. Now, Rachel Reeves has been fiscally very disciplined as a Chancellor. So I think that even with her at the helm, the 30-year yield, which is the barometer of sentiment towards UK assets at the moment, that has surged 100 basis points since the time she took office. That is twice as much as treasuries have risen. So clearly the gilt markets have been underperforming. And just as your board showed, the 30-year yield is now at 575. That's the highest since Tony Blair was in office. So I think that, that will rhyme with the Labour taking office and investors punishing gilts. But it's not a political question. It's a question of financial fiscal rectitude. And that is the question that investors will be asking today more than ever before.
Ben, can investors assume that the sell-off in gilts can also constrain the aspirations of any potential contenders for the Prime Minister's role?
Absolutely. I think that, there have been suggestions among candidates that, look, the bond market, we are not going to be in a hawk to the bond market, but I don't think those are valid dismissals. I mean, once they come to office, they will know the lay of the land and they will know the reality of that Downing Street, of ruling from Downing Street. I mean, when the bond market sends you a message of distress, it's not a signal to be overlooked, and anyone who overlooks that has a heavy political price to pay.
Ven, is this a global story or is this a UK story?
It is very much a UK story at the moment, Tom, because if you look at, if you look at just yesterday, if you look at bonds, they were fine. If you look at treasuries, they were doing fine. I mean, treasuries have got other challenges, but not this one, this particular bout. So I think that it is going to be very much a political risk premium that is being embedded into UK assets. At the moment, we are not seeing it in the pound, but I think that the markets are underpricing that risk.
Ven, thank you very much. Ven Ram, Bloomberg cross-asset strategist, helping us get focused on the gilt market trade this morning. Let's widen our lens and bring in some analysis from Sarah Malik, who is Chief Investment Officer over at Nuveen. And I'm pleased to say, joins us here on set in London. Really good to see you.
Good to see you.
Thanks for being with us. So we've started our programme this morning really with a focus on gilts because we see another jump in gilt yields. Reading your notes ahead of our conversation, I think fixed income in terms of bond markets is not exactly where you're focused. But what context do you add around this gilt story for us today?
Well, this political turmoil could cause two issues. Number one is higher fiscal spending, which would be a UK issue, but second could be higher inflation, which is a global issue. And that could put pressure continuously on UK equities, which would be a disconnect from the rest of the world because the rest of the world is benefiting from strong earnings growth. We're seeing that in the U.S. and also a generally resilient economy in the face of higher oil prices. And that would be what makes this a UK story rather than a global story.
Yes, we're watching this develop, this UK narrative, at a time when bond markets do seem to be worried about inflation. And the rest of Europe, we see bond yields a little higher this morning. In Japan, we saw bond yields a little higher this morning. That's inflation, also interest rate expectations. Are you positioning for a higher for longer, higher inflation from here outlook for the global economy?
Well, in the U.S., we've also seen that, where the bond markets are a little bit more concerned than the equity markets about what's going on in the Middle East and the impact on inflation. But basically, if you're bullish on the markets, what you're bullish on is AI. Because in the United States, we've seen first quarter earnings growth, which has been very strong, 12+% consensus. We're blowing right past that. But that's driven by over 20% growth in these AI and technology stocks. And that's impacting the entire world. So if AI sneezes, the rest of the world will catch a cold. But that has been why people often ask, why has the market been so bullish throughout this Middle Eastern conflict? It's because we've not seen it flow through to a great degree to inflation, and earnings growth has remained very strong, and that's why the rest of the world is continuing to generally rally. But it's 6 weeks now of a market rally, and I do have to wonder if we're going to hit a bit of a pause in an air pocket, especially as this ceasefire is becoming quite fragile.
What is the good morning, Sarah? What is the biggest risk to hitting that air pocket then? It seems like there's a level of discomfort right now that you're articulating around how far and how quickly this market has run up, despite that potential impact in terms of physical supply that's coming through from the Straits of Hormuz. What is the potential air pocket that you could be looking at?
Well, markets tend to price in a known outcome, even if they don't know the timing of it. And that's what we've seen with this Middle Eastern conflict, where markets are assuming it will come to an end at some point. However, we've been assuming that for 6 weeks now. The ceasefire is fragile. We're getting some key inflation data in the U.S. this week. We'll start to see if this is really starting to flow through these higher oil prices to the inflation data. I think if Strait of Hormuz stays closed for an elongated period of time from here, it becomes more sticky in terms of inflation data. That could negatively impact the strong economic growth that we're seeing, and that'll be where the markets take a breather, which it could start at any time.
What would you have to see from today's inflation print to derail your view that the Fed will cut once this year?
We need to see basically inflation rise to more where we feel it's just a bump to inflation. And the Fed gives some kind of message that says that, you know what, we're not going to look through this inflation bump. We look at it as more structural. I think that one cut this year could still be in place as we get the new Fed chair, and he focuses more on productivity, and the economy could slow because of what we're seeing in the Middle East. But whether that one cut is later this year or early next year is, just a calendar effect.
It sounds like you're telling me to sell now. Is that the case when it comes to tech?
Well, I think market timing is tough. We are actually big AI bulls, so I don't think we should be betting against technology because that is the driver of the markets. It is challenging, though, to step in and buy after the markets rallied for 6 weeks, especially with tech earnings behind us, which were arguably very strong. Our question is, what's the next catalyst? First quarter earnings are basically behind us. Now we're waiting for the Middle East ceasefire to either continue or to break down. That makes it a little challenging for us to say what's the next catalyst to take the markets higher.
But if there was a dip, you'd buy it?
That's what we've been seeing. We've been seeing this since the COVID pandemic. A lot of FOMO with the markets, people holding trillions of dollars of cash on the sidelines. And what you tend to see is a lot of intraday buying whenever the markets dip. So if there was a slight dip in this market, we'd step in and buy.
Okay.
So do you think that the AI boom is going to be negative for jobs? I'm listening to what you're saying about the Fed, and you do expect to see one cut. And part of that, I think, you attribute to negative developments in the jobs market, which you anticipate from here. So is that going to be AI driven? I also saw you're flagging that, of tech capex is contributing 38% to US growth, which is a staggering number. That's capex, and some of that will create jobs, some of it might not.
We haven't seen AI impact the payroll markets yet. We just got another strong data point out of the U.S., which is now 2 months in a row of very strong jobs data. I think the impact on the job market from AI is actually overblown. AI is an enabler, but humans are going to be the differentiators when it comes to AI. So it's about making sure that you're reskilling, staying relevant in terms of what your skill set is, using AI to your advantage to help make you more productive. I'm not as concerned that there's going to be these massive 30, 50% cuts to jobs that some of what we hear in the media. I think that's overdone.
So just to pick up on Anna's point about sort of capex and your point about liking tech, big tech has gone from being asset light to being asset heavy and increasingly debt fueled. That's a different beast than what it was. Is that a worry? History tells you that capex heavy businesses, that investment tends not to deliver the kinds of rates of return that you would normally expect from an asset light business.
The degree of return on investment of the hundreds of billion dollars that's been spent on AI capex is the main question in terms of, what does it mean for AI for the future?
Yes.
And we're seeing it's not only, if there is a bubble, it's not just an AI-specific Mag 7 bubble. This is now going across utilities and data centers and other areas. However, we're not seeing that as a bubble yet. We're watching the ROI closely. Supply and demand will not always match. There'll be a lot of impactful spending up front, and demand may take time, and there may be air pockets in demand to meet that supply. But over the long run, I think AI is here to stay. Sure. It's going to have a massive impact on the economy. So you'll close your eyes 5-10 years from now. If you own these stocks, you're in a great spot. There's going to be periods 6 to 9 months, even a year, where the stocks may be a little bit more volatile because the amount that's been spent may not exactly hit the ROI that the markets expect.
Okay.
No. I was watching Guy Johnson's eyebrows through that response.
Were they telling a story?
Is a key monitor. Well, Guy's been consistently sceptical on the capex.
Well, no.
spend.
A lot of people are questioning whether or not the ROI, to the ROI point that Sarah's making, is do you get the ROI you need to justify current spending? AI is definitely going to be a hugely kind of important piece of technology, transformative.
Yeah.
Can you make money from it? Who's going to make money from it is the question.
And the Koreans are looking at how much money is being accumulated right now and the potential risk of disruption. You're not seeing that yet in the US labour market. But I guess the question of focus for us today has been what's happening in the COSPI and this conversation about whether or not there needs to be some kind of dividend, at least redistribution on some level of the AI profits. Is that something longer term that investors need to start thinking about? Is that a conversation that you think will start to percolate through the halls of power more broadly?
You mean redistribution of AI, like in terms of dividends?
Well, the Koreans have been looking. One Korean official, an aide to the president, had been looking and talking this morning about potentially a dividend for citizens on the back of the enormous gains that have come through and profits from the key AI names, and whether or not that's something that investors will have to be thinking about, if not today, then longer term, as we look at massive accumulation of wealth in some quarters and also massive disruption.
In hyper-growth sectors like this, usually returning cash to shareholders is not really where we would be in this stage of the cycle. We're in the heavy investment stage now, where we're going to continue to see this heavy investment within AI. The companies are in a race to be in the forefront of their investments in AI. They have to be, because in order to be the market leader in this space, you have to make the investments up front. And that's what I'm saying in terms of the demand in the shorter term may not always match the level of those investments. I doubt we would see a return to sort of shareholders or citizens at this point from that kind of investment, because companies are just going to keep plowing money into this in order to meet what I think over time will be multiple years and decades of future demand.
Well, one other thing we've talked quite a lot about in the wake of everything that's going on in the Persian Gulf, or what's not happening in the Persian Gulf, which is energy not getting out of it right now. Sarah, one thing we've talked about is sort of diversification of energy sources, renewables, for example, and leaning into that as a theme. Sitting where you sit at Nuveen, does that look like a global theme that you lean into, or is that much more for the Europeans?
It's been a global theme since before the Middle Eastern war. The continued shift to renewable energy is very important, and energy independence is very important. This war brings that even more to the forefront. I think that trend will continue over time to areas like wind and solar and other sources of energy that countries want to have. We've learned this from the pandemic, too. Energy independence, supply chain independence. We've learned that over time, when there are issues either due to the pandemic and shipping or due to the Middle East war, it can really cause a negative impact on your economy. We haven't seen that yet from the Middle East war, but it could happen over time. So I think that's a global issue for countries to say, how can I become more energy independent?
Great to see you. Thank you for coming to see us. The time zone probably isn't lining up for you this morning, so great to see you so early here in London. Nuveen CIO Sarah Malik joining us on these global markets. Let's look at the call 6 this morning, what is happening out there. Not a particularly great morning for European stocks. And you can see that writ large across the board that you've got in front of you here. It's interesting that actually ASML is in some ways outperforming a market elsewhere that we are seeing weakness, as to a certain extent is the luxury space. What else are we watching? Close here with the details.
Good morning, guys. Siemens Energy is actually a little bit weaker this morning. It accelerated its buyback thanks to really strong orders from data center customers, and that is just a few weeks after raising its outlook. But some analysts noted that there were actually weaker margins in the gas business, and perhaps because the expectations were so high, we're getting a little bit of weakness given the lack of detail from the previous update in today's update. And so we're down about 1.7% for Siemens Energy. UK banks are also weak this morning after JP Morgan note saying that if there is a leadership change in the UK, those banks could face higher taxes. And so we can see some of that caution feeding through into Lloyds, Barclays and NatWest this morning as the political instability in the UK worsens more and more. It's also, staying in the UK, also not so good for Vodafone, which has actually had pretty solid results with good cash flow, but actually some deterioration in the German business. And that is important given that the company has had a strategic pivot to really focus on the UK and Germany as key markets. And so a little bit of weakness in one of those main markets is not been taken very, very well. Moving on to Bayer, which is actually in the green this morning after stronger than expected profit, as that was driven by its crop science unit. And we're up about 4%. This is actually a bit of a needed win for Bayer, given that it's still dealing with all of those litigation issues around its Roundup weed killer. And so we're up quite strongly there. And finally, KBC see the Belgian bank is down after taking higher than expected provisions. We're down about 3.4% this morning. It is joining the likes of BBVA, Deutsche Bank, all of those other banks that throughout this earnings season have been booking higher impairments because of the financial impact and the potential financial impact of the Iran war. So we're a little bit weak there this morning as well.
Chloe, thank you very much indeed. Let's get back to the gilt markets right now and check in what's happening, underperforming their European counterparts with yields up across the curve by around 8 basis points. The 30-year at 5.76 right now, yields up 9 basis points there. The 10-year closing in, of course, to 2008 levels in terms of the sell-off. 5.08 right now on the 10-year, yields up again, close to 9 basis points. So it's a pretty pronounced sell-off on the political risk here in the UK.
Yeah, you wonder where this goes in the short term and the longer term, don't you? What's the short-term trajectory? We've got the King's speech due tomorrow. That would be pretty complicated if the government was falling apart at the time that the King was in the Houses of Parliament delivering what would be the government's agenda for the next year. And so does that stall things in the very short term? Does the gilt move stall things? Does it add a moment of pause and reflection for people who are calling for change here? We'll see.
I don't think the House is sitting today, which is interesting, so therefore that firmly puts the focus on this door here. Number 10 Downing Street is where the attention is firmly focused this morning. We have a cabinet meeting, which starts in about an hour's time. So I just think we're going to see arrivals, what do you think, like sort of the next half an hour or so?
Unless they sneak in the back door.
Sneaking in the back, it's opening. Here we go. People turning up for work.
That's a newsworthy event, I'm sure.
I think it probably is.
Well, we'll certainly keep an eye out for the Health Secretary, Wes Streeting, who's been thought of as planning a leadership challenge for some time. Also, Shabana Mahmood, according to our reporting, calling on the Prime Minister to set out some kind of timetable. Both of them will be around that cabinet table this morning with the Prime Minister, which could get awkward. 8:18 here in London. Coming up then, a dramatic $300 billion fall for the Kospi at one point of the trading day, at least today, after a policymaker talks of a tax-funded AI dividend for citizens. Details next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. This is the opening trade, 8:22 here on a Tuesday morning, and we have European equity markets under pressure. Oil prices on the rise once again, 106.22, but we don't have that adding much positivity to the energy sector this morning. We do see energy stocks as the only sector in positive territory, but really not by much, not providing much of an offset. It did yesterday, not so much today, and so European stocks are in the negative. We focus on things to do with the UK because gilt yields are on the rise, but gilts actually across Europe on the rise this morning.
Yeah, we'll continue to focus, of course, on what's happening in terms of UK politics. But let's get a little touch on what's been happening across the tech space. And a lot of tension on Korea today because it's been a rollercoaster session for South Korea's Kospi. Tech stocks dragging the index more than 5% lower at one point after the country's presidential policy chief called for a dividend for citizens using taxes on AI profits. But we've seen those losses pared back after the policymaker said he was not proposing a new windfall tax. So a bit of nuance there. The Kospi is currently down 2.6%. Let's get more with Bloomberg senior strategist Neil Campling. Neil, just talk us through what exactly happened in the Korean session.
Part of the issue that's come out is because there has been talk about the unions within Samsung looking for to get a part of the profits coming out from the semiconductor fabs, etc. So it was seen, I think, as a political motive. So let's talk about potential, a dividend being paid, and then realising actually, problem is when the market then fell 5%. The sudden remembrance that the Kospi index is massively retail geared in terms of a lot of retail investors. So actually, it may have been a bit of a faux pas to come out with such an idea in the first place. So I think that they've rolled this back. The other thing, of course, is that within the complex of how these companies operate, AI-related spending is only part of the profits that these companies sort of produce. So it's very difficult to say let's produce an AI-related profit when actually many companies aren't yet seeing returns on the AI profits because we've still got this massive overhang as to when will we see these massive returns that the hopes and dreams of the AI trade will pan out. But that hasn't yet come through in most economic models.
Do you not feel, though, that the genie's out of the bottle? That once policymakers start talking about this kind of stuff, that it is something that gets replicated elsewhere? Yes, it may have been a faux pas, but may have been a deliberate faux pas. Let's see what happens. Let's see what the reaction is. Let's take the temperature. And other politicians are going to look at this and go, this is something that maybe we need to consider as well. You've only got to listen to the debate in the press talking about this. It's out there. It's going to become something that governments are going to want to debate.
I think, personally, I think policy is the greatest handbrake on innovation, and actually innovation always wins out. If you can imagine in California there being that kind of policy, then again it's forgetting the fact that many tech companies have these super high margins because actually they're paying employees fairly low wage rates because it's all geared in terms of stock options and how many NVIDIA millionaires are there out there. So I think it may seem like a policy noise that's being made. But I think actually for other governments to sort of follow suit and these kind of things, I think it's misplaced personally.
OK, and I wonder whether, thinking about the way that this tech narrative around AI rubs up against fiscal policy and governments and regulation, I mean, we're heading towards the midterms in the States, aren't we? And will that change the narrative out of the US around regulation of big tech? I mean, that must be something that some investors are starting to think about.
It's an interesting question because actually the whole idea of tech being kind of becoming a political item in the agenda has gone away somewhat in recent months, for sure. So it is something that may come back to the fore again. But on the other hand, in many times of those White House meetings, you've seen often the big CEOs of big tech companies sort of looking to be seen as being on side. And actually, without big tech,
pivot.
I think so, yeah. And without big tech, US is geared around big tech, and without the AI move, then in the US,
but
US Inc. looks very different.
The US government has quite a lot of debt and a fairly big fiscal hole that it has to fill at some point. How it does that remains to be seen. Neil, nice to see you. Neil Campling, Bloomberg senior strategist. Coming up, we're going to go live to Paris. JP Morgan is holding its Global Markets Conference. We'll be hearing from EMEA co-CEO of the bank, Matthew Wilds, is going to be joining Francine shortly. This is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
This is the opening trade. Happy Tuesday. We're 30 minutes into today's session. So risk off across equities, and you're seeing bonds selling off as well. Across the benchmark, losses of 0.9%. President Trump saying the ceasefire with Iran is, quote, on life support. So we continue to watch the geopolitics and the closure of the Straits of Hormuz and the impact there. The DAX is currently down 0.8%. The CAC current is also lower by 44 points. And here in the UK, political risk is also a factor. Certainly you're seeing that across the banking space. Across the index, losses of 0.8%. Energy is providing modest support. The last time I checked, that sector was up about 0.2. Guy has the breakdown, though, for you in terms of the details and a bit more depth. Guy.
Volume's actually quite high this morning, which is interesting, which tells you a lot about what we're seeing in terms of the sell-off you've just outlined, Tom. In terms of the ratios, it's basically 4-to-1 in terms of what you're seeing on the downside to the upside. So certainly Europe is under a little bit of pressure this morning. It's reasonably broad pressure as well, and it's being backed by that volume narrative. Let's talk a little bit about where we're seeing some of the gainers this morning. Buyers out with numbers. Those numbers are being received well. Bayer out of Germany, up by 5.23%. Crop Science, interesting there. EQT raising the offer for Intertek. That stock is up quite nicely. Oil stocks are also high. You can see that certainly at the top of the board, up by 1.43 when it comes to BP this morning. In terms of the downside, let's talk about what we are seeing here. Siemens Energy, despite the numbers, is under pressure, as is Lloyd. So let's start there. This is the read across, you could argue, from what we're seeing in the gilts trade into the UK banking sector. Lloyd's down by nearly 4%. Siemens Energy is down by 1.61. Prosus is down by 6.5. But that UK gilt connection into the banking sector, I think, quite interesting this morning, Anna.
Yes, certainly one we'll keep on watching. Let's get an update then, Guy, on some of the other stories we're covering this morning. President Trump said the ceasefire between the US and Iran was on, quote, massive life support after he rejected Tehran's latest peace offer. Iran responded to the US peace proposal by demanding a lifting of Washington's naval blockade and sanctions relief while maintaining control over traffic through the Strait of Hormuz. President Trump has not indicated whether the US would resume military attacks on Iran, as he previously has threatened if the Islamic Republic's leadership didn't agree to his terms. The German Chancellor Friedrich Merz is seeking to reverse his government's fortunes by getting an ambitious reform agenda back on track. Merz's Christian Democrat-led Conservatives and the Social Democrats will meet later today to try to find consensus on a plan to overhaul the country's tax and pension system. The coalition's future remains in focus after a previous crisis meeting ended in acrimony, and a recent bonus package was blocked by Germany's upper house of parliament. And the yen strengthened sharply earlier on in trading versus the US dollar before falling back during a visit by US Treasury Secretary Scott Bessent to Japan. Japan's finance minister has confirmed that her team is coordinating closely with Scott Bessent on currency policy, signalling tacit US approval of Japan's recent suspected market intervention. Tom.
Yeah, more lines and more detail on those meetings between the US Treasury Secretary and his counterpart and the Prime Minister as well, to your point, in Japan. So Scott Bessent has been speaking to the press after his meeting with Takaichi, and he says the relationship with Japan is working very well. Here's some of the key lines. He said that the strength of the Japanese economy will be reflected in the FX rate. This at a time, of course, around speculation that the Japanese have been intervening to support their currency. Scott Bessent also saying that global high yields are as markets price in inflation. We both believe excess volatility is undesirable. Scott Bessent saying both sides believe excess volatility is undesirable, and has great confidence in Ueda, the governor of the Bank of Japan, of course, to guide the BOJ to success. And we know a summary of views from the BOJ signalling that a rate hike is potentially on the cards at the next decision.
Seems to be moving in that direction quite quickly, doesn't it? OK, let's get some analysis on what is happening here. I want to take you back to Paris. JP Morgan executives gathering this week there. Hundreds of clients also with them. It is the firm's annual Global Markets Conference. Francine Lacroix is there. Francine, over to you.
Good morning, Guy. It's always good to be in Paris. It's always good to be at a JP Morgan conference. So guess what? We have 2 in 1, and I'm delighted to be speaking for an exclusive conversation with Mathieu Vils, JP Morgan EMEA Co-Chief Executive Officer. Mathieu, as always, thank you so much for giving us a little bit of your busy schedule. There's a lot going on. There's a lot going on in geopolitics. There's a lot of uncertainty. Now, you said at the start of the year that actually the M&A and IPO market was doing okay. Is it still the case?
Yeah, no, it's still the case, and as you've seen during the results of the first quarter, I think it's been a good activity for most of the banks, with a lot of M&A, a lot of ECM activity, a lot of DCM and leverage finance as well. So it's been a booming quarter. The pipeline is still very solid, so there is uncertainty, and we are assessing the situation every day. But when we talk to clients, the appetite for business is still very strong. When we talk to investors as well, they have a lot of cash to deploy. So I mean, fundamentals are there for a decent performance, I would say, for the coming months.
Has anything changed because of the war in the Middle East?
Not really, and you see the performance of the stock markets has been, I mean, clearly resilient. We've done several IPOs as well. The demand has been very solid. We know that there are big IPOs as well coming in the market, especially in the US. That's not the new news, but so. I mean, it's interesting to see that for, I think, the first time we have such a big conflict with limited impact on the market, and the business confidence remains pretty strong. Now, it's true that we have impact on the commodity markets, and we see that in prices, and so we'll see for how long we'll have that conflict and what will be the impact on the long term. But for the time being, I would say this is quite reassuring.
I mean, do you think that there's a danger that it's because the market, if not complacent, they think it ends, more quickly than it actually will?
I mean, that's the question we hear as well, and I think, it's hard for clients to position themselves in that current environment. It's like, do you take a lot of risk or do you stay like in a cautious mode? I think we have to be ready for every scenario. So that's what we do as well. And we looked at the conflict, but we look also at inflation. We look at the level of government bond debts. I think that's also one big factor. We look at what will be the impact on growth. So there are a multitude of factors that we are assessing every day. And we try to position the bank relatively cautiously. And when we talk to clients as well, that's what we say. So trying to be diversified, trying to measure the risk. And I think that's a big topic on private credit, for example, that we talked in the past. But those are all different factors that we look at carefully. We assess. We like the underlying risk. There is no change there. But it is clear that we see sometimes a bit of volatility and a bit of questions.
So, Mathieu, talk to me a little bit about, JP Morgan has this resilience fund. So this is the idea because geopolitics is much more pronounced. We don't really know what happens. Countries just need to be a lot more resilient. So what does that mean in terms of investment deployed in Europe?
So, that's a key topic that you mentioned. And I think that we decided back in October last year to launch that SRI initiative, so that's Security and Resiliency. And we'll deploy $1.5 trillion of financing over the next 10 years. At the beginning, we thought that we would do that mainly in the US, but we received so much interest in Europe and also in Asia and in the Middle East and Africa that we decided to do that globally. And I think for my part in EMEA, so Europe, Middle East and Africa, we'll focus at the beginning on UK, France, Germany, Italy and Poland. And we'll work with the major European firms and the governments as well to help them to understand what are their needs in terms of defense, can be minerals, can be healthcare and key infrastructure as well, and try to see how we can help them to finance their needs. And we know that this is a long-term project, but Europe needs to be more independent. That needs to be stronger as well, because we live in a world where, there is competition with the US, with China, with India, with Russia. And I think Europe needs to get together and be a strong continent on its own. And it's good to hear that now I think the political landscape is changing as well. We see more and more political people talking and trying to move into that direction, having a stronger Europe and more independent. So that's the objective of SRI and what we want to achieve with that.
Mathieu, we had a story last week actually saying that JP Morgan traders that had moved to Paris because of Brexit, some of them are coming back to London. What does this mean? So,
as you know, we moved a lot of people to Europe after Brexit. We are fully committed to Europe. Now we are, clearly assessing the business as we do, regularly. There is no change. So I think the objective as well for us is we have a big hub in Europe, we have a big hub in London, we have a big hub in New York and in Asia. People can move all around, and we do that when we discuss as well with regulators. But we are fully committed to Europe. We are hiring. We continue to hiring significantly in Europe. There is no change there, to be clear.
There's a lot of political news in the UK. We're kind of all on tenterhooks to see what happens if the Prime Minister stays. Could it change your plans for JP Morgan in the UK?
I don't think there is any idea of change at the moment. And I think it's clear that the situation, is evolving. We are, assessing that, which is exactly the same in many countries in Europe as well. So I don't think we can say that in any country in the world today, there is kind of no volatility or on that side. So I think as we do, we try to assess the positive and the negative. I think for us, we are in Europe for more than 200 years and we'll stay there on the long term. So our objective is to stay close to any party that will be in power, try to have a dialogue, try to, let's say, explain why they need a strong financial system, why they need strong banks as well. And that's true for JP Morgan, but also having strong European banks. That's something key for the future of Europe and one of the first pillars of having a strong Europe. So that's also something that we spend time to explain and try to, for those individuals to understand the rationale of having such a strong sector in finance.
Mathieu, how much should we worry about private credit?
So, we look at private credit. Private credit is a business that we've been doing for 150 years. So it's not new for JP Morgan. We like the underlying, we like the credit business. Now, we've seen a lot of liquidity coming in. As you know, and Jamie mentioned the issue we had with Tricolor and the cockroaches, but that was designed to JP Morgan, and we've done a full review of that. We are comfortable with the position we have. Now, as I discussed before, what is important is to have diversification in your business. Like in any business, that's true for private credit, but it could be true for also other businesses. If you are too concentrated on one underlying or one industry, there is a big risk. And what we see today in private credit, the issues are coming from those problems, either fraud or risk concentration under like very specific underlying. So at JP Morgan, we try to be diversified, but clearly we like the credit business, we like private credit. We think that on the long term, it's a good business, but we have to be diversified and have a bit of cautiousness in those markets.
Mathieu, thank you so much for joining us today. That was Mathieu Wild, EMEA Co-Chief Executive of JP Morgan. With that, I'm going to send it back to you in London, Guy, and we'll have plenty more throughout the day here in Paris.
I shall look forward to all of that. Enjoy Paris. Francine, thank you very much indeed. And we are basically drumbeating towards the big interview a little bit later on. Jamie Dimon's going to be joining Francine at the Banks conference. Looking forward to that conversation. 2:45 p.m. London time, 3:45 Paris time.
OK, before that, we're going to discuss the ongoing disruption to global shipping from the Iran war, of course, with the CEO of logistics company Wallenius Wilhelmsen next. That's coming up. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Welcome back. This is the opening trade, 8:45 here in London, Tuesday the 12th of May, and the UK Prime Minister finds himself under pressure, and that is being expressed in these markets. You can see the pound against the US dollar at 135.21, down now by nearly 0.7%. That is not all dollar effect. That is very much the domestic story here in the UK. We've also got the 30-year yield in there for you at 5.77. We're seeing that up by 10 basis points. The yield is higher by 10 basis points, and we see across the UK curve some movement in gilt markets with those yields higher, on nervousness about who, if anybody, might follow Keir Starmer if he were to leave office, and what they might do fiscally in the UK, and the FTSE under pressure with the banks a little on the back foot, Guy.
Absolutely. Oil stocks are, though, up this morning. Names like BP are on the front foot. Oil has been pushing higher, this after President Trump cast doubts on the ceasefire with Iran. Now, the near closure of the Strait of Hormuz continues to disrupt global shipping and has led to concerns about an inflation crisis. The Norwegian-Swedish shipping company, Wallenius Wilhelmsen, has one vessel remaining in the Strait. The company's CEO, Lasse Kristoffersen, is with us now. Good morning.
Good morning.
Nice to see you. So you got one ship there?
Yeah, we have one stuck inside the Gulf, still sitting there since the war broke out. And then we have a ground staff of around 50 people running logistics operations for the region. Yes.
Have you attempted to get it out?
We have, yeah, of course we have attempted, and we have had several processes looking at it. But the situation is that the vessel is relatively safe where it sits. Our first priority is the safety of the crew, and they are feeling safe where they are. And that means that a transit has to be less risky than staying where we are, and for now we have not considered that being the case.
Is there what are the costs that you accumulate as a result of that, having it sitting there? I mean, it's only one vessel, but I'm sure there are extra insurance costs. One vessel out of 130 is not many, maybe, but what's the sort of limiting factor for you?
So, no, I mean, to be honest, for us, this is not really directly affecting us that much. Our main concern is with the crew and their safety and well-being, and the costs are not that big for us. So the issue is the opportunity cost. Of course, we'd like to use that vessel. We need to replace it. On the other hand, the Middle East represents, in our segment, around 10% of the global demand. So obviously, and there are no vessels going in, so the total demand should have been lower for vessel, which is not, because of the Chinese enormous export booms of cars and equipment, and that's really driving demand, and we're still sold out.
And that's what you carry a lot of, cars, equipment and the like. We heard from President Trump yesterday that he is thinking about resuming Project Freedom, which was to escort vessels out of the Gulf. What would go through your mind? What would you be thinking? What decisions would you have to make if that were an opportunity that the company could take?
Number 1 to 10, that's safety and the safety of the crew. And as I said, the situation is now that the vessel is relatively safe where it sits. So it has to be a less risky option. And normally in these decisions, what I do is I picture, would I put my son on that ship? And if I would, then we can sail. If not, I wouldn't. So in a way, you need to personalize it. We don't think that a military escort system would ever be able to compensate for that risk. So most likely, for the majority of the vessels to get out, and certainly to start coming in, we need a ceasefire that's lasting, and also safe trading lanes. Nobody really knows where it's safe to trade through the strait right now.
What are your assumptions about how fast it would take to open? If a deal was struck today, how quickly it would take to reopen the strait?
I mean, commercially and operationally, very quickly. So the issue is around the safety assessment and whether there are safety threats. I think that could go relatively quickly as long as there is a defined safe route. So the second we have a defined safe route for vessels, they are lined up and they could exit quite fast. The big issue, though, is, of course, when do we have the scale of that trading path to bring vessels back in and start normal trading, and that would probably take some time, but it's relatively quickly as long as it's considered safe. So that's kind of a 0-1 situation. Just
by the very nature of what you do and those trade links between east to west and carrying those kind of cargoes, digging equipment and cars and other heavy goods, you have a finger on the pulse of the global economy. What is that looking like? What is the trade impulse looking like right now?
The amazing thing is that global trade is growing. I mean, despite what we hear around the trade wars and others, global trade is growing twice as fast as the global economy. And we see that in many different aspects. We are very much into the heavy equipment going into construction, mining, but 2/3 of what we do are cars. And what we are witnessing now is this enormous innovation, technology, and manufacturing push out of China. And in, let's say, a handful of years, they've gone from exporting 1 million cars to this year probably approaching 8 million cars, a growth that's never been seen before in history of mankind, really. So and it's not only this, call it the Chinese Revolution, is not longer driven only by their ability to produce with low cost. It's really driven by their ability to innovate and with new technology. And if you look at the rating of technology, how Gartner rates OEMs for technology, top 5, 4 of them are Chinese these days. So this is really driven by innovation and technology, and it seems to just continue.
I was going to ask you about fuel, which I assume is a bit of an issue right now.
Yeah.
But actually, you're talking about Chinese cars. Trump is going to China this week.
Yeah.
Have you heard anything about the possibility of a Chinese deal to maybe improve Chinese car makers' access into the US market?
We have not. And this is a very, of course, very political theme. Today, there are hardly any Chinese cars sold into the US market. Every other, Korea, Japan, Europe has access, but China has not. If you watch this industry over time, in the end, technology wins. So if you have the better technology, you will get market access somehow at some point. Whether that will happen now, it's just speculation. We have no input of that, but it's probably a slow start because they are very much focusing on protecting their automotive industry in the US.
It's great to see you. Thanks. Come back anytime. It's really useful to get this kind of input into what is going on. Lasse, thank you very much indeed. Lasse Kristoffersen, the CEO of Valeris Wilhelmsen, in the shipping story. Quick check on what's happening with the UK story right now. Gilt yields are certainly climbing. We've got 30 years at very elevated levels this morning. Let me show a quick live shot of what is happening in Downing Street at the moment. We are anticipating the start of a cabinet meeting very shortly. Arrivals, therefore, probably underway. I haven't actually personally seen any of the cabinet arriving yet, but I'm sure they're either on their way or inside the building. Let's talk about how this is all going to play out. UK banks are certainly taking it on the chin this morning as a result of the turbulence we're seeing. Live's Winner Conningham joining us around the table. Gilt's climbing.
We're seeing double-digit gains, particularly the 30-year gilt yield hitting the highest level since 1998, that benchmark that we sort of keep reaching. This is, times of acute political uncertainty. It's where we'd expected to see it expressed, but I think actually what's worrying as well is we're seeing the pound falling, currently at session lows, biggest sort of drop in, over a week.
Yep.
The two falling together really is quite a negative signal. And that's as inflation concerns are rising as well because of geopolitical pressures. So there's a lot going on there and none of it is good.
We're watching all of these news lines drop in. It is worth noting that this news falls into a market where yields are on the rise more globally as well. Certainly the European context, you've got Italian BTP yields up by 8 basis points, and the UK typically does move more than others. We've seen that many times, but the market is already worried about inflation. We've got oil prices up at 106, up by more than 2%, as if to sort of bring together the two things we're dealing with: UK political uncertainty and inflation concerns emanating out of what's happening in the Middle East.
Well, exactly, and we're seeing the Bank of England, bets on what the Bank of England are going to do, creeping up again today, moving sort of towards 3 rate hikes. That's also happening for the European Central Bank, as those inflation worries are expected to impact monetary policy decision. But as you say, it is particularly an acute concern for the UK. We are a net energy importer, therefore more exposed to prolonged energy price shocks. So that's probably playing a lot of the part of the lower end of the bond yield curve rising. But then we've got this political risk at the end, at the longer dated end, which is also really weighing. And I think it just seems to be a fairly indiscriminate sell-off, because we're actually seeing similar moves in all bond durations, which is quite an unusual thing to see. But of course, that is what is happening in Europe as well, to a lesser degree today.
Well, the banks are being hit hard this morning. So Barclays is the biggest loser across the FTSE 100, down almost 4%, 3.9%. NatWest is down 3.8%. On the other side of the ledger, you've got BP and Shell. That's not a big surprise on the oil story, but the banks are under pressure. Is this a UK equity market that is only belatedly waking up to the political risk? How sustained do you think this is?
That's a good question. I think what we've seen is a lot of the sort of higher interest rate concerns perhaps have sometimes been better for banks, that they're lenders. But overall, domestic uncertainty starts to change the sort of investment case for the UK. We've heard some of that coming out today. Of course, if the debt is seen to be changed in some way. So I think what we're seeing is the sort of riskier assets in the UK are selling off, and it doesn't seem like we're going to see any massive turnaround there. We've kind of got through earnings season, so I don't know what the catalyst is for improvement until some of this situation is resolved.
We are still watching number 10, then Moena. Thank you very much, Bloomberg Market Live's Moena Conium. Watching number 10, watching the door as we see cabinet ministers arrive. David Lammy has arrived, not seen many more yet, but we will continue, of course, in the hour to come through the Pulse. Continue to watch this door. The Deputy Prime Minister then in attendance, but waiting to see if others are arriving soon. The other big item on our agenda, JP Morgan Chase CEO Jamie Dimon will be joining the Bloomberg team at 2:45 London time. The Pulse is up next. The opening trade then, finishing out with European stocks on the back foot.
And gilts up. That seems to be the narrative. We've got to keep a very firm eye on what is happening here. The UK story, front and centre. Jamie Dimon joining us later. Have a great day, everybody. This
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live at JP Morgan Global Markets Conference here in Paris, and these are your top stories. A crucial cabinet meeting. The pressure grows on Keir Starmer as dozens of MPs call for the UK Prime Minister to get ready to step down. President Trump says a ceasefire with Iran is on, quote, massive life support, but says a diplomatic solution is still possible. Plus, close coordination. Japan suggests that the U.S. has given tacit approval to recent suspected intervention to support the yen. Now, there is a lot going on, not only on the geopolitical front, then a reminder, it is tomorrow that President Xi also meets President Trump. This is what the markets are looking at right now. A retreat in high-flying technology stocks seem to be dragging lower equities as traders wait for that U.S. inflation data. So I'm looking at stocks Europe 600 down some 0.8%, a similar move for the NASDAQ 100 futures. Look, a couple of other things we're watching out for. Brent crude, always a good idea to look at the oil markets, 106.5. Again, Brent rising for a third straight day with the ceasefire in the Middle East appearing increasingly fragile. And then we'll look at sterling always. We could also look at gilts, given all of the political turmoil that we see in the UK. Sterling 135.19. So welcome back to The Pulse, live from JP Morgan's annual Global Markets Conference here in Paris. Investors reflecting on the year gone by, also asking where the different asset classes go from here. So on the program today, I'll be joined by JP Morgan's Global Head of Market Strategy and the Global Head of Credit Trading. But first, of course, well, we go to Downing Street. And then later in the day, we'll also be speaking to Jamie Dimon, the Chief Executive of JP Morgan. Catch that conversation at 2:45 p.m. London time. But first, ministers are arriving in Westminster for a pretty crucial cabinet meeting due to start in 30 minutes. The UK Prime Minister is under pressure after dozens of lawmakers called for him to lay out a plan to resign. Well, Bloomberg's Lizzie Burden joins us from Downing Street. Lizzie, just bring us up to speed on what's happening there.
Great. Well, Francine, it seems that the Prime Minister is losing his fight to stay. You've got Cabinet Ministers arriving. Darren Jones, the Chief Secretary to the Prime Minister, just stepping into number 10 now. As you say, that meeting due to start in just under half an hour. But what's worrying for Keir Starmer is that not only have at least 70 of his 403 Labour MPs now called for his departure, it seems that those calls are coming from within his cabinet too. Reportedly, the Home Secretary, Shabana Mahmood, privately urging him to set a timetable for his departure as well. Darren Jones earlier this morning on the airwaves telling Times Radio that the Prime Minister is considering his colleagues' concerns and he's going to make a decision on his future. So quite the change of tone from what we heard from the Prime Minister yesterday in that defiant speech that he was going to stay, and indeed over the weekend saying that he intended to be here for another 10 years. But you can see that there's a rift in this Labour Party between those who are calling for an orderly transition code, that the next leader will be Andy Burnham, the Mayor of Greater Manchester, who, of course, doesn't have a seat in Parliament yet, and those calling for a swift timetable to replace Starmer. Code, Health Secretary Wes Streeting, his aide quitting, potentially suggesting that he is preparing a leadership challenge. Look, even talk about who could replace Starmer is weakening for the Prime Minister. We learned it with the Conservatives before him, that the herd mentality just gets faster and faster. It builds the momentum in Westminster. But when we look at the market moves this morning, not a pretty picture in the UK. Gilt yields rising, the 30-year up 10 basis points this morning, the highest since 1998. The pound falling as well. So huge questions for these ministers going into number 10. We'll wait to see what the answer is after this cabinet meeting.
Lizzie, thanks so much. Lizzie Burden there outside number 10. Of course, global markets have faced mounting uncertainty over the past few days. Today brings no shortage of catalysts. So we'll look at the UK. We also have the US Treasury Secretary Scott Bessent in Japan, where the finance minister has signaled tacit support for suspected intervention on the yen. Then a closely watched US CPI print looms later today, and President Trump, of course, is due to head to Beijing for a high-stakes summit with China's President Xi. So with us now, Dubravko Lakos, Head of Global Market Strategy at JP Morgan. Dubravko, thank you for joining us. You're a busy man. There's just a lot going on. There's a lot of risk out there, a lot of geopolitics. If you look at the UK, does that change the trajectory for UK assets if we have a new Prime Minister in charge?
Look, so first of all, yeah, we're dealing with a very complex backdrop, a lot of moving variables. I think as far as the UK, there's definitely some risk in that the gilt market
could act up a bit, and you could see sort of rates sort of backing up a bit further. Still a bit too early to say, but we think that the sort of transmission mechanism into global rates will likely be more muted, and the bigger story for us is really how does the current energy shock and the oil shock tied to Iran and the Strait of Hormuz play out in the coming weeks.
So how does that play out? First of all, I mean, it plays out in bonds, it plays out in energy prices and inflation.
Look, we've had a pretty big supply disruption, and so far inventories have helped offset a decent amount of that shock. And so we're now basically, as we go into June, we're basically looking at a situation where inventories are getting depleted, and we're going to be getting closer and closer to what you could basically call operational stress levels. And so we think that one way or the other, that's going to start to force potential reopening of the strait, because otherwise the situation is just going to get uglier.
But what does that mean for markets? Because the markets have largely looked through this. I mean, we're seeing record highs on many indices, despite the situation. And diplomatically, it's really difficult to see a way forward with a lasting ceasefire.
I mean, look, markets, especially if you look at risk assets, equities, even credit markets, things have generally moving in the right direction outside of that initial sort of fear. I mean, I would say a few things. One, we're entering this energy shock with relatively healthy inventory. So the runway is perhaps a bit longer than what we initially feared. Yeah. And at the same time, the fundamental story underpinning corporate earnings has just been blockbuster. Earnings delivery has been extremely strong. 1Q earnings season has come in much stronger than what people expected. And so I think the earnings, the AI narrative has just basically been overriding the whole geopolitical oil situation. Now, obviously, if you sort of fast forward another, call it 4, 5, 6 weeks, situation remains unresolved, you got complacency.
I mean, what does that look like? So it's a correction in the markets? Because again, we had a stellar earnings season, but actually, the next couple of quarters, I think, are a lot more uncertain.
So I am less worried about fundamentals because it's not about expectations. Earnings delivery is coming through. And so if anything, I would make a case that multiples and valuation has gotten a bit easier, even with the markets moving higher, just due to this massive earnings revision cycle upwards. Having said that, you got potential risk around excessive crowding that could cause, flash crashes. Momentum stocks are bid up quite aggressively. So again, short term, I definitely think there is risk and there could be some digestion periods. But unless the earnings picture changes, I think, people buy the dip.
I mean, when you look at inflation, so we have that CPI number. I mean, this will be decisive in deciding what central banks will do. And actually, if you speak to central banks, they're kind of on the fence, right? They're themselves worried that they're either too late to the game or get it wrong.
I mean, central banks have been removing that sort of, call it easing bias that we had late last year coming into this year. Some already talking about hiking, Fed so far on hold. Having said that, yes, a lot of focus is on inflation and the upcoming CPI print. But I think it's also something that's pretty well advertised. So the question is, to what extent does the market look through this as a more of a temporary versus more of a permanent sort of sticker shock?
I understand that the hyperscalers are funding a lot. I understand that CapEx, rightly so, is sustaining the economy. But do you have any concerns about AI?
I mean, yes, there will definitely be concerns about AI. I don't think it's in the next 6 months. I don't think it's in the next 12 months. I think the concerns are just basically whether AI monetization and think about the AI downstream complex starts to gain enough momentum in the coming quarters to help offset the eventual deceleration that we will be seeing in terms of this sort of AI upstream and sort of capex build out, which is going to come. Right now, we're still sort of thinking that we're effectively just entering now year 4 of what should be roughly a 7-year cycle, and you're dealing with a lot of shortages, a lot of bottlenecks that are basically pushing things out. So I'm not so much worried on the demand side there, not at this point.
But so what happens in 2-3 years? I mean, do you need to start preparing something now?
Well, I think 2-3 years out, it's too far. There's so many things that we have to deal with before that. The Iran situation, midterms in the U.S., what happens with central banks. So I think it's a bit far. I think people are just kind of focused, sort of call the next 12 months. And the picture there looks pretty strong. I mean, I do think the bigger question is sort of further out. If you don't see enough monetization momentum building up, and if you can't sort of bridge that gap, you could then basically end up running into a little bit of a tech bubble, type issue, where you then basically get a bit of a burst.
Do you worry about China tech actually taking, what happened with DeepSeek, or do you worry even, we've had a couple of wobbles in the last couple of months where, you'd see, for example, some of the software companies being slammed. Are we going to see that periodically?
Look, I think it's an environment that continues to change very rapidly. So I think it's very hard to make any big, bold, high conviction calls in terms of how the AI story and how the LLM story is going to evolve. I think US is definitely going to have a handful of top players that will stay very, very competitive. I do think China at the same time is making a ton of progress, right? So I think probably there is space for both of them. I wouldn't necessarily say that one sort of overtakes the other.
Do you see any market dislocations? Is there anything at the moment that you think is a good opportunity?
There is, I would say, a decent amount of market dislocation. You're basically looking at two major shortages happening globally. The physical oil shortage, which is sort of fueling a big momentum trade around it, basically people going long the exporters versus the importers, and then you're still looking at the shortage of compute, chips, memory, storage, and that's fueled a freaking massive momentum trade, basically going long AI upstream versus sort of downstream. So yes, things are pretty extreme, and I would say probably one of the more interesting parts for me these days is the low vol.
Yep. I'm here, ready. Okay, we are, of course, live at the JP Morgan Summit in Paris. Francine Lacroix is on the ground for us. We are, of course, building up to that key interview with Jamie Dimon later this afternoon, UK time, that Francine will be conducting. Coming up, as private credit firms report billions of dollars worth of dry powder, we're going to discuss where it might be deployed with the chief credit strategist at Goldman Sachs. That is next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse. I'm Tom McKenzie, of course, stepping in at least temporarily for Francine Lacroix, who is at the JP Morgan Global Conference in Paris. We're trying to re-establish that line for you. But let's get an update now in terms of what's happening vis-à-vis the US and Iran, because President Trump has cast doubt over the ceasefire with Iran after rejecting Tehran's latest peace offer, prolonging the effective closure of the vital Strait of Hormuz.
Right now, it's on life support. They understand these are all medical people.
Dr. Oz, life support is not a good thing. Do you agree? Bad prognostic. I would say the ceasefire is on massive life support, where the doctor walks in and says, sir, your loved one has approximately a 1% chance of living.
Well, for more, let's bring in Jumana Basetchi, Bloomberg Horizons Middle East and Africa anchor, of course, who's been on the ground for us, covering this for us and live today out of Dubai. What is the situation right now, Jumana? What is the current assessment of the way the US is positioning after this apparent rejection of this Iranian offer?
Yes, well, it's interesting to see the various comments that Trump has used to describe the situation as it stands between the U.S. and Iran. And, of course, a day ago, he had described the Iranian counterproposal as being, quote, totally unacceptable. Overnight, he also suggested that the ceasefire was, quote, on life support, and then went on to describe the Iranian proposal, and this is a quote, as a piece of garbage. I will say that based on our reporting throughout, the almost 3 months of this war, those types of comments, those jabs, don't tend to go down well with the Iranian leadership. So we'll see whether there is actually going to be a response to some of the social media rhetoric and some of the posturing that is coming out of the U.S. That being said, President Trump was asked whether this necessarily would mean a return to hostilities and military conflict. And he did say that a diplomatic solution was still possible. Now, you have to bear in mind, Tom, that there is that important high-levels meeting taking place between Trump and Xi later this week. The Iranian foreign minister met with his counterpart in China last week. Iran, obviously, on the agenda. China has been reiterating their call for de-escalation and an unconditional reopening of the Strait. So you have to assume that it is going to come up in the various topics that are going to be discussed between these two leaders. And also, it is unlikely that the U.S. may want to resume full-fledged hostilities in the run-up to this meeting or even around the time that it's happening. So what we are in for, perhaps, is a couple of days of wait and see what happens. Ultimately, though, there's still an impasse between what the U.S. are pushing for, what the Iranian side are coming back with. And there's still a real possibility that President Trump may actually restart this so-called Project Freedom to forcefully reopen the Strait again. So that's what we're on lookout for this week.
OK, and of course, what happens in terms of the physical supply of commodities through that strait as well. Jumana, we've been getting updates from executives in the region. We had Saudi Aramco, of course, over the weekend with some pretty stark assessments in terms of when that market gets back into balance, potentially 2027. But we've also hearing from executives at major gas producers as well in the region. What is the update? What are you hearing from executives involved in the production of commodities out of that region that's facing those constraints?
Yeah, it's interesting. So we were reporting on Aramco earnings yesterday, and obviously they have seen an uplift to their earnings on back of higher oil prices and the fact that they were able to reroute a significant chunk of their oil supply through that east-west pipeline. But I think the warnings coming through from the CEO of Aramco, Amin Nasser, really carried some clout in the market. And he was saying essentially that the longer the strait stays closed, the more you're going to see supply getting taken out of the market to the tune of about 100 million barrels a week. Already, we're looking at about 1 billion barrels that have been taken off the market. The longer this goes on for, the more you're going to start to see that physical supply contracting. And he says that it's going to start to show up once again in pricing as of June. So that's something to watch out for. He also said even if the strait recovers or reopens today, you're not going to get a full normalization possibly until 2027. So that's one warning coming through from an industry leader. Earlier today on our show, we also spoke to ADNOC Gas CFO. They released their earnings. They also said that they're estimating about a $400 to $600 million hit to their second quarter earnings on back of the disruptions around the Strait of Hormuz. I asked the CFO how long it would take them to get back to full capacity if the Strait did reopen. And he said, we can't give you full visibility on the timeline, but of course they are sitting ready, can load the vessels and get them out. But he said, I can't give you a number, whether it's 2 to 3 weeks. And I think here what we can piece together, Tom, is once the Strait does fully reopen, and of course that is a massive assumption, it's not necessarily going to be a button that you switch on that will return everything back to normal. It is going to take time. And many of these industry leaders are guiding to months, possibly even years in some cases for some of those full energy sites that had been damaged to get back to where they were before the war. So, the normalization that people in energy markets are looking for is not going to happen imminently, per industry leaders that we've spoken to from the Gulf.
OK, Jemana, thank you very much indeed with that update out of the region. Bloomberg's Jemana Basecchi, of course. Let's get to how the geopolitics and how what is happening across that space, the volatility, the uncertainty, and how that potentially ties into the credit markets as well. It's interesting, Moody's putting out a note earlier this morning suggesting that they are now, base case is their scenario that the Strait will remain closed for longer, and that potentially has credit ramifications, particularly in Asia. Meanwhile, after tapping the US debt markets for more than $400 billion to finance their AI spending, since mid-2025, hyperscalers are aggressively pivoting to European capital markets to fund the next phase of the global infrastructure race. Joining me now, I'm very pleased to say, is Amanda Lynham, Chief Credit Strategist at Goldman Sachs. Amanda, good morning. Thanks for joining us around the set. So let's start with that story and with that change in emphasis. Tapping the European markets, what is the rationale and how does that story evolve from here?
Good morning. Thank you for having me. I think this is a really exciting time in the corporate credit markets for a few reasons, but one is kind of the massive scale and scope of this AI-related spending plan is going to require a range of markets to participate. So you had mentioned that corporates are diversifying their funding outside of the US IG market. This is really driven by market saturation and issuer concentration constraints in the US IG market. It's obviously a very deep, liquid, broad market, but corporates need to be thoughtful about how much debt they can issue into any one market. So we are seeing corporates tap euro, Swiss, sterling, even Canadian dollar and Japanese yen. I would say of those markets, the European IG market is the largest and the deepest of those other regional corporate bond universes. But this is a trend that we think will continue. We're in the early innings. One crazy statistic that we've monitored is that if you actually take the European AA corporate market, 53% of that index is driven by U.S.-based companies, and actually 2 of the hyperscalers are among the top 5 issuers already.
Okay.
So this is really accelerating. On top of that, we also see roles for other structures to participate and even other markets like private infrastructure and real estate. And so it's hard to kind of understate the paradigm shift that is happening in corporate credit markets as a result of coalescing around this funding need.
Yeah, it's really interesting. And to your point, we've seen the likes of Alphabet tapping the markets, the euro markets, and today Amazon in Swissies as well, Swiss price debt as well. Amazon looking to access the markets there. But for you, this is a healthy dynamic. Does it suggest that the US markets, there's a bit of indigestion in terms of the amount of debt that's being absorbed there?
It's not indigestion. It's actually, it's very predictable, actually. If you take the US banks, which are a great case study, the US banks are the largest sector in the US IG market, but none of those banks have more than $175 billion of debt or represent more than 2.3% of the index. That's really just asset managers won't want to overweight their portfolios in any one given name. So it's a normal kind of progression. I would say 2 things. There's a lot of runway for this sector to issue because keep in mind they're starting from a point of very low leverage. Many of these hyperscalers are cash rich, so their balance sheet leverage allows them to add debt capacity. I think as we progress, however, and this is the second point, through 2027, 2028, investors will just need to plan more thoughtfully where they want to take this exposure. Do they want it in high yield? Do they want it in IG? Do they want it in the private infrastructure market? If they're thinking about IG corporate debt, do they want it in US or in euro or in other markets? And so I think there is a bit more thoughtfulness that investors are navigating this decision tree. And I think for now, there's for sure a lot more scope, but that will probably become more pertinent in 2027 and 2028.
OK, I like the time frame is important and really interesting because free cash flow, even amongst the hyperscalers, is starting to shrink. And so that brought me on to the question of how long this trend continues. And the bid to cover ratios and how those adjust along those kind of timeframes.
I don't think it's an issue of access to funding. I think it's just an issue of picking your spots and maybe a more nuanced conversation around pricing. Our equity analysts, for example, are expecting $4.5 trillion of capex spending from the 4 largest hyperscalers from 2025 to 2030. So it's a magnitude that is really unlike anything the corporate credit market has ever seen. So your point is well taken that it will require a range of financings. Our U.S. equity portfolio strategy team has already flagged that hyperscalers have cut back on share buybacks. So there will be a range of participations, but I don't think it's an issue of access. I think it's just an issue of picking your spots.
On private credit, are your clients preparing? Are they adjusting their portfolios potentially for more pain in that space?
No, actually, our view on private credit, if I had to sum it up, is one of dispersion but not widespread market disruption. There's a lot of focus on retail redemptions in the private credit space. That's 15% of the market. The bulk of the AUM in the private credit space is actually institutional, where those redemption limits don't exist, and the redemption possibility doesn't exist in the same way. It's really locked up capital, drawdown funds. If anything, I think if there is a disruption in, say, credit generally, private credit would deploy on the back of that because there's a significant amount of dry powder. So our conversations with investors really looking for opportunities to deploy distressed, opportunistic, special situations. Again, doesn't mean that we won't see disruption in terms of certain sectors or vintages, but it's really a point on dispersion, not a widespread market disruption of the asset class.
So there could be more withdrawals, but also some opportunities. Do you see more withdrawals potentially from private credit this year?
Our equity strategists that cover those alternative managers have said that basically the next redemption window in June, you could see more. But I would say that's very well known at this point. I would say that's a known risk. I think more generally, the key signpost to watch in our view is the growth backdrop, because outside of a sharp downturn in growth, history tells us that it's very difficult to get a sharp increase in defaults and realized losses in both private credit and liquid credit. And so that's really the signpost that we're watching, is how does the economy hold up? Our economists' expectation is for below trend growth, but nowhere near recessionary levels. And that's a pretty fine backdrop for credit. So again, it's dispersion, but not widespread market disruption. There could be some kind of mini cycles within certain pockets of certain sectors, but that's nothing that the credit market hasn't seen before, whether it was the energy downturn, the retail downturn, et cetera.
Okay, really, really valuable context. Amanda, thank you very much indeed. Amanda Lynham, Chief Credit Strategist at Goldman Sachs. Coming up, how are investors navigating the geopolitical uncertainty? We'll get more insights, and we're going to discuss that with the Chief Executive of MSCI. That is next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. A crucial cabinet meeting. Pressure growing on Keir Starmer as dozens of MPs call for the UK Prime Minister to get ready to step down. President Trump says the ceasefire with Iran is on, quote, massive life support, but says a diplomatic solution is still possible. Plus, close coordination. Japan suggests the US has given tacit approval to recent suspected intervention to support the yen. Let's go to the UK politics right now, though, because ministers are arriving in Westminster for a crucial cabinet meeting due to start in the next few minutes. More than 70 Labour Party members of Parliament, MPs, are said to have called on Keir Starmer to set out a timetable to step down as UK Prime Minister following last week's local election losses. Bloomberg's Lizzie Burton joins me now from Downing Street. What is the mood right now on the ground where you are? What is the mood likely to be behind that black door of number 10, Lizzie?
Well, Tom, the ministers have been filing in for this cabinet meeting. It is set to be an awkward one, perhaps a dramatic one. And I have to say, there is an echo of the days that Keir Starmer promised to end, the leadership melodrama with the Conservatives. The question of how it could come to this so soon after a landslide general election victory. And of course, the picture in markets, gilt yields up and the pound down. Now, inside this meeting today, the Chief Secretary to the Prime Minister, Darren Jones, has insisted it's going to be business as usual. They'll be discussing the Iran war, the King's speech, but it's hard to believe that they won't also be discussing Keir Starmer's future. Already we've seen at least 70 of the 403 Labour MPs calling on the Prime Minister to go. And this morning we've already also had a junior minister quitting over Starmer's future. That is Mayata Fanbule. We've heard privately that the Home Secretary Shabana Mahmood has been urging the Prime Minister to set a timeline for his departure as well. So this is moving closer and closer within the concentric circles towards the Prime Minister. He really is on the ropes today.
Talk us through, Lizzie, then, the market implications of this. We're seeing a pretty pronounced sell-off in UK bonds. We're seeing the pound under pressure. How much of this will factor into the discussions, do you think, amongst the Cabinet and amongst others around the Prime Minister's team?
Yeah, 30-year gilt yields at the highest since 1998. We've seen the pound against the euro at a 2-year low. Because for the market, Starmer is the best option. They do not, traders, want anyone more fiscally lax than Keir Starmer. Interesting question around whether his Chancellor Rachel Reeves would stay if there were a different Premier. Her allies reportedly telling the FT that she should stay for the sake of market stability, even if there is change at the very top. There's a question for inside there. But as we say, it is an ugly picture in this market because, frankly, it is difficult for the likes of Andy Burnham, the Mayor of Greater Manchester, currently a potential rival to Starmer, to shake off his comments that we shouldn't be in hoc to the bond market. Yes, he's walked them back, but it seems to be something that bond vigilantes cannot forget. They seem to would prefer to have this fiscally prudent Prime Minister and his Chancellor staying behind that black door.
Bloomberg's Lizzie Burton on the ground for us in Westminster on potentially another pivotal day for the UK leadership. Let's hand it back right now, though, to Francine Lacroix, who's on the ground in Paris. Francine.
Yeah, thank you so much, Tom. We're here in Paris at the JP Morgan Global Conference. Now, Korean stocks fell more than 5% after a top policymaker called for citizens to be paid a dividend from AI profits. Now, this, as Michael Burry, the investor made famous in The Big Short, warns that the Nasdaq is set to crash. Well, let's bring in Henry Fernandez, Chief Executive of MSCI. Henry, it's always so good to speak to you. I'm so sorry I can't be in London with you, but talk to me a little bit about the concentration of some of these big tech stocks. Is this a concern of yours for certain indices?
There is definitely a great deal of concentration. If you look at the Magnificent Seven stocks in ACWI, which is the Old Country World Index, it's about 18% of the total index. But also in the emerging market, there is concentration by the tech stocks as well. But we have seen periods like this in the past. In the 60s, there was a lot of concentration in oil companies in the index, reaching up to about 70% of ACWI, the U.S. market reaching 70% of ACWI. And then in the bubble, in the internet bubble in the late 90s, the same thing. And now this period of time. So obviously the market indices reflect is a mirror of the market. So there's nothing we can do about it except, watch it and monitor it.
Henry, is there any way that actually you can address this? I don't know whether there is more of a demand, for example, capping or in indices where this is less of an issue.
Yeah, there's always investors that would like to cap a particular market. For many years, back in the 80s, people would like to cap the Japan market. There is some effort by some people to cap the U.S. market in their exposure. Our market cap indices in general are basically uncapped, unconstrained, because they are a true reflection of what's going on in the world equity market. So those are unconstrained. But there are some investors that would like to have an index that has less exposure to either a particular stock or a particular country.
So if you look at levered assets, how are flows into that going? And in general, how are investors looking at some of that risky exposure?
Yeah, so if you look at the world today, definitely, there is a confluence of risks, a confluence of changes, very rapid changes from the Iran war, the Ukraine war, the energy supply, problems, the price of oil, AI, and the like. And therefore, all of that has created incredible uncertainty and volatility in financial markets. On the other hand, it is amazing how investors in the world have become so desensitized to a lot of this, and they continue to behave in a normal way. Obviously, they're trying to deal with the volatility in their portfolios. But for example, in our own business at MSCI, we have not seen any effect of any of this in the demand for what we do, which is something that we would have expected, some problems, but we have not seen any effect whatsoever around the world.
So, away from AI and flows into AI-related stocks or indices, where do you see the biggest demand going into?
There continues to be a large demand for U.S. assets. It is amazing. I know you were at a conference in Paris, a JP Morgan conference in Paris. There was another conference here in New York yesterday that a colleague of mine attended, and people were largely bearish in Europe. And there was a colleague of mine from the UK who attended the Milken conference and was commenting how bullish people are in America. So you can see that it's probably a good time to buy Europe, and it's probably a good time to soften your exposure to America. But that's why you see flows. You see continuous flows into the technology stocks, the AI stocks, maybe not the SaaS software stocks, but for sure the AI stocks. And there's also a good amount of flows going into emerging markets and into some private assets because of the perceived lack of volatility, even though, obviously it's because the assets don't trade every day, but there's perceived lack of volatility, and therefore there's flow goes into the private markets as well.
Emerging markets actually have been performing quite well, this in part because of the structural reforms that they put in place over the last couple of years. But are they some of the big winners in the last year?
Yes, in 25, the MSCI Emerging Market Index was flying and did very well. Obviously, after a long period of time of muted performance, and you could see some of the markets like Korea. You mentioned Korea earlier today. There was some volatility overnight because of these taxes on dividends of AI stocks. But the market is being setting records. Taiwan as well, because of Taiwan Semiconductor, the company. And you've seen that. But emerging markets are a catch-all category, obviously a type of country. And therefore, you have to be discriminating as to which is the markets you want to go into, because there are some that are in relatively good shape. They have good amount of energy. They have AI. They have semiconductors. They have a lot of technology. And other ones, we are in the opposite position, and therefore will suffer during this period.
Henry, give me a sense of how much demand you see for ETF products and how much you're expected to see that grow worldwide.
Oh, the demand is very large and insatiable in ETFs. Equity ETF, fixed income ETFs, cryptocurrency ETF, and the like. And what we have seen lately, Francine, is a significant acceleration of demand in ETF listed in Europe. Obviously, a lot of the large part of the ETF market is listed in the U.S., but we're now seeing continental Europe really emerging as a large center for listed ETFs. And of course, we in our company have benefited significantly from that, because this is typically developed market ex-US exposure that is largely listed in the European markets.
I mean, of course, we talk a lot about fragmentation, mainly because of all of the geopolitics and uncertainty out there. Do you believe in deglobalization, and what does that mean, again, for investing in certain markets?
It's a great question. A lot of people are talking about deglobalization. It cannot be further from the facts. What there is a reglobalization taking place, not deglobalization. If you look at the trends on trade, global trade went up 5% in 25. You know, with a global economy that grew a little less than 3%. You know, the sort of global trade is now 35 trillion in the world. And you see trade, you know, happening. You know, you look at China. China, obviously, trade with America went down 30%. Exports of Chinese goods into America down 30%. But trade went up dramatically by Chinese exports into Africa, into Southeast Asia, into Latin America, and even into Europe. So, yes, you know, you can focus between U.S. and China as an example. You may focus between U.S. and Europe. And some of the issues associated with tariffs and the like. But the trade, global trade continues to grow. And this concept of deglobalization is not verified by the facts that I just gave you. What there is a re-globalization. The trade is being directed in different flows, different countries, and different regions of the world.
Henry Fernandez, thank you so much for joining us. That was, of course, the Chief Executive Officer of MSCI. Now, we'll have plenty more, of course, from JP Morgan here in Paris. Also, a reminder, Bloomberg LP, the parent company of Bloomberg News, competes with MSCI and others by compiling indices and providing analytics for stocks, bonds, and commodities. Now to some other world news, and Japanese Finance Minister Satsuki Katamaya says her team is working closely with the U.S. Treasury Secretary Scott Bessent on currency policy. The move signals a tacit U.S. approval of Japan's recent suspected market intervention. Now, for more, let's talk to Molly Smith, our editor in Tokyo. So, Molly, what can we take away from Katayama's remarks? Is it a confirmation of intervention?
Well, it's not an explicit one, but we also didn't really need her to confirm that there had been intervention. We already can tell from the accounts at the central bank, at the Bank of Japan, that intervention did take place at the end of April. And there are a couple of now suspected interventions that we're going to have to wait to get confirmation of the accounts. Some activity that took place early in May in the Golden Week holiday here. We won't see that until activity that comes out later this month. But it was significant to hear from Katayama that Bessent did basically, you know, that they are having productive talks and that they're in agreement on these things, and that essentially the U.S. is going along with what Japan is doing in markets right now, even if they aren't explicitly saying that they are intervening in the market.
Secretary Bessent also met with the Prime Minister of Japan, Sanae Takahashi. What more do we know?
Right. So that was later in the day here in Tokyo on Tuesday that Bessent met with Takaichi. And it was, you know, kind of similar, just reiterating a bit of what he had discussed with Katayama and saying that the relationship with the finance ministry is working really well, and that he spoke as well about the Japanese economy and said that its fundamentals are strong and robust, and that that's something he expects to be reflected in the exchange rate. Granted, we have to keep in mind that Bessent's previous comments have hinted that he would rather see the yen strengthen by the Bank of Japan raising interest rates rather than through the currency intervention. So he did say that he has full confidence in Bank of Japan Governor Kazuo Ueda, but kind of, looking forward to seeing then if that's kind of giving a little bit of a nudge to if there's going to be a rate hike at the Bank of Japan's next meeting.
All right, Molly, thanks so much. Molly Smith there from Bloomberg. Now, we'll have plenty more throughout the day here in Paris. Coming up, can resilience in the credit market last? We'll discuss all of that with JP Morgan's head of global credit trading, who will be joining me here in Paris. That's next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Well, the conversations that matter, the insights that you need. This is The Pulse, and I'm Francine Lacqua here in Paris at the JP Morgan Global Markets Conference. Now, there is some breaking news out of Keir Starmer. Look, we've been talking to you about it all day. He's definitely facing pressure to step down as the Prime Minister of the UK after dozens of members of Parliament called for him to set out a timetable for his departure. We understand that there's a cabinet meeting. Lizzie Burden's outside number 10 Downing Street. That cabinet meeting started about 10, 15 minutes ago. The Prime Minister, Starmer, telling his cabinet that he will stay on as Prime Minister. Again, it does seem that the rebellion is growing. Cabinet allies, including the Home Secretary, which is not insignificant, but also the Energy Secretary, are privately, we understand, urging the Prime Minister to consider plans for handing control to a successor. So we'll keep on top of that story to see what happens next. On to credits, private credit. A recent wave of investor redemption requests across a $1.8 trillion market for private credit prompted Blackstone to enlist senior executives in putting up capital to bolster its flagship fund. Well, in the latest episode of my podcast at Leaders with Francine Lacqua, the company's president, John Gray, told me there's nothing more powerful than putting some money in and being aligned with investors.
The key is you're in the investing business. It's a trust business.
And when there's a lot of noise and people are saying this is that, there's nothing more powerful than sort of putting some money in and say, hey, look, I'm aligned with you. Yeah. This is my money. I believe in what I'm saying. And in the fullness of time again, investors will look back and say, hey, they did a good job. And I think again and again for us, focusing on that North Star, which is performance and building trust with our clients, that's what really matters.
So that's the podcast. I urge everyone to go and listen to it. We're here in Paris, and I'm delighted to speak private credit with Sanjay Jamna, head of global credit trading at JP Morgan, who joins us now. Sanjay, thank you so much. So good to talk. Look, when you look at risk out there, right, from a private credit perspective, has it changed for investors, the appetite for private credit in the last couple of months?
So private credit has been in the headlines, as you've just said. And we have to separate between two distinct issues are affecting. The first one is asset underlying quality, and the second one is investor liquidity. Investor liquidity has grabbed the headline, but really it relates to retail funds, and it's only 15% of the market. Okay. So the big question is asset quality.
What are you seeing, though, in general, in terms of inflows and outflows in this space?
So the inflows in the credit asset class are unquestionably strong. We are seeing a rare mix of elevated yields, strong corporate fundamentals, and very strong earnings, and in public markets, very high credit quality.
So, given where we are now in May 2026, where do you think credit spreads are heading?
So the starting point is that credit spreads are consistent with very high earnings and very strong fundamentals. So that's the first thing. There's a lot of question marks as to where spreads are going, but the thing that we've learned in the past 6 years is that companies adjust to shocks. They adapt. And so we've had pandemic, we've had oil shocks, we've had labor shortages and so on. And every single time, the consistent takeaway has been that the companies have been remarkably resilient. So I think that's what's feeding spreads here.
But do you think, Sanjay, that actually investors are adequately compensated for the risks they're taking in this space?
So what's interesting is that a lot more investors now that we talk to are comparing corporate bond yields in fixed income to government bond yields. And the argument that we didn't hear echo even a few months ago, that government debt is elevated and corporates are in good condition, which is really what defines spreads, is coming back to the fore.
But so for the moment, we've seen resilience.
Yes.
Does this last?
Resilience?
Yeah.
There's no reason to doubt that it's going to last. The thing that is often overlooked is that the breadth of the strength has been immense. You just have to look at the Russell 2000 to see that it goes well beyond AI and AI adjacent. It goes to small and middle-sized companies as well.
So, if you look at market dynamics, are you going to see more decompression between, for example, companies and rating bands and some of the sectors?
So credit cycles create alpha, and that's undoubtedly the case. There is, at the moment, a revival of, or a rise, should I say, of defaults and stress from very low levels, right? And nowhere is it more present than in the software sector.
Right. So is that the biggest risk? Is that where you could see something underlying?
So I wouldn't qualify it as a risk. In software, we are past the shock.
Okay.
Right. You just have to look at last week's model releases, and you notice that it did not bring the sort of negative market reaction that came earlier. Right? So we are past the shock, and investors are much more now discriminating and opportunistic and looking for opportunities, and we really have two-way interests.
So where do you see hidden risks in the markets? Where do you see hidden risks in the markets?
I don't think that there are hidden risks. I think the market in general is right. Like, the market is a price level and an equilibrium, that reflects both the risks and opportunities. So of course, there is always things on the horizon that could develop over time. But as we sit here, right and right now, we're seeing AI capex that is feeding a really strong cycle and robust credit spreads.
But Sanjay, I mean, I guess two questions. The first is how much of this is driven by rates rather than fundamentals, right?
The short answer is very little. The short answer is very little. The AI capex that is coming for a very simple reason. It is that the hyperscalers are seeing demand that is accelerating faster than they can supply it. And so that is unquestionably a positive.
But does the hyperscaler demand, I guess, impact at some point the secondary markets?
At some point it will. At some point it will. But what you notice now is that hyperscalers are accessing a wide variety of markets. They're diversifying away in terms of currencies and structures, and they're really like maximizing. The bottom line is record credit issuance in the sector is being absorbed by the market really well. So that's basically showing us that investors are buying into the narrative.
Okay, so interesting. Sanjay, thanks so much for joining us. That was Sanjay Jamna there, the head of global credit trading at JP Morgan. Now, we'll have plenty more, of course, from Paris throughout the day. Don't forget our exclusive conversation with Jamie Dimon, the JP Morgan chief executive. That's coming up at 2:45 p.m. London time. Now, a couple of things I'm watching out for, of course, is Keir Starmer facing growing pressure to step down as a prime minister after dozens of members of Parliament called for him to set out a timetable for his departure. The cabinet meeting is still ongoing, we understand, behind, of course, closed doors at number 10. But Bloomberg has been reporting that the prime minister has told his cabinet that he will stay on. Again, we're hearing more and more, almost on an hourly basis, cabinet allies, also the Home Secretary, the Energy Secretary, we understand are privately urging the Prime Minister Starmer to consider plans for handing control to successor. Again, the prospects of selecting a new leader has exposed a pretty deep factional divide in the governing party. It's also having an impact, of course, on markets. I'm looking at sterling, I'm looking at gilts, and you're looking at live pictures of probably the most famous black door in the world, the door at number 10 Downing Street. We'll have plenty more throughout the day. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock in stalemate, oil extending gains as President Trump says the US-Iran ceasefire is on massive life support. Staying on, UK Prime Minister Keir Starmer tells his cabinet he will stay at his post amid mounting political pressure. And all of that ahead of a fresh inflation print in the US later this morning. It's already been a big night across Asia. Let's get over now to Winnie Su for the latest. Winnie.
Good morning, Bonnie. Indeed, it has been a very interesting day for Asian stocks, especially as we see that the MSCI Asia here under a bit of a pressure with losses led by the South Korea's Kospi index. We're looking at that benchmark down more than 2% today, with the won also weakening by more than 1%. And that is all coming after a top policymaker said that the country should pay its citizens a dividend from its tax from the AI revenues. Now you flip the board and see how that has driven this roller coaster in the Kospi index, losing as much as $300 billion in value in just 97 minutes. And it did pair some of the losses earlier today when we heard that this is actually not a windfall tax. But still, you can see that the markets have become quite jittery after having risen more than 80% so far this year.
Winnie, thank you very much. Winnie Su there in Hong Kong, and a big morning in Britain in particular as well. Louise Moon is in London with a check on Europe. Louise.
Indeed, Ronnie, we're focusing on London and the UK this morning. Obviously, the focus is on this political risk for Starmer. Will he survive the day? Calls for him to resign. And as you mentioned, he has just told Cabinet that he will stay, but eyes are still firmly on that. So you've got the 10-year yields and the 30-year yields being hit, as well as the pound. And, you know, options traders seeing more movement for the pound, which could happen through the day. In terms of equity markets and how they're being impacted, we're looking mostly at banks and banking stocks being hit across the board, the likes of NatWest, Lloyds, all of them really being hit on potential for a change in leadership, weaker growth, potential higher taxation there.
Louise, thank you so much. Louise Moon in London. And here in the US, this is the story that is setting the agenda for today. We have Brent crude very close to $107 a barrel again, and WTI well above $100 a barrel. Also, the 30-year yield above 5%. This is the picture, the AI narrative slightly in the rearview mirror at this point, and we're now back onto geopolitics. Of course, the president traveling to China, but that doesn't stop him commenting on Iran's proposal or rejection of the US proposal and talking about it being on massive life support. And you can just see that the pressure is building. We have the VIX very close to 19 once again, the dollar index up 0.3%. And as you can see, after several days of records, so, you know, no sympathy here, we do have futures pointed lower for this session at least. Let's get to some individual market movers now and over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Himson is down quite significantly this morning after guidance missed estimates. Analysts are saying that the results are quite messy because the company is facing higher costs as it transitions into branded products. And so that means some near-term pressure on profitability. And it also means that this noise in financials might take a little while to clear out. So we're down about 15% for that company. We are also in the red for GitLab after the software company announced some job cuts and operational changes. And in response to that, Raymond James downgraded the stock, saying that those internal changes could actually push away top talent and result in a weaker and less capable workforce for GitLab, and therefore the shares are being hit quite a lot this morning. And finally, AST SpaceMobile is also down this morning after the satellite internet company reported first quarter revenue that missed analyst expectations. Analysts are saying that that launch problems remain the biggest risk to the target of 45 satellites by the end of the year. And there's a little bit of weakness on the back of those results this morning. Actually, quite a lot of weakness, down more than 11% for that company.
Chloe Melly, thank you so much. Much appreciated. Also coming this hour, we're going to speak with Apollo's head of credit, and that's from the JP Morgan Capital Markets Conference. We'll be drumbeating to the CPI report as well with Callum Pickering of Peel Hunt. And Roche Diagnostics CEO Matt Souse is going to join this as the firm wins clearance in the EU to sell a blood test diagnosing Alzheimer's. Let's start with the UK, though. Deterioration in those markets in the last few minutes. Prime Minister Keir Starmer telling his cabinet he will not be stepping down amid growing pressure to do so. Bloomberg's Lizzie Burden is live from Downing Street in London with the latest. Lizzie, what's been happening behind closed doors?
Well, the Prime Minister, as you say, defiant that he is going to stay at number 10, even if it does seem that he's losing his fight to stay. Just over the past half hour, he's been meeting with his top team behind that black door there, and he's released a statement saying that he takes responsibility for the election result last week. This is what he's been telling his cabinet ministers. So the Labour Party leadership process has not been triggered yet because the country expects us to govern, he says, and that is what we'll do. In other words, he says he's going nowhere. Now, this is a Prime Minister, Vonnie, who isn't known for his ability to read the room. Just over the weekend, he was insisting that he intends to stay for the next 10 years. The reality is now at least 80 of his 403 Labour MPs have called for his departure. We've already seen the resignation of a junior minister, Miata van Boele, over his leadership. And therefore, it is an ugly picture, as you've all been painting for UK markets this morning. The 30-year gilt yield only climbing. We're up about 12 basis points now. It's the highest since 1998. The pound's hit a 2-year low against the euro, really all because traders are worried about anyone who would be more fiscally lax than this Prime Minister. Now, an interesting question is whether you could see a different Chancellor, the same Chancellor with a different Prime Minister. Allies of the Chancellor, Rachel Reeves, suggesting that she should stay on, even if there is change at the top. That, according to the Financial Times. But she's going to be speaking, or is planned to be speaking, at 11:30 a.m. London time. So we'll wait to see what she has to say. But in terms of who takes over from here, there is a rift in this Labour Party. On the one hand, there are those calling for an orderly transition, in other words, so that the Mayor of Greater Manchester, Andy Burnham, who's leading the betting odds to replace Starmer by the end of the year, has time to get a seat in Parliament. And those calling for a swift timetable, the likes of an aide to Wes Streeting, the Health Secretary who resigned. Streeting, of course, also a runner and rider to take over from Starmer. So for markets, it seems to be a question of when, not if, Keir Starmer leaves as Prime Minister.
Lizzie Burden in London, thank you so much. Turning now to the Middle East, the ceasefire between the US and Iran at a standstill.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading that piece of garbage they sent us, I didn't even finish reading it. I said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
Joining us now from Dubai is Jumana Bersechi. Some very dismissive comments from the president there, Jumana, but Iran has not really changed its position, right? It still wants what it wants and it's not budging.
Yeah, well, certainly that's President Trump's characterization of the ceasefire. He described it as being one that is very weak and on life support. But I will just say and remind everybody that the ceasefire is still holding up. And even though it's been described as fragile, we're still very much in a state of ceasefire. But of course, the question is where we go from here. And President Trump in that same press conference was asked whether this would necessarily mean a return to military action, to kinetic action. And he said a diplomatic solution is still very possible. But in the same breath, also describing Iran's proposal as a, quote, piece of garbage. And so that type of language doesn't necessarily go down well with Iran's leadership, as we've spoken about many times in the past. And the messaging coming from them this morning, the parliamentary speaker, Mr. Ghalibaf, he's put up a post overnight suggesting that they don't plan on compromising on any of the conditions that they've set forward with the U.S. So we're still very much in a situation of stalemate. That being said, we're heading up to a crucial week of diplomacy. We know that the President Trump is going to be meeting with his counterpart, President Xi, in Beijing in the coming days. We know that Iran is also going to be one of the items on the agenda. China clearly pushing for de-escalation and a full reopening of the straits, given the economic benefits that it passes on to China. They're a massive buyer of Iranian oil, obviously. And so we'll see whether anything will come out of those conversations and whether China can actually exert more pressure on the Iranian side even to water down some of their positions. At the same time, many of Trump's more hawkish advisors, some of the more hawkish senators, including the likes of Lindsey Graham, are also proposing restarting Project Freedom. Remember, that was that short-lived project that was launched about a week ago to help guide vessels forcefully through the Strait of Hormuz to reopen it up. They aborted it after a couple of days because it was seen to be too provocative. But perhaps one suggestion that they are moving back towards a more confrontation mode would be if they did restart that Project Freedom. So we're watching out for that in the coming days, in addition to anything that may come through on the diplomatic front as a consequence of that Trump-Xi meeting.
Exactly. May complicate the picture this week, at least. Jumana, thank you so much. Jumana Resechi in Dubai. And Japan, U.S. Treasury Secretary Scott Bessent meeting with the Japanese Finance Minister and Prime Minister Sanae Takaichi. The discussions ranging from monetary policy to President Trump's upcoming visit to China. Bloomberg's Molly Smith joins us now from Tokyo. So what were the main takeaways? What did Bessent and Takaichi speak about, and what did the Finance Minister tell us that the markets should be paying attention to, Molly?
Right. So Scott Bessent started his day in Tokyo today meeting with the finance minister, Katayama, and Katayama spoke after the two's meeting. She basically confirmed that the U.S. and Japan have been coordinating closely on currency discussions lately, which is something we pretty much understood was already happening. And it's not real. It isn't confirming that there had been currency intervention by Japan, but we also didn't really need to hear that explicitly from Katayama because we've already been able to infer that from looking at Bank of Japan accounts and to see that it looks like there was some intervention that did take place at the end of April. Granted, there still is suspected intervention that happened early in May, and the Golden Week holiday will have to wait to get updated account data at the end of May to confirm that that intervention did indeed take place. And Bessent spoke about that meeting later today after he met up with Prime Minister Takaichi, and he was speaking about his meeting mostly with Katayama earlier in the day, basically confirming the comments that she had made and saying that the two are working together well and that the relationship between the U.S. and the finance ministry is effective and that they are coordinating well on currency moves. So a bit more of the same from him. He also did acknowledge the strength of Japanese economy and that he expects that that will be reflected in the FX rate. We haven't really seen that today, though. There was a bit of a sell-off in the yen following Katayama's remarks, and then a bit of market twitchiness. We saw that the yen really strengthened sharply in the middle of the day, but now has been trading a bit weaker, more around the 157.60 mark in the yen per dollar area.
OK, we're well off that this morning at least. Molly, thank you so much. Bloomberg's Molly Smith in Tokyo. Now to other top stories trending on the terminal this morning. JP Morgan's prime brokerage business had its revenue soar to a record as clients seized on volatility in recent weeks. According to JP Morgan, clients are actively trading and adding risk. JP Morgan reported an $11.6 billion trading haul for the first quarter, an all-time high and up 20% from a year earlier. Amazon has begun the sale of its first Swiss franc bonds. It's part of a record 6-part deal in the currency. It's selling debt due in 3, 6, 9, 12, 18 and 25 years to raise money for AI infrastructure. The Bezos family gave $100 million to the Robin Hood Foundation at last night's gala, pushing it close to its $1 billion goal for a permanent endowment. The endowment will help sustain Robin Hood's goal of supporting New Yorkers living below the poverty line. Coming up, we go live to Paris for a conversation with Apollo's head of corporate credit. That's next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. JP Morgan's Global Markets Conference is in full swing. Bloomberg's Francine Lacroix is on the ground in Paris. Francine.
Vonnie, thank you so much. Well, I'm delighted to be joined by John Cortese of Apollo. John, thank you for joining us. I mean, there's just a lot to talk about in your space. It's credit, it's trading, it's everything in between. First of all, I mean, you're trying to make the market a little bit more transparent. How transparent do you think this market will become?
In private credit?
In private credit.
Well, thanks for having me, first of all. Really nice to be here. And it's an amazing conference that JP Morgan puts on every year, so happy to do it with you. On private credit, I think the market for a long time was thinking about liquidity in private credit or transparency as a vice, not a virtue. A lot of times we were being told that we're creating a solution for a problem that doesn't exist. But I think most markets, I come from a public markets background, public credit background, generally our view is the more transparency you give, the more potentially liquidity you give as well, the better off for the asset class. It tends to grow a lot better. You have a lot more, I think, of the myths maybe of some of this asset class dispelled because people see it in front of them. So generally, we're making a big push towards it. You heard Mark in our call over the last week, and really excited to see what that brings to the growth of the business.
I mean, does it change valuations? Like, if you have a more, transparent market, where do you see the different levels of entry points or valuations?
Yeah, we're very deliberate in which asset classes we're picking to have the transparency. I think we benefit from most of our assets are investment grade. And so if you look at the underlying volatility of them versus the underlying volatility of equity, for instance, much, much lower. Even the broadly syndicated loan market, if you look at that this year, the biggest drawdown we have with all the noise we had on software was about 1.5% for the index. In 2022, the biggest drawdown was 4.5% for a broadly based levered loan index. So our view is that if we're doing really high quality origination, which we pride ourselves on, in investment grade primarily, and even when we're doing sub-investment grade and hard asset, first lien, safe, we're happy to show what we do. We think it's the best in class. And yes, maybe it brings a little bit more volatility, but not as much as the fear of the volatility is in a way. So we're happy to lead the market that way.
John, when you look at AI in general and tech, where do you see, or hyperscalers, where do you see the biggest opportunities right now in credit?
It's probably the most exciting time that I've seen in my career in credit, so about 25 years. And if I think about just big picture, the takeaway of U.S. corporate issuance in investment grade this year being higher than net treasury issuance. It hasn't happened in 10 years. It certainly hasn't happened since we brought our balance sheet to where it is. It's just an amazing concept of that issuance financing all this potential growth. But all that CapEx coming to our business, coming into the markets, turning asset-light businesses into asset-heavy businesses, bringing a huge amount of origination opportunity for us. A huge amount of supply also means yields going higher. And you have, for the first time, I've seen rate traders calling corporate traders saying, where are interest rates going? Because ultimately, the corporate issuer is the determinant of quasi-sovereign or really high-quality risk yield issuance. And it's all happening out the curve, long duration, which is great for us. So I think the biggest opportunity is all of that issuance is going to mean a huge IG, public and private opportunity. It also means that anything diversified from that, which Europe fits squarely into, is also of high value because it's less correlated with the huge amount of issuance that's coming to us.
What are the main risks in this? And actually, I mean, the opportunities in Europe must be different to what you're seeing in the U.S.
Yeah, I mean, the main risks are that this issuance is happening in a lot of different formats. It's happening in data center financing, it's happening in power financing to the data centers, it's happening in chip financing, it's happening in corporate financing, private and public. And so if you just blindly buy everything that's in the market today and it's being driven by one huge growth factor in the U.S., your portfolio is going to find itself very correlated at the end of this year, beginning of next year, which is a dangerous thing for credit. So for us, we spend a lot of time thinking about where are we making our bets, how do we understand that correlation and factor risk, and again, Europe not having that same kind of factor is a great opportunity for us because it gives us hard asset, but it doesn't necessarily also have a lot of the correlation risk that I think ultimately will be something the market has to worry about over the next year.
Which is why, I mean, just, to broaden out what we were talking about at the beginning is you're trying to bring trading to private markets, right? This is kind of like the underlying, what are the consequences of that if, certain other firms don't follow suit?
I mean, we're really spending time on what we're doing. I think that it'll be right or it'll be wrong. Our view is that the investor base wants more transparency, not less transparency, and it's good for them. The marketplace wants to see us doing things above the table, not below the table. So we're the most transparent firm in our industry. We show almost all of our assets out there for everyone to see, and others will follow if they think that's a good idea, or if their investors are asking them to do it, or they might not. Again, we're pretty unique in what we do, so I think everyone's going to have their own take on it, but for us and what we underwrite, very happy to show what we're doing real time to investors.
And John, going back to Europe, where do you, the appetite must be different. Does that bring more opportunities?
Huge, and it's different too in that you've got this industrial renaissance, we call it, right? But it's energy transition and power build and so much industry that's been kind of lacking in capex spending for many years now coming to the front. 500 billion euros being announced by Germany. And look at the deals that we're doing. Ørsted, RWE, these are hard asset financings, building power, building energy, building in, defense spending. And they're not because AI is driving that, because the countries need to kind of get to where the rest of the world is. So it's a great fit for us on hard asset, but also doesn't necessarily need to have, we're not making a bet on GDP. This isn't a GDP trade in Europe. It's us stepping in for a pocket of capital that is missing in this area that needs to come in to bring many of these sovereigns and companies to the 21st century.
John, thank you so much for joining us. That was, of course, John Cortese of Apollo. With that, Vonnie, I'm going to send it back to you in New York. And coming up, we have Jamie Dimon.
Yeah, fantastic conference. Thank you so much, Francine, for that great interview. Later today, tune in to Bloomberg TV and radio for Fran's conversation with JP Morgan CEO Jamie Dimon. That's at 9:45 a.m. New York time, 2:45 p.m. in London. This is Bloomberg.
in case you missed it on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Surveillance.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stuck in stalemate, oil extending gains as President Trump says the US-Iran ceasefire is on massive life support. And Treasury Secretary Bessent and Japanese Finance Minister Katayama meeting earlier today, saying they're coordinating closely on currency policy. And all of that ahead of fresh inflation data in the US later this morning. This is what you need to see when it comes to your day's trading. Brent crude above $107 a barrel now as market jitters get ever so much more tense. New York crude above $101.50 a barrel and your 30-year yield above 5%. We also have futures pointed lower after albeit several days of gains. That said, the tone of this market is obviously shifting from AI exuberance back to the geopolitical reality that is the closed Strait of Hormuz and no movement whatsoever on any proposal related to any kind of permanent ceasefire. The dollar index then strengthening as well. Let's get to some individual movers now to London and Chloe Melly. Chloe.
Good morning, Bonnie. Hims & Hers is down about 14 to 15% this morning after guidance missed estimates. And so the telehealth company is facing those much higher costs as it transitions into branded products. And that creates some pressure on profitability and creates some short-term noise in the financials that analysts are saying are creating some quite messy results and might take a little bit of time to clear out. Moving on to Zoom Info, which is a company not of Zoom call fame, but another different company that does marketing and lead generation. And it's down significantly this morning, about 33%, after announcing a major restructuring program that will get rid of about 600 jobs and also cutting its guidance. It's been already a very tough start to the year for that company, and this guidance cut is piling on even more pressure for Zoom Info. And finally, the sneaker brand On is on the move this morning after lifting its outlook after what has been a very strong start to the year. This is a company that has been grabbing more and more market share from established players like Adidas, Puma and Nike, and it seems that it is very much on a roll, and so we're up almost 6% for On this morning.
Chloe, thank you so much. In the UK, Prime Minister Keir Starmer pushing back on calls to resign. We need to take a look at UK assets right now because we're seeing yields rise substantially, way more than the United States, for example. It's more than just the Iran story here. It is the Keir Starmer story. If you look at the 10-year yield and the 30-year yield, we're up 12 and 11 basis points, respectively. That 30-year yield at its highest since 1998. And you saw the pound depreciate pretty substantially earlier. During the cabinet meeting, apparently, Keir Starmer told everybody that he was staying on. Joining us now is Callum Pickering, chief economist for Peel Hunt. Earlier this morning, Callum, Eurasia put the odds of the Prime Minister being gone by September at about two-thirds, 66% or so. Is that an optimistic scenario at this point? Will he be gone earlier?
Well, markets are already considering who may replace Keir Starmer. I think what's more important is just to sit back and understand what the two problems are for the UK. So the first is, for all the focus on fiscal dynamics, the UK is not a fiscal outlier. If you compare to the rest of the G7, the deficit doesn't look abnormally high, nor does the debt. But what the UK has done more than any other country has pursued anti-growth and inflationary policies for nearly a decade, in a succession of very public policy mistakes. And that additional inflation is what markets have priced in. And so now when we look forward and we contemplate the options for if Starmer is out, who may replace him, this is the framework that markets are applying. And the danger here, this is a tail risk, is that Starmer could be replaced by someone who is further to the left, that attempts to raise taxes, raise borrowing, add more regulation onto the economy, and then worsen both the inflation and the fiscal outlook. That's what's being priced in today. Any sign that it's going to be either another centrist or even someone that's, say, a little to the right of Starmer, I think that comes as relief. So I wonder if markets are close to topping out, short of some disruption, but it depends on how things unfold.
What happens if he does end up staying on, Callum? Will that not, inject some instability into the market too, though?
The uncertainty, of course, is an issue, but I don't think we need to be as vague as to say that the outlook is uncertain. There's a very specific risk that the market is concerned about, which is, will the UK layer on more employment regulation? Will it push up minimum wages and taxes even further? And will it just add to the problems which have already weakened growth potential and already added to inflation. There's no uncertainty. If we could take that risk off the table, it's an and/or question here, not a what happens next question. I think the market starts to look better. The problem that Keir Starmer has, and I say this just as a Brit observing the politics, his majority is actually much too big. Labour Party is a very broad church. You have people right on the left. You even have people on the centre right. Reconciling these two views is difficult. That's why he's having a hard time passing any legislation. It's why he does odd things, which is pursues anti-growth policies, but then at the same time will say that he's pro-growth. Anyone who replaces him faces this problem. And the danger you have is if someone replaces him further to the left, then you get factionalism appearing on the right of the party. If it's to the right, the market may be happy initially, but realize then the left are going to dig in. So with or without Keir Starmer, the central problem remains that Labour just cannot enact policy because of this fundamental setup.
Moving on to the US, we're going to get CPI data a little bit later on. Callum, this market is already a little jittery today, and we're expecting a hotter print to come in. Can you give us some context around that?
Well, the market, I think, looking at Bloomberg consensus this morning, is expecting about 3.7 on the headline. Let's pay close attention to core. There'll be a bit of an oddity because of the shutdowns last year and the way that housing is accounted for. If there's an upside surprise on core, I think the market will reason that the US is looking a bit more inflationary. There are a few things here which I think pose serious uncertainties near term. First is, what will the Fed do under Walsh? The market, of course, expects him to be a bit of a dove, but I think hawkish tendencies may prevail if it looks like the US is on course for substantial inflation. Economic growth data have been pretty good, but then when I speak to market participants, basically everyone's assuming that the Strait of Hormuz is going to be open soon. And so if you work on the basis that you get a big upside surprise or a downside surprise, which would normally move markets, to what extent will markets just say, well, let's account for this as noise if we don't change our fundamental assumptions? And so I'd scarcely imagine the market changes its baseline view, which is the Fed, which is the thing that matters here, stays on hold through summer.
Callum, if other central banks need to tighten, and at the moment the market's pricing in 3 in the BOE scenario, then will the Fed be a little stymied? Will it need to look at what other central banks are doing as well?
Well, the Fed has two advantages. First, it's governing an economy that has the dollar. And so demand for dollar will remain structurally high as far as the eye can see. That depresses yields. It means that the Fed doesn't have to do the thing that the Bank of England, for instance, needs to do, which is maintain overall policy credibility. Right? Demand for the dollar gives the US and the Fed an exorbitant privilege. The second thing is the Fed is a dual mandate central bank. If it can, with a straight face, make the argument that, say, AI is going to depress employment, or the disruptions through the summer will weaken employment, it can tolerate more inflation in order to promote this second objective. That's very different from the central banks in Europe, especially the Bank of England, that needs to watch out for overall credibility, especially currency markets, and needs to consider that it's a single mandate central bank, cares squarely about inflation.
Can the economy withstand a 30-year yield at 5% and the 10-year very close to 443, creeping up to 450 again, Callum?
No, but I would just broaden this out again. I'm sorry for making these broader points rather than single economy points. I think all major advanced economies are suffering from a bad case of crowding out at the moment, where bond markets are pushing rates up beyond levels that the private sector can tolerate. This is because, without exception, economies are going to see public debt rise as far as the eye can see. Just at the time when the market, the big pension funds and the like have had enough of this stuff, they're starting to price in more inflation, and this is now having a serious impediment on private sector economic activity. It's why every time we seem to break that 5% threshold on the US 10, the US administration, Trump specifically, starts to dial down the rhetoric regarding Iran. We're starting to see thresholds being hit now, and unless we actually get on a better track, I think this is just going to be par for the course, where we have this bond market instability wagging the economy repeatedly.
Callum, thank you so much. That is Callum Pickering there of Peel Hunt. Now to other top stories trending on the terminal this morning. Kevin Warsh clearing the first round of Senate votes on his Federal Reserve nomination. The Senate voted 49 to 44 to advance Warsh through a procedural obstacle, setting him up to be confirmed later today to the Fed board. A separate Senate vote to confirm him as Jerome Powell's successor as Fed chair is expected later this week. The Trump administration is delaying a plan to suspend tariffs on imported beef. According to the Wall Street Journal, the administration wants to finalize details after pushback from cattle ranchers and congressional Republicans. Pop Mart reported slower sales growth for the first quarter, the slowdown underscoring mounting pressure on the company to reignite momentum, especially in markets including the US, as the Labubu craze cools. Coming up, Roche gets a green light to sell a blood test that will diagnose Alzheimer's disease. That's in the European Union. An exclusive interview with the CEO of Roche Diagnostics, Matt Souse, is next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's unbelievably weak, I would say. I would call it the weakest right now. After reading a piece of garbage they sent us, I didn't even finish reading it. They said, I'm not going to waste my time reading it. I would say it's one of the weakest right now. It's on life support.
The Trump administration taking measures to tame the high oil and gas prices as a peace deal impasse between the U.S. and Iran drags on. The U.S. releasing another batch of emergency oil to companies like Trafigura, Marathon and ExxonMobil, as well as weighing a possible temporary gas tax halt. Bloomberg's Kasia Klimaszinska joins us from Washington. So what's the next step for the administration here, Kasia?
Hello, Vanya. Unfortunately, the U.S. and Iran remain far apart. There doesn't seem to be any area where they could continue the talks. And as we saw, President Trump yesterday in the Oval Office told reporters that the ceasefire between the two countries is on a massive life support. The good news, I guess, is that Trump didn't threaten a military action. He did muse a little bit about perhaps resuming this operation where the U.S. would guide some ships out of the Strait of Hormuz. So it's clear that Hormuz remains the area of focus here. Everybody around the world wants to see the energy flowing again out of this region, not to mention China that Trump will speak to later. But one other area that Trump really needs Iran to talk about is their nuclear program. And this is where it looks like Iran is not willing and interested to engage.
Just want to ask you about the SPR release. Where does it leave stocks now of oil after that second release?
So I think, the markets here basically believe that no news is good news here, as long as there is no resumption of fighting. The oil is a little bit up, but not much. We know that for President Trump, the cost of oil, but more importantly, the cost of gasoline, perhaps jet fuel, is a focus for him. So he will make sure that those prices are not too high. You mentioned the strategic petroleum release. There is also this talk about perhaps imposing some sort of a holiday on federal gasoline tax. So Trump is looking for a relief, particularly as we have the midterm elections here in the U.S. in November, and he will not want the Americans to suffer too much with this concern that if they do, they will, vote Republicans out of House and Senate, and the Republicans will lose the majority that they have right now.
Kasia, thank you so much for joining us this morning. That's Kasia Klimaszinska. Let's take a look at these markets because we have the VIX very close to 19 now as jitters creep ever higher. Brent crude above 107, WTI above 101, and that 30-year yield just off the 5% mark that we hit a few minutes ago. Turning to pharma now, Roche getting an EU clearance to sell an Alzheimer's blood test. Joining us is Matt Souse, CEO of Roche Diagnostics. Congratulations, Matt. I know this was a bit of a journey. What are the potential peak sales for this diagnostic, which might actually help diagnostics come back to sort of your pre-pandemic and pandemic years?
Vonnie, thanks for having me. So Roche Diagnostics, we're the world's largest provider of diagnostics tests. That's everything from the blood-based test that you would get with your GP to measure your cholesterol on to things like genetic tests to determine your probability of responding to a cancer treatment. And as you just mentioned, today we received clearance from Europe to be able to make accessible our blood-based diagnostic for Alzheimer's disease, which is a blood-based rule in and rule out. What I would say to answer your question is there's by 2030 going to be 50 million people living around the world with Alzheimer's disease, and the majority of people with Alzheimer's disease are never diagnosed. And this will be a blood-based test that will be able to be offered in primary care, and it will be the first of its kind to have that primary care indication. So we're really excited about the potential for our business and also for what it's going to mean for patients.
Do you have any kind of an estimate or any kind of hope for its peak sales potential?
So we don't disclose the peak sale of our diagnostics products, but what we are really excited about is the potential in neurology for us to be able to continue to make an innovative impact on patients around the world. We also, in the first quarter, received authorization for a test for neuroinflammation for patients with multiple sclerosis for a test called neurofilament light chain, which can help physicians optimize treatment for people with multiple sclerosis as well now as with Alzheimer's disease. And what you're going to see is more of these kind of tests from us as we continue to make inroads in neuroscience, because we feel there's a very large unmet medical need.
What are you thinking about the fact that we don't have a treatment for Alzheimer's yet?
ओके गाइस, क्रूड ऑयल को देखोगे वहीं पर साइडवेज हो गया, एक छोटा सा पॉइंट ऑफ इंटरेस्ट है। निफ्टी, बैंक निफ्टी ऑलमोस्ट क्लोजिंग है। कंप्लीटली ट्रेंडिंग डे कह सकते हो, वर्स्ट फॉर द ऑप्शन सेलर, बेस्ट फॉर द ऑप्शन बायर, या फिर किसी ने अगर कॉल सॉर्ट किया होगा सिर्फ और सिर्फ, बट अगर कोई दोनों सॉर्ट करता है तो ऑलमोस्ट ट्रेंडिंग डे, नो रिकवरी। अगर आप 15 मिनट का चार्ट देखोगे स्पॉट का, इवन नॉट अ सिंगल कैंडल 15 मिनट की निफ्टी में ऐसी बनी है जो प्रीवियस 15 मिनट की कैंडल के ऊपर क्लोज हो। not even a single candle from the first candle second third continuously किसी भी कैंडल ने अपनी प्रीवियस कैंडल के ऊपर क्लोजिंग नहीं दी है 15 मिनट में इन निफ्टी फ्यूचर। ठीक है, ऑलमोस्ट पुट साइड के प्रीमियम तो 300-400% हो गए हैं किसी ने अगर शॉर्ट करके रखा था एंड होल्ड इट, ऑलमोस्ट 400 पॉइंट फॉल। बाकी आप जैसे देखोगे कॉल साइड पे ऑलमोस्ट आई नेवर सी सच काइंड ऑफ कॉल राइटिंग लाइक अभी भी चेकआउट करोगे एक्सपायरी में अभी भी टाइम है, बट लुक एट द 23,450 कॉल, जीरो हो गया प्रीमियम, बट लुक एट द कॉल ओआई change in call percentage change in call OI that increase 1,04,970%, 1,04,970% कॉल का OI इसी कॉल में बढ़ा हुआ है। दिस इज नॉट अ OI बट परसेंटेज चेंज। बाकी अगर नेक्स्ट मंथ की अगर एक्सपायरी देखोगे 19th ऑफ मई की, तो अभी मेरे को जो दिख रहा था 23,350 450 550 इन सब पे काफ़ी हैवी सेलिंग करके गए हैं ओवरनाइट। अब तो थोड़ा सा रिकवर हो गया है, बट अभी ये प्राइस इनका जब थोड़ा बहुत ऊपर था अभी से लगभग 1 घंटा पहले, ऑलमोस्ट एवरीवन सेलिंग दिस दीज कॉल्स, नो वन इन बाइंग दिस। लेट्स सी कल देखते हैं क्या गैप डाउन होता है या प्रॉफिट बुकिंग आती है। यूएस प्रेसिडेंट भी आई थिंक चाइना जाएंगे, उसके बाद मुझे लग रहा है कुछ देखने के लिए मिल सकता है, न्यू अटैक ऑन ईरान, एंड देयर इज आल्सो पॉसिबिलिटी दैट यूएस विल टेक अ मिलिट्री एक्शन अगेंस्ट क्यूबा बहुत जल्दी। ये भी देखने के लिए मिल सकता है, एक्सोस की ओर से रिपोर्ट आई है, तो हमें क्यूबा में भी एक मिलिट्री एक्शन देखने के लिए मिल सकता है। कब देखने के लिए मिलेगा अभी एग्जैक्टली कहा नहीं जा सकता, बट देयर इज अ वेरी हाई चांसेस। Trump and Rubio's escalation rhetoric, so a Cuba invasion could be imminent. So that will be a major news as well. इतना कोई क्रूड पे तो इम्पैक्ट वैसे होना नहीं चाहिए, वॉर है तो हो सकता है बड़े, अलग बात है। अभी ये नेचुरल गैस में सेल मत करना, ठीक है, ये एमटीटीआर है इन द सेंस ऑफ मल्टीपल टाइम टेस्ट रेजिस्टेंस है, अभी भी कुछ खास सेलिंग नहीं दे रहा। मैं एक्सपेक्ट कर रहा था पहले ये थोड़ा पॉइंट ऑफ इंटरेस्ट पे आता फिर जाता ऊपर कुछ इस तरह से सेलिंग करने के लिए, ये ऐसा लग रहा है कि यहीं पर कंसोलिडेशन में ही अटक जाएगा लग रहा है कंप्लीटली। ठीक है, नीचे स्पेस है आने का काफ़ी, बट देखना पड़ेगा मल्टीपल टाइम टेस्टेड लेवल होल्ड करता है या फिर नहीं करता है। ठीक है, आई एम एक्सपेक्टिंग इट विल गो टुवर्ड्स टू 80 टू 86 87 अप्रॉक्सीमेटली इस एरिया के आसपास जाए, फिर सेलिंग आए। सा नेचुरल गैस में अभी एंट्री वैसे बनी नहीं है, बट अभी डायरेक्टली करना भी मत इस पे, इस लेवल पे एंट्री नेचुरल गैस में स्पेसिफिकली। क्रूड में तो ठीक है, क्रूड में मुझे कोई इशू नहीं है, कोई न्यूज़ नहीं आती है तो क्रूड ऑयल में सेलिंग एक्सपेक्टेड ही है, बट नेचुरल गैस मुझे लग रहा है शायद थोड़ा ऊपर और जाना चाहिए लॉजिकली, तभी सेल करेंगे, अदरवाइज नहीं। सा बड़ा है तो मैंने थोड़ा सा स्मॉल कर रखा हुआ है नेचुरल गैस में, ध्यान रखना। हो सकता है यहीं से आ जाए सेलिंग, बट मेरे अकॉर्डिंग अवॉइड करना है। यहाँ पे एसएल काफ़ी बड़ा हो जाएगा, ध्यान रखना। एसएल शुड बी टू बिग एट दिस लेवल। बाकी नीचे एक स्पेस कहाँ तक जा सकता है अगर वैसे चेकआउट करेंगे तो। ये पूरा जोन ही है, दो रेजिस्टेंस साथ साथ बने हुए हैं एक्चुअली में। ऊपर ये नीचे वाला लेवल काफ़ी बार टेस्ट हो गया है, तो आई एम एक्सपेक्टिंग कि थोड़ा ऊपर आ जाए तो बेटर है इस तरह से, पहले फिर जाए नीचे। तो इस लेवल को ना रिमूव ही कर देते हैं। हो सकता है अगेन आई एम सेइंग दैट माइट पॉसिबल सेलिंग यहीं से आ जाए, बट अवॉइड करना, इतना रिस्क नहीं ले सकते। ठीक है, पहली बार आता तो फिर भी ट्राई कर सकते थे, बट दिस इज द थर्ड टाइम प्राइस हिटिंग दिस लेवल, आई थिंक थर्ड टाइम है ना, थर्ड टाइम प्राइस हिटिंग दिस लेवल। इस पॉइंट ऑफ इंटरेस्ट को भी रिमूव कर दो, छोड़ो, जाएगा तो देखेंगे। इसका एसएल कितना बनेगा अगर मैं यहीं से सॉर्ट कर दूं इसे? ये पूरा जोन ही रेजिस्टेंस का है, ध्यान रखना। अब चाहो तो यहाँ से भी सॉर्ट कर सकते हो, यहाँ से भी कर सकते हो, यहाँ से भी कर सकते हो, बट जितने नीचे सॉर्ट करोगे ऐसा उतना बड़ा बनेगा। लोअर एंड से 2 बार सेलिंग कर चुका है, ये थर्ड टाइम रुका हुआ है। नीचे स्पेस है 267 तक अभी तक, बाद में कुछ नया सपोर्ट और बन जाएगा तो वी विल सी दैट। 2 बार टेस्ट कर चुका है, ध्यान रखना बस इस चीज को। अगर पहले नीचे आ गया तो फिर बाइंग भी करेंगे, ध्यान रखना। उस केस में टारगेट जहां से सेलिंग का ट्रेड लगाया है वही रहेगा। कि क्रूड ऑयल भी नीचे 9400 के अप्रोक्सीमेटली आ सकता है, इसमें भी उसी एरिया के आसपास एक सपोर्ट बनेगा मोस्ट प्रॉब्ली। इस एरिया के आसपास आएगा तो यहाँ से एक वापस बाइंग करेंगे क्रूड में। 9400 अच्छा सपोर्ट है अब। 23,000 सॉरी 9,400 होल्ड नहीं करता है तो फिर हम वापस 8,900 की ओर भी जा सकते हैं, डिपेंड अपॉन द प्राइस। कोई न्यूज़ अगर नहीं आती है, सीपीआई के डेटा से पहले आ जाए तो बेटर है। आज केविन हर्स उसकी वो भी है शायद, आई थिंक टेस्ट मनी भी है ना, टाइम आया इसका कुछ। ठीक है, फेड चेयरमैन जो नॉमिनेशन वोट भी है आज, आई थिंक इसका टाइमिंग अभी आ नहीं रहा है मुझे, वेबसाइट में भी शो नहीं कर रहा है। सेनेट की जो वेबसाइट है वहाँ पर भी कुछ नहीं है। यूएस सेनेट वोट करेंगे इस पे आज, मोस्टली वेरी हाई चांसेस रिपब्लिकन पार्टी के ही हैं, तो ही विल बी वोटेड फॉर इट।
Officials in Tehran will heed what the U.S. is saying about its posture toward these negotiations. They had sent Tehran a 14-point proposal for trying to get back to the bargaining table to try to negotiate an end to this now 10-week-long conflict. And that proposal would include things like ending Iran's, at least temporarily, Iran's enrichment of nuclear materials, allowing the U.S. to take possession of some of the enriched uranium that it has, all of this in exchange for sanctions relief. Critically, John, it would also call for reopening the Strait of Hormuz. And that has emerged as a larger and larger sticking point as this drags on. We're seeing that this key choke point in the global energy supply chain really emerging as such a major factor in the conflict. We're seeing, and we'll see today with the CPI numbers, the increasing effect of what the rising oil and natural gas prices are having across the global economy. So two sides are trying to exert some leverage over the Strait of Hormuz, and it's unclear who will actually prevail and what might emerge actually from these talks in China between President Donald Trump and Xi Jinping on this regard.
Well, Shep, let's stay on those talks. Just how narrow, how focused will those talks be? How much space is there to talk about the Middle East?
Well, there will have to be space because China is dependent on the Gulf for a lot of its energy needs, and it is putting pressure on Xi Jinping to try to find alternatives to make sure that domestic needs for energy are met. And Iran has also forged this relationship with China over the years and has occasionally looked to China to try to act as an interlocutor. And more broadly, other Asian economies that also do business with China have also been feeling the pinch of energy prices rising, and that is in turn going to affect their ability to do business with their neighbor, China, the world's second largest economy. The U.S. has also been looking to pressure China over its support for Iran in terms of possible military sales of military equipment to Tehran, and as well over sanctions violations. The U.S. recently imposed sanctions on a bunch of Chinese companies, John, for buying oil from Iran against the measures that have been imposed to restrict Tehran's ability to capture global hard currency from its oil riches.
Hey, Shep, it's good to see you. We'll catch up with you again in the next hour. Shep, thank you. Just on the conversations around the meeting between President Trump and Xi Jinping, look at the lineup of CEOs that will be attending that meeting with the president, or at least attending the visit alongside him. Look who's missing. Spot the guy who's not on the screen. Jensen of NVIDIA.
Yeah, this comes after Jensen Huang said that he would be honored to accompany President Trump on this trip. And it comes with chips very much at the forefront of discussions with China. Is this a signal that maybe the president is trying to distance himself from Jensen Huang? How does this sort of leave some of the chip negotiations that have been incredibly fraught between these two nations?
You know what, from my perspective, for whatever that's worth this morning, probably not much, but I think it probably does NVIDIA a favor. Some of those chips getting into the country through the back door, people questioning the relationship between him and the administration right now. I think it probably does him a favor that there's a bit of separation on this visit to China.
Perhaps it also could be hinged on the idea that China has created some chips that are starting to work for the DeepSeek model. How much is that going to be at the forefront also of these negotiations?
Let's build on some of this conversation. Catherine Thompson of the Cato Institute writing, the volleying of rejections and counter-proposals between Iran and the US demonstrates just how far the administration is from winding down this war. Catherine joins us now for more. Catherine, welcome to the programme. The president's been very clear on his objectives. Are you clear on the strategy to achieve them?
No, absolutely not, right? Especially because, right, if you look at the president's own national security and national defense strategy, this isn't, you know, starting a war with Iran and sort of Iran's nuclear ambitions are not core planks of the strategy. They are not core elements of America First priorities. And so, you know, I think unfortunately we've deviated quite a bit from the strategy, from the plan. And I think we're now so far down the rungs of the escalation ladder that unfortunately there aren't too many options left to save the ceasefire, so to speak, keep it, you know, off of life support as the president illustrated, and prevent the resumption of fighting.
Catherine, there is an option to try to get China to exert leverage over Iran. How much do you expect this to be on the table, and what can the U.S. offer as an exchange?
It's hard to predict exactly how much it's going to be on the table, but I think, actually, in terms of the military dynamic between, the U.S. and China on Iran and then also on Taiwan, because I think, these pieces kind of fit together. The recent Time magazine cover that included President Trump and President Xi with the headline, "Never interrupt your enemy when he's making a mistake," I think is illustrative of how this conversation could play out. I think, for China, right, like this is the time to put big issues on the table like Taiwan, because they know that the U.S. is distracted and bogged down in the Middle East. Obviously, of course, the oil dynamic and the energy dynamic affects the Chinese, and so it's in their interest to have that be part of the conversation, certainly. But if I was them, right now, one of the things that I would be focused on is getting sort of my security agenda on the table. And it looks like, based on what the president was hinting about, in terms of the Taiwan dynamic and arms sales to Taiwan, that it's certainly something they're not shying away from putting on the table. And I think they understand that the U.S. is significantly distracted in the Middle East yet again, not prioritizing the Indo-Pacific as our defense strategy says. And unfortunately, that dynamic for us puts us, I think, in a bit of a disadvantage at the table across from the Chinese.
That said, there's a coterie of incredible CEOs who are heading over there. I'm just wondering what you think the deliverables are going to be on some sort of economic truce or economic negotiation between China and the U.S. and how much that could still be at the forefront of these negotiations.
I mean, it seems like that's the priority for the president, and certainly, his suite of guests that are attending would seem to indicate that as well. And right, I mean, and this is the concern, and this is why I'm watching the Taiwan piece of this so closely, because for the Chinese, the piece on arms sales to Taiwan and potential further conversations about the U.S. role in deterrence in the Taiwan Strait becomes a forefront of the conversation for the Chinese. For us, it's the economic piece of the equation and getting some sort of walking away with some sort of economic deal, and how those two pieces on the chessboard interact with each other. I think will be incredibly important and will be, one of the most pivotal dynamics to watch. And it's true, you can't separate, the military and the strategic dynamic from the economic.
Catherine, it's good to see you down in Washington, D.C. Catherine Thompson there at the Cato Institute. I've heard that a lot, that there's space here for China to think about doing something around Taiwan. I also wonder if it's an example, a warning to the Chinese of what can go wrong once you get involved in something like this.
Well, that's the reason why some people are expecting weapon sales to Taiwan to be on the table and China to ask the U.S. to sell fewer weapons to Taiwan. That is something that in the past, previous presidents have said they're not going to discuss. How much is that going to be on the table? Not necessarily a wholesale invasion of Taiwan. That's a step too far and currently is not priced in any way, shape or form to markets, but just on the margins eroding some of the protections around Taiwan.
I think the chip sector would be in a very different place.
Well, exactly.
If that was on the table.
We're not talking a sort of Ukrainian-style invasion a la Russia 2022.
Let's hope we're not anytime soon. Anne-Marie on the ground in China. We'll catch up with AMH tomorrow morning. Looking forward to that. Coming up on the programme, Bloomberg's Lizzie Burden as Keir Starmer pushes back on calls for his resignation. Some big moves in UK markets today. Plus, we'll catch up with Yahara. She's got your morning movers. Semi-stock sliding following a rally in Monday's session. We're down across the board.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Back-to-back record highs on the S&P 500, pulling back just a little bit this morning. We're down a third of 1% on the S&P. On the Nasdaq, we're down by 0.7. What a rally we've seen on semis. You've heard all of the numbers before. A gain of 70%, almost 70% off the lows of the end of March. We have only had 4 down days over that period for the semi index. It is now 18%, that industry group, 18% of the S&P 500. Isn't that crazy?
Well, it gives you a sense of how far they've come and how much this really is the picks and shovels of the entire AI story. We talk about the $800 billion of expected capex this year from the hyperscalers. That's almost all being funneled to supplies like the semiconductors. Jonathan Golub, while he was bullish yesterday, he did present this bear case that was really compelling, at least for the bond investors, which is that a lot of the hyperscalers are not booking the cost of these semis, but the semiconductors are booking the profits from the purchases that they're expecting. So there's a bit of a financial mismatch there that perhaps also is helping to shield some of the reality here.
This story shielding this equity market from these moves in Brent, these moves in crude. WTI back into triple digits. This morning higher by 3%, 107 on Brent, WTI at 101. With that move, once again, you see this move in fixed income. Yields up across the curve, 2s, 10s, 30s. At what point does that screen become a challenge to the story in the equity market? We are basically at the highs of the year on 10s and 30s, not too far away. The 30-year yield essentially around 5. 2s still comfortably above the policy rate of the Federal Reserve, 3.96, up a basis point across the curve. When does that start to become a problem for risk appetite?
When we were talking to Mike Wilson, he said right now at about 4.5%, that's when you start to see a little bit of a hesitant look over at the bond market from some of the equity bulls. It depends why you're seeing yields rise. If it is just sort of a one-time price impulse from gas or oil prices, maybe not going to have the same effect as a longer-lasting inflationary shock from, say, semiconductor component costs, or just the idea that the economy is robust enough to allow cost inflation to be passed on. Those are sort of, that's the conundrum. That you could see inflation get passed along because of the strength in the economy, which really leaves the Fed in a rocky spot.
That screen is almost comfortable compared to the next one. Switch out the board and check out the UK gilt market this morning. 2s out to 30s. Yields up by 10 basis points on 10s. We are through 5%. We are approaching 6 on 30s this morning. Now, you talked about why yields are up, and it matters what the driver is here. Compare it to the currency. Sterling's weaker. When you see the currency weaker in DM, and I'm not sure if this is really classified as DM right now, it's right on the edge of something else, and that something else is not good. A weaker currency, high yields, not a great picture for UK assets.
I haven't seen so many heads of lettuce since 2022 on Twitter, X, or whatever social media you go to. There is an issue of Keir Starmer and potentially his exit. It's also the replacement, who that could potentially be. But right now, it's clear that the Liz Truss moment was not a moment. It was something that was portraying the financial conundrum facing the United Kingdom, which is just weaker revenues, weak growth and a fiscal deficit that continues to balloon. And when you have that type of deficit and backdrop of growth, it is toxic, and the bond vigilantes are circling like vultures.
Lizzie Burden standing by outside number 10 Downing Street. We'll catch up with Lizzie in just a moment as we count you down to the opening bell, 3 hours away. Some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. As you said, along with the broader market, the semiconductor stocks index also hitting a record high yesterday, with that index now the most stretched above its 200-day moving average since the dot-com era. But today, that torrid rally is taking a breather. We are seeing names like Intel, Qualcomm, AMD, and NVIDIA all pulling back. But of course, it pales in comparison with that rally. Turning to Hims and Hers, that stock is plunging nearly 15% in the pre-market after the company posted a sales miss and swung to a loss. This is a company in transition, moving away from selling those copycat GLP-1 drugs and now partnering with the likes of Novo Nordisk to sell those drugs. But that is turning out to be much more expensive than investors had thought. And we end on AST Space Mobile. That stock also plunging 11% after it missed on revenue and posted a wider than expected loss. There was a lot of excitement around this name heading into earnings yesterday. Shares surged 10% around this idea that it could provide cell service directly from space here to here on Earth. But now investors are questioning how fast it can reach that vision. John.
Yahara, thank you. More from Yahara later this hour. On our radar this morning, President Donald Trump saying the ceasefire with Iran is on massive life support after rejecting Tehran's latest peace offer. Trump calling Iran's response a piece of garbage, but saying a diplomatic solution is still, quote, very possible. Elsewhere, 16 of the nation's top executives are set to join the president on his trip to China. The CEOs of Apple, Tesla and Citi. Among those travelling to Beijing, one notable absence, the NVIDIA CEO, Jensen Huang. And finally, South Korea's Kospi index shedding more than $300 billion after a policymaker suggested paying citizens a dividend from taxes on AI profits. The official clarifying the funds would instead come from excess revenue rather than a new tax, sparking somewhat of a rebound, but a little bit of a taster of maybe what's to come further down the line.
Clearly, there is increasing concern politically and among populations about what AI means for their jobs, what it means for their profits. If the best argument you can make for human capital is that it's cheaper than AI for now, you have to imagine that's not exactly comforting for where AI could go in the future, considering it's a machine. It doesn't have to eat and doesn't have to sleep and can be endlessly productive. It also highlights how far the Kospi has gone. Samsung, I believe, is the second most profitable company in the world behind NVIDIA, and this comes with this incredible demand for its chips. How much could they be subject to pay for some of the concerns over in the South Korean economy that are coming from very real pressures, whether it's oil prices or whether it's just some of the cyclical slowdown that you're seeing around the world?
We don't know how this turns out, so we've got to assume a couple of things for this to happen, but let's assume a couple of things. If the number of winners is smaller, if the number of people unemployed goes higher, and if the outlays for governments increases, then the tax revenue's got to come from somewhere. Where's it going to come from? It's going to come from the small number of winners. Clearly, corporate taxes has got to go up on some of these major winners. That's if you assume that the number of winners gets smaller and the number of unemployed gets higher. That's still a big assumption at this point.
And right now, it does seem like governments are treating this as an existential risk. They want to win. They want their companies to be the best and strongest in the AI race so that they can win market share globally at a time when this is really the next big thing. So if that's the case, how much does this prolong when we start seeing taxes like this? Because you've seen that push in the White House and then the pushback being like, well, we want to win. So you can't really crimp anything with these companies.
Hey, maybe this is on the table for 28. I don't know. Maybe that's the biggest threat to this rally. Who knows? But it's certainly going to be part of the conversation around the politics for the next few years.
When you bring that up with different analysts, they're like, yeah, la. But look at the earnings because they're amazing.
Yes.
So, worry your little head off. But, it's not coming to fruition yet. And that's sort of where people are right now.
What do they say? What did Chris say? The less you know?
Yeah.
The less you know.
The less you know. I think that has to be the theme when you just can't understand what the policy could potentially be.
Let's try and understand what's happening in the UK. Check out the bond market this morning. Gilt slumping, yields higher across the curve. 30s at levels we haven't seen since the late 1990s, 98 to be precise, 10s at 5%. Even with that move, the currency weaker. The brew right now as Bramo would say, in the UK is very toxic for the Prime Minister Keir Starmer, just about holding on as the calls for his resignation continue to build. Bloomberg's Lizzie Burden joins us now from Downing Street for more. Lizzie, the last time we spoke, the Prime Minister had rolled up his sleeves, he dropped the tie, he made an aggressive push to hang on to power. How big has the pushback been in the last 24 hours?
Yeah, and he's still sounding defiant, John. He's insisting that he won't go down without a fight. He told a meeting of his top team behind that black door this morning that he takes full responsibility for those abysmal election results last week. The Labour Party's election selection process for a new leader hasn't been triggered because he says the country expects him to govern, and that's what he's going to do. Now, we also report, interestingly, that Labour officials say his strategy is to dare the Health Secretary, Wes Streeting, to announce the leadership challenge that he's been cooking up for months, because he knows that many in the party don't want a Prime Minister, Wes Streeting. So he wants to incentivise him to block a Streeting contest, or a contest that involves Streeting. But then, out of that meeting, we had a parade of 5 ministers coming to tell us that they are backing the Prime Minister. I'm interested in the ones who didn't want to talk to the cameras, about 15 of them walking past, the likes of Ed Miliband, the Energy Secretary, with a face of thunder, it has to be said. He did not want to talk to anyone, but privately we know that he's been urging Starmer to set a timetable to go. The likes of Streeting, silent on their way out. And behind the scenes, we know that dozens of MPs, at least 80 of the 403 Labour MPs, have called for Starmer's departure. One junior minister has resigned. And so for now, I'd say we came here earlier thinking maybe there could be a lectern, a podium in Downing Street with Starmer resigning. It isn't imminent. It doesn't seem like it's imminent yet today. But it still remains a question of when, not if, Starmer's going to go.
Lizzie, what's the main issue that Keir Starmer is being accused with in terms of sort of failing his duty? And who is lined up to take over?
Failing to connect with the public to be able to win elections. No Labour MP wants to get to the general election in 2029, if that's when it comes, and be wiped out by Reform UK, Nigel Farage's party. They don't want to lose their seat to the Greens either, and the threats coming from left, right and centre, literally, to Labour. But interestingly, when you look at the markets, you were talking about the gilt moves, the market's behind Starmer, seemingly, because the market doesn't want anybody who would be more fiscally lax than Starmer. Now, what would be interesting is if Starmer goes, but you keep the Chancellor, Rachel Reeves. She's known for her fiscal prudence, and allies of the Chancellor have been telling the Financial Times that she could stay, even if there's change at the top.
Lizzie, we often talk about guardrails. I just wonder if this is a home bias of ours. Of course, the first thing you and I do is go to the gilt market. Lisa's all over it. The moves we've seen, the highest numbers we've seen since 1998. How much do those moves matter to the left wing of the Labour Party?
I've been asking myself that question all day. I'm so glad that you said it out loud. We know the importance of the bond market. Rachel Reeves knows the importance of the bond market. I believe Keir Starmer knows it as well. But to your point, does the left wing of the party know the importance of the bond market? Can it have such a short memory? You were talking about 2022 and the Liz Truss moment. Are we going back to that already? That is the question that journalists who we've been shoulder to shoulder here in Downing Street today waiting for a lectern have been asking ourselves. How are we here already? When Starmer was in with a landslide vote just a couple of years ago. And yet we've got this turmoil around the top of the leadership yet again. It smacks of what happens to the Conservatives not so long ago, but it is a short memory in politics when you've got the charisma of Nigel Farage on the right, Zach Polanski of the Greens on the left. It's difficult for a man like Keir Starmer to cut through when, again and again, it just seems like he cannot read the room. Just saying over the weekend he intends to be here for another 10 years. And as I say, that defiance on display today.
Lizzie, looking forward to your coverage over the next few weeks. I get a feeling this story is not going away. Lizzie Burden there outside number 10 Downing Street. This market pushing back, yields higher across the curve.
You know, it seems like financial markets and sentiment are in two different worlds. The idea that bond markets are saying, where's your fiscal plan? And people are saying, well, you're not very likable. You know, I want to go out for a beer with you. And until you can bridge that divide, you know, potentially there will be this tension in financial markets.
He's got bigger problems than not just being likable. That's for sure.
Seems to be the suggestion coming from markets as well.
We'll return to that story, no doubt, over the next few days. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Fed Chair nominee Kevin Warsh is one step closer to confirmation. The Senate's advancing Warsh through a procedural vote, setting up a vote to confirm him to the Federal Reserve Board later today. A separate vote is expected to pass later this week, officially confirming him as the new Fed chair. The U.S. Treasury Department blacklisting 12 firms and individuals, including some based in Hong Kong, over the sale of Iranian oil to China. They are accused of facilitating the sale on behalf of the Islamic Revolutionary Guard Corps. And the UAE reportedly carrying out previously unknown military strikes against Iran. The Wall Street Journal reporting the Emiratis launched attacks on an Iranian refinery in the Gulf last month. The Emirati government declining to comment on the report, but asserting its right to respond to threats. That's your Bloomberg Brief. John.
Yahira, thank you. Thanks for that update. Up next on the program, mounting inflation expectations.
This month, we're definitely going to have a bit of a spicier inflation report. Ultimately, it matters how all of these inflation numbers that we get this week come together to form a PCE inflation forecast.
Up next, we'll catch up with Greg Dacko of EY, live from New York City. You're watching Bloomberg TV. This is Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bit of weakness out there. Semi's down this morning, hence the move on the Nasdaq. We're down by 0.8%. On the S&P 500, negative by 0.4. The next stop for this market, CPI, later this morning at 8:30 Eastern Time. Just run through the estimates for you just briefly. Year over year, headline CPI, we're looking for a number close to 4% here. 3.7 is the median estimate in our survey. That's up from 3.3. Core, stripping out the volatile food and energy type stuff, 2.7. Much lower, but above the previous read of 2.6. That's all year over year.
On one hand, you could say energy costs you can look through because they tend to be temporary, fleeting, self-correcting in nature. This time, though, they come with other types of shocks as well. You're seeing the prices of food go up. You're seeing the prices of semiconductor components go up. You're seeing the prices of metals of all types go up. As a result, people are wondering, well, how many different price inflation shocks can you have before suddenly you have a problem? And that's why you're seeing it bleed into the bond market.
The price of energy going up as well this morning, higher by close to 4%. 101 on WTI. Brent crude approaching 108 and up by 3.4%. The president saying the Iranian proposal totally unacceptable. The ceasefire on life support, describing a hospital scene. Pretty dark stuff coming out the Oval yesterday.
I felt really bad for the hospitalized ceasefire. I'm thinking to myself, has it called its relatives? What's it going to have for a meal? Look, it does highlight how the bar has gotten lower for some sort of military action. We're still not pricing that in, though. This move that we're seeing in crude, not even close to what it will be if there is actually a military escalation.
Things are fragile. They have been for a while. The blockade continues. All of this ahead of the president's trip to China. Under surveillance this morning, mounting inflation expectations.
This month, we're definitely going to have a bit of a spicier inflation report. Ultimately, it matters how all of these inflation numbers that we get this week come together to form a PCE inflation forecast. We do see inflation coming down, in some ways very much in line with how markets are pricing.
So here's the latest this morning. Investors are waiting fresh inflation data out in just under 2 hours' time. Greg Dacko of EY writing, while we still expect inflation to ease later in 26 as labour market conditions soften, the near-term inflation outlook has shifted enough that we no longer expect a rate cut in December. Greg joins us now for more. Greg, good morning. We'll get to the expectations for the Fed in just a moment. Let's just start with what you're expecting to see at 8:30. What are you looking for?
Well, we're looking for a 0.5% increase month-on-month when it comes to CPI and 0.4% month-on-month when it comes to core CPI. So there is some pass-through of these higher energy prices onto core inflation. That will lift CPI inflation closer to 4% and lift core inflation closer to 3%. And I think over the next couple of months, we're going to see even further upward pressures, because what's happening is that we're really testing the price of growth. We're testing the price of trade and commerce. We're testing the price of labor with the immigration constraints. We're testing the price of energy, and we're testing the price of technology. All of these supply shocks are leading to rising inflationary pressures that are gradually eroding growth momentum. So it's not just a story about this month, but it's really a story about the next few months and where we end up in this trade-off between growth and inflation.
Pretty uncomfortable position for the incoming Fed chair to be in, for Kevin Warsh, Greg. I just wonder how you think he's going to handle those situations, that situation we're going into.
Well, I think we've heard from most on the FOMC policy committee that essentially they're leaning towards more focus on the inflation side of the mandate. And that is the right approach right now, because if you look at the two mandates, you have the unemployment rate that is still low. I think it is hiding some underlying fragilities. We saw that the underemployment rate, which includes part-time workers that are looking for full-time work, rose a little bit in the month of April. But in general, there is a sense that the labor market is still in this balanced environment, whereas inflation is moving away from the 2% target, and that is getting a lot of attention. And I think when Kevin Warsh steps in as the FOMC chair, he will have to convince his colleagues that there is any form of need for easing. The current direction of travel when it comes to policy is actually, in my opinion, going to be reinstating a two-sided statement when it comes to the possibility of rate hikes over the next few months should inflation prove more persistent than currently is the case.
Greg, a lot of people think that this isn't feasible, given the fact that President Trump is the one who nominated Kevin Warsh and mandated him with cutting interest rates. Why do you disagree?
Well, I think generally speaking, he will first have to convince his fellow FOMC members that his intents are essentially geared towards fulfilling the dual mandate that the Fed has and not any type of political bias. So I think he will be restrained in that regard when it comes to any type of political desire to lower interest rates, because the rest of the committee is not convinced at all that there is any need for policy easing. If anything, as I was just saying, there is probably a desire to maintain a slightly restrictive monetary policy stance, and we may see a few that become more vocal with the need to tighten monetary policy, because again, this is not just about this energy price shock. It's about the layered supply shocks that we've been seeing over the past year and a half or so, which are leading to higher inflationary pressures and eroding growth momentum.
Greg, how much, if you stripped out hyperscaler growth, would you start to see a truly stagflationary type of backdrop taking hold in the United States?
I mean, that's a great question, Lisa, and I think we've spoken about this in the past. When you look at all the supply shocks, from the trade supply shocks, the immigration supply shocks, the geopolitical supply shocks, and the AI-led tech revolution, we're very fortunate to have this AI-led tech revolution that's underway that is supporting supply-side dynamics, because absent that investment in AI that's been a key conductor of economic activity, we would be seeing much, much lower growth. So to answer your question, the AI boom that we're currently seeing, which is in the initial stages of greater infrastructure spending, greater investment in the semiconductor fields, greater investment in corporate adoption, that is a great support to economic activity. But I always come back to this notion that what we're seeing with the US economy right now is a narrow foundation to growth. Affluent consumers, AI investment, and asset price appreciation are currently leading growth. But that makes the economy more susceptible to potential headwinds that may come again and again over the next few months.
Elisa, it's such a fantastic question. Just imagine if we had a $1 trillion infrastructure spending program coming out of the US government and they said, yeah, we'll do it again and we'll increase it a year later. Basically got essentially that close to it from a handful of companies on the West Coast.
When you start talking about the scope of the spending and you start seeing that it's poised to exceed the defense spending budget next year, it gives you a sense of what we're looking at. If you take that out, the rest of the economy is at trend growth or even potentially below. And that's a real problem. How do you cater to that side of the economy while not stymieing what we're seeing over on the other side?
Hey, Greg, it's good to see you. As always, thank you, sir. Greg Dacko there of EY. To your point, it's an economy increasingly geared to the capex spend of a handful of companies. It's also the higher end of the K, the upper end of the K, increasingly geared to the good feelings you get from financial markets all-time highs. And both those stories are interconnected.
And they're fueling inflation. If you take a look at why core PCE is increasing at a faster pace than CPI, it's because of the inputs that are being juiced by some of these hyperscalers and the purchases that they're making. You start putting this together and you say if the Fed were to cut rates to help the lower end of the K, it would just juice the profits that much more, and frankly the returns in the financial markets, which would only widen the K. It's sort of just an incredibly difficult, fraught moment for a central bank that is faced with a dual mandate that on the margins is somewhat still in conflict.
30s at 5 this morning, just crossing that level, yields up by a basis point or two, 5%. If TK was around the table, he'd say overtaken by events. You want to draw down the balance sheet here, reduce it. Incoming Fed Chair Kevin Warsh, that's a big challenge with yields at these levels.
He's gotten a pass for the next couple of months. Let's see what he does after that.
Up next on the programme, Ed Giardini of Giardini Research, Liz Economy of the Hoover Institution, David Tinsley of the Bank of America Institute, and George Saravelos of Deutsche Bank. The second hour of Bloomberg Surveillance just around the corner.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This month, we're definitely going to have a bit of a spicier inflation report.
The inflation genie has been let out of the bottle.
We now think inflation could bubble up to 4%.
Well, the last thing we need is additional monetary stimulus.
The Fed's going to stay on hold for a while.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Pulling back from all-time highs, down a third of 1% on the S&P, down by 0.7 on the NASDAQ. A ceasefire on life support, driving crude higher. WTI and Brent. WTI, triple digits, 101. Brent, 108, and pushing yields higher across the curve. 2s, 10s, and 30s. 30s north of 5% briefly this morning. 4.99. Heading into this 90 minutes away. Inflation data just around the corner. CPI before PPI comes tomorrow.
Yeah, and right before retail sales. And what the trifecta of economic data shows us this week is that people are growing more concerned about inflation than they are downside risk to growth. It was the opposite, say, around 2 months ago when people were gaming out how long this could go on. They thought if it reached this point, we would see some sort of fear of some sort of economic downturn. It hasn't happened. Maybe it's supported by spending on hyperscalers. Maybe it's supported by how much stimulus really has boosted the coffers of savings by U.S. consumers. Nonetheless, earnings have been incredible. People keep pointing to that, which has allowed inflation to remain higher than a lot of people had expected.
5 respected strategists on Wall Street upgrading their price targets since this war started. 5. And all 5 of them have pointed to the same thing: better earnings. Where's the threat to this rally going to come from? Let's bring up fixed income. Bring up the board. 2s, 10s, 30s. Are we getting closer to what Max Kettner of HSBC would call the so-called danger zone, with 10s at 440 and 30s essentially at 5%?
We're bleeding up to that level, although the pace of the increase has been relatively slow based on what we saw earlier in the conflict. We aren't seeing a massive increase in implied volatility in bond markets, which is a reason why it still is boiling the frog. We haven't hit that sort of panic button yet. Nonetheless, people have an eye on it, saying if the Fed really starts to talk about rate hikes, that could be the party killer, and that could be essentially when the cops come and say, go home.
From my perspective, interesting analogy.
Thank you.
From my perspective, better than the hospital one. The 2-year is the more eye-catching move this morning, getting closer to 4% again, because that is a direct challenge to an incoming Fed chair who most people are arguing wants to reduce interest rates, yet you've got a 2-year yield above the policy rate. We did that last month. We're doing it again this morning, getting closer and closer to 4%.
There are an increasing number of Fed officials who have come out and said that they would have been in favor of removing the easing bias from the Fed statement. And even though they were not voting members, I do think Jackson Hole is going to be fascinating this year when Kevin Warsh has to come out and give some guide of how inflation is a choice and what he's choosing inflation to be. Because ultimately, is this an inflation increase they're willing to tolerate and say is temporary, or are they going to have to address this, meet the market's expectations and say, we have to tamp this down. We can't allow this to become normalcy, because right now, consumers are paying these prices. They actually are accepting them. That's why retail sales is going to be interesting. How much are consumers saying, man, that really stinks, but I'm still going to pay $20 for an egg sandwich?
CPI, 87 minutes away. Do you do that?
No,
I hope you don't, right? Good.
No,
just
really
just
don't.
To clear that up. Inflation data, 8:30 Eastern Time. Futures right now, negative 0.4%. Coming up this hour, Ed Yardeni of Yardeni Research with a street high outlook for equities. Elizabeth Economy of the Hoover Institution ahead of President Trump's trip to China. And David Tinsley of the Bank of America Institute on the state of the U.S. consumer. We begin this hour with stocks hovering near all-time highs. Ed Yardeni boosting his year-end price target on the S&P from 7,700 to 8,250, writing the following. We've never seen consensus earnings expectations rise so quickly as they have in recent months. The result has been an earnings-led melt-up in the stock market. Ed joins us now for more. Ed, welcome to the programme. Been looking forward to this conversation with you. 8,250 year-end on the S&P 500. Ed, let's just talk about the earnings. Outside of recoveries, GFC, the pandemic, strip that out. Outside of recoveries, when was the last time earnings season and projections for earnings were this good?
I don't really recall anything like this. It's been extraordinary. The first quarter earnings expectations really weren't all that bad coming into the first quarter earnings season. Actually, they were holding up pretty well, and instead they turned out to be much better. And on top of that, the analysts are raising their second, third, and fourth quarter numbers. So now it looks as though we're going to have something like an 18% year-over-year increase in the first quarter. And for the year as a whole, they're expecting 24%. And that's definitely unprecedented. That's the kind of double-digit gains you see coming out of a recession. You don't see it in an economy that's been growing for a while.
Ed, looking across industry groups, the semis right now make up about 18% of the S&P 500. How much heavy lifting are the chip players doing?
Well, I think that's part of the story, but we're also seeing that the earnings expectations for the small caps and the mid caps have been going up to record highs. Those two areas of the market were actually sort of in a coma, flatlining since 2022 in terms of earnings expectations. And then over the past 6 months or so, we've suddenly seen them picking up and going to new record highs. So I think earnings breadth is actually improving. And if that's the case, that should lead to an improvement in the breadth of the market.
How sustainable is this, Ed, given the fact that we're hearing about consumers increasingly pushing back on price increases, increasingly being choosy as a result of some of the inflation that they're seeing across the market?
Well, you mentioned it before. There's a widespread belief that this is the K economy, where a lot of people are facing an affordability crisis and only a few people are doing well. I think that's, I'm not dismissing that, but I think a lot of that misses the impact of demography. I'm a baby boomer. I'm still working for a living, but I'm seeing a lot of my friends retiring, and the baby boomers collectively have a record $89 trillion of net worth, and they're starting to spend it. So all this anxiety about disposable income going flat, well, that's natural. I mean, baby boomers are at the peak of their careers and they're retiring, so that's going flat. Meanwhile, they're spending their retirement assets, and so they're continuing to spend. And I think a lot of baby boomers are helping their young adult children, maybe with mortgage payments, helping out with the grandchildren's after-school activities, some of the fees there. I see this from personal experience as well as from my friends. And so I think that's what's missing here, and that explains why the consumer has been so remarkably resilient, and I think that continues. So I don't really buy the idea that this economy is just being propped up by the capital spending on technology by a few companies. I think the consumers are definitely there. And the weakness in the consumer in the fourth quarter and the first quarter was weather related. So we're about to test that. We'll see what retail sales looks like up ahead here and put it all together. And I think the economy remains resilient as it has been since the beginning of the, well, I call it the roaring 2020s, and so far so good.
If that's the case, Ed, then isn't it true that we would see a more sustainable inflation rate moving higher as a result of the increased consumer spending power, the increased amount of money, and frankly, supply shock after supply shock that's hit the economy?
Yeah, that's a good point, and I think it's we have a recent example of what can happen, and that was in 2022 when we saw a spike in energy prices, but that was on top of supply side disruptions and supply chain disruptions, and you can argue that the same thing is happening now. But the big difference is wage inflation is really moderating, and we have a labor market that's in equilibrium. Supply equals demand, so we're not seeing a lot of upward pressure on wages, whereas we saw a tremendous amount of wage pressure in 21, 22, and there was a lot more demand than supply of labor, and that led to a wage price spiral. So I think what's missing on the inflation side this time is a wage price spiral. We certainly have an energy spike, and that'll certainly lead to higher inflation for the next few months. But I think both the bond and the stock market have basically looked through it. By the way, I kind of view bond yields of 4.25% to 4.75% as normal. I'm not getting freaked out by it. That suddenly we're going to see the bond vigilantes act up, though, I'm watching them. Right now, the bond vigilantes are acting up in Tokyo and in London. I don't see them here just yet.
So, Ed, with that in mind, just build on that. When does it become a threat, this move in fixed income?
Well, it's interesting. A couple of years ago, I think it was in 2024, we saw the bond yield going up from 4% to 5% in 3 months. That was August, September, October, and it got up to 5% on November 1st. And Janet Yellen, who was Treasury Secretary back then, said, okay, the Treasury is not going to increase the supply of bonds. We're going to do our increased financing in the T-bill market. And so the bond vigilantes are not the only players here. And by the way, the bond yield came tumbling down. And so the Treasury and the Fed could still intervene in the market to keep it from going above 5%. And on top of all that, I think we still have the carry trade going on, where I think a lot of hedge funds are, in fact, sitting there in the Cayman Islands, or at least their books are sitting in the Cayman Islands, borrowing in Japan at 0.75% and buying bonds and getting a nice spread on it.
Do you think Kevin Walsh has got appetite to use the balance sheet of the Federal Reserve to intervene in the Treasury market?
Well, I think Bessent, Treasury Secretary Bessent, has the appetite to do what he was against doing when Janet Yellen did it, and that is issue more bills and fewer bonds if that's necessary. I don't think they're going to just kind of sit there and let the bond yield go from 5 to 6%, and I don't think it's going to go there. I think there's a lot of the U.S. bond is still viewed as a safe haven, and there's plenty of reasons to worry about things these days.
Ed, it's good to see you, as always. Just a final note. The next time you write a boomer stimulus check, you know where we are, OK? Ed Giardini, have you had any research?
Absolutely.
Are you getting boomer stimulus checks?
I am not getting
I'm not on the receiving end of those either.
I imagine I'll be doling them out at some point, and I've already started to think about, where to draw the lines. But a really interesting take, because even some of the potential endpoints for a roaring 2020s don't seem to worry him, like higher yields. Doesn't seem to be on his base case of issues to work about. The man who coined bond vigilantes doesn't see bond vigilantes being brought back into service in the United States anytime soon.
There's two ways of looking at this move, right? There's many, but here are two. You can look at this as a challenge to risk assets, or just a reflection of a more resilient economy. an economy that can handle yields at this level? I'm not talking about gilts, by the way. I'm talking about treasuries.
That's the reason why it hasn't been necessarily a cold stop to the rally that we've seen in equities, because right now it really is a representative of the growth that we're seeing underlying the economy. That said, there are pockets that really are struggling as a result of interest rates, the housing market being one of them, which clearly is a focus of this administration. These
sell-offs in treasuries often become self-limiting, because it starts to bite and then you get a turnaround. I don't think we're there yet with 10s at 443, 30s around 5%. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. The UAE's primary natural gas plant is set to return to full capacity next year. The plant has suffered damage from the Iran war after being targeted twice last month, the UAE estimating a financial hit of up to $600 million in the second quarter from the closure of the Strait of Hormuz. Amazon kicking off another round of financing in the debt market. The tech and retail giant is selling bonds across a record 6 maturities denominated in Swiss francs. It follows a $54 billion debt sale in March across U.S. and European debt markets. And the mayor of a California suburb resigned after agreeing to plead guilty to acting as an unregistered foreign agent for China. According to court documents, Eileen Wang admitted to posting pro-China propaganda at the direction of Chinese government officials. That's your Bloomberg Brief. John.
Yahira, thank you. Thank you very much. Up next on the program, a high-stakes meeting with President Xi.
I have a great relationship with President Xi. We're doing a lot of business, but it's smart business. I respect him a lot, and hopefully he respects me.
Up next, we'll catch up with Elizabeth Economy of the Hoover Institution, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
In 1 hour and 15 minutes' time, we'll get inflation data in America, and headline CPI year over year could come in close to 4%. The median estimate in our survey, 3.7. That sets the stage this morning for these moves. Equity futures declining near session lows on the S&P 500, negative 0.4. On the Nasdaq, we're down by 0.95. A weight to the take this morning with this move in crude. WTI and Brent, WTI reclaiming triple digits, 101, Brent crude 107, and yields higher across the curve, 10s through 440 and 30s briefly this morning through 5%.
We're talking about both a domestic market in the United States with inflation hotter than people would like, and also an economy that's growing. But we're also talking about global bond vigilantes, whether it's in Japan or whether it's the United Kingdom. This is a global market with yields pushing higher. At what point does that create a slowdown to growth that maybe isn't being priced in?
The big global event over the next 24, 48 hours is this one. Under surveillance this morning, a high-stakes meeting with President Xi.
I have a great relationship with President Xi. We're doing a lot of business, but it's smart business. I think you can see that with the fact that in Hormuz, they get a big percentage, 40% of their oil from Hormuz. There's been no ships coming in, no nasty ships coming in that we end up in skirmishes with. He'd like to see it get done. I respect him a lot, and hopefully he respects me.
So here's the latest this morning. President Trump traveling to China today for a summit with his Chinese counterpart Xi Jinping. The meeting on Thursday set to be shaped by the ongoing war in Iran. Bloomberg's Mike Shepard joins us now for more. Shep, welcome back. This meeting was delayed because of this war. How different are things a month or so later?
Well, because the war is continuing, John, it really does frame and shape the discussions that are going to start Wednesday night, our time, about 10 p.m. That is when the two leaders are set to sit down. That would be about 10 a.m. local time in Beijing. And the Iran war really will be first and foremost for the two sides to discuss. China will be pressing the president of the United States to bring an end to this 10-month conflict, which has really sown trouble across the global economy, mostly in the form of squeezes on the supply chain, especially for energy, a pinch that not only consumers here in the U.S. and elsewhere in the world are feeling, but especially in Asia, and China is no exception. The U.S., for its part, will be pressing China on the question of Iran, and that includes Beijing's support for the regime in Tehran. And that could include concerns that the U.S. Has aired that there may be some exchanges of military support, including arms sales to the government in Iran, as well as purchases of Iranian oil by Chinese company. And the U.S. just sanctioned a bunch of Chinese entities for those purchases, and we could see that discussed as well. But the two sides will also have so much other business to get through, but Iran certainly, John, will be first and foremost of them.
Shep, thank you, sir. Good to see you. Down in the nation's capital, Mike Shepard there to build on this conversation. Elizabeth Economy of the Hoover Institution writing, the only channel of communication is economic. That is both where there is the greatest conflict, but also the most forward momentum. Elizabeth joins us now for more. Elizabeth, good to see you.
Thanks, great to be here.
What are you expecting to come out of this meeting later this week?
Look, I think there are basically three big buckets of issues that both sides want to address. The first, and I think most important, is that both sides really want to find some stabilization in the relationship. I think they're aligned around that. So developing a mechanism so that we're not doing a tit for tat on the tariffs and the export controls and investigations, I think is number one. And that's where I think you're going to get this board of trade and maybe further down the line a board of investment. I think that's really the most important. Second, of course, and crucial for President Trump, are some big wins that he can take home, right? Some purchases of soybeans and who knows, energy, airplanes, of course. And we see some of the CEOs that are accompanying President Trump that are in these spaces. I think for China, they'd like the U.S. to just treat China as a normal country, right? Not to have the highest level of export controls, not to have the most investment restrictions, not to have the highest level of tariffs, but to really find a way to do sort of normal trade. And then third, I think, is that bucket of broader security issues, Iran, Russia, fentanyl. I think these are other issues. And certainly I should say the Chinese will raise Taiwan. I think these are the other issues that are going to be on the deck for the two leaders.
Point two, aren't they a normal country?
I don't think economically they're a normal country, no. And I think the, sort of China's economic model is now presenting problems not only for the United States, but for the rest of the world. I think it's useful to note that 52 countries last year put in place trade defense measures against China. So the way that China does business really poses challenges for, not only advanced income, but now middle income and emerging economies.
There was a story, there have been a number of stories in a number of the biggest newspapers about how China has a lot more leverage than the United States and about how the economy is in a much better position to pose a real competitive threat to the United States. Do you agree with that framing?
Well, look, I think it's fair to say that China has an important chokehold on sort of goods that are essential to U.S. economic and national security, like rare earth elements and critical minerals, like active pharmaceutical ingredients. So certainly they've developed new leverage, new tools. But I think President Trump has the capacity to move past that in many respects, maybe to put on some virtual reality glasses and create his own world and negotiate from what he believes is a position of strength. The United States doesn't go into this without, any tools at its disposal. The tariffs have had some impact on China. It has export controls. It's been continuing to move forward on export controls around chip-making equipment just this past week. It had a letter of intent, basically an informed letter, which basically signals to some U.S. companies that they're going to have to put in some new export controls against Chinese companies. So I think there are tools that we have at our disposal, and the president will go in at least feeling stronger than many other people may recognize.
If that's the case, what's the signal that you take from Jensen Huang of NVIDIA not accompanying President Trump on this trip?
Well, look, I think Jensen's had a lot of attention, paid to NVIDIA, and the president, made a move basically on his behalf and on AMD's behalf last year when he allowed the sale of the H200s to go forward, which was something that he did against a lot of opposition, both within his own administration and Congress and within the national security community. Those sales haven't materialized. So I think maybe what would be the point at this point of him going? I think if you look at the companies that are accompanying the president in the tech space, many of them are a little bit of problem children. They have issues with the Chinese government right now. Either they're not getting licenses, they're under investigation, they're concerned about shrinking market share. So I think there will probably be an effort to get some of those very particular issues addressed in the summit.
Can we finish on Taiwan? And maybe a bit of a reality check to the narrative that we hear a lot in these kind of conversations. There is an opening here for them to make a move on Taiwan. The president's distracted. He's bogged down in the Middle East right now. What's your read on what's actually going to happen?
So I don't think the Chinese are going to make a military move on Taiwan, because President Xi really wants to have a peaceful resolution. I think he's planning to wait until 2028 when there's an election in Taiwan where he believes that perhaps the opposition party, the KMT, may come to power, and the KMT is more favorably disposed toward Beijing. So I think there's a window here where I think we're not going to see any military action. That being said, we also don't want to see President Trump give any more space to Beijing on Taiwan. I think, the administration certainly recognizes that Taiwan, basically produces over 90% of the most advanced chips that we need, both for commercial and military purposes, and it is essential to our national security. It's part of the first island chain. So I think what we don't want is for Taiwan to be central in this meeting or to see any give on the U.S. position.
We hear repeatedly that under this president, the administration, the U.S. is willing to give up its global leadership role. Do you see it the same way?
I think the U.S. is redefining its global leadership role under President Trump. It's not giving up. I think there's a misperception that President Trump has retreated from the global stage. The sort of idea that we're going to have a sphere of influence policy, only be focused on the Western Hemisphere. I mean, we are deeply embedded in the Indo-Pacific. We're clearly still in the Middle East. So I don't see any evidence that we're pulling back from our global positioning in the security realm. I also think what we see is, yes, the president has withdrawn the United States from over 6 international institutions and arrangements, but at the same time, he's creating new ones. His administration is creating new arrangements like the Shield of Americas and Forge around issues where the administration feels they're critical to U.S. sort of security and economic interests. So around, critical minerals, around rare earth elements, doing bilateral deals, establishing a new multilateral trade arrangement. So it's not a complete withdrawal, but it's a refocusing around what this particular administration considers to be sort of the essential U.S. economic and security interests.
Liz, it's good to see you in person too. Thanks for being here. Thank you very much.
Thank you.
Elizabeth Economy there of the Hoover Institution. We've heard that argument a few times. It's hard to make that argument given the activity we've seen from this president through the year so far.
Honestly, it's been a completely global focus, more so sometimes than even domestic concerns, especially as he heads over to China for the first time in about a decade.
Coming up on the programme, we'll catch up with David Tinsley of the Bank of America Institute on the state of the US consumer. Plus, Danny, has your morning movers, hims and hers, plunging with higher than expected costs for weight loss drugs? That name down by 15%.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
All-time highs coming into Tuesday, pulling back this Tuesday morning, negative by 0.4% on the S&P, on the Nasdaq 100 down by 0.9. You've seen the enthusiasm to buy this market whenever you get a pullback. Will this morning be any different? All the upgrades we've seen to price targets since this war started, all connected to the earnings story. Barclays 76.50, bullish on the profit outlook. HSBC 76.50, earnings strength. Ed Yardeni on the program just earlier, 82.50, an earnings-led melt up.
And when we spoke with him, he said that he hasn't seen anything like this, especially not in a time where the economy has otherwise been growing. The only time he sees moves like this is coming directly out of a recession, and that hasn't been the case, at least for the past few years. How sustainable is this? Well, he talks about how the boomers are filling the coffers of all sorts of younger people, paying their mortgages, paying their bills, and they're retiring and having a lot of time and money to spend. Look, it's coming out in the numbers, and we'll get that confirmation on Thursday when we get retail sales. Are consumers still spending and powering this growth?
You're going to strip out the boomer stimulus checks from the retail sales.
I think that's
Is that what you're going to do?
That's embedded. I think that's absolutely embedded. I mean, how many people who live in certain areas and have their phone bills paid by their parents are just clearly...
Yeah, certain areas of Manhattan.
Yeah, boomer, stimmy kids.
You know,
yeah,
going the working day.
Very much so, yeah.
Just finished yoga.
Yeah.
You're wondering if they've got a job or not.
People who lunch, they do.
Boomer stimulus checks, right?
100%.
Funding San Ambrose.
I mean,
clearly.
Totally. Yes, that
Without
is one
a doubt.
particular one. Anyway, but you know,
it's a very New York conversation. Forgive us. Okay, let's move on. Want to get to South Korea and this move in the Kospi. The Kospi overnight dropping as much as 5%, then pairing losses. This is actually really, really interesting. If you're just joining us this morning, welcome. So you had a policy advisor, let's call it, to the president of South Korea come out with a social media post talking about tapping the profits of AI-related companies to offer a dividend to the people. Then he walked it back, diluted the comments, got some clarity, etc., etc. But the drop-off in the equity market was instructive. And so was the policy proposal initially, in the way that people viewed it, because is that a flavour of things to come if we do go in a certain direction?
Citizens' dividends from companies that are among the most profitable in the world and that have seen a moonshot in terms of their price performance in the stock market. How much are a lot of governments going to turn to those companies and say, all right, now it's your turn to give back, because the rest of the economy is not growing very quickly and people are unsatisfied with how much prices are going up. Regardless of whether it's coming from semi-investments, regardless of whether it's coming from the war in Iran, there is displeasure on the part of consumers about how much prices are going up. Will these be prime victims, number one?
Yeah.
And is this something that isn't necessarily prime victims, but just sort of an inevitability that just isn't being priced into their valuations?
That's a political story further down the road. Let's get to the market story in the here and now. This move in crude. The proposal from the Iranians, totally unacceptable. The ceasefire on life support. Crude about 107 this morning on Brent. Triple digits on WTI. You take that 3% move in crude, you plug it into fixed income yields higher across the curve throughout much of this morning. Two's approaching 4%. 10s through 440, 30s through 5% this morning.
It's the inflation week that nobody wants. We've got CPI today, we've got PPI tomorrow, and then retail sales to give us a sense of all of that and how it's being bled into the economy. This is a price that will surge that much more if you start to see a re-engagement of military action. That's what I'm looking for. How much are people looking for 120, 130? Should there be some sort of re-emergence of a hot war?
That's going to be a story for a little bit later in the programme.
I mean, that's what the bar is being lowered.
Potentially.
Yeah,
Without a doubt, I'm with you. I'm right there with you. No pushback at all. Cool. 2 hours away from the cash open with your morning movers. Danny Berger has more. Hey, Danny.
Hey, John, at the top of the hour, we got earnings from Under Armour, a really big miss for their EPS. Their guidance is between 8 and 12 cents. The expectation was for 23. So on the positive side of things, Under Armour says that the tariff refund checks that are going to be coming their way after the ruling against IEEPA is helping them. On the downside, they say, one, they've been making more investments, so that's been hurting them. Two, tariffs are already high for them. And they cite the war in Iran and the issue that is made for them in supply chains. They say they're taking a $35 million hit because of the war in Iran. So those shares getting pummeled this morning, down nearly 13%. Elsewhere, we got the official rejection from eBay to GameStop. The company there in a statement saying that the takeover offer from GameStop is neither credible nor attractive. It does set us up for a potential proxy fight. Still, there's a lot of questions as to whether GameStop can actually get this done, considering they're less than a fourth of the market cap of eBay. So GameStop shares, you see those falling 3.5%. Finally, we also got earnings from Hims and Hers. That's a big decline. Two companies are really getting punished for missing, down 15.2%. It's because of higher costs tied to getting name brand weight loss drugs. Before they were doing copycat versions, they pivoted. They're using the drugs from Novo Nordisk, from Eli Lilly. A big restructuring cost tied to that, about $33.5 million. So shares sink off the back of it. John?
Hey, Danny, thank you. More from Danny Berger in the next hour. Slightly distracted here. New note from Max Kettner over at HSBC. I'll share some of the details with you. Still max overweight equities. We remain aggressively risk on in our tactical asset allocation. Some reasons for that. Sentiment and positioning not stretched yet, according to Max. The data, bottom-up strength in the US, almost unprecedented, he says. And this on fixed income. This is the important piece. We remain most underweight in treasuries. The why, upside risk to US growth could be the next catalyst for fixed income. This was a conversation you and I were having. What is the ultimate driver of what's happening here in fixed income? Do you see it as a reflection of a better outlook for growth or a threat to this equity market?
Part of the reason why you might be seeing such a recovery in earnings that has been tremendous and unprecedented is because of unprecedented growth. This is the bull case. How many people are looking to hedge against a downside risk, which would be a treasuries bet? Very few. Increasingly, people are worried about missing to the upside, and they're seeing that in earnings. They're seeing that in the price action, which makes sense. So you talk about the limiting factor of treasury yields. At a certain point, they're an encouragement to go into risk assets because they're not a good hedge about whatever's going to come next.
The latest for treasuries near the highs of the year. We're looking across the yield curve this morning. On our radar this morning, a fresh look at the state of inflation coming at 8:30 Eastern Time. Economists expecting CPI to rise 3.7% in April as the war in Iran continues to pressure global fuel and food prices. Elsewhere, the UAE has reportedly carried out military strikes on Iran. According to the Wall Street Journal, the attacks included a hit on a key refinery in the Persian Gulf, the move signaling a more aggressive front by the Emirates to protect their economic power. And finally, the Trump administration adding another release of emergency oil reserves in a bid to ease higher energy prices. President Trump also floating a suspension of the federal gas tax.
A lot of people thought oil would go to $250, $300. It's not. I mean, today it's at less than 100. When this ends, you're going to see it drop like a rock.
How long are you going to suspend that tax for?
Until it's appropriate. It's a small percentage, but it's it's still money.
Average gas prices recently topping $4.50 a gallon for the first time since 2022.
Look, you're seeing an increasing number of governments look to fuel some sort of consumer subsidy as they see energy prices go up. I will just add, that would cost $3.5 billion to the United States every single month that you do remove that 18 cents of a tax from each gallon of gasoline. Increasingly, this is going to become a fiscal problem. I feel like I am beating a drum that nobody wants to listen to. This is also helping yields stay higher because of the fiscal response that you're seeing around the world.
How much of a difference would it make? It will make a difference, but how much? We've had a move of about 150 to a gallon of gas in this country on average. We're talking about maybe removing a little more than 18 cents from that 150 increase. And I saw a lot of feedback on social media yesterday that if you want to really do something about taxes, remove the war tax over the last 2 months and the increase we've seen, the 150 over the last 2 months because of this war.
Yeah, essentially, if you go buy an $80 product and you get a $2 discount, it's not going to make you feel better about paying $78. And that's essentially the type of valuations that people are paying to fill up their gas tank.
I was tracking the work from the team just yesterday as they were working through who's done what. Georgia, Indiana, Utah have temporarily waived taxes at a state level. Lawmakers in Alabama, New York, Pennsylvania, South Carolina are looking at following care. We've seen gasoline stockpiles in this country on a seasonal basis near 10-year lows. What are we doing? Delaying the demand destruction. For how much longer can you delay the demand destruction?
And are you making it worse by not delaying the demand destruction because you're increasing or at least keeping demand constant at a time of a supply challenge, a supply crunch? This is the economic challenge that no politician wants to listen to.
Crude at triple digits on WTI so far this morning. Investors, of course, are waiting fresh inflation data due out in just under 1 hour's time. The Bank of America Institute Consumer Checkpoint survey writing, with or without gasoline, spending was strong in April, posting the strongest growth in 3 years. But we see signs of pressure building on discretionary spending. Joining us now to discuss, David Tinsley of the Bank of America Institute. David, welcome to the programme. That's notable. Before we get to the details, I just want to deal with the headline. Are you still seeing really decent growth, even away from just gasoline spending?
Yeah, even away from gasoline spending, our card data in April was up 4% year over year, and in March it had been up 3.6%. So, and even if you look at the month-on-month increase, it was up about 0.5% stripping out gas. So yes, now one caveat, and it's really early to tell, is that the final week of April, the data looked weaker. So, you know, if you want to be a glass half empty person, you might think that we're beginning to see some weakness creeping in, but that weekly data is so volatile, I wouldn't read too much into it just yet.
David, can you give us a sense before we get to the glass half empty? Because, of course, I want to go there in a bit, but I am curious how much you're seeing dispersion increasing between people who are in the upper income brackets and people who are in the lower income brackets. Is that continuing to be the story, or is that overblown at this point?
No, it's still a story. I mean, in terms of like the K-shape on spending, our higher income consumers in our data, their spending's up about 5%, give or take, year over year. Lower income's up about 2% year over year. That gap is large. It isn't totally widening further, but it's still very large. And when you look across to wages, in terms of the data we see, the payroll coming into accounts, amazingly, really, higher income consumers saw year-over-year pay growth of 6%, and the very top 5% saw over 10% year-over-year growth. Whereas right at the lower end, they're seeing wage growth of about 1.5%. So there's a big, big difference, and that obviously is driving some of this story about subsidies, etc., you were alluding to before we came on.
That's a tremendous statistic. The idea that the upper income, you're seeing up to 10% growth, in the lower income, 1.6% wage growth currently in the backdrop. How much are you seeing both sides of the equation start to reduce their spending in the past week? I understand that's volatile, but do you see it across the board?
Well, when you look at discretionary, which is really where we're, you know, obviously focused on right now, the expectation that some people may be pulling back. I think where you see it is in items like clothing. There's a big discrepancy between clothing spend from lower income and higher income. I think in travel too, probably not so surprising. You know, when people are thinking about booking their vacations, there's a distinction between higher income, which is pretty solid, same as always, really, with lower income. That looks quite soft. So I think, you know, if you are this glass half empty person, you're looking at some discrepancies in those categories, and you're looking at the end of the month, and obviously that's feeding into your concern. But we have to, you know, kind of go back to the fact that the overall data is solid. Jobs growth, not only in the BLS data, but in our own in-house estimate of payrolls growth, very solid. So, To some extent, maybe the show can stay on the road over the next sort of, 3 to 6 months if even if gasoline prices stay high. But there will continue, I think, to be these discrepancies.
So, David, just to build on that, and finally, some people might point to the tax refunds and say this is why you've still got a bit of a bounce, offsetting the pain at the pump and the issues with the energy story. But my question to you would be, what in your report can you point to that gives you confidence about the sustainability of this over the next several months? Your final point.
50% of the tax refunds paid have not been spent so far. They're actually banked. So that gives fuel in the tank, even for lower income consumers, for a number of months. And then at the higher end, you've got the wage growth situation. So I think, it's not all doom and gloom by any means.
We appreciate it, David. Thank you, sir. David Tinsley there of the Bank of America Institute. Someone around the table might be glass half empty. Maybe, possibly.
I think it's, a third empty, and I'm very concerned about it. Look, people are watching for signs that there's some sort of problem, but I think that what David Tinsley just said shows the issue itself, which is essentially wage growth increasing dramatically at the upper ends and not really growing enough to compensate for the increase in gasoline at the lower end. This is a political problem, even though it's not showing up in the averages.
That's the best point. It's a political problem. It's not a market problem yet. And that's the conversation we might be having in 46 minutes' time, that you're going to see the pressure building for consumers in America. But as we've heard from Strategas earlier in the last week or so, this is not a consumer-driven equity market rally. It's a tech-driven equity market rally.
And to the extent that it is consumer-driven, it's driven by the people who are profiting from some of the tech gains in stock investments and that are getting bigger wages. So this isn't necessarily hinged on those lower-income consumers continuing to spend.
It's a tech-driven sell-off this morning. We're down by 0.8 on the Nasdaq 100. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. SoftBank is in talks for a major data center project in France, sources telling us here at Bloomberg. The company is considering a multi-billion-dollar investment as part of SoftBank's build-out of AI infrastructure. The Trump administration is delaying a plan to suspend tariffs on beef, according to the Wall Street Journal. The president was poised to sign executive orders on Monday to address supply issues, but pressure from American farmers put the measure on ice. And a U.S. citizen infected with hantavirus aboard a cruise ship is being treated in a biocontainment unit in Nebraska, while another symptomatic person is receiving care in Atlanta. 15 others exposed to the virus are in quarantine at the University of Nebraska. In total, 18 Americans have been repatriated from that ship. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for the update. More from Yahara in the next hour. Up next on the program, headwinds building for the U.S. dollar.
There are two factors that drive currency values. One is related to macroeconomic fundamentals, and the second is fear. The dollar did strengthen when the Iran war started, fear, and now it's come back down, macro.
George Saravelos of Deutsche Bank joins us next, live from New York City. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
So in 41 minutes' time, we get inflation data in America, CPI. Later in the week, we'll get retail sales. Just how is consumer spending? Caught up with Bank of America just moments ago. They put out the Consumer Checkpoint piece of research that I always enjoy going through. Card spending, spending growth, strong in April. According to the internal data from BofA, total credit and debit card spending per household rising 4.8% year over year. That's up from 4.3% in March. Excluding gasoline, some of you want the number, I'm sure. Card spending was still a strong 4% year over year. That's a pretty decent read on activity in this economy.
People are still spending, even when you strip out inflationary aspects. And when you take a look at who's spending, you can see that the upper income individuals are continuing to have plenty of cash, are seeing up to 10% wage increases, and are able to spend that money. That has been the story that is powering this market.
Encouraged, no doubt, by equity markets at all-time highs. As for those records this morning, pulling back just a little bit. We're down by a third of 1% on the S&P, on the Nasdaq down by 0.8. Under surveillance this morning, headwinds building for the US dollar.
We are in a world where there are two factors that drive currency values. One is related to macroeconomic fundamentals, and the second is fear. Countries around the world looking for a safe place to put their money. I mean, the dollar did strengthen when the Iran war started, fear, and now it's come back down, macro.
So here's the latest this morning. The dollar failing to hold on to war-driven gains as investors turn to riskier assets, including equities. George Saravelis, the global head of FX research at Deutsche Bank, joins us now for more. George, welcome to the program. Is it fair to say you've become incrementally more bearish on the US currency?
Well, we've been bearish for the last 12 to 18 months in terms of our forecasts. But I think as the risks around the war look to be peaking, we have been increasing confidence on the dollar downtrend coming back. What's interesting now is it's a lot more concentrated in dollar China as opposed to euro dollar. So if you think about this time last year, all the big moves were happening in the euro, but now all the new lows in the dollar are being made in China, which I think is especially interesting given the geopolitical backdrop.
Well, George, why do you think that is the case? Why the switch? Why the turn?
So I think there's two elements. One is the Chinese authority side, which is now openly allowing the currency to strengthen a bit more, and you can see that via the behavior of the fixings and the onshore versus offshore basis. So there's a very clear signal coming out of China, also perhaps in anticipation of the Trump-Xi meeting that's coming in. But of course, these broader discussions around the role of the petrodollar, what's going on in Iran, the geopolitical shifts. I think these have opened up a broader question in terms of the geopolitical balance of power in the region. And at the margin, that is helping China.
The People's Bank of China put out a report yesterday that highlighted that global central banks' use of their swap lines reached a 2-year high in the first quarter, indicating that people were increasingly going to the Chinese renminbi as some sort of reserve currency. Do you take this as a signal, or is this the PBOC trying to fuel the narrative?
Well, I think what's very interesting is to look at the actual data, and we do have transactional data in terms of volumes and flows going on in the interbank payment market in China. And what you saw actually in March is some of these metrics made new highs. So there is increased usage of CNY going on in the background. It's very difficult to understand precisely what type of flow is driving that. But I would say in terms of the actual evidence we have from data, CNY usage has been rising since the start of the war in Iran.
George, how much is this getting skewed by payments that are being made to Iran for passageway, or Iran trying to get some liquidity through renminbi, given the fact that we're talking about the petro-yuan versus the dollar?
It's very hard to understand that type of flow at a micro level. As you alluded to, these are things that are going on in the background. But I think the takeaway I have is the fact now that the CNY is making new highs, even in broad trade weighted terms, is really telling me two things. One, the signal and the policy intention out of the Chinese is really to now allow a lot more CNY strength than we were seeing this time last year. And the second point is, despite really a very large negative terms of trade shock, which should be impacting China because it is a major energy and oil importer, you're not really seeing that being reflected in the currency, which is strengthening. And that's really sending you a signal about broader flow shifts taking place in the background, aside from the terms of trade shock and the higher energy prices.
George, it's interesting we're talking about potential US dollar weakness, but we're not talking about US policy. We're talking about international issues. When does US policy begin to set the tone for the next leg of this trade?
I think for sure US policy is relevant, and I'd break it down into monetary and fiscal, which is the broader macro variables we focus on. And on this front, what's interesting is over the last 3 to 4 months, you've seen a pretty dramatic repricing of the ECB rate hiking cycle, the Bank of England, even currencies out of Asia. But in the US, in part perhaps because of the transition to a new Fed chair, you have not seen this move to pricing rate hikes. So I'd say the US policy has almost been relevant by its absence in terms of repricing a more hawkish Fed. I think it's the bar to start pricing Fed hikes, which would be one dynamic that would be a lot more positive for the dollar, is still high, especially with the incoming chair coming in over the next few months. So I don't really expect that to come back. And then the other aspect of US policy is, of course, foreign and geopolitical policy. And the big question mark is, how is the balance of power changed in the Middle East and globally over the next few months, both on the back of the Trump-Xi meeting and, of course, the Iranian war. And that does have the potential to influence exchange rates.
George, it's good to see you. Thanks for dropping by and bringing us an update on his views on the FX market. George Salaveros there of Deutsche Bank. In the next hour on Bloomberg Surveillance, we'll catch up with Emily Rowland of John Hancock Investment Management, Angelo Zeno of CFRA on this rip-roaring rally in tech stocks, plus Michael Gapin of Morgan Stanley on inflation data at 8:30 Eastern Time, and the Flexport CEO, Ryan Pedersen. The third hour of Bloomberg Surveillance up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
We've seen perpetual market strength.
The eyes continue to be on earnings.
It's an earnings momentum-driven market.
It will continue to be an equity story as we go forward.
Things are about as good as they've been in a really long time.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equities session lows down by 0.4%, pulling back from all-time highs, and an aggressive rip-roaring rally in tech turning into this, down by just 0.9% on the Nasdaq. On the Russell, down by 0.3. Turn to the commodity market. This is how things are shaping up this morning. Crude rallying. Brent up by 3%. WTI as well. Triple digits on crude. 101 on WTI. Brent crude just short of 108. And in the bond market, yields pushing higher. 2s out to 30s near the highs of the year. A 30-year at 5%. Heading into inflation data 29 minutes away. CPI up next.
And it may be closer to 4% than 3% at 3.7% year over year. Headline CPI expected in a median survey of economists. A real question about how the Fed deals with this and why we're seeing inflation. Is this the one-time impulse from higher energy prices and other commodity prices as a result of the Strait of Hormuz closure? Or is this a sign of the strength in the U.S. economy that can allow prices to sustainably remain higher? Those are the questions that could both support U.S. stocks while also causing a further sell-off in bonds.
Well, let's stay with consumption. We know what sentiment looks like right now. Rock bottom. Let's focus on spending. What are people actually doing? The card spending data coming out of Bank of America indicating, stripping out gasoline, a move of 4% year over year. That's decent spending growth in this economy.
It's been fueled by the wealth effect with stock price increases, also giving sense of complacency and a lot of assets to spend. It's also being driven by the K-shaped economy and the average, which is a U.S. economy that seems to be closer to boom time than it is to a recession. How many people have come on the show and said that they expect recession? How many people have said that they think that it's a greater likelihood of a downturn in economic growth than some sort of boom case that's going to cause the S&P to go to surpass 8,200? It really isn't that many, which is a reason why increasingly stocks can keep rallying despite the backdrop that we're hearing about inflation.
It's difficult to make the recession call when you've got deficits in this country of 5-6%. Right? It's difficult to make the recession call when you've got a handful of the richest companies on the planet with really strong balance sheets committed to spending hundreds and hundreds of billions of dollars. It's difficult to make that call.
It's even more difficult when you look at a population of wealthy individuals who have plenty of discretionary spending. What stood out to me was the idea at the upper income level, you're seeing 6% wage growth year over year as a result of a lot of the top tier jobs paying more on the heels of productivity. That wage growth is not being sustained at the lower end of the K, which is why the sentiment surveys could indicate a very different type of backdrop than the overall spending averages.
And certain parts of corporate America are capturing that story. Shake Shack can't pass on the higher costs, stock hammered. But as Chris Ferrone said on this program, basically, if you're looking to build an investment thesis off the back of Shake Shack earnings, you're probably not getting the call right in the equity market right now, because what's driving the equity market is not Shake Shack and the restaurant business, it's the tech sector.
It also is a subject of conversation last night at dinner, the cost of a burger at Shake
Bramo,
Shack.
it took 2 hours. What happened?
Casa Bramo, there was a situation where the kids said that they were not going to eat at Shake Shack for lunch because it was just too much. It cost $20 for a burger and fries.
It's expensive.
And they weren't interested, so they were going to other cheaper options. Next door, you see the demand destruction in real time as a result of the value proposition not meeting their
Fast food is no longer cheap food.
Exactly.
That's been the shift in this country now for a number of years.
I'm telling you, it actually is a really good barometer of inflation when the kids come to you.
Who's next door, by the way? Who's next door?
A really cheap Chinese place, which I'm
that's
a little
the
concerned.
preference. That's the preference.
I'm really concerned. Whatever, let's move on.
OK, we can move on. I'm happy to move on. I'm just intrigued. Other people might be too. Equity futures on the S&P. Session lows were down by 0.4%. Coming up this hour, Emily Rowland of John Hancock with stocks on a record-breaking run. Angelo Zeno of CFRA on the risk of sentiment swinging negative. And Mike Gapin of Morgan Stanley reacting to the latest inflation print. We begin this hour with stocks inching lower as investors await the latest inflation data. Emily Rowland of John Hancock writing, we continue to see equities struggling with valuations for long-term returns, but earnings growth is still a very viable return driver. Emily joins us now for more. Emily, welcome to the program. This is a conversation we had with Ed Yardeni, who, by the way, is at 8250 year-end on the S&P. Outside of recoveries, post-GFC, post-pandemic, when was the last time earnings growth was this good?
Never. I listen to your show every day, and I'm trying to come up with like a new adjective to describe this quarter's earnings growth. It's like spectacular, stunning, shockingly good. Like, it's been awesome. 28% earnings growth versus an estimate of 13% coming into the quarter. And we have 10 out of 11 sectors showing earnings beats, and the magnitude is spectacular, coming from sectors in particular like industrials and communication services. So it's not just technology that's driving that earnings growth. Is 30% earnings growth quarter after quarter after quarter sustainable? Probably not. But we're doing our best to enjoy the sort of nirvana that markets are benefiting from a fundamental standpoint today.
Many people, as you know, Emily, aren't enjoying it. They complain about it. And that's been the story ever since we exited GFC all the way up and to the right. This bull market has been hated. They will point to concentration and concentration risk. Do you believe that's a problem still building?
Yeah, it absolutely is a problem, and we're back to having the top 10 stocks in the S&P 500 represent about 40% of the index. That's not a healthy environment, but I would point to international markets abroad as having even more of a concentration risk. If you think of what's driving these global markets right now, it's a semiconductor super cycle for the history books. And we're seeing emerging markets really lead the charge there. You look at spectacular earnings growth, it's coming from emerging markets. But the challenge is it's just a handful of stocks, John. It's just about 3 stocks that are driving that growth. So I look, for example, at emerging markets earnings season. It's been great, but the beats are actually really modest. We're looking at about a 34% beat rate in emerging market equities because of that concentration. Another notable thing is that semiconductors are actually in value indices. So there's been a lot of confusion for investors that are sort of focusing on styles right now. And because the PE ratios are so flattered by that forward-looking earnings growth, we're actually seeing semis really benefit value indices overseas, which I think is a notable dynamic for those of us that are doing attribution analysis on a daily basis.
Emily, coming into this year, you were a little bit cautious about the U.S. economy and potential growth in earnings among a lot of these companies. How much have you changed your outlook?
Well, one thing that's shifted for us, Lisa, is this fiscal sugar rush that we're going through right now. If we've been thinking a lot about sort of car analogies and this earnings engine being important. So think about what's sort of fueling the gas tank right now. Fiscal stimulus was really sort of pumping on the brakes last year. We had government layoffs. We had a lack of fiscal support. More broadly speaking, we had tariffs. Now this year, the fiscal impulse is on. You've got tariff refunds. You've got lower corporate tax rates in the wake of the one big beautiful bill. Consumer tax refunds are elevated. You've got elevated defense spending right now. So we've got this fiscal thrust right now that's really resulting in an improvement in the U.S. economy, while the Fed is actually looking at sort of tapping on the brakes here to prevent inflation from running away.
Emily, it's always good to hear from you. Emily Rowland there of John Hancock. This Fed is hesitant to tap the brakes. This Fed is still somewhat committed to the next move being an interest rate reduction, which is why you've seen some pushback, and I would say more than some pushback beyond just the three that officially dissented to the language in the statement initially at the last Fed meeting. We've seen a lot more than that in the last few weeks.
Part of that is because there have been sectors of the economy that have been left behind. You have seen sectors, entire sectors that have been left behind, housing in particular. And people point to that as a key component in this virtuous cycle of an economic recovery. You need those jobs. Home Depot, Lowe's, you hear that in some of their earnings. People aren't buying as many supplies or furniture, say, at Restoration Hardware, another member who came out and had some colorful choice words a number of months ago. A question here, though, about how targeted they can be at a time where inflation is running as hot as it is.
If in the home builder industry right now, tough. Restaurant business, tough. Parts of discretionary, tough. If those kind of sectors, industry groups had bigger weightings on the S&P 500, the S&P would be down. But that's not the reality of this situation. You have to take what you've got. We've got 18% of the S&P coming from chips. And chips and the profit growth, these are the ultimate profit centers right now. These guys have minting money. And that's what's driving this earnings growth.
So as the Federal Reserve, how do you cater to the economy while not creating a bubble in stocks that are somewhat more economically independent based on the broader economy? It becomes a conundrum because you have the risk of inflating a bubble on one side of the equation, even as you try to cater to another that isn't feeling so great. And you're seeing that in sentiment. You're seeing that in the K-shape. You're seeing that in a whole other bunch of metrics that are not factored in to the S&P 500.
There's always a risk of making it too complicated. If you're a policymaker, you have to focus on the averages. And I mean central banker when I say policymaker. If you want to focus on disparity, that's the job of fiscal and that's the job of politicians. And I think central bankers get themselves into trouble when they start focusing on the nuances and the disparity.
Over to you, Kevin Warsh. Let's see how he ties that knot.
He's in a tough spot.
He's in a tough spot, and he's been given a little bit of leeway by Scott Bessent, Treasury Secretary, who said it's understandable why the Fed would remain on hold for a longer period of time. Nonetheless, down the pike, it could become more complicated, especially if inflation rates stay at these levels.
Futures right now negative by 0.4% on the S&P. Near session lows, the data some 20 minutes away. With an update on news worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Several CEOs have been invited to join President Donald Trump on his trip to China, including Apple's Tim Cook, Tesla's Elon Musk, and Citi's Jane Fraser. One notable absence, NVIDIA CEO Jensen Huang, who was not invited, according to a White House official. eBay rejecting an unsolicited proposal from GameStop. The company saying the offer is neither credible nor attractive. Earlier this month, GameStop offered to buy the online marketplace for around $56 billion. And in sports, the Oklahoma City Thunder have swept back-to-back series in their push to become repeat NBA champions. The Thunder winning 8 straight over the Suns and Lakers. Meanwhile, in the East, the Cleveland Cavaliers have tied their series against the Detroit Pistons 2-2. The winner of that series will take on the New York Knicks. That's your Bloomberg Brief. John?
Yahara, thank you. We want that to drag out, right?
Yeah.
Everyone's exhausted, injuries mount. Not that we want anyone injured.
No, but
a bit of fatigue sets in.
Yes, well, I would agree. Although the Knicks have done so well that, I'm just very happy. I'm actually
You're bullish Knicks. You're on the same team for once.
For once we are. I mean, honestly, how could you not be when you went past the, cheering crowds and the excitement?
Very cool. Anne-Marie, Back on the programme tomorrow. She'll join us from China on the President's visit to Beijing and that meet-up, of course, with Xi Jinping. Up next on the programme, the Morning Kills Plus. We'll catch up with Angelo Zeno of CFRA as the tech rally pulls back just a little bit this morning. Equity futures down across the board. The weight on the tape in tech and the chip sector. The Nasdaq this morning, fairly negative, down by almost 1%. From New York City this morning, good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I don't really recall anything like this. It's been extraordinary. Now it looks as though we're going to have something like an 18% year-over-year increase in the first quarter. And for the year as a whole, they're expecting 24%. And that's definitely unprecedented. I think earnings breadth is actually improving. And if that's the case, that should lead to an improvement in the breadth of the market.
Ed Yardeni of Yardeni Research, street high price tag on the S&P 500 now of 8250 for year end, the most bullish on the street. Asked a simple question: outside of recoveries, which is when typically you see this aggressive improvement in profits, so take out GFC, take out post-pandemic, have you ever seen earnings growth like this? His words: I don't really recall anything like this. It's been extraordinary.
Leaning into the roaring 2020s with earnings growth that has exceeded by double what people were expecting. It was expected to be 13% growth. Instead, it was 26% growth. And it's coming from, yes, narrow stocks. You are seeing about half of that coming from the big tech names. At the same time, it is broader than that, and that's the reason why a lot of people are getting optimistic.
What can stop this rally? Is it the data? The data drops later. In about 14 minutes' time, at 8:30, we get CPI in America. Look at these numbers. The estimate for headline CPI, closer to 4 at 3.7%. For core, 2.7%, just getting further and further away from 2. Now, of course, this is not the preferred gauge of the Federal Reserve, but the PCE read ain't a whole lot better.
When I see this, actually, it's probably worse in terms of how quickly it's moving in the wrong direction. When you
ओके गाइस, आई थिंक मेरी वॉइस नहीं आ रही थी. नाउ आई थिंक वॉइस आ रही है. याद रखना, नेचुरल गैस में अभी न्यूज़ डेटा आने वाला है इंपॉर्टेंट. सीपीआई का डेटा है, इंडिया का तो आ चुका है, यूएस का रिलीज होने वाला है, बस 15 मिनट रह गए हैं. इंपॉर्टेंट डेटा है, क्रूड नेचुरल गैस दोनों को इम्पैक्ट कर सकता है थोड़ा बहुत. नेचुरल गैस में बाइंग का ट्रेड है, देखो एक्सपेक्ट करें थोड़ा सा ऊपर आएगा, वहाँ से सेल करेंगे, नहीं आया है. यहाँ पर एक पुल बैक का ट्रेड लगाया है. इसमें अब एसएल बड़ा नहीं रख सकते, काफ़ी देर से रुका हुआ है न्यूज़ की वजह से, कहीं एसएल ना ले जाए. तो इसमें एसएल अपने एंट्री पॉइंट पे रखना, कॉस्ट टू कॉस्ट पे ही। एंट्री पॉइंट का अगर एसएल जाता है तो फिर एग्जिट कर जाएंगे, होल्ड नहीं करेंगे। अगर जाना है तो ऊपर चला जाना चाहिए। ऐसा लेट होते हैं तो दो पॉसिबिलिटी है, कॉस्ट टू कॉस्ट पे अगर निकलेंगे दो पॉसिबिलिटी रहेंगी, या तो प्राइस कंटिन्यूएशन में जाएगा नीचे, जाने देंगे नीचे सपोर्ट से फिर बाइंग करेंगे। अदरवाइज अगर फेक ब्रेकडाउन करा के वापस जाता है तो फिर हाई लेवल पे वापस सेलिंग का प्लान करेंगे। सेलिंग हाई लेवल से ये थोड़ा एक्सपेक्ट है, थोड़ा और ऊपर आए तो ठीक है, बट ज़्यादा रिस्क मत लेना, आना है तो निकल जाना चाहिए ऊपर प्राइस को। सो अपना एसएल कॉस्ट पे रखो, कॉस्ट का एसएल जाएगा एग्जिट इन नेचुरल गैस। बाकी डेटा को देखते हैं, थोड़ी देर में शायद डेटा भी आ जाएगा। ओके, कॉस्ट टू कॉस्ट का एसएल चला गया है इसमें, ठीक है, निकल जाओ बाइंग से नेचुरल गैस। फिर देखते हैं वापस से जा चुका है, हो सकता है फिर से अगेन वापस चला जाए ऊपर। We will see again that this trade is gone. पॉइंट ऑफ इंटरेस्ट शिफ्ट हुआ है। देखते हैं अब कितना जाता है नीचे, सपोर्ट काफी दूर है। Okay, 9 minutes left. CPI data is there. 5 minute left, 7 minute left, sorry. डेटा का ध्यान रखना, डेटा के बाद ही कोई फ्रेश एंट्री करेंगे अब। बाकी नेचुरल गैस भी अगर आप पुल बैक देगा तो कुछ इस तरह से सेलिंग का प्लान रखेंगे। मैं थोड़ा बेरी से एक्सपेक्ट कर रहा हूँ नेचुरल गैस को। कॉल का प्रीमियम कितना है शॉर्ट करने के लिए? ओके 1 मिनट है सीपीआई का डेटा देख लेते हैं फटाफट से. Seconds left. डेटा आ गया है.
In just a moment, seconds away, the scores into it look like this. Equity futures pulling back by 0.4.
ठीक है, दो डेटा तो पॉजिटिव है डॉलर के लिए, नेगेटिव फॉर गोल्ड एंड सिल्वर. मंथ ऑन मंथ बेसिस वाला सीपीआई का डेटा फ्लैट है. तो दो डेटा पॉजिटिव फॉर यूएस डॉलर, एक न्यूट्रल, एंड वाइस वर्सा फॉर gold and silver.
Over to Mike McKee for more. Good morning, Mike.
Good morning, John. No surprises here. The headline CPI month-over-month increase 0.6%, as forecast after a 0.9 move last month. The core CPI year on a month-over-month basis is up 0.4. That is stronger than was expected. So for the year, we have CPI up 3.8%. And the core up 2.8%. That's the highest CPI for year over year since 2022, I believe. And it is also more than anticipated. It's a jump of 0.5 percentage point. So let me check on what the latest breakdown of all the numbers is. And I'll get back to you.
Mike McKee, thank you. Just had a 3.99 print on the 2-year, just short of 4%. We come back down to about 3.98. It's an upside surprise on core. You'd expect yields to be marginally higher. They are. Up by 3 basis points on 2s, up by 2 on 10s. Now through 5% a little bit earlier in the session. Comfortably just about through that number right now. Coming off the back of this in the equity market, equities just a little bit lower. We're down by 0.4%. We hold on to those session lows. Likewise on the NASDAQ 100, but it's that upside surprise on core that gets your attention, Lisa, supporting where the bond market was coming into this print.
Yeah, you're seeing it rise at the fastest pace going back to 2022, albeit we've seen paces like this as recently as 2025 in September last year. A question here about whether you can write this all off as simply the inputs from energy. Well, core CPI suggesting maybe that's not the case, and it's the pace of increase that's moving in the wrong direction. Again, PPI tomorrow will be very interesting, and then retail sales will give you a sense of how much consumers are willing to absorb some of these price increases.
It's getting harder and harder to be a dove on the FOMC with numbers like that. You'd expect them to build in the next month or so, depending on the duration of this war and the energy shock. But inflation is much, much higher than it should have been without this war.
It's moving in the wrong direction. You cannot point to inflation expectations as remaining where they were. They're not necessarily flying away, but they're definitely increasing. And why shouldn't they? Because right now we're talking about the strongest earnings growth at companies that are able to pass along any kind of hit to their growth based on higher prices to their consumers. We'll see that again with PPI about what those increases in prices for the producers really are. And frankly, we're seeing it move in the wrong direction at an accelerating pace.
Notable that the positive surprise, not so positive, the wrong kind of upside surprise, was actually on core today, and we'll get you a breakdown of that in just a moment. Off the back of this, yields are higher by 2 basis points on 10s, 443.47 as things stand. For those of you interested, the intraday high of the year was back in late March. That was 448. So we're just short of that right now on 10s. On 30s at 5%, on 2s approaching 4. Mike McKee, are you still with us? Because you promised us a second look at this. Where's that upside surprise come from on core?
Well, right now it looks like it's coming from a couple of different things. Apparel prices up 0.6%, and the owner's equivalent rent up 0.5%. Now, Michael Gapin could explain more of this to you, but basically that's a statistical quirk because we didn't get an October read on inflation because of the government shutdown. So we've got basically a catch-up right now. Motor vehicle insurance contained, that's been one that's been rising a lot, 0.1% this time. But airline fares up 2.8%, a little more than anticipated. So we've got a little broader inflation than was thought in terms of the headline rate that includes food and gasoline. Food prices up 0.5%. Food at home up 0.7%, and gasoline prices up 5.4%. Nobody's going to be surprised at that number.
Michael McKee, thank you, sir. If you're just joining us, welcome to the programme. I'll give you the breakdown month over month and then year over year. CPI coming in month over month at 0.6, the estimate 0.6. For core, on a month-over-month reading, that comes in at 0.4. The median estimate in our survey was 0.3. That takes the year-over-year, headline and core, headline year-over-year to 3.8%. That's above the 3.7 expected. Core CPI year-over-year coming in at 2.8%, above the 2.7 expected. Those numbers are hard reading for an incoming Fed chair who might otherwise have been looking for cut interest rates.
You could make an argument that 3% is okay, but not 4%. That is a problem child when it comes to inflation. When you look at the pace of increase in year-over-year core CPI, we're looking at the biggest increase since August of 2022. Again, we have to talk about not only the fact that inflation is increasing, but the pace of the increase and where it's coming from. It is not necessarily those gasoline prices.
That was not a good time. Michael Capon of Morgan Stanley joins us around the table for more. Michael, good morning.
Good morning.
What catches your eye looking at this report?
Well, there's some hints of second-round effects of higher energy prices on core. So those airline numbers, the food at home numbers, there's also kind of spillage into headline through food because a lot of food prices are related to transportation costs. Right, so the concern here, the assumption here, I think from the Fed's point of view and ours, is that oil prices tend to give you headline effects but not core effects. And there's at least at the moment, given the magnitude of the rise in energy prices, some hints of those second round effects in core. We need to see if those persist. So to me, that's what catches my eyes. The 4/10 on core was not a surprise to us. That's where we were. And as Michael mentioned, there is some catch-up effect here on rents and owner's equivalent rent from the government shutdown last fall. So this number is artificially higher because of that. But you still have kind of what I'll call a trifecta here. You have energy prices pushing the headline. We think we have the last vestiges of tariff pass-through on core inflation, core goods. You saw the apparel number today. And then we had that catch-up effect on shelter inside of services. So three forces pushing inflation in this particular CPI reading higher this month.
If you were looking at the calendar right now, and I say to you the following, can you just circle where you see the peak for inflation this year? Where in the calendar would that fall?
On a year-on-year rate, May or June.
May or June.
We think we're at peak pressures now.
If that's the case, then do you think that the Fed should look through this?
With time, yes, but there are a number of forces here. This is our fourth major supply shock in recent years, and we've got evidence here of what I'll call a mix. How do you decide if tariff price pass-through is ending when you have some of these other second-round effects from energy prices? So we think ultimately, yes, they will be able to look through it, but I'll say look through it with a long lag. We think the Fed's on the sideline for the rest of this year.
What does it say that companies are pretty easily able to pass along the price increases that they're experiencing to consumers? We've seen that in profit margins. We've seen that in earnings. And frankly, we're seeing that in how quickly some of these price increases are transmitted through things like airline tickets.
Yeah, so it's not a surprise that energy prices get passed through quickly. That has been the historical record in the U.S. So seeing airline fares up as much as they were, we actually thought they'd be higher this month. I'd say that is pretty standard from a historical perspective. The tariff pass-through has taken longer. It's taken almost a year. That said, when we look at some of the granular data, non-labor costs reflect those higher tariffs, but firms were able to pass along a greater increase in prices and build in more margin. I think that speaks to pricing power, still strong underlying demand, but kind of an oligopolistic corporate framework, right? We've got some very large kind of quasi-monopoly type firms and industries. Typically, they have better pricing power.
If you are just joining us, welcome to the programme. Slight upside surprise on inflation data that dropped about 8 minutes ago. Equity futures recovering just a touch. We're off the lows. We're still down by 1/3 of 1%. Bond yields off the highs. Mike McKee standing by with a little bit more detail. Mike, when you have a second and third look at the details, does it bring just a little bit more comfort or not?
It doesn't really bring a lot of comfort. We do see some decline in things that had been tariffed, some of the things that had gone up in price because of tariffs. And we don't know whether it's because the tariffs were thrown out or whether we've just been past the peak here. But appliances are down by 0.4%. Household furnishings down by 0.5%. However, tomatoes, which is one of the things that was tariff by the president coming from Mexico for the winter, up 15%. Coffee prices were up 2%. So we are seeing some impact still from tariffs in the overall numbers. But right now, the important thing probably, and I'll throw this over to Michael as well, is we had a 0.5% rise in services. And that's the area where people have been looking for a little bit of a break, given all the pressure on goods prices. And so services coming in a little stronger than anticipated.
Michael Gapin of Morgan Stanley still with us. Mike, is there some stickiness to all of this?
There is, but I take some positive sign from what Mike just said. I think in order of operations here, the tariff pass-through to goods prices should come first. And so having some hints of that, I think, is positive. So if you want to look forward with some, like a positive checklist, you need to see that happen. Core goods prices need to settle down in the next couple of months. Then the headline pass-through from gasoline prices and energy should start to fade after that. The longer story here will be, as Mike noted, what happens with services. That's where the stickiness has been. Maybe that starts behaving and then 2027 looks better. There's a lot of ifs, mights, or buts in that statement, but they all have to hold up in order to get a more favorable inflation outlook.
Given that we're seeing these kinds of numbers, is there any universe where it makes sense for the Federal Reserve to still have an easing bias?
Probably not. I think they told you in April they very easily could have changed that language. It wasn't discrepancy about doing it, it was more about timing. So I do think all of the inflation data and the solid activity data point to an adjustment in the language in June.
I got some pushback to that a little bit earlier. I'm sure Drew Mattis won't mind me sharing that he was the one who was pushing back against that. There's just one line, in fact, just a couple of words, doing a lot of heavy lifting in that statement.
There is,
right?
But that's...
Do we move beyond that world with Kevin Walsh?
Ultimately, I think he would like to, yes. I mean, he's obviously said the Fed's footprint is too large, and that footprint includes communication and a Fed that he thinks is hyper-talkative. So, yes, if you're thinking, oh, there's interest rate policy and there's balance sheet policy, but then there's also the forward guidance, that's a tool. So, yes, this is a tool that you can use. So there's only a couple of words in the statement, but it has large implications.
Some serious power.
Well, does it, though? And this is actually my pushback to that. The market's right now pricing in a rate hike. So it might be doing some heavy lifting, but not really, because the market's saying, we don't believe you. We don't think that you'll be able to hold on based on inflation numbers like this. So at what point does the Fed have to confirm what the market is saying in order to keep prices actually somewhat subdued versus whether they otherwise would be?
I'd suggest the dissent to the language in the statement was such widespread, and it was following the meeting as well, that it did a lot of the work for Chairman Powell without him even really needed to change a word in that statement.
It opened the door to the potential for a change in the bias. I mean, we're talking around the margins here, not necessarily the actual rate hike, but this market's actually putting in, pricing in some chance of a rate hike. And does it have to in order to keep inflation at least not flying away at 2022 levels?
Mike, you talked about all the ifs and buts that need to take place over the next 12 months to get your cut in 27. I find it so hard to talk about 2027.
I know, it's way out there.
It's crazy, but let's just play that game just for a couple of minutes. What would it take to get a hike from this Fed?
So you need this number here on core. As you were mentioning, headline is approaching 4, but there's an energy story there. Core is at least a more reasonably acceptable 2.8. That needs to firm. The expectation would be that that is moving above 3 and maybe even towards 3.5 on a spot and forecast basis. If you get that, for whatever reason, a long, persistent oil price premium, inflation expectations moving higher, animal spirits on the demand side, then the narrative changes. If there's this wide gap between headline and core is kind of hanging around 3 or less and maybe nudging lower, it's a totally different story.
Mike, good to see you. Michael Gapin there of Morgan Stanley. Small upside surprise on CPI. Initially, yields spiked high. They've come back. Initially, equities held on to those lows. Equities have bounced back, down just 1/3 of 1% on the S&P. With an update on stories worldwide with your Bloomberg Brief, Yahara has more. Hey, Yahara.
Hi, John. Recapping the data we brought you just moments ago. April CPI data coming in slightly higher than expectations. Headline prices jumping 3.8% year over year. Core also higher. Prices continue to rise as the war in Iran weighs on fuel and food costs. Speaking of, President Trump saying he wants to suspend the federal gas tax of 18 cents per gallon until prices start to fall. According to independent budget analysts, that would cost the federal government about $3.5 billion a month in lost tax revenue. And speaking of, U.S. Defense Secretary Pete Hegseth and Joint Chiefs of Staff Dan Kane are testifying before the House spending panel. They are looking to justify the Pentagon's record $1.5 trillion budget request while facing questions from lawmakers. Hegseth and Kane will also speak to a Senate panel later this morning. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you for the update. Up next on the program, we'll catch up with the Flexport CEO, Ryan Pedersen, with shippers facing the biggest disruption in years. Plus, Danny has your morning movers. Activist investor Nelson Pouts reportedly exploring a bid to take Wendy's private. That stock is up at a pre-market by close to 16%. From New York City, this is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The assumption here, I think, from the Fed's point of view and ours, is that oil prices tend to give you headline effects, but not core effects. And there's, at least at the moment, given the magnitude of the rise in energy prices, some hints of those second-round effects in core. We need to see if those persist.
We'll see, and we'll see when inflation peaks. Michael Gapin there of Morgan Stanley looking for that peak in May to June, the next couple of months. The next part of this conversation with this man right here, the JP Morgan boss, the Chase chairman and CEO, Jamie Dimon, taking place at 9:45 Eastern time, so about an hour from now. His response to what we're seeing in this economy, some of the issues beyond just that, the opportunities in AI and this massive build-out and the rally we've seen on Wall Street, all-time highs. Coming into Tuesday, once again, we've set a series of records this morning. Futures pulling back just a little bit as we get these numbers on the inflation front. CPI coming in just a bit hotter than expected this morning on core, of all places.
Yeah, this is the reason why people are concerned. You're seeing an acceleration in inflation, core CPI year over year increasing at the fastest pace going back some 4 years. That's giving pause to people who are looking at potentially some sort of response from a Federal Reserve that might have to shift away from an easing bias. I mean, try to figure that one out.
There are some statistical quirks. We can focus on the details throughout this morning on Bloomberg TV, but those headline numbers are not good reading for an incoming Fed Chair, Kevin Warsh, who might otherwise have been looking to reduce interest rates. Equity futures looking to bounce off the lows. We're down by close to 1/3 of 1% on the S&P. We're down by 3/4 on the NASDAQ. With an update on the single names this morning, 41 minutes away from the cash open. Danny Berger has more for you. Hey, Danny.
Hey, John, a big surge coming from Wendy's this morning, up nearly 16%, up 15.5. The FT reporting that Nelson Peltz is trying, looking at a potential takeover, looking for outside investors. Those include Middle Eastern investors, apparently. They already own about 16%. The fund already has someone on the board of Wendy's, so an acceleration of that. Elsewhere this morning, in terms of the movers on reporting earnings, a huge volatile pre-market session for them. At one point, they were up something like 8%. That's because they had a clean beat. They also forecast expanding margins to come. But investors and analysts, as they're picking through the earnings, noted that specifically North America was weak for them, and that's concerning. Shares falling about 4 1/3%. Finally ending things with another earnings, Hims and Hers, a big restructuring cost coming from them, shifting from generic GLP-1s into branded name ones. It's been a big deal for them, but there are a lot of costs that come with that, so shares down nearly 15%, John.
Hey, Danny, thank you. Looking forward to the program. Danny Berger alongside Matt Miller in about 10 minutes' time. Global supply chains facing prolonged disruption following President Trump rejecting Iran's latest offer. The Flexport CEO, Ryan Peterson, writing, the Strait of Hormuz remains at a critical risk level. The industry is still largely in wait-and-see mode. Ryan joins us now for more. Ryan, welcome to the program. Out of 10, and 10 would be globalization nirvana and 1 would be pandemic mess. Just how bad are things right now?
Yeah, hey, great to see you guys. Well, it depends what industry you're talking about. I mean, for the oil industry, this is about as worse than it's gotten ever, I think. I mean, we're talking about 20% of the world's oil has been cut off since March 1st. So I think on that scale, you're close to a 10, 8, maybe it's a 9 or an 8. For container shipping and air freight, it's not that big of a deal. The Strait of Hormuz is a cul-de-sac. Container ships don't need to go in there other than for local traffic. Jebel Ali, the port in Dubai, is the 9th largest port in the world, but that's largely because it's a big transshipment hub. It's a choice. You can transship those containers in a different port. And the Red Sea, which has been cut off since December of 2023 for container shipping, that's already been priced in. That's been going on. Ships have been routing around Africa. So I think this is really an oil story rather than a logistics story.
How much have prices increased to ship anything, even if it's not through that particular region?
Yeah, the price, it can be a little misleading, like kind of the base price of shipping a container is only up 10 or 15%, but there's all these other surcharges. You have war surcharges as well as fuel surcharges. So you're looking like from Asia to Europe is up 50 to 60%, even for ocean freight. Air freight is close to double because it's so fuel driven. Yeah, so pretty big price increases. And you see price increases even on the Trans-Pacific, which, ostensibly is not impacted, but it's a global market, global capacity, et cetera. So prices are up there as well.
And there are questions around who wants to insure this industry going forward if there are these potential hotspots around the world. Do you see a time when prices will go back to where they were before some of the hotspots really emerged?
I mean, it all depends on what happens on the battlefield here. What happens is anybody's guess. And right now we're in a ceasefire, but it is, I think, by no means over. You saw Trump reject Iran's demands yesterday. Netanyahu said this is not over. So I would expect until it's resolved, then no, I don't think you're going to see normalcy. I mean, taking 20% of the world's oil supply off the market is just a much bigger deal than I feel. Seeing all-time high in the equities markets is, for me, this is why I don't invest in equities. It's like hard for me to understand.
So, Brian, some people have come on and said it's not that it doesn't matter, it just doesn't matter yet. because we had this massive cushion and we're drawing down inventories so much. When do you think it might start to bite?
Yeah, I mean, again, like it just really depends on how this plays out in the military landscape, which is way outside, way over my pay grade to comment on. But as long as the straits close, I just don't see how you can price normalcy. And I was driving by, I live in California, I saw $9 gasoline.
Crazy.
At the gas station yesterday. So
that is bonkers. Ryan, thank you, sir. Ryan Peterson there, the Flexport CEO. I should have flipped the scale, shouldn't I?
Yeah.
But I think we got the picture.
I think 10 is bad.
Things are bad.
Yeah, 10 usually is good, right? But in this case, anyway, we're not really.
It is not globalization nirvana.
Yeah, all I could say is $9 a barrel, but just think if there was 18 cents less. That would make all the difference.
That is not going to move the dial in California.
What are you talking about, $9 gas?
Although California arguably might have bigger problems when it comes to things like energy.
Well, potentially, yes. And given how exposed also they are to the Asian markets and then some of the extra taxes that are placed on a local level. What he was saying, though, is really important, which is costs are going significantly higher, not just in transit through the Gulf, but just globally because of higher energy costs. You have to wonder also why a ship operator wouldn't kick up the cost. Who wants to be someone operating the ship right now, given some of the stories that you're hearing from the stranded Marines over in the
Those guys are pretty brave, but no, don't count me in. And I'm not brave, so I'm not sure if that helps you.
I was counting on you to go, move our, fertilizer through the Strait of Hormuz.
Could you do one of those shipping trips?
No, absolutely not. Through the Strait of Hormuz?
Multiple weeks? No, never mind the Strait of Hormuz.
Just in general?
I just mean, around the Cape of Good Hope. And
I get seasick. It would be really bad.
That would be your excuse? No special programming. You know who would? Anne-Marie, without a doubt.
You think so?
Oh, yeah.
She'd be like,
offer AMH the trip of getting... Honestly, Anne-Marie would be on that ship through the Strait of Hormuz.
I would have
no questions asked.
I would have been on the cruise going to explore different areas in Patagonia. I totally would have been on that. And then getting hantavirus, I'd be that person.
Different. I just wouldn't go on a cruise.
Yeah, well, I understand that, but you'd go certain places. Anyway,
my position on that is well known. Okay. Tomorrow, Anne-Marie's going to be on the programme, back with us. She'll be in Asia, in China specifically, to bring you the details of that meeting between President Trump and President Xi. Equity futures looking to recover this morning. We'll get you the breakdown of everything taking place today in chips and inflation, and a preview of tomorrow when we catch up with Seema Shah, Principal Asset Management, Eric Johnson of Cantor Fitzgerald, Edward Fishman of the Council on Foreign Relations, and Victoria Fernandez of Crossmark. Live from New York City this morning. Good morning. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. and the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Inflation coming in hot and futures lower. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Inflation continued to accelerate in April with gas, rent, and food prices all climbing.
The tech rally loses steam. South Korea stocks swing on a proposal to distribute AI profits to citizens.
Plus, JP Morgan's markets business is booming. No surprise, the CEO, Jamie Dimon, joins us for a Bloomberg exclusive.
It's booming. They're all getting paid big bonuses. Private credit's not a problem. Pretty sweet over there at JP Morgan.
Yeah, it'll be interesting to hear his take on private credit.
Yes. He's backed off on the most bearish of assumptions about it. I wonder if he sticks with that tune. This morning, though, I am watching some of the AI stocks. We mentioned what happened in South Korea. It's pretty incredible to watch a post by one advisor that they basically walked back and they said that doesn't represent our views. Bring down the entire Kospi. You can see that filtering through to Intel, Micron, AMD, all the chip stocks that have had a hot run. Intel, for example, down 4%. It just maybe shows how frothy this trade and how fragile it is that you can just, again, have this one post that they walk back, continuing to force stocks.
But I mean, the Kospi has tripled in 12 months, right? It's grown larger than the UK stock market.
But by the way, there's so many retail traders that hold that. Like, isn't that kind of an AI dividend? Do you really need something separate? Retail traders are getting wealthy
for people who own stocks.
Yes.
eBay has rejected GameStop's $56 billion takeover offer, calling it neither credible nor attractive. eBay's board turned down the offer due to uncertainty around the financing plan, operational risks, and GameStop's governance. Plus, they watched that CNBC interview with Ryan Cohen and were like, not gonna do it. No way.
So good. So good.
Did you see that?
Yes, of course. I don't think there's anyone who is a viewer of financial TV that didn't see it. Read the website, Matt.
Yeah, I'll go to the website.
Go to the website. Let's start with the economic story. Inflation accelerating in April. Let's break down the data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what were the details?
I think Matt put it well. Inflation coming in hot, as expected, with the headline CPI month over month coming in up 0.6, as economists predicted. That pushed the headline year over year to 3.8%, which is the most since 2023. The core rate up 0.4 during the month, which pushes the core year over year to 2.8%. That is only the highest since last September, but definitely going up. If you want to look at what actually pushed it higher, I bet you won't be surprised to know that gasoline prices were up 5.4%. Electricity, though, also up 2.1%, a big rise there, so it may not help you to buy that electronic vehicle. Owner's equivalent rent was up 0.5%. That's a bit of a statistical quirk because of the government shutdown last October. There were no data, so it takes 6 months to turn the housing market data around, and that is what resulted. Goods and services, goods prices were flat. Services prices were up 0.5%. That's kind of the opposite of what the government economists want to see, because they're expecting, because of tariffs and the overall war, to see goods prices go up, but services prices aren't as affected by those. And so the fact that they're up that much matters. Airfares up 2.8% on the month, and hotel charges up 2.8%. So travel more expensive because of the war. And then I wanted to put this last one on there. Tomatoes were up 15.1%. That was one of the things that was tariffed, one of the biggest food price increases we have seen. So those of you who are looking for your salads today, you're going to be paying more. And I should mention that it is not good news for consumers because not only are prices up, but with the CPI out, they have now recalculated what your average hourly earnings are, absent inflation, negative on the month, down by 0.3%. So you lost money at both ends this month.
By the way,
April.
You're so European, Mike. You're doing month-over-month moves, right? And I'm used to the old school year-over-year. Airfares are up 21% over the last year. So the moves are even bigger than just the piddly month-over-month moves would suggest.
Well, I don't think the airfares up 2.8% was piddly, but that tells you the impact of the war because it's the 1 month move over the last half of the war so far.
All right, Mike McKee, our economics and policy editor, breaking down the inflation picture. The AI trade, though, taking a breather this morning, and some stocks are moving with extreme sensitivity. A Facebook post by a South Korean policymaker sent stocks diving after saying the nation should pay citizens a dividend using taxes on AI profits. The Korean government later said that this position was the advisor's personal opinion. Bloomberg macro strategist Cameron Kreis joins us now. And Cameron, the interesting thing, not only the suggestion that we should sort of take windfall taxes and hand them back to citizens, but also the fact that this market has flown so high so fast, right? It's tripled in the last 12 months. It's bigger than the UK market. It lost $300 billion in the time it would take to watch a soccer game. It's incredible.
Yeah, well, I mean, the moves in the stocks have been incredible, but then again, the moves in corporate earnings have also been astonishing. So I would say it's not quite like the dot-com bubble where prices moved, I mean, obviously sort of at light speed ahead of realistic earnings expectations. The fact is that these chip companies in Korea and obviously in the United States are incredibly profitable, and even sort of the lower value add memory space is vitally important to AI. It's not just the brains, it's also the memory. And all of these companies have seen their expected earnings moving forward. I mean, I've never seen anything like it. Sort of go up by sort of an order of magnitude. So, so from that perspective, price has been chasing fundamental expectation, and it's a really interesting public policy question as to how or if that should, be. How the benefits of that should accrue to society at large, rather than the relatively narrow cohort of people who happen to be in a position to own stock in these companies.
It's true. And Cameron, there's been more political pushback just beyond that. I mean, we've seen data center projects in Northern Virginia, for example, get brakes put on them because of citizens there basically saying, don't build these things here. I mean, presumably that's not anywhere priced in policy risk, but should it be?
Well, and whether it should be or not is perhaps a philosophical question. I think more generally, I mean, NIMBYism is hardly new, and there have been some local ordinances or laws passed in certain jurisdictions mandating that data centers don't get sort of advantageous pricing on utilities. On things like water or things like electricity, because obviously if you artificially depress the price of those, then the consumption is going to go up, and that will be felt, the price that will radiate across the entirety of society. It's a really tough question. I mean, what I will say in terms of specifics of this South Korean thing is that it was only last year we were hearing things like Doge dividends, tariff dividends, and those kind of went nowhere. And at the end of the day, it kind of money talks. And right now, it's the AI industry that has the money. And whether it should work this way is a different question, but those with money have the ability to buy influence and have economic policy tailored to what they like.
Yeah.
And I suspect this will work out quite similarly.
It's a good point, Cameron. Thank you so much for joining us, Bloomberg macro strategist Cameron Kreis. Now, elsewhere in the world of tech, eBay has rejected GameStop's $56 billion offer, calling the bid, quote, neither credible nor attractive. Bloomberg Tech co-host Caroline Hyde joins us now. This probably can't be the most surprising thing that they've rejected this bid, Caroline.
Oh, this is hostile. Whether they're selling things on eBay to raise funds for it and then getting banned off eBay, that's what's been happening to Mr. Ryan Cohen of late as he tries to sell bits of carpet from eBay or his own socks to raise funds. It's all a joke in that side. What's very serious as to why it's lacking credibility right now. That they're pushing back on mainly the source of funding. Remember, TD had said, look, we got $20 billion in a letter. Were you going to write a little letter saying that we could offer you $20 billion? But apparently, according to people familiar within that letter, you have to maintain investment grade. Now, that is highly unlikely, according to Bloomberg reporting and analysis, that you would ever be able to do such a buyout of a company that is a quarter of the value of eBay, brings in a quarter of the revenues than eBay, to afford that amount of $56 billion offer. No wonder they're worried about the leverage, about the governance of this company. That's really what's being articulated in this letter. So they're pushing back. And we know this had already gone hostile in many ways.
Well, and I mean, let's not forget Ryan Cohen talking to Andrew Ross Sorkin saying, like, we'll just pay $26 billion using our shares. But the company's only worth $10 billion. How does that actually work?
And many sort of out there, there's much being made of course, the people behind the Big Short fame. So whether it's Steve Eisman or whether it's, of course, Mr. Berry himself, talking that they've been offloading their GameStop shares and saying, look, don't get mixed up between creativity and debt. And at the end of the day, this is an awful lot of debt that's going to be taken on. It's a good news story for us all to get our teeth into, but how realistic is this? And thus far, the market hasn't been taking it seriously. As you say, market capitalization now down to 10 billion. We've seen eBay not near the 56 billion, so clearly the market doesn't think that it's going to be bought for that sort of amount. And meanwhile, it's a distraction for the executives who've been trying to turn this company around, trying to show that they've got strategy, they've got to refocus, particularly on the collectibles. They've actually been building the market cap and the revenues of this company, and now this just means that they have to sit and go to board meetings to try and fight off Ryan Cohen.
It made for some exciting social media.
I don't think it's over yet.
I imagine you'll be focused more on chip makers and the AI trade when you host Bloomberg Tech. Caroline Hyde hosts that show starting at 11 a.m. weekdays. Don't miss it. Check on what's going on in markets right now. We're looking at some red arrows, but this after all-time record highs again yesterday at the close. You can see the S&P futures down about 0.25%. NASDAQ futures off 0.7% with the retreat in tech stocks. The 10-year yield at 4.43. So yields around the world higher, especially in the UK. But we do see yields here higher after that hot inflation number. And Brent crude higher again at 107.59, Danny.
Some of the individual stories that we're looking at this morning. Under Armour forecast for sales and profit this year trailed Wall Street projections. They also cited a financial hit from the conflict in the Middle East, about $35 million.
Sneaker maker On is raising its profit outlook for the year as it sees higher demand for its new designs targeting younger customers.
And then there's Wendy's that's surging this morning. A report from the FT says that Nelson Peltz's Trian is looking into a bid for the fast food chain to take it private. They're reportedly looking at investors that include those in the Middle East. Shares up 15%.
It's delicious. I actually tried to go to Wendy's yesterday. I went to the drive-thru and it was so packed.
Yeah.
That I had to bail and go to a Five Guys.
Can I just think of something that's kind of a segue here?
Yeah.
The reason that chicken nuggets exist is because Ray Dalio in the 1980s helped create them a synthetic chicken future that they could hedge on.
What?
Yeah, and
is that true?
It is true. And we just got news that the CME is going to launch futures for some of these AI data compute. So it's like with every new industry, you have to create some sort of future so these companies can hedge it. And I don't know, that's how Chicken McNuggets were born.
Thank you to Ray Dalio. But of course, that's not a Wendy's.
No, but like
food,
I don't.
Right?
But no,
it's
but
the Baconator
I'm saying
yes,
they all do this now.
Yeah.
You know, and it was pioneered with Ray Dalio and McDonald's.
All right, interesting tidbit there. Coming up, Hims pivots to branded weight loss drugs, and that has weighed heavily on the company's profit outlook. We'll talk about Hims and Hers next. This is Bloomberg Open Interest.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. Shipping traffic in the Strait of Hormuz remains at a standstill, with oil rising after President Trump rejected Iran's latest offer. Trump called Iran's response to his peace proposal a piece of garbage and said the ceasefire is on massive life support. The comments come as Trump prepares to meet Chinese President Xi Jinping in Beijing on Thursday their time, Wednesday our time. UK Prime Minister Keir Starmer told his cabinet he won't resign despite calls to do so from within his own Labour Party. He appeared to buy himself a reprieve from efforts to oust him following a high-stakes cabinet meeting this morning that resulted in a public show of support from a handful of key allies. Still, more than 70 members of parliament from his own party called for him to step down. Hims and Hers reported a first quarter loss due to higher costs from its pivot to branded obesity drugs. And that loss was twice as big as the loss it reported in the same quarter last year. The company is moving away from the copycat versions of weight loss medications that helped fuel its growth and instead prioritizing partnerships with brand name products, including those from Novo Nordisk and Eli Lilly.
Let's get more on Hims with Bloomberg's Jerry Smith. Jerry, it seemed like initially a coup for Hims and Hers when all this happened. I mean, first they were selling, non-branded ones, and then they get sued by Novo. Novo drops the lawsuit because it turns out they need the Hims and Hers. It seemed like a big win for them, but is it bad for business that they're selling the branded products?
Yeah, I mean, what we're seeing right now with Hims is sort of the first results since it, as part of this strategic pivot. And, this was a company that really, a lot of its growth was fueled on selling these copycat versions of weight loss drugs. And, now they had to take a write down this quarter because they had a lot of excess inventory from these copycat drugs that they're no longer selling. And they're trying to make this pivot now where they're going to sell the branded versions of the weight loss drugs that are sold by Novo and Lilly. And, there is a scenario where this is, short-term pain for Hims for a longer-term gain. We've seen recently the approval of weight loss pills, which a lot of analysts think is the next frontier for weight loss drugs and is going to be a huge market. So Hims being a part of that as a telehealth company selling these, it could be a large area of growth going forward for them. But in the short term, we saw this quarter that, they have a lot of excess inventory from these copycat versions of the drugs that they can no longer sell. And that, showed up in their results.
Yeah, 40-cent per share loss. That compares to 20 cents a share in the same quarter a year ago, Jerry. But revenue was also weaker than estimated. I mean, 608 million, I believe, was the number, and we were looking for closer to 618. Why are they missing? Are analysts just too optimistic about this sector?
Yeah, it was a slight miss. I mean, I think that it's a little bit, we're going through a transition period right now with these weight loss drugs where we're going from people who just had the option of an injectable version of it to now we're, both Novo and Lilly have a pill version that it's still very early days on the market for both those companies. Novo got off to a really fast start, but Lilly is, close behind with its pill. So I think it maybe is a challenging area to forecast for Wall Street just because we're seeing this transition from, one form of, weight loss drug to another.
But by the way, in terms of Hims & Hers' other business, I feel like there's all this excitement and also genuine fear around peptides and selling of them. What's going on there with Hims & Hers? Was it them or someone else that bought a factory or something like that, basically getting ready for all of it to get deregulated?
Yeah, that's right. Yeah, Hims actually bought a peptide manufacturing facility in California. And this is an area that you see a lot of wellness enthusiasts who are very excited about peptides. They're basically these short amino acid, strings of amino acids that you're seeing even RFK Jr. promoting peptides for various benefits. Wellness people think that it's can help with reducing aging and healing wounds and various other things. So it's right now it's not approved. The FDA is looking into potentially regulating this space, which if it becomes an FDA approved treatment, that could be a benefit to Hims. And so they're placing bets that this could be another market for them going forward.
All right, Jerry, thank you very much for joining us. That is Bloomberg's Jerry Smith on the latest earnings from Hims & Hers. Coming up on the show, Citi Wealth's Kristen Bitterly discusses the consumer as inflation climbs faster than expected for core. This is Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
I don't really buy the idea that this economy is just being propped up by the capital spending on technology by a few companies. I think the consumers are definitely there. And the weakness in the consumer in the fourth quarter and the first quarter was weather related. So we're about to test that. We'll see what retail sales looks like up ahead here and put it all together. And I think the economy remains resilient as it has been since the beginning of the, well, I call it the roaring 2020s, and so far so good.
Ed Yardeni on surveillance. Let's bring in Citi Wealth Head of Global Wealth at Work, Kristen Bitterly, joins us now. Kristen, great to see you.
Good to see you too.
So it is a resilient economy, and we're going to get more evidence, perhaps, of that this week, as Yardeni mentioned, with retail sales. But first, we have the CPI, 2.8% the year-over-year rise, the biggest in September. Energy up 3.8%, which was 40% of all monthly increases. You had weird things like airlines were up a lot, apparel was up a lot. Are we still resilient even in the face of stickier inflation?
So great question. I think that a lot of this was anticipated. So airline, of course, like plane tickets are going to be up significantly. You're going to see the increase in energy. I think what you have to look through is to core. And obviously everyone was looking at shelter prices, which year over year, there was a little bit of a base case kind of scenario where we expected that rise. So I don't think it's too far outside of expectations, but I think what it does raise is that, is this stickier and is inflation going to be around longer than we anticipated, which is one of the reasons why within our portfolios we've been cautious in terms of duration and going out too far on the curve, just kind of balancing for inflation.
All right, we're going to continue to talk about that because I have questions about tax refunds. They were stronger, right? That's got to help the consumer. And also the AI spend does seem to be particularly supportive of this economy. Kristen Bitterly is sticking around. We have to take a break to pay our own bills. But when we come back, we'll bring you the market open on the New York Stock Exchange and the NASDAQ market site. You can see futures down, but after another all-time high on stocks yesterday at the close, this is open interest.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning.
This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
All right, we are moments away from the start of trading on this Tuesday. This is Bloomberg Open Interest. I'm Matt Miller, looking at stocks that are down, with tech stocks leading the way. So S&P futures down about 0.3%. Tech stocks off 0.7% after we saw the Kospi evaporate $300 billion in value in the span of 90 minutes yesterday on concern about an AI windfall tax. Down at the New York Stock Exchange, wait, that's not the New York Stock Exchange. Somewhere else, ringing the NYSE bell is Josh D'Amaro, the new CEO of the Walt Disney Company. I think it's upfronts right now, so he's got Minnie and Mickey, obviously, with him there, as well as all of their products, which are almost all sequels, of course. And then you've got the first responders' children ringing, well, and their parents, the opening bell down at the NASDAQ market site. But really, I think the focus today is going to be on the inflation numbers that we got, higher than expected, and that's come through, obviously, from the war, from oil, from jet fuel, from beef. Did you see beef was 3.4% higher?
Yeah, but Trump is paring back, reportedly, some of the tariffs on beef. So maybe that will get better.
Right. But it's always a good idea to subsidize demand when there's a supply shock.
Yes, I know where you're going with this. Gas holiday, tax holiday, blah, blah, blah.
Smart economists
But I
agree.
counter you with that being the most important thing. Do these markets care?
No.
At all.
No.
It's AI. AI continues to be the most important thing. And today, it's not even anything fundamental that we're moving on. It was something that happened in Korea. So stocks are selling off. There was a post from a South Korean policymaker suggesting paying citizens a dividend uses taxes on AI profits. A bunch of value is wiped out from the Kospi. And then he's like, ooh, my bad, made a bunch of qualifications. People said he doesn't speak for the government. Even so, the damage was done. I mean, it's just a fragile trade. All these stocks, Intel, Micron, AMD, all down in this morning's trade, Matt.
All right, eBay rejected GameStop's $56 billion takeover offer. They called the offer neither credible nor attractive, turning down the offer due to uncertainty around the financing plan. It's still incredibly difficult to understand how Ryan Cohen would have come up with the money. But I haven't looked at the website, so I will do that. GameStop right now down 2.5%, eBay down just about 0.8%.
Even after he told you so many times, he told the American public to look at the website.
Look at the website.
Just look at the website.
I will go and check it out. I honestly will.
Yeah.
But it's like, if you're a $10 billion company, it's hard to issue shares that cover a $26 billion bill.
And it would be just like incredibly dilutive, even if you could do it. So in what world would your shareholders
It's like
be
negatively
okay with
dilutive.
Yeah,
it doesn't make any sense at all. But let's get off that topic and get back to, eBay was a good seg, right? Because consumers obviously spending a ton of money on places like that. Let's bring in Citi Wealth, head of Global Wealth at Work, Kristen Bitterly. And, I got a better tax refund, like many people did this year, and I may spend it on eBay, more likely on gas. But at some point, that money is going to run out, right? So how does the consumer look after the next couple of months?
Well, I think it goes back to this whole concept of a K-shaped economy, that when you look at who's actually driving, it's the top 20% are driving 40% of consumption. And then if you think through, okay, are they exposed to inflation in the same way? Many of them are homeowners. Many of them have very cheap mortgages that they locked in years ago. So the actual math around that wealth effect that you've seen in that top 20% is significant, and you don't see volatility in that spending. That combined with what we have to say is just a spectacular Q1 earnings. The growth that we saw, and not just the growth in Q1, but now the outlook for the rest of the year, you have estimates, they started the year at around 15% year over year earnings growth, and now they're close to anywhere from like 22 to 26%. So continuing to see that investment at this pace is going to drive fundamentals higher.
even so, the bulk of where that came from in the earnings upgrade has been semis. It was something like 2/3.
Yep.
And then the index itself, it's hit a new high, and this was from Bespoke that was able to hit a new high. It's over its 50-day moving average. But this is only the 4th time that the S&P has hit a record high, while 5% of its members fall to 52-week lows. Basically, it's not
There's
really
dispersion under the surface.
So does that make you nervous that so much of this is pinned on semis, AI trade, et cetera?
I think the concentration, you always have to do that basic calculus around, okay, we look at representation in the index, and then we look at contribution to earnings. So if we look at, you know, the top 8 companies, they're right now representing anywhere from like 35 to 38% and probably contributing around 1/3 of earnings. So it's a little bit imbalanced, but not that much. I think the other thing, though, is when we look at, now you're starting to see the productivity gains from AI. You're starting to see, yes, semis were a big beneficiary in terms of where this CapEx is going, but now you're seeing in terms of grid, electricity, utilities, and both the upstream and downstream as we get into more themes around what it means for physical AI, which is like the next generation as well. So this is really like a multi-decade build out if you're thinking through like what is required. And you heard in certain earnings calls as well, the demand is so robust. It was, do we have enough compute to be able to meet it?
Yeah.
So compute is the new oil.
I mean, we're also adding jobs. I was out on Friday, but I still saw the numbers, and they're impressive, right? Even if you look at a 3-month moving average, this economy is starting to add jobs rather than going the other direction, which was the fear, and maybe still could happen. But you need, obviously, more than just chips. You need real estate. You need people laying cement. You need
electricians.
You need HVAC, everything.
Yep.
And
it's a whole ecosystem.
And I just wonder, does this sort of move the needle in terms of the long-run growth estimate? You know, could we be moving to a higher plane in that sense, or is this a demand shock that's just going to continue driving inflation
All of those jobs
higher?
are temporary, though. Like in the long term, they employ like 50 people, those data centers.
Yeah, but I mean, we're a lot of years of build-out. Like, in the long run, we're all dead, right?
Yeah, no, it's a fair point. And at one moment, are you going to say that the pace of this spending and the continued increase, is it going to be at that rate? Probably not, but it's not a bubble, it's an arms race in terms of like who is truly going to. So will there be winners and losers? Absolutely. Do we need to see an ROI on it? Absolutely. But we're still in the early innings, and we're still in the early innings in terms of like how are the beneficiaries, both short, medium, and long term.
Can I do a hard pivot? And I'm just thinking about this because we're going to hear from Jamie Dimon in just moments with our Francine Lockwood. He's been very outspoken about private credit. I was having a conversation with someone at Milken who basically said there was a smaller family office, and they were sold by one of their wealth advisors. To be very clear, it was not Citi Wealth. It was one of your competitors. But it basically said, add on private credit, this BDC, as a cash management tool, which obviously these things are not because they're illiquid. What have been the conversations with clients at Citi Wealth around BDCs, around private credit? Are they noticing the headlines? Are they getting more nervous about it? Do they still want to buy it? What does the appetite look like?
So I think it's so interesting because private credit was obviously one of the top topics in Q1. And then obviously with the rise in oil prices, it was something that went on the back burner. But I think when you have to almost take a look at the total size of that market. You're talking about a market that's around like $2 trillion in size compared to, if we're talking about the equities market, you're talking about like $70 trillion. So the quantum, even like the global fixed income market, you're talking about the same type of magnitude. So it is a relatively small part of the overall investing market. And I would say from a retail investor or an individual investor standpoint, it has tended to be a tax inefficient investment. And so when you still look at the exposure, it's largely institutional. There has been more retail participation recently. I think you hit the nail on the head in terms of understanding liquidity. So are there good investments? Are there good underwritings within that portfolio? Absolutely. Are there some? There's some poorly underwritten credits within the broader portfolio? Absolutely. But it is an illiquid investment. And I think that's the thing that in some of the branding that came out about semi-liquids, evergreen funds, making sure that people truly understood that this isn't a liquid asset.
But there's a place for that, right?
Of course.
I think it was Yardeni this morning. Farrow was asking one of his guests, how much more can I get over something like a CD, which is also an illiquid investment, right? If you remember CDs.
Of course I do. My bat mitzvah money went into a CD.
There you go. So, I mean,
But
I think of it the same way. And if you can get, I think Yarden said 50 basis points, 100 basis points more, that's
But when
better
you're
than
looking at
sticking the
cash, right? So if you're looking at cash, many investors right now have what we would call like outsized cash holdings. What do we include in that? We include bank deposits, we include T-bills, we include a variety. That's a very different investment than private credit. And so within our own portfolios, we have a preference for equity over credit risk for this exact reason. Are you getting compensated for that risk? Whether that's in more kind of traditional fixed income or whether it's in more liquid parts of the market, when you look at that full spectrum of yield, if you can get an attractive yield, stay relatively light in duration and very high in quality, on a relative basis, you're going to stay in that part of the market as opposed to an area where spreads are really tight and you're sacrificing liquidity.
So who is it for beyond the institutions? Like where does a BDC, for example, make sense in a portfolio, or does it not?
Well, there's great examples like broadening out. Like the big question was when software took a hit. Right? So when software took a hit and then all of a sudden people are like, wait, software seems to be about 20% of the overall credit market. And then the argument there is like, well, these companies would have to go to zero before there would be a default event within the credit market. So are there wonderful opportunities to get above market yields where you're compensated for that risk? Yes, but you have to be very selective in terms of the sectors that you're exposed to and also just making sure you're getting paid for illiquidity and the risk premium.
All right, smart conversation. Really appreciate you coming in. Kristen Bitterly there from Citi Wealth. Let's get a check on what's going on in the stock market right now. We are just about 10 minutes into the session, and we do see the S&P 500 off about 0.4% right now. 73.84 is your level. So coming off the all-time high that we closed at yesterday, tech stocks taking an even bigger hit. Who are the winners and losers here today, Dan?
NVIDIA is actually having a pretty good day, but that's not enough to lift us higher. Healthcare doing well. To the downside, though, it's some of the big tech names and a lot of chip makers, and that's why this market is off. So if you look on the other column, it's Amazon, Micron is down, Broadcom, Alphabet, Qualcomm. Again, nothing in particular moving that. It's just what happened in South Korea. And I should note, JP Morgan is down, despite them having very good numbers and very good projections coming ahead.
And despite our exclusive interview.
Yes.
With JP Morgan CEO Jamie Dimon coming up. Take a look at the sectors here that are moving today. Healthcare, consumer staples, and energy. So pretty defensive look there. Industrials and consumer discretionary on the downside. Let's go to Paris, though, now, where Bloomberg's Francine Lacroix is standing by with JP Morgan CEO Jamie Dimon. Francine?
Could not be more happy to be here in Paris with Jamie Dimon, of course, at JP Morgan Global Markets Conference. Mr. Dimon, thank you for having us. Thank you for being our host here in Paris. I mean, there's a lot riding. Look, the markets are optimistic. They're optimistic that there's some kind of resolution in the Middle East. Are they overlooking the worries about inflation?
Yeah. So first of all, welcome. Happy to be here. Like, I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, it's Ukraine, Russia's still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation. Today's print wasn't so good. So, yeah, I think the market's kind of exuberant, and it may not be completely justified.
So why are they so exuberant? If they're exuberant, are you expecting a correction? And is it because they're looking at AI?
No, I don't think it's AI. I think corporate profits are doing very well. AI will be a plus. So this year it's just a lot more spending, which may be a little inflationary, too. But it's more corporate profits. We're doing a little bit more QE. Government's still spending a lot of money. The one big beautiful bill is kicking in. Stimulus offsetting a lot of the gas. I think the gas increase, $1 of gas is $100 million. The one big beautiful bill is $100 billion that consumers pay. The one big beautiful bill is $300 billion. Deregulation is real. There are these things which are causing a pretty good market right now.
But when you talk about exuberance, it means that there's a market dislocation. Where do you see that?
The stock market's in the top 10-15%. Credit spreads are very low. The general assumption that these things are all going to resolve. And I'm kind of a skeptic. I don't know. I hope they do, but I don't know that they will.
Okay, what do chief executives worry about in private that they tell you that they won't tell us?
Not much.
Really?
Trade, America, NATO, the wars, oil prices. I mean, the same stuff you hear about all the time.
But CapEx, I know, we had a great earnings season.
Yeah.
Is the next one going to be less good?
I don't know yet. It's very hard to tell. I think the deficit spending drives a lot of corporate earnings too. Yeah. So and drives a lot of CapEx. And will CapEx create productivity before it creates inflation? I don't know that. I think one of the risks is inflation. I've always thought that. And so.
But also, how do you think of oil, and how do you think about what's happening in the Middle East? If this lasts 3 weeks, 4 weeks, even like 2 months, are we going to be in trouble?
It's a big deal, and every day it gets a little bit worse. I don't know how it's going to be resolved. I hope it gets resolved in the interest of the United States and against the Iranian regime, not the Iranian people. But I don't know. But I read something today that was very interesting, that China reduced their demand by 5 million barrels a day. America increased its exports by 3 million barrels a day. That 8 million has made up for a lot of what was lost, and which is maybe why it hasn't been as severe as people think. On the other hand, inventories are coming down. Gas wells may have to be closed and stuff like that. So it gets a little more serious every day. That day that it becomes a disaster has been pushed out quite further than we thought at the beginning.
Do you worry about the U.S. consumer? Are you seeing signs of stress anywhere?
No, I think the upper end, the top 50%, lots of money, jobs, wages going up, home prices going up, stock prices going up. They're spending like they should. Like they're buying, they're traveling. The bottom 30% is, I'm going to say, it's struggling a little bit. It's not a massive downturn, and of course we'd like to help them, but their wages have not gone up. But more important than that, they still have jobs, and they don't have too much debt. They still have jobs, and that, at the end of the day, what's going to drive consumer spending, consumer sentiment, that part of corporate profits will be jobs.
What do you worry about? I know there's also the president is meeting with President Xi tomorrow in Beijing. I mean, does that have implications for the trajectory of America?
Look, I don't know, but I would suspect they'll come up with that'll be a friendly meeting with some positives from both sides. I don't think China's going to give in to any major demands. I don't think we're going to make major demands. We both have a lot of common interests. Anti-terrorism, anti-nuclear proliferation. China is feeling its oats. They have to deal with President Trump. So we'll see how it turns out.
You had an amazing trading, results. The trading was amazing in the last quarter. How's it going now?
Well, I can't comment on that. But, from the last time Troy spoke publicly, it was fine so far, but I can't give you other information than that. So,
give me a sense.
When you guys can see every day, volumes
are high.
And when volumes are high, all things being equal, it will be good for trading.
But you're part of it. I mean, you think it's going okay because it depends on the kind of trading that you put, right?
You
benefit.
Trading is going to be very good.
Talk to me about AI.
Yeah.
So I don't know whether you've also played around with Mythos. What did you see?
So AI, big picture, AI is going to cure cancers and reduce work weeks, and kids will live longer, and planes will be safer, and cars will be safer, and less people die, and you'll have new drugs. It's going to be good. We've been using it now for 13 years. It does an amazing job in various different things. So we're going to deploy it to help our customers. There are two attributes that people worry about. One is Mythos. It's legitimate that this is so powerful and covers a lot of vulnerabilities, and we're all trying to figure out how to deal with it, not just for ourselves, but with all of our friends, big banks, small banks, telecom. The government's on top of it. But a lot of the work's got to be done by enterprise. They don't have the ability to do a lot of that. So I think Scott Bessett's running it for banks, and I assume they've done it for other people elsewhere. So we're all getting our hands around it. It is risky. Everyone, and we actually publish, and people should look at this, like a list of what you can do now. Don't wait to get Mythos, because everyone's going to get it at one point, but you can't give it to everyone. If they can't handle it, or if it gets leaked out, it can be used by bad guys before we've protected open source code and all our code. And so we need a little work to do to get it done right. And the other one is this job disruption where, that may be true. We should get prepared for it. We should be breathless, and that to me is how do you create skills and reskilling, there will be a lot of jobs. And AI, cyber, advanced manufacturing, the trades, and then we should make sure locally, and this is like maybe between government and business kind of collaboration, that we are prepared if it happens too much. Stop talking about it. Have a plan.
But my thoughts, what does it change the way that banks have to defend themselves? Are you thinking about cybersecurity differently?
No cyber. No, banks have always been on top of the heat in terms of cybersecurity. I wrote about in my chairman's letter, cyber is our biggest risk, made worse by AI, and that was before Mythos. So this does make it more dangerous. That's why banks are really working this thing right now. And all of us, and together. We're collaborating. We're not like arguing with each other.
What does that mean? What does that actually look like concretely in 5-6 months?
Yeah. We're all going through all our own applications. With Mythos, patching them up. We're all going through open source code. A lot of flaws in open source code. We don't need to all fix the same open source code. If you fix one, I can fix the other. Collaboration. Trying to think of how to form utilities to help third parties. Going to our critical vendors, including we're hooked into exchanges around the world, making sure they're doing it properly. And there are other things like how do you, a patch used to be posted publicly, and you go patch. Fix that patch. Now you have to be able to fix the patch in hours. And some you can't make public. When you make it public, the bad guys will get it, reverse engineer it, and get through. So we're doing all that stuff. It's serious work. I think hundreds of people doing it full time now.
Look, hyperscalers and also funding of hyperscalers is really propping up the economy. Do you have any worries about getting that money back, or some of the funding of what's being constructed?
The way I look at it is that AI is real. A lot of money is going to go into it. That doesn't mean everyone who does it is going to be a winner. Go back to the internet. A lot of people lost. A lot of people won. And so, and the hyperscalers, will those data centers not find use? They probably will. But is it possible that some do it badly, design it badly, didn't get the right? Yeah, of course it's possible. Yeah.
Does AI change the way you recruit, the way you hire, and the way you work?
I think it's going to change almost everything. And I've done my own stuff in getting reports in the morning. I have a Jamie strategic intelligence report. It's getting better. So I could say, what did Francine say yesterday? And every morning at 5 a.m. it'll tell me what you had on your people that might be significant to me. And then you can keep on educating it. That's not important. This is important. What's significant? So, yeah, we're all going to use it in different ways, but we will use it. It won't change my day-to-day. It will inside the company because we're deploying it, in 1,000 different use cases today.
You're much better off just watching Bloomberg. Talk to me about the UK. So there's a lot of, the markets are on tenterhooks to know whether the Prime Minister survives. We don't exactly know what comes next. The markets are nervous. What does it mean for JP Morgan in London?
Well, look, we've had ups and downs in markets and ups and down politicians, so it's not going to change our fundamental strategy. I would say that Europe, including the UK, know what to do, and it's the Draghi report. There are 300 items in there about common capital markets, common regulations, allowing cross-border in the EU competition. There's huge regulatory, not tariff, but regulatory burdens. They need to do the same thing in the UK. I think Keir Starmer's a very smart guy. Politics is really tough. They're in a bind because of debts and deficits, and they inherited a lot of that. I think the world of Rachel Reeves, and they got to be tough. They got to say, we're going to do these things. In the short term, may not be great, but governments have to get the stuff done right that grows the economy and militarily. And I think they need to work close with Europe. And if you remember, Keir Starmer and President Macron, they were going to work closer. Not reversing Brexit, but military alliances, intelligence alliances, making sure the economies have economic relations which are good for both the continent and good for Europe, good for the UK.
You're building a big mega project in Canary Wharf that everyone is quite excited about. Does this potential political instability actually change your view on everything, or do you see costs going up? Are you worried about taxation?
Not political instability, but if they become hostile to banks again, yes. I mean, I've always objected to the fact, we didn't damage the UK in any way. We paid probably $10 billion of extra taxes by now. I don't think that's right or fair. If that happens too much, we will reconsider. Yeah.
Look, I know you've also looked a lot at Europe and funding, and especially when it comes to security. I mean, how much time are you spending making sure that defense companies, that companies in Europe have enough funding from JP Morgan to make sure that they can, I guess, defend the country?
So we have this huge effort we're going to deploy over the years $1.5 trillion to help. And it's not just it's resiliency, so it's even medicines and rare earths, which would be defense, semiconductors, defense, but it's anything that you need. So Europe needs LNG. So we look at that as resiliency for Europe, not LNG in America, but shipping here is resiliency. So we have professionals doing it. We've got an unbelievable advisory group. We've dedicated 30, 40 people. We're doing research now, which you might be interested in, across the shipbuilding ecosystem, across the active pharmaceutical system, the rare earth system, and then having public policy, which puts us in a better position. The democratic world should never have gotten here where we're so reliant on other people, potential adversaries for rare earths. And we did. So don't cry over spilled milk, but let's fix it. And we got to fix it right away.
And this is good for the U.S. Does the U.S. need stronger allies?
This is good for the U.S., and I think having strong allies is good for the U.S. So my view is we need a stronger NATO. They're doing that, by the way. So, our president pushed them a lot. Well, they're all doing it, which is a good thing. But we want to keep it together. The goal of it should be to have a stronger NATO, not a weaker NATO. The goal, in my view, if you ask me what the goal should be of our economic relations with Europe, should be having a stronger Europe to get you to help you do the Draghi report. And I wrote my chairman's letter, maybe a pipe dream, that if you did the Draghi report, I would give you one big, beautiful free trade bill. That's what I would do. And, and then fix them. There are some stupid trade issues, and fix them. But both the economies would go better. If they grew better, it'd be good for all the citizens, not just good for the big companies. And I think those two things are pillars of keeping the world safe and free for democracy. So they're not a minor thing. They're a major thing if you look at over 20 or 30 years.
So, Jimmy, today, how would you fix the Middle East?
That I do not know. When I hear a lot of politicians say there was no imminent threat from Iran, I'm like, that immediately gets my back up, because a threat is when I'm threatening to do something to you. They've been raping, killing, and murdering for 47 years. Why the Western world allowed proxy wars? I mean, we've learned a lesson that we should have gone years ago up the head of the snake. We should have killed the head of the snake, And so now you have more risk, but maybe more opportunity, because people want peace in the Middle East. We have this. It's a terrible situation. I don't know the outcome. I hope there's a plan C or a plan B. I want us to prevail in the way that makes sense. I don't know what the right thing to do was, but I'm not going to sit here and say they weren't a threat and we should have done nothing.
But today, does the Strait of Hormuz need to reopen almost at any cost?
It will eventually be reopened. I don't know. I don't know. You're talking about the military's been planning for things like this for 40 years. They have plans. I don't know what those plans are. And I hope it works. I just don't know.
I mean, what is the one thing you wish you knew now? There's a lot of uncertainty in the world, right? Geopolitics, markets. If you could know one thing for certain from the president, what would it be?
Well, I don't know about that. I just want to. I just roll up my sleeves and try to make it better than it was. So I don't guess for about one good thing or something like that.
Complex. This is so noisy. It's like speaking to you at a Mets game, or it's like it's quite fun.
You're doing a good job, though.
You too, Jamie Dimon. Thank you so much for joining us today. That was, of course, the Chief Executive Officer of J.P. Morgan. I'm going to send it back to you in New York with that, Matt, and we'll have plenty more throughout the day here in Paris.
All right, Francine, excellent interview, really fantastic. Francine Lacroix there with J.P. Morgan CEO Jamie Dimon at the J.P. Morgan Global Markets Conference in Paris. Let's discuss with Bloomberg's chief Wall Street correspondent, Sridhar Natarajan. He joins us here on set. And, I thought it was interesting the way he kicked off straight out of the gates. He said this market is too exuberant. I guess we have come pretty far pretty fast.
Yeah, he did talk about irrationally exuberant markets. But more interesting is when you listen to the entirety of Dimon's comments, there is this constant push and pull where he's bullish on a lot of things. He's still confident that the underlying consumer economy is good, that the banking business is kicking on all gears and is doing great. At the same time, the Middle East situation is worrying. You have to worry about some of the other geopolitical threats that are hanging out there. So that was traditional, typical Dimon, but it seems with a more heightened note on all of these concerns and promises ahead. He still continues to be extremely bullish on AI as well. And so it will be interesting to see which way the market turns.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
From ABC News, I'm Brian Clark. Consumer prices were 3.8% higher in April compared to a year ago, and ABC's Elizabeth Schulte says that is a fast pace reflected in the Consumer Price Index.
This inflation report shows that prices are going up overall at the fastest pace now in 3 years. That 3.8% inflation rate, a lot of that driven by the spike in gas and energy that we've seen since the start of the Iran war. So that rate, that 3.8% rate, we have not seen inflation been going up at this pace since May of 2023.
And President Trump has discussed temporarily lifting the gas tax to give consumers relief, but that would require approval from Congress. And Democratic Senator Elizabeth Warren says
Republicans could help a lot on the cost of gas if they would just vote to use the War Powers Act to rein Donald Trump in.
Cost of the war has increased, according to the acting Pentagon comptroller, Jules Hurst III, who says it's now $29 billion.
That's because of updated repair and replacement of equipment costs, and also just general operational costs to keep people in theater.
And that figure does not include rebuilding bases that were damaged by Iranian attacks. The war in Iran will be a key topic for President Trump when he meets in Beijing with China's Xi Jinping. He departs later today. The World Health Organization's Director General says all 11 confirmed hantavirus cases were from passengers and crew who were on board the Dutch cruise ship. As the Americans who left that ship in the Canary Islands were flown to Nebraska, 15 are now in quarantine, including Jake Rosmarin, who tells ABC he's going to stay for over a month.
My plan right now is to stay for the 42 days. I think that is the best decision that's for me and for my family, and I know that here I'm in the best care possible.
One person with a positive case in Nebraska is in a biocontainment unit, so is another at a hospital in Georgia. You're listening to ABC News. President Trump appears to have spent the night posting online about his perceived enemies, says ABC's Rachel Scott at the White House.
The president posting or reposting on social media more than 50 times by our count, and nearly all of these posts focused on false claims or conspiracy theories. The president at one point responding to someone calling on the DOJ to make more arrests, just as he reshared a post with an unfounded conspiracy theory calling on former President Barack Obama to be arrested. Other posts attacked his perceived political enemies, including Hillary Clinton and James Comey.
The Webb County, Texas medical examiner says it's identified 5 of the 6 people who were found dead inside of a rail car, and ABC's Jim Ryan says that investigation has expanded after a 7th body was discovered.
6 people thought to be undocumented immigrants were found dead Sunday in a rail car in Laredo. 150 miles away, the body of a man was discovered alongside a railroad track in San Antonio Monday. And Sheriff Javier Salazar says there's a connection.
Our belief at this point is that it was most likely smugglers, coyotes that opened it from the outside, discovered this body, and dumped it out.
They then closed the rail car again, leaving the 6 other migrants to die inside. Jim Ryan, ABC News, Dallas.
Prosecutors in Florida want all of Tiger Woods' prescription medication records from the beginning of the year through March, when he was arrested on suspicion of DUI. His lawyer says he has a right to privacy. That is being discussed in a hearing today in South Florida. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're also streaming live on Bloomberg.com. Check us out there. Coming up, this is the Bloomberg Intelligence Program with Scarlett Fu and Paul Sweeney. Wendy Benjaminson, Bloomberg Senior News Editor. We'll get the latest reporting coming out of the Mideast. Shelby McFadden, Portfolio Manager at Motley Fool Asset Management, to get her thoughts on the markets. Woo Jin Ho, Bloomberg Intelligence Senior Hardware and Networking Analyst, talks about AI's data center economy is crowding out software and IT services, so maybe some potential losers in an otherwise winning AI trade. Ken Weinstein, Japan Chair at the Hudson Institute, on Secretary Besant's unprecedented grasp on Japan top policy, tests Premier Takahashi in Japan. So we'll see how that goes over there in Japan as the president leaves today for his trip in China with a meeting for Xi Jinping. So we'll have reporting on that as well. Right now, let's kick this whole thing off with Alexis Christopherson of Bloomberg Business Flash.
All right, thanks, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. A hot inflation report for the month of April is helping to hold stocks back this morning. Inflation at the consumer level rose 3.8% compared to a year ago. That's the fastest pace in 3 years. We've got the S&P 500 down about 38 points right now, led lower by industrials and financials. The Dow Jones Industrial Average down 252 points, being led lower by shares of Caterpillar, Boeing, and Goldman Sachs. And those red-hot tech stocks taking a bit of a breather today, and that's pushing the NASDAQ down 212 points. We've got Brent crude up 3.5% at 107.83 a barrel. West Texas Intermediate up more than 3.5% at 101.59 the barrel. And the Bloomberg Dollar Spot Index up nearly 0.4% at 1193.74. In stock news, shares of Under Armour sinking nearly 18% after its guidance for this year missed Wall Street projections. It's also being weighed down by that partnership with NBA star Steph Curry coming to an end. It's also taking a financial hit, it says, from the war with Iran. But shares of Aramark are up more than 8% after the food services provider gave a rosy outlook after signing a multi-year agreement with a top global hyperscaler. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney here with you this morning in the Bloomberg Interactive Broker Studio in New York, streaming live on YouTube as well. Market Drivers today is brought to you by Eisner Amper. Most advisors tell you what happened. Eisner Amper tells you what to do about it. assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com, as Alexis was just reporting. We got some selling across the board here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
We have to talk about GameStop. There has been a lot going on. Latest we see is eBay is actually rejecting this $56 billion offer that has gotten so much attention. They're describing the bid as neither credible nor attractive, which is a pretty harsh. GameStop fell a lot in earlier trading. Now we see they're erasing a lot of the losses. eBay was also down significantly. Now they're down a little bit less than 1%. So some of the initial reaction are fading. Perhaps investors are figuring out what exactly is happening. eBay's board turned down the offer, and they're citing uncertainty around the financial plan. We've been talking a lot about the math behind this offer. It's been very confusing. It's raised a lot of questions. But eBay said it plans to borrow $20 billion to help finance the acquisition. It's interesting because GameStop's market value is about $10 billion, so it's a bit confusing. Nevertheless, maybe this will set a potential proxy fight. So it's an interesting thing to watch, but investors are a little bit confused about what's going on.
There were some reports that Ryan Cohen just wants to get the share price up, so this is a way of doing that, right?
Yes, because I think it has to hit 100 billion and then he gets a
payout of some sort.
So perhaps there is something there.
All right, let's talk about your second stock.
Under Armour, pretty rough day today. The company fell as much as 20% in early and trading. The ticker is UAA. It's all about forecasts and guidance. Their forecast for sales and profit for the fiscal year trailed to what analysts were expecting. Nevertheless, we're seeing a really, really harsh reaction. The company was headed for a somewhat good year. It was up double digits. Now it's actually down on the year. They cited a financial hit from the conflict in the Middle East. They actually put a price tag of $35 million, so perhaps that's weighing. The guidance shows that Under Armour turnaround is a work in progress. We saw that partnership with Stephen Curry ending, so that's another hit on the company. But nevertheless, investors are not forgiving to this report, and we're seeing a really, really harsh reaction.
I guess the last one is the Baconator, Wendy's.
Wendy's, they're having a really good day. They jumped as much as 15%. We're seeing some of those gains faint a little bit, but now they're up double digits. The ticker, of course, is WEN. We've been talking about the Nelson Peltz takeover. We're getting some reporting by the Financial Times that he's seeking investor backing. It seems like some of that financing will come from Middle East investors. That has been going for some time. His company already has a pretty big stake in Wendy's, but Wendy's has been struggling. They have obviously a massive network, 7,000 stores globally. But their reports have been lackluster. We've heard about issues with high beef costs, weak traffic. So interesting thing to watch, but we're seeing a very positive reaction from investors on the takeover bid.
You say Wendy's, I think Frosties.
Yep, absolutely.
All right, Denitsa, thank you so much. Denitsa Sakova is our cross-asset reporter here at Bloomberg News. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock markets. It's available on Apple Podcasts, Spotify, or anywhere you listen. The ceasefire is still in place, but it's pretty fragile, Paul. I don't know if it's going to last, but it's going to last through the end of this week because the president has his mind on other things right now.
Yeah, as he's about to get on a plane for China.
All right. Before he left, he did say that the ceasefire with Iran is on massive life support. Let's bring in Wendy Benjaminson. She's our senior news editor joining us from D.C. Wendy, what has changed between yesterday and today when President Trump called the ceasefire something that's on massive life support?
Not too much has changed, except that he's getting on a plane this afternoon, as you said, to head to Beijing for those very, very important talks with Xi, where Iran will clearly be the elephant in the room throughout their meetings. We're just in this sort of, barely budging each side. So now Trump has said the ceasefire is on life support. The Iranians are sort of responded by saying, yeah, okay, we're here. We're ready for whatever you've got to dole out. And they're just sort of at a standoff right now. There's just, Trump will have to decide if it's politically worth it to him to start bombing Iran again, because we just got this inflation report this morning that domestic inflation is up 3.8%, which is a huge number. And we've got primaries going on for the congressional elections later this year. And, him starting the war up again just may not be something he wants to do. On the other hand, if he doesn't get the Strait of Hormuz opened or some win on Iran's nuclear program, then, it's not going to be good for him either.
So is there a sense that the domestic political cost to President Trump and the Republican Party are starting to weigh? Because, there was no scenario where this would be, or there are very few scenarios where a war with Iran would be good politics here. But I guess, as you mentioned, with inflation, is pressure starting to mount, do you think, from his political party?
Yes, I think it is. Whether it's enough for the Democrats to win is something, we're not really, it's hard to tell, because what's complicating all of what would be a very easy win for the Democrats right now is the redistricting fights that are going on. So as southern states, what's the word I'm looking for? Utilize the Supreme Court decision that weakens the Voting Rights Act and gets rid of majority-minority districts, that will hurt the Democrats in terms of just the map. But what Democrats have to be hopeful for is that what you said, Paul, the inflation and the war and other problems and things like that will make people vote not Republican. But in terms of Republicans on the Hill, for example, a lot of them are getting a little itchy about the $100 million request for the ballroom. They just think that combined with a 3.8% inflation report, combined with beef prices being high and gas being $4.50 a gallon as we're heading to Memorial Day and the summer travel season, some of them are thinking $100 million for a ballroom just doesn't look good.
Yeah, the optics are questionable for sure. So, Wendy, as the president and his team get on the plane to go to China to hold this long-awaited summit with Xi Jinping, what is the U.S. likely to press China on when it comes to Iran specifically?
Well, I think they're going to want China to stop helping Iran in the small ways it has been helping them. Because remember, China is Iran's biggest customer for their oil. They want China to put some pressure on Iran to give in to their demands. And I think he wants, some diplomatic effort on their side. China, for their part, might say, okay, what's in it for me? And look toward Taiwan, which would be a very difficult thing. It's not something most American voters are really going to vote on. However, it's been long-standing policy that the U.S. will defend Taiwan if China ever decides to try to take it back. And the Chinese might try to strike a deal with Trump over that as leverage for getting them to help him end the Iran war. We don't know that that's going to happen, but it seems like it kind of makes some sense. He's also dragging a slew of CEOs with him from tech companies and other and Boeing. They're hoping to make their first deal with China. So he may come out with a lot of investment deals, or at least the beginnings of talks of investment deals that would, let him come away with a win.
Wendy, thanks so much for joining us. Always appreciate your reporting. Wendy Benjaminson, senior editor, Bloomberg News, down there in Washington, D.C. So again, it just feels like the what's happening with Iran might get a little bit of the back burner treatment from this administration right now, as the president, is sets to embark on a very important trip over to Germany.
Yeah, although the U.S. has lost some leverage here in dealing with China when it comes to what's been going on in Iran. And the president has certainly put the ball in China's court when it comes to, playing a bigger role in opening up the Strait of Hormuz. For the U.S., the Strait of Hormuz feels less dire and existential than it does for the rest of the world.
Absolutely. Red headline crossing the Bloomberg terminal, particularly relevant for our New York residents. Mamdani scraps planned New York City property tax hike in revised budget.
Which New York City property tax hike? This is not the second
I don't know if it's
house.
That's what I thought it was. That's what I think.
Okay, because that was a New York budget issue, right?
Yeah, this is a New York City property tax hike. So we'll get some more reporting on that coming up. In the moment, you got the S&P 500 down 33 points, the Dow minus 275, and the NASDAQ down 180 points. Coming up, Shelby McFadden, portfolio manager, Motley Fool Asset Management, coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:21 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers Studio. Inflation soared to 3.8% in April, driven by gas prices due to the war with Iran. The increase in the consumer price index was the highest in 3 years. Here's how that's playing out on Wall Street. The S&P 500 down about 34 points, coming off its record high close from yesterday. Dow Jones Industrial Average tumbling more than 300 points, or 0.6%, led lower by shares of Caterpillar and Boeing. NASDAQ Composite also coming down from its record high, off now about 167 points. We do have Brent crude, though, up about 3.5% at around $108 a barrel. West Texas Intermediate up 3.5% at 101.60 the barrel. The Bloomberg Dollar Spot Index up 0.3% at 1193.54, and spot gold down 1% at 46.88 the ounce. eBay is saying no way to GameStop's $56 billion unsolicited takeover offer, calling it neither credible nor attractive. The rejection potentially sets up a proxy fight to replace eBay's board. There's been speculation about the seriousness of GameStop's offer, since its market value is less than a fourth the value of eBay. And shares of Hims and Hers down 11% after the telehealth company reported a first quarter loss and sales that missed Wall Street estimates. That's due to higher costs tied to the company moving away from making those copycat versions of weight loss medications. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. What we're seeing, is a re-techification, if you will, of the market here. We had that rotation late last year into some non-tech areas and some lower multiple stocks, some small and mid-cap sectors. That's kind of getting reversed back, it seems like, into big tech. Shelby McFadden, she's a portfolio manager, Motley Fool Asset Management down here in Alexandria, Virginia. Shelby, it seems like, the market's going back to the tried and true. Let's just buy these big tech names, and maybe that's because that's where the earnings growth is. How do you think about that?
I would absolutely agree with that. I looked at something recently that said that I think it's about 34% of much of the earnings growth for the S&P 500 is concentrated in about 10 names. So when you think of that being the reality, it's extremely attractive for people to want to gravitate towards that. And not just that, it's not only a sort of momentum play here that's grounded in nothingness. There seems to be this tangible secular tailwind for things like AI and everything that's sort of AI powered. And so the attractiveness after investors have tried to play with more breadth. When you're searching for these high single digit returns, they really are concentrated in one place right now.
They're concentrated in one place, and it's certainly the tech stocks. If you look at the S&P 500 on an 11-sector basis, energy outpaces tech 27% to 16%. Sure. But you break down tech into its constituents, and among 24 industry groups, chip makers up 39% this year, energy stocks up 27%, tech hardware up 20%. It feels like the equity market has just basically stopped caring about Iran. What does that mean, that willingness to overlook what's happening in the Middle East, mean for those energy companies?
It is really interesting. It's a phenomenon that I'm so glad you've pointed out, because a lot of us on our team have just said, I guess this just doesn't matter. And we all know that it does, right? The fact that energy is pacing so well reminds us how much it really does matter. So to me, it seems as though they're looking at tech and saying, well, this has to go on no matter what. This is part of the supply and demand problem. People want to be involved in the equity markets. They want to be risk on because other assets aren't necessarily providing the risk return profile that they're interested in. So cash is sort of long gone out of that fight. And then you have the other side for energy, which is more of a sort of trading opportunity. So if you're looking for a medium to long-term investing, tech seems to be the play. Energy, on the other hand, quite a bit more volatile, even though we know tech has shown us some volatility. So it seems to be that people are saying, we have no other option. We're going to just lock in, we're going to be on board, and we're going to wait for something, frankly, that we can't predict. We don't know what the catastrophe would look like for this to blow up, but that seems to be what the market is saying. Until you show me complete destruction, I'm going to assume that tech can survive this. That's my take on it.
Shelby, we just finished up really with the meat and potatoes of the earnings season here. What's your takeaway, and our earnings that we are seeing, are they enough to support this market at this level?
I would say probably at the aggregate level, sure, right? Like for the short term, maybe 6 to 12 months. But the other issue is going to be, when does the sort of bifurcation of the macroeconomy, that sort of K-shaped recovery that we've seen at different income levels, start to impact the rest of the broad market? So how long can basically fabrication sites and data centers continue to carry the economy? Well, part of that also depends on these projects getting finished. These projects getting finished, unfortunately, tends to also depend on things like funds being released from the administration to complete these projects and energy prices. It's hard to get a lookout on that, so that's why I say probably maybe 6 to 12 months. Could be wrong, but when I think of the sort of first and second derivatives that are related to this continuing to go, construction and infrastructure are really big parts of that. So wanting to watch that and knowing that things are a little bit dicey in the macro right now says short to medium term, we could continue to hold these levels.
Nevertheless, investors continue to look ahead to things that they think will continue to get support regardless of the macro and geopolitical conditions. And that includes new listings. Cerberus, of course, the latest company that is getting ready to go public. And that's kind of just the precursor to the big ones later on this year, SpaceX, OpenAI, and Anthropic. How are you thinking about investors making room in their portfolios for some of these companies?
Yeah, I think the general thought right now is that there'll probably be some reallocation sort of on the margins. I don't expect there to be these massive swings like away from the hyperscalers and directly into the generative AI companies. But I do think that we have to leave room for the fact that these IPOs are anticipated. In many ways, investors feel as though they know a lot more about these companies than some of the other recent IPOs that we've seen. So we have to leave space for the fact that these aren't sort of your typical, roadshow gathering capital. These are highly anticipated. And so that could change the sort of behavior that we see on prices in the first sort of 60 to 90 days. Nonetheless, they are still new listings. So we will have to sort of wait and see how they shake out. But I do think it has the potential to sort of change the way that the market reacts. And I also think it's just a demonstration, again, supply and demand. These companies want to grow. They need to grow. They need extra financing, and they've realized there's another place to get it. You don't just go public for fun. It's a massive burden. So you have to believe that the burden of having shareholders can be sufficiently overcome by the growth that their equity can provide. So I think the market is more than happy to see these come online, but performance over the long term, TBD.
Yeah, makes a lot of sense. I like the way you put that. Shelby, always a pleasure speaking with you. Shelby McFadden is portfolio manager over at Motley Fool Asset Management. And we talked about tech and how investors are content to let tech continue to ride as long as there's no evidence of complete destruction when it comes to geopolitical matters. Let's talk about tech a little bit more with Woo-Jin Ho. He's our senior tech analyst joining us from Princeton right now. And Woo-Jin, you and your colleagues have written a report about how the data center economy that rush to build out the infrastructure is crowding out spending on things like software and IT services. So that just creates, a list of winners, maybe a small list of winners and a long list of losers, potentially.
Well, I wouldn't think it's a long list of losers or a small list of winners. I think it's a broad list of winners. If you think about the whole data center ecosystems, we think about the mega cap names like Meta, Google, Microsoft, and Amazon. But then there's this whole ecosystem of smaller companies like an Arista and a Ciena and optical names and the energy names that's been lifted up by all of the spend.
So is there a crowding out aspect here? And if so, who's being crowded out?
Yeah, and that's a good point, Paul. It is going to be the companies with the next generation technologies that are going to capture the bulk of that spend. I would say that some of the companies that have not caught up with the next generation technologies, or the legacy companies, for example, HPE, they really haven't captured the tailwind of that type of spend. Even Cisco, for that matter, they're slowly getting involved, but the bulk of their revenue is still part of the enterprise spending landscape.
Is that something that they can make up for in due time, or the longer they wait, the longer they're kind of left behind, the harder it is to make up that lost ground?
And I'll tell you, Scarlett, for instance, Cisco, they've actually pivoted pretty well a couple of years back in the optical space, and optics have been one of the big winners in the AI spending boom. But however, given the size of Cisco, AI is only going to account for roughly about 5% of total revenues, all right? And it's really not going to be that big momentum boost as one may think. HPE, however, I do think that they are trying to balance profitability and growth, and given the low profitability of AI servers, they seem to feel content to be left out for this round.
We saw a sell-off in some selected software sectors earlier, particularly the software as a service sectors. How's, as you talk to your tech clients out there, how is that thinking evolving? Was that overdone? Are we trying to be a little bit smarter about picking winners and losers there?
Well, the joke running around the investment community is terminal value zero.
Okay.
As software, yeah, that's problematic. Well, there's a couple of things. AI is disrupting traditional software models, right? If we're thinking about subscription models, it's user-based. As we go into agentic AI, now we're talking about the AI displacing or replacing the human user subscription. And these models have to be rebuilt. Now, Paul, if we recall back in the early 2000s, when we went from perpetual to subscriptions, there were winners and losers there. Those who were not able to make that transition from perpetual to subscription revenues, they lost out. But in making that transition, it took about 3 to 4 years before things started to pan out. And we may see something similar as some of these traditional companies like Salesforce.com try to migrate over to these agentic models and their licensing scheme to help to these AI platforms.
All right, Wooj, thanks so much. Appreciate it. As always, Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence, located down there in our beautiful Princeton, New Jersey campus, which is a very cool solar panel farm.
I just wanted to give an update on what we were discussing earlier. Zohran Mamdani scrapping that planned New York City property tax hike in the budget plan. This was a overall plan to raise New Yorkers' property taxes, and it was more of a threat to raise property taxes by almost 10% as a way to lobby Governor Hochul of New York to give more funding to the city. So he's backtracked on that. It doesn't appear to have anything to do with the expensive second home pied-à-terre tax that is now being considered in the New York State budget negotiations.
Okay.
So for those who are affected, that's the latest here. Yeah, there's a lot going on.
Yeah, a lot of taxes, but that's New York City. And
you nailed it.
We're kind of used to that around here. So S&P down 55 points. That's 0.75%. The NASDAQ down 310 points. That's 1.2%. Oil higher. WTI crude oil up $3.90, just under $102 per barrel. Ouch.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Brokers studio. A hot inflation report for the month of April is pulling the S&P 500 and NASDAQ down from their recent record highs. Inflation at the consumer level rose 3.8% compared to a year ago, the fastest pace in 3 years. And that has Wall Street betting on rate hikes from the Fed in the not-too-distant future. The S&P 500 down 47 points, now at 73.65. Dow Jones Industrial Average at its lows of the morning, down about 290 points. And the NASDAQ Composite is slipping 256 points. We've got the Russell 2000 down by 49. Brent crude up 3.5% at 107.78 a barrel. West Texas Intermediate up nearly 4% at 101.85 the barrel. And the Bloomberg Dollar Spot Index is up 0.3% at 1193.57. We've got shares of Wendy's racing ahead this morning, sizzling up 15% on a report that Tryon Fund Management is seeking investor backing for a bid to take Wendy's private. Amazon has kicked off the sale of its first Swiss franc bonds across a record 6 tranches to raise money to help fund its $200 billion spend this year on data centers. And we've got Waymo recalling thousands of robo-taxis to fix a software issue that could cause the autonomous vehicles to drive on flooded roadways. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Paul and Scarlett.
Thank you so much, Alexis. We are looking at a dollar that is stronger versus the yen right now. You have dollar yen at about 157.61. And if you look at the yen over the last couple of years, it's been a story of weakness where Japan is under considerable pressure, at least from the U.S., to do something about its currency. I want to bring in now Ken Weinstein. He is Japan chair over at the Hudson Institute. And Ken, we asked you to come in today because Scott Bessent, the Treasury Secretary, stopped in Japan on his way to China. And he spoke with the finance minister there about exchange rates, the U.S. dollar, Japanese yen exchange rate, and basically confirmed that they're on the same page in viewing excessive moves as undesirable. There's been a lot of talk about Japanese intervention in the currency markets. What do investors need to understand about Bessent's take on Japan's economy and on Japan's exchange rate?
Yeah, I'm delighted to be here. Look, Scott Bessent is one of the most astute observers of Japan, certainly the most astute observer of Japan we've ever had as Secretary of the Treasury. This was his 54th visit to Japan. This is a man who has lived in Japan for months at a time. This is a man who understands Japan, understands how its economy operates, how its central bank operates. He goes back a long ways with a lot of Japanese officials, but also knows the governor of the central bank, Governor Ueda, from when Ueda was a professor in the United States. There is a long history. He has a very subtle understanding of both the political, financial pressures involved, and Japan is in a difficult situation. I think that the weakness of the yen is creating great pressure domestically, particularly on the energy side, with the massive rise in oil prices because of the Iran war. It is massive pressure on Japan. It's a pressure on consumers. It's a pressure on industry, and he certainly wants to avoid excessive volatility, as he mentioned yesterday, in where the yen is. Mm-hmm. But he also, I think, he understands that at some point the Bank of Japan is going to need to raise interest rates in order to battle inflation in Japan. So Japan is in a difficult situation. Yeah. And Bessent is trying to do what he can to signal understanding to Japan, certainly to help avoid excessive volatility. But it's a challenging position for the Japanese as well.
Do we know what influence the Japanese have over this administration? Because as you mentioned, they are facing a lot of pressure from a lot of areas, particularly from the war and the energy prices. Do we know what kind of influence they have?
Look, I'd say this. I think of all of our allies, Japan is arguably, among the Western allies, the most important economically to the United States. Japan has pledged to invest $550 billion in this investment fund. The relationship between the president and Prime Minister Takaichi is extraordinarily strong. It is warm. And so I think there's deep mutual understanding. Certainly, but with the Japanese, like the rest of our allies, were not tipped off in advance of the attacks on Iran, and so so the question, and I think the Japanese they have also had historically strong ties to Iran. There's some speculation the Iranians, the Japanese might be able to play some role as a kind of mediator in the war. I haven't seen steps on that. There also is deep concern in Japan with the president's trip to China at a time of tensions between Japan and China, that the U.S. may somehow make concessions against Japanese national interests. I think that is extraordinarily unlikely. The president understands the importance of the U.S.-Japan alliance. It was the major priority for his foreign policy in the first term. It's a significant priority now.
You were nominated by President Trump in March 2020 to be ambassador to Japan. What is the state of the relationship between the U.S. and Japan now in 2026, especially as the president looks for allies in the region, not to team up against China, but to certainly as an offset to China's rising power in the region? Look,
Japan has taken some extraordinary steps since 2020, since I was nominated to be ambassador. They've reached their goal of 2% of GDP spending on defense. They are now becoming a global defense exporter. They're going to later this year. They're going to come out with their 3 major strategic doctrines, and Japan, and in which Japan will will present its positive contribution to security, proactive contribution to security, which is how Prime Minister Takaichi likes to talk about it. That security is critical, and that Japan is moving from being dependent on the United States to becoming a security provider in the region. Japan has become a defense exporter. They've just signed a big deal with Australia to sell frigates. They're sending defense equipment to the Philippines and elsewhere. So Japan is now acting very much like a much more normal nation. They're looking also at constitutional reform to change the famous Article 9 of the Japanese Constitution, which the United States imposed on Japan after the war, which essentially the language it was not well phrased. It prevents Japan from having standing armies, which it obviously needs, and instead Japan talks about its self-defense forces. But that language, the Prime Minister has said she really wants to focus on constitutional reform in the next couple of years. It's a big priority for her. It would be a major step for Japan. And Japan is also deepening its ties to our allies. Japan is working with the Brits and the Italians on a 6th-generation global combat aircraft program, and has been deepening ties with nations in Europe, both on the defense side but also on the trade side. The Trans-Pacific Partnership, which Shinzo Abe kept in place after the United States stepped out, now includes Great Britain. There's increasing talk about the European Union and Japan cooperating more deeply on trade measures, and perhaps the EU, though it's unlikely the EU would join the Trans-Pacific Partnership, it could adopt many of the standards that in the CPTPP is global standards. So Japan is starting really to become a nation that thinks of itself as a major diplomatic player. It sees itself as a bridge to Europe, as a bridge to the developing world for the United States, but understands that the U.S.-Japan alliance is the sine qua non of anything that Japan does.
30 seconds left. What's the relationship between Japan and China?
It is complex.
I gave you 30 seconds.
Yeah, I know. Look, it's complex. My own sense is this, that the Chinese government sees what Japan is doing. Takaichi was not the person they wanted as prime minister. She is a defense hawk. She is close to Taiwan. She has reshaped the Japanese government. She removed Komeito, which was the 26-year partner of the Liberal Democratic Party. Komeito is a pacifist party with strong ties to China. She replaced them with the conservative populist Ishin Japan Restoration Party. That party shares Takaichi's view on defense. They're trying to put economic pressure on her. They criticized the statement she made in the Diet about a Taiwan contingency effectively being a national emergency for Japan. And they really went after her. They cut off seafood imports. They cut off tourism.
Right. Okay.
And she has been tough as nails, and it's only boosted her popularity.
Okay. All right, very good. We'll follow up on that. Ken Weinstein, Japan chair at the Hudson Institute, giving us an update on U.S.-Japanese relations as Secretary Bessent is in Japan as he makes his way to China. The president leaves for China today. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. President Trump leaving today for China. And I think the expectations are pretty low. I think trying to keep the expectations low, but hopefully he's got a plane full of CEOs with him too. So maybe they'll get some business deals done if nothing else. Henry,
I'm sure most of that was negotiated way in advance.
Yes, exactly. But I noticed that Jamie Dimon is not on the plane because he's in Paris now.
Nor is Jensen Huang of NVIDIA.
I saw that. That one got my attention. Henrietta Trez joins us here, Managing Partner and Director of Economic Policy at Veda Partners. She's down there in New Orleans, as they say. Henrietta, what are your expectations and the expectations of the people you talk to about this coming up summit with President Xi in China?
Hey, guys. My expectations are much like yours, pretty low. I think Secretary Bessent and Ambassador Greer have been planting that perception for not just weeks, but months now, even before the Iran war started. I would call attention, like your previous guest, to Secretary Bessent, who is the first time a Treasury Secretary is going to be leading a delegation like this since Hank Paulson during the Great Recession. For all of us who remember what that was like and the coordination that was needed around the globe. So I'm really expecting, if any gains are going to be made, and it's not just a maintenance of the status quo, I suspect it'll be on the soybean deal that he reached in 2025. I think that's going to be where the bulk of the focus is. And what I think is also important to note and dovetailing here is the election. And the fact that the president really needs to bolster farmers going into the midterm election cycle. There's been some back and forth on the beef tariffs just in the last 48 hours. You can see it. And the Senate Agriculture Committee is having a hearing on the price hikes to fertilizer, which are huge for farmers at 3 o'clock today. So that's an indication to me that we're really going to be concentrated on the soybean component here.
That's so interesting, linking what we're going to see the next 2 days with the upcoming midterm elections and, of course, the politics of it at home. Paul and I were talking about how Jensen Huang will not be part of the U.S. delegation to China. Clearly, he is still on very good terms with the White House because he attended the state dinner for King George earlier this month. And we know that there's been a lot of back and forth about the U.S. agreeing to allow shipments of NVIDIA's AI chips to China. That has been allowed, the H200 chips, but I don't know if China will allow its companies to buy those chips. What signal does Huang's absence on this visit send to Beijing?
I think it's really bolsters my argument that this is going to be more on agriculture, if there's going to be any gains. I'll layer on to focus on chips and also critical minerals and rare earths. We've reached an agreement on those components, and I expect that the goal here is really to reaffirm our commitment to honoring those prior commitments. And one of the things I'd also stress, just not to pivot away too much, but to stress how urgent the agriculture piece is. The farmers in the United States had a 46% increase in bankruptcies in 25. That's a direct result of the trade war launched with China in the president's first term. If you remember the phase 1 trade deal that USTR Lighthizer reached with Vice Mayor Liu He in the White House in February, I want to say, before the 2020 election, their focus was on soy. And it makes a lot of sense to keep the focus there because during the phase 1 deal, Lighthizer negotiated a deal that would get China to buy, per my calculations, about 142 million tons of soybeans over 2 years in that phase 1 deal. And to put it into perspective, the deal that Bessent reached last year was for 87 million over 4 years. So the farmers really are the story. The chips are what I think the coterie of CEOs and lead like Dina Powell for, focus on AI and focus on the arms race between the U.S. and China in terms of maintaining AI superiority. They're definitely there for that. But the core underpinning for the United States has got to be on the ag sector. And I think it is for Secretary Bessent specifically.
Henrietta, we got another inflation print today. CPI came in at 3.8%, up from 3.3% last month. If I'm at the Republican National Committee, I got to be getting really, really nervous as I think about midterms. What are you hearing from your contacts?
Yeah, so nervous that you're considering putting a gas tax holiday on the floor of the Senate, which is pretty something. If you went through the 2022 and post-pandemic era when gas prices were at relatively high rates up in the $4 range, there were proposals from a host of Democrats who have proposed them again to have a gas tax holiday, and Republicans to a man rejected the idea. Leader Thune, Josh Hawley, and a whole host of others. And you can see it in the lobbying community, in the tax community, people talking about how subsidizing when we really need to be dealing with demand destruction, given the structural problem of the Strait of Hormuz being closed, is not going to resolve this. An 18.4-cent holiday is not going to fix this problem. So I think that the shift you're seeing from President Trump saying, hey, I support this idea, suggests that Republicans are extraordinarily anxious, and they should be. Price of gas is exorbitant. Airline prices are up 20% year over year, and it's moving faster than wages. So they can't afford that narrative going into the election.
Do you expect any kind of fireworks from the ascension of Kevin Warsh to Fed chair by the end of this week? Any last minute curveballs?
I don't. Fingers crossed. I think we've had enough curveballs where the Federal Reserve is concerned, and I don't think they're used to curveballs in general. So I'm hopeful that everything is copacetic and fine and we move forward here. I think the obvious problem for Warsh is that you're not going to be in a position to cut interest rates with inflation spiking like this. The highest in 3 years, I think, right?
Yep. Yep. All right, we'll keep an eye on that. Henrietta, thanks so much for joining us. Henrietta Triz, Managing Partner and Director of Economic Policy at Veda Partners. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good morning. This is Bloomberg Intelligence on Bloomberg Radio with Paul Sweeney, Scarlett Fu, and Amy Morris in Washington, D.C. A lot happening on this Tuesday morning, including the president getting ready to leave for China for his long-awaited summit with Xi Jinping. All of that to come later on. So we're going to give you a lot of things to think about as we get ready for that big summit. Sid Phillip, he is our Bloomberg chief correspondent for global aviation, will be joining us because Boeing is betting on a comeback with China. Boeing will be part of the delegation that goes to China as well. We're going to check in with James Abate. He's managing director and head of fundamental strategies at Horizon Investments on this market. Today it's down, but so far this month, and you could say since March 30th, it has really looked past the Iran war to continue to bet on AI. Cecilia D'Anastasio is our video game reporter. Did you know we had a video game reporter?
I did not. That's cool.
That's a new one. Well, eBay has rejected GameStop's bid to take over the company as neither credible nor attractive.
Ooh.
She will join us to talk through some of that. And Gautam Mukunda, he's a lecturer at Yale School of Management. He's also a contributor to Bloomberg Opinion. Will talk to us about how AI models are not built for the Black Swan era, especially when you're talking about weather forecasting. And you could kind of extrapolate that to all kinds of other forecasts as well. So a lot to get over here to discuss in the second hour of Bloomberg Intelligence. Let's go now to Washington for a brief on where things stand in the markets. Amy.
All right. Thank you, Scarlett. Inflation continued to accelerate in April, up 3.8%. Bloomberg's Michael McKee.
If you want to look at what actually pushed it higher, I bet you won't be surprised to know that gasoline prices were up 5.4%. Electricity, though, also up 2.1%, a big rise there, so it may not help you to buy that electronic vehicle.
Bloomberg's Mike McKee. The core CPI, which excludes food and energy, increased 2.8% from a year ago, boosted in part by a statistical quirk in the report's measure of rents resulting from the 2025 government shutdown. The economy added more jobs than projected in April, with total non-farm payrolls rising by 115,000, well more than the 65,000 increase expected in a Bloomberg survey. The unemployment rate was unchanged at 4.3% in April, in line with Wall Street's estimates, making the case for a near-term rate cut more remote. We check the markets for you all day long here at Bloomberg. The S&P 500 is down 0.8%, NASDAQ down 1.3%, and the Dow down about 0.5%. The 10-year Treasury yield at 4.45%, the 2-year yield at 3.99%, and of course, oil WTI is up more than 4%, now at $102 a barrel, and Brent crude is up just about 4%, about 3.75%, now topping $108 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. We got to sell off on the marketplace here. Let's take a look at where some of the stocks on the move today are. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at today?
All right, Paul, we got to take a look at some of the biggest laggards in the market today, talking about Intel, ticker INTC. Those shares are extending their declines now, down more than 8% here. And that is because there's a lot of questions about this chip stock rally that seemed very unstoppable at one point. But then overnight, we lost a lot of value in those companies. Intel, of course, has added $440 billion to its market cap since the end of March. But as a result, it has a lot of short seller interest. So apparently, short interest as a percentage of the company's float is near a 52-week high. That's according to data from some analysts. And, you know, that makes sense because Intel is currently the most expensive chip stock. And so on a day like today, you know, you got to be watching out for some of those short sellers circling the market because they're also appear to be circling around Micron and AMD as well as the chip stock sell-off continues.
All right, so we will be watching Intel, but we've been watching Intel for a while now. What's second on your list?
All right, let's take a look at Qualcomm as well, Scarlett. Ticker QCOM. Those shares also really getting battered here, down more than 10% at the moment. You know, trading in a stock yesterday apparently rose to $10.8 billion. That is 267% of the 20-day average. So a lot of interest in the stock as well. Of course, we know that executives from Qualcomm are going to be part of that U.S. delegation to China as President Trump heads over to meet his counterpart Xi Jinping. And so we'll see, you know, if there are any kind of deals to be made there that Qualcomm will benefit from. But as of today, it just looks like it's getting ensnared again in this tech sell, particularly when it comes to semiconductors.
Okay, one more.
Let's take a look at Lowe's again today. So ticker LOW, that's down just slightly, 0.3%. We did get an upgrade for the stock. It was upgraded to buy from neutral at Citigroup. And analyst Steven Zacconi saying that Lowe's should at least beat first quarter street estimates for its earnings. Those are due on the 21st of May. And they're seeing the company continuing to outperform the industry. Lowe's is also apparently, quote, attractive to own in the current home improvement landscape because it's more exposed to DIY or smaller projects, and we know that consumers are kind of postponing their bigger renovation projects at the moment, but you know, that's benefiting Lowe's as a company that caters more to some of the smaller projects that people are taking on.
I tell you, not down the short, every block in my town has either a major reno or tear down rebuild. Every block.
They're all going to be McMansions soon.
Exactly right. Exactly right. All the charm getting just ripped out of it. But they're putting out some nice homes, but it's just wowzer. Okay, Christine Aquino, thank you so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, we did get the eco data this morning, inflation data at the consumer level. Just the highlights, you know, CPI top line 0.6% month to month, right in line. Actually, a little bit less than last period. But you core came in at 0.4, higher than expected, and twice what it was last month. So there's definitely some angst out there. And just the other headline number, on an annualized basis, CPI up 3.8%.
That's the one I can't stop looking at, right? Because that's a pickup from 3.3% in the prior period.
Yeah, that's no bueno, as they say in the trades here. Michael McKee, he's an expert on this stuff, international economics and policy correspondent. Mike, should we be concerned about this? This is, if I'm the Fed, I'm not liking the direction here.
No, you're not liking the direction. We had Austin Goolsbee, the Chicago Fed president, spoke on NPR today after the report came out, and the quote from him was, "We have an inflation problem." And it's sort of like, and what's worse, and this is more of a political problem than an economic problem, although it's bad economic news, is when they put out CPI, they deflate the average hourly earnings numbers to take out inflation. And in the month of April, people's average hourly earnings went down 0.2%. So you're losing on both ends. And that's a political problem for them.
I was just saying that to Henrietta Trez. If I'm at the RNC, I'm nervous, I would think. This isn't.
Oh, I'm sure they're very nervous. This is one reason they're trying to, gerrymander all the districts, because right now, if James Carville is right, which he always seems to be,
at some point,
it's the economy, stupid. But diesel fuel is extraordinarily expensive now, and that is hurting all of the people who deliver stuff, the big trucking companies down to the little guy.
I never understood the diesel thing. It's loud, it's smelly, and then it's more expensive.
But it's more fuel efficient.
I don't know. I was never a diesel guy. Now I'm definitely not a diesel guy. All right, Mike McKee, thanks so much. Appreciate that. International economics and policy correspondent for Bloomberg News. All right, so President Trump leaving today for China. He's got a plane full of executives, including executive for Boeing.
Yep.
And boy, when you think about a company that's leveraged to China, I always think of Apple, but Boeing's right there. And we want to talk to Sid Phillip about that, Bloomberg chief correspondent for global aviation, because this could be one of those trips where somebody, China announces a gajillion plane deal and, it's boom.
And actually it's something that the CEO has kind of hinted at already, saying that, Trump's visit would be, quote, a meaningful opportunity for us.
Yeah. All right. Sid Phillip, he does all this stuff for Bloomberg News. What are you expecting here on this trip for Boeing? What do you think Boeing wants to get out of this?
So Boeing's looking to secure its first big order from China in almost a decade. Wow. And so we understand it's going to be 500 737 MAXs and a large number of wide-body planes. And that would be significant because the Chinese airlines haven't really ordered any Boeing planes in a while. And
is that just because they're mad at us?
They were mad at, and there was COVID in the middle of it. Okay. And so the Chinese airlines actually need those planes because they don't really have a supply of Boeing. I mean, they operate both Airbus and Boeing planes, and they don't really have a supply of planes beyond the 2030s. And so if they want to keep expanding, if they want to keep adding more service, they need those planes. And this order is a way to get that.
Okay, so this order is a way to get that. I guess if you're an airliner, you're thinking, what's the next thing Boeing is selling that I want to get my hands on? I mean, not tomorrow, not next month, but down the road as I plan my fleet. Does Boeing have an answer to that? Because it feels like the company has spent so much time writing itself that it hasn't really put as much, at least outward energy into innovating the next jet.
So that's the really big question that the CEO, Kelly Ortberg, is really looking at. So while obviously you have the short term and the immediate issues that they have to ramp up production, they have to ramp up cash generation, reduce that debt pile. The bigger question for Boeing is where do they go from here? And the 737 is basically a long derivative of a 1960s jet. And so for Boeing, they need to decide what they do next. And that will be crucial in the sort of duopoly that they have with Airbus. And Airbus has been talking about how they are working on their next generation of product that they're aiming to get out in the middle of next decade. And that would basically allow airlines to get something that's more fuel efficient and allows them to fly greater distances with more passengers on them. And so what we understand is that Boeing is working on something that's more evolutionary rather than revolutionary, because the last thing airlines need is uncertainty. And when you have a product that's revolutionary, it always comes with teething issues. It comes with all sorts of complications with new technology and how that whole meshes together with existing infrastructure.
Yeah, we've seen that play out before.
Exactly. And so for the airlines, they want something that's stable, allows them to sort of keep going as usual and not sort of rocking the boat too much. And that's really key for Boeing. So how do you derive more fuel efficiency using evolutionary technology? And that's where we see Boeing sort of going in terms of their next products.
10 seconds. If I get a big order today from China, they can't even make the planes, Boeing. I mean, they have to build another factory or two.
So Boeing is in the process of opening a new factory for the 737. And they are looking at ramping up production. And they've been talking about how they've got these short-term goals. So they're currently looking at 42 a month. They're going to ramp up to 47 a month, then 52 a month, then 60. So essentially, for Boeing, they have a sort of stepped-up plan to ramp up production, depending on how the FAA sort of signs off on it.
The production will be in the U.S.?
It will be in the U.S. So Boeing produces all its planes in the U.S.
And I'm sure you're dying to know, but I am flying a Boeing 777 today out of San Francisco. Yeah, the big dog. So on how that thing gets off the ground,
you probably know the seat map and everything, don't you?
Oh, yeah.
Yeah,
I know it.
I figured that.
Have I told you I'm a million-mile traveler on United Airlines?
He carries his card around all day
I have my
long.
little medallion. So
See?
All right, Sid Phillip, thanks so much. Appreciate it. Deputy Team Leader for Global Aviation. If you've got a problem with your flight, get in touch with Sid. He'll fix it for you. S&P down 64 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.9%. NASDAQ down 1.5%. The Dow down about 0.5%. The Russell 2000 Index down 2.25%. The 10-year Treasury yield at 4.45% and the 2-year yield at 3.99%. WTI now up more than 4%, closing in on $102 a barrel, and Brent crude up 3.75%, topping $108 a barrel. Inflation continued to accelerate in April amid an ongoing climb in gasoline prices driven by the Iran war and a jump in the cost of groceries. Consumer prices climbed a sharp 3.8% last month. The figures show how the impact of the war is hitting the U.S. economy as energy costs surge. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney were live here in our Bloomberg Interactive studios. We're streaming live on YouTube, streaming live on Bloomberg.com as well. Sell-off in the marketplace today, but we've been just ripping it here. Market's been looking past the uncertainties of the Iran war, uncertainties of tariffs, uncertainties of rising inflation. But we got definitely a little punch in the nose here today on the inflation front with that CPI print. James Abate joins us here, Managing Director and Head of Fundamental Strategies at Horizon Investments. He's zooming in from New York. James, thanks so much for joining us here today. What'd you make of that inflation print today? And does that present maybe another little brick in the wall of worry here?
Sure does. I mean, clearly, the issue that's impacting the consumer today is that hourly wages have not kept up with consumer inflation. And this is resulting in real wages declining. It's being exacerbated by the impact on fuel prices and supply disruptions from the continuing conflict in Iran. I mean, today's CPI report reinforces these dynamics, as well as the continuation of the low fire labor market, which is putting a ceiling on wage growth. Even last week, I don't typically put a lot of weight on the Michigan Consumer Sentiment Index because it's a coincident indicator and not really efficacious to other economic indicators. But that being said, it's hard to ignore the fact that the reading from last week was at a level lower than that during COVID, the collapse of Lehman Brothers, and even the harsh recessions of 1981 and 1974.
Yeah, no, that's a really good point. I mean, the soft data is usually poo-pooed, but at some point you do need to pay attention to it. And the anecdotal from company CEOs is that some of their customers are really having difficulty paying up and will continue to do so as long as oil prices stay elevated. So how much longer can we see this divide between the U.S. stock market just powering higher, and I know today being kind of an exception, and the data, at least when it comes to sentiment and soft data points, indicating that people are really not feeling good?
Yeah, there's definitely a stark difference between consumer spending expectations while corporate S&P earnings are moving higher, with even profit margins exploding to ever higher peak levels. I mean, just anecdotal news from Costco, Wendy's, Planet Fitness, etc. It's telling you that this year we have two divergent economies. Investment is rising robustly while consumer consumption is slowing. But that being said, on the corporate side, growth and economic profits continue to improve. After a 4-year manufacturing and non-tech investment malaise, we've got expanding sales growth, margins powering higher, alongside an increase in investment. So we've got operating leverage kicking in after a long period of restructuring and capacity utilizations as well. So, clearly a big part of this investment boom is from AI. The big hyperscalers are set to spend over $700 billion this year and maybe $1 trillion in a couple of years. This is another important point. Countries are starting to recognize the importance of AI within the context of national security. And the U.S. is home to almost half of the approximately 9,500 data centers in the world. So we'll see the rate of growth outside the U.S. pick up substantially over the next few years. And it's not just semiconductors. I mean, IT equipment is 80% of the $40 billion of a traditional data center. I mean, the rest is equipment. That's electrical, thermal, as well as engineering and what have you. So, from our perspective, this doesn't include the power generation as well. So right now, stay with the picks and shovels, the companies that will profit, even if AI technology itself doesn't result in the productivity boom. But you're right. I think this can, put strain on the consumer part of the economy, which is almost 70%. But given the fact that we have a high degree of visibility on both AI spending from the hyperscalers, as well as the fiscal stimulus,